Hello, hi guys. This is CA Balakrishna Kovuru from lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Before you start watching question and answer marathon video, let me explain you how you can make best utilization out of this video and where you can get the question bank that I will be using in this video. I'll just give a brief introduction. After that, you can start watching this particular question and answer marathon lectures. First of all, this particular video, CA Inter Audit question and answer discussion video, it will be of two parts, part 1 and part 2. This particular video which you are watching is the part 1 video. After this, in the same playlist, you will also find part 2, and you will be having approx 400 plus question and answers that will be discussed in this particular Q&A marathon videos. And what are all the questions that I have covered? If you see, I will be giving this particular PDF to you. I will let you know where you can get this question bank PDF. All those things I'll let you know. Before that, we'll be using this particular question bank for discussing in this particular video. It covers all ICAI study material questions, and this also covers all RTPs till May 2026, all MTPs till May 2026, and also all the past examination questions till Jan 2026. Altogether, there are around 423 questions that you will find in this particular question bank. It is sufficient just to read this question bank. You need not refer any other question banks. All the ICAI sources questions I have covered in this question bank for your CA Inter auditing subjects. Auditing subject, these questions are sufficient. Apart from these questions, there are no other questions. Understanding? Yes. Now, sir, what if we are writing our examinations in 2027 or 2028? You don't worry, I will be updating this question bank for each and every attempt. So the latest question bank that is applicable for your attempt, you can get. Got it? I will let you know where you can get this question bank. It is free of cost. You need not pay any money. Understanding? Yes. And I will also be making videos of additional questions in future, in the future RTPs, in the future MTPs. If ICAI gives any new questions, I will be making a video explaining those new questions, and I will be keeping those videos in this same playlist. If you see, if you go to playlist tab in my channel, you will find a playlist by name CA Inter Audit Resources. By this name, you will find a playlist. In this playlist, you will find all the future videos of question and answers which ICAI might give additionally in upcoming RTPs and MTPs. Got it? Yes, sir. And I told you that all the questions I will be covering chapter wise. I will be covering. I will not be missing any question. All the questions I will be covering. Now, if you observe here, there are 14 chapters in this particular question bank. Sir, in ICAI study material, there are only 11 chapters, but why there are 14 chapters in this question bank? See, if you read the content as per the flow that is given in the ICAI study material, it becomes very difficult for you to understand the concept and remember the concept. So, what I have done, I have rearranged the content of ICAI in my book. So when I rearranged, I got 14 chapters. Got it? I haven't added any extra content, nor I have removed any content that is there in the ICAI study material. Everything you will find. Just the thing is, the flow of concepts will be different. Understanding? So you will find 14 chapters in this particular book. Along with the chapter name, I have also given you weightage of that particular chapter and number of questions that are there in that chapter. Got it? Yes. So if you see, in total there are 423 questions. Now I told you there will be two parts for this CA Inter Audit question and answer discussion marathon, right? In the part 1, first part of the video, you will find question and answer discussion till chapter number 8. So this will be the part 1. After that, in the part 2, you will find chapter 9 to chapter 13. And chapter number 14, I haven't discussed those questions because you know about that audit of items of financial statements. There will not be any much analysis explanation that will be involved in that chapter. All the questions will be direct questions, no explanation is required for those questions. So I haven't recorded question and answer discussion of that audit of items of financial statements. In your ICAI study material, you will find this chapter as a fifth chapter, that huge chapter. Okay. Yes, sir. So that is about the question bank, and I already told you there will be two parts. And where to get this question bank from? So you can get this question bank from my Telegram channel. So you can go to this particular Telegram channel, Audit by CA Balakrishna, and in the Telegram channel you can go to files. In the files, you can find this particular question bank, CA Inter Audit Question Bank by CA Balakrishna Kovuru. So you can download that question bank and you can take a printout of it. And don't worry, I will be updating this question bank for each and every attempt. Whenever you wanted to download, you will be getting the latest question bank. I will be uploading the latest question bank in this particular Telegram group. Got it? Yes, sir. So from there you can download that question bank. Yes, apart from questions, if you also wanted to revise concept, I have also made available marathon videos. In this same playlist you will also find marathon discussion. There will be around 20 hours of content. That marathon will also be two parts, part 1 and part 2. So you can also revise the concept through that marathon videos, which will be present in this same playlist. For that marathon, we have used chart book. I have explained about the chart book, summary chart book, which will be a beautiful book. That explanation you can see in that marathon video. Got it? Yes, sir. So this is about this particular video. Now you can start watching question and answer discussion. All the best. Yes, guys, let us start with discussion of questions related to chapter number 1. There are around 29 questions in this chapter. We will discuss each question one by one. And of course, the weightage of this particular chapter is 5 marks. And I'll be reading the question only once. So you should be very much attentive while listening the question. Yeah. So let us start with question number 1. Laljibai has purchased shares of a company listed on NSE. The audited financial statements of the company provide a picture of healthy financial performance, having robust turnover, low debt, and good profits. So Laljibai invested in a listed company, and the audited financial statements of that particular listed company is showing good profit and less amount of debt. So the financial statements are good. Okay. On the above basis, he is absolutely satisfied that money invested by him is safe and there is no chance of losing money. Just because the financial statements are showing a profit and there is a low amount of debt and there are no misstatements in the financial statements, just because of this thing, Laljibai is coming to a conclusion, coming to a confidence that money he has invested in that company will not be lost. Can he come to that conclusion by just seeing financial statements? Answer is no, because in the stock market, when you invest money, there are lot of factors, n number of factors that will decide whether you will make profit or you will lose your money. So just by seeing financial statements, you cannot come to a conclusion that your money will not be lost. Understanding? So whatever the conclusion that Laljiba is reaching here is absolutely wrong. Let's see what they are asking further in the question. Do audited results and audit reports of companies provide such assurance to investors? Like Laljibai is thinking of Laljibai, correct? So if auditor audits the financial statements, is he providing assurance to the investors that, see investors, if you invest in the shares of this company, your money will not be lost? Is auditor saying like that in the audit report? No. What auditor is saying by auditing the financial statements? He is giving a reasonable assurance that there are no misstatements in the financial statements, right? But he is not saying that investors, if you invest money in this company, your money will not be lost. Like that, auditor is not saying in the audit report. Understanding? So auditor doesn't provide such a type of assurance to the investors. Then what assurance audit will provide? Audit will provide assurance that in the financial statements there are no misstatements. Just that assurance, that type of assurance will be provided by the audit, but not the assurance that if investors invest in this money, they will not at all lose their money. No, such type of assurance auditor will not provide. Understanding? So the same thing you need to write. Audit does not provide assurance to investors in shares regarding safety of his money. Instead, what type of assurance audit will provide? It will provide assurance that financial statements are free from material misstatement. Understanding? So this question is very small, but many students, they will confuse with this particular question. So you should understand, audit provides assurance that financial statements are not having misstatements. That assurance audit will provide. But here Lalji boy is thinking that the assurance that audit provides is such that if he invests in that company, he will not at all lose money. Such a type of assurance audit will provide, like that he is thinking. No, audit will not provide such type of assurance. Got it? Yes, sir. Next. Question number 2. Good Deeds Limited is engaged in business of recycling of waste from dumping grounds of Municipal Corporation of Indore, okay, to usable manure. It is in this way also helping to make city clean. Basic, it is recycling the waste, okay. That is the business of the company. During the course of audit by Zoha and Zoha, a firm of auditors, it is observed by auditors that company has received notice from Central Bench of National Green Tribunal for not following certain environmental regulations involving imposition of hefty monetary penalty. It seems company is not following environmental laws. Because of that, it has received a notice from the government asking to pay hefty penalty on the company. Company is yet to reply to the notice. The auditors point out that same is not stated in the notes to accounts in the financial statements. The company points out that auditors are going beyond the scope of their work. Does such matter fall within the scope of audit? Tell me, first of all, what are the aspects that are within the scope of the audit? Basically, auditor has to check each and every aspect of the financial statement. So audit includes coverage of all the areas of entity that are having impact on the financial statements. Any item of the entity, if it impacts the financial statements, then auditor is concerned with that. That item will be within the scope of the audit. Getting it? Now if you see in our question, because of this notice, lot of penalty might be imposed on the company. If penalty might be imposed means, should company provide a provision for that? Yes, if company is confident that in future it has to pay the penalty, for sure it has to provide provision. Or else if it is a contingent liability, it has to provide a disclosure at least, correct or not? So this item of company receiving a notice from environmental department, is it having impact on the financial statements? Yes, it is having impact on the financial statements. So is it within the scope of audit? Yes, everything which is having impact on financial statements is within the scope of audit. So here what management is saying is wrong. They are saying that auditor is not concerned, should not be concerned with this. This is not within the scope of auditor, like that they are saying, but they are wrong. Since it has impact on the financial statements, auditors is concerned with that, that item is within the scope of the audit. Getting it? Yes. See, basically with respect to scope of audit, lot of questions will come in the examination. Lot of questions they are asking in the area of scope of audit. So you have to remember this keyword or mnemonic CRPF. So whenever they ask what is the scope of audit, you should remember CRPF. C for coverage of all the items that are having impact on the financial statements. All of them will will come within the scope of the audit. Next, R for reliability of the information. So auditor has to check whether the information that has been given to him by the management, is it reliable and sufficient for the purpose of audit. So reliability of the financial information, F for financial information, reliability and sufficiency of the financial information. Next, P for proper disclosure and presentation of financial information in the financial statements. So auditor has to check these three things. Okay, all these three are within the scope of audit. What are they? Coverage of all the items that are having impact on the financial statements, reliability and sufficiency of financial information, presentation and disclosure of financial information. All these three things are within the scope of the audit. See, we will be having lot of questions on this scope of audit. Around 4 or 5 questions we are having. To answer all those questions, you remember this CRPF. Okay, CRPF is basically a police force. Okay, Central Reserve Police Force. CRPF means, you might have heard that term CRPF lot of times in the news. So you, with the help of this mnemonic CRPF, you can remember scope of audit. Okay, yes sir. So the same thing you will explain it here, that it is within the scope of the audit. Next, question number 3. A huge fire broke out in Noida plant of KT Limited. Plant assets comprising building, machinery, and inventories were insured from branch of a public sector insurance company. Okay, fire has broken out, but all the plant and machinery is properly insured. Apart from an insurance surveyor who was deputed for assessing loss, the regional office of insurance PSU also appointed a chartered accountant for verification of books of accounts, financial records of the company, and circumstances surrounding the loss. He was also requested to submit an yearly report. Would the report by chartered accountant in the nature of audit report? Tell me. Here basically, whenever any catastrophe happens, and if you have taken insurance against that catastrophe, then before insurance company giving you the claim amount, what it will do is it will appoint a loss assessor, or you can call him as surveyor. So in our example, factory building has been like burnt in the fire, lot of plant and machinery has been damaged, right? Now loss assessor will come and he will value how much loss has occurred. He will verify. So what is the amount of loss has occurred? Based on his verification, he will decide, yes, this much amount of loss has occurred, and he will intimate it to the insurance company. Insurance company will pay that amount to the company. This is how generally it will happen. Now, since this is a huge factory, what insurance company has done is it has also appointed a chartered accountant apart from loss assessor, because in the financial statements, in the books of accounts, how much value company has shown its plant and machinery, its factory value, to verify that a chartered accountant has been appointed. Now, the question they are asking is, a chartered accountant has been appointed by insurance company in this situation, and they have also asked the chartered accountant to issue a report saying how much loss has occurred. Now, whether this report that chartered accountant issues in this situation, can we call it as audit report? Tell me. Audit report means you have to verify all the areas and provide a assurance opinion on the financial statements. In this situation, are you providing any opinion? No, you are just verifying how much loss has occurred and what is the value of a plant and machinery and how they have valued it in the financial statements. Only that area you are verifying. So you cannot call this as audit. This is a kind of investigation. Understanding? So that's what you need to say. So investigation is a critical examination of accounts with a special purpose. In this situation, what is the special purpose? The special purpose in this situation is to value how much amount of loss has occurred, right? But not to provide a opinion. So here you cannot call it as a audit report. See, in the above scenario, assignment given to CA is a investigation and not a audit report. Got it? Yes, sir. Next question number 4. Zeba Products is a partnership firm engaged in trading of designer dresses. The firm has appointed Zeze and Co chartered accountants to audit their accounts for a year. Okay. The auditors were satisfied with the control systems of the firm, carried out required procedures and necessary verifications. In particular, they carried out sample checking of purchases, traced purchase bills to GST portal, and also made confirmations from suppliers. Okay, they were satisfied with audit evidence obtained by them as part of audit exercise. An audit report was submitted to the firm giving an opinion that financial statements reflected true and fair view of the state of affairs of the firm. So what they have done? They have performed audit procedures. Based on that audit procedures, they have obtained audit evidence, and they came to conclusion that yes, these financial statements are showing true and fair view. Okay, let's see what happened further. However, later on, it was discovered that purchase manager responsible for procuring dresses from one location was also booking fake purchases of small values by colluding with unethical dealers. Payments to these dealers were also made in connivance with accountant through banking channel. So purchase manager is committing fraud in this company, which was not able to be identified by the auditor. Now, the partners of firm blame auditors for futile audit exercise. Now, the partners of that particular firm, they are blaming the auditor that auditor has not done his audit properly. He has not identified this particular fraud that purchase manager is doing. Like that, they are blaming the auditor. Now, are partners of a firm correct in their viewpoint? Imagine any probable reason for such a situation. So here, tell me why auditor would not have identified the fraud? Because of inherent limitations of the audit, right? There are a lot of inherent limitations of the audit. Tell me what are inherent limitations of audit. Firstly, nature of audit procedures that the auditor performs are such that they might not be able to identify all the misstatement. Here if you see, auditor has choose to uh, depend on sample, right? Since he is using sampling, he might not be able to identify all the frauds. That is one of the inherent limitation. Next, here in this situation, you can also refer to that audit is not an investigation. If at all you are doing investigation, you will verify each and every area in depth to identify all the frauds. But audit, in audit, you cannot expect that all frauds can be identified, right? So you can mention these 2 points in this particular situation, that the nature of audit procedures performed or such that you cannot identify all the misstatements, and also audit is not a investigation. Still there are a lot of inherent limitation like timeliness of the information. Next, nature of financial reporting, right? So these are some other inherent limitations. If you want, you can mention, but it is sufficient if you just mention two inherent limitations that are relevant for this case. Okay, so see, nature of financial reporting, inherent limitations of inherent internal control. Above is example of failure of internal control of firm. The internal control has not operated due to collusion between employees, which is limitation of internal control itself. Here they have mentioned only one point. You can also mention that audit is not a investigation. Because of that also, auditor cannot identify all the frauds. Okay, so here you can mention audit is not investigation. Because of that, you have not identified that fraud. Next, you can mention nature of audit procedures. Under that, you can take example as you have used sampling. Because of that, you have not identified misstatements. Still there are two more examples under this second situation, but they are not relevant for this case. And you can also say that nature of financial reporting. Under nature of financial reporting, you can use the example of inherent limitations of internal control. Why inherent limitations of internal control we are using here? Because here collusion of people has happened. Purchase manager is responsible for procuring the dresses, and accounts who is responsible for making payment? Okay, payments should be made by accountant, but what happened here? Accountant and purchase manager, they have colluded along with the dealers. So internal control of segregation of duties has failed here because of collusion. So this is also one of the inherent limitation, because of which auditor was not able to identify the fraud. Understanding these things, you can mention in your answer. Got it? Yes, sir. Next, the management of Exotic Tours and Travels Limited requests its auditors Raja and Co to provide an assurance report on the financial information for first quarter of year by skipping required detailed procedures. Can Raja and Co provide such a report? So here the company is asking Raja and Co to provide limited assurance by skipping detailed procedures. If you remember, we are having limited assurance and reasonable assurance. Correct or not? Yes. Limited assurance means we will call it as review. In review, you will provide limited assurance. You will provide reasonable assurance in case of audit. Correct or not? In review, you will give limited review report. In audit, you will give audit report. Correct. In limited assurance, you will perform less procedures. In audit, you will perform more procedures. So here company is asking the auditor to perform less procedures and conduct the examination. You will call such a engagement as limited assurance engagement. Same thing you need to write. Review is a limited assurance engagement. It provides lower level of assurance than audit. Further, review involves performing fewer procedures, gather sufficient appropriate evidence on the basis of which limited conclusions can be drawn. Understanding? So here they are referring to limited review. Getting it? Yes. Next, question number 6. CAP Babu is conducting audit of financial statements of Quick Buy Private Limited. He was not able to obtain external confirmation from certain debtors due to practical difficulties and peculiar circumstances. However, such a procedure is mandated under one-off standards on auditing. If you see, as per SA 505, it is mandatory to send external confirmation to the debtors, but auditor was not able to send external confirmation due to certain reasons. Okay, now what happened? Unable to obtain external confirmation from these debtors, he relied upon sale details to these parties. So he is performing alternate audit procedures. He is verifying e-invoices, e-way bills, and also traced payments from these parties in bank accounts of the company. He was reasonably satisfied with the audit evidence obtained. So, see what happened here. Auditing standard has asked to perform a particular procedure, but in the given situation, he was not able to perform that procedure. So, he has performed alternate audit procedure, and he was able to obtain sufficient appropriate audit evidence through alternate audit procedure. Okay, what happened next? Now they are asking, is there any other reporting duty cast upon him relating to not following mandated procedure in one of the auditing standard? First of all, it is mandatory for the auditor to follow the requirement of all the auditing standards that you need to mention. But if because of any reason auditor is not able to follow any of the requirement of auditing standards, then he has to document why he was not able to follow the requirement of particular auditing standard, and to overcome that, what alternate procedures he has performed, that also he needs to document, and how he reached the conclusions based on that alternate procedures. All these things he needs to document. Okay, same things you will find. See, it is mandatory to comply with engagement standards, and if at all you have performed alternative audit procedures, you need to document them. See, document how alternate procedures are performed. Also, reason for departure from the requirement of the auditing standards. Why you have departed from the requirement of auditing standard, you need to document those things. Got it? Yes, sir. Next, question number 7. Choosing of appropriate accounting policy in relation to accounting issues is responsibility of management. Yes, it is responsibility of management. Do you agree? Yes, we agree. Discuss duty of auditor, if any, in relation to accounting policy. See, auditor has to check whether accounting policies selected by management are appropriate, and are they following that accounting policies consistently. That is the duty of auditor. Selection of accounting policy is duty of management. The same thing you need to mention. Okay, selection and consistent application of accounting policy needs to be verified by the auditor. Okay, yeah. Next, question number 8. Assurance engagements are not restricted to audit of financial statements alone. Discuss. Tell me, will you provide assurance only on financial statements, historical financial statements, or can you also provide assurance on items other than historical financial statements? The answer is yes. You can provide assurance on items other than historical financial statements. What are they? You can provide assurance on prospective financial information, which will be dealt by SAE series standards on assurance engagement 3400. You can also provide assurance on internal controls, right? Same things you have to write. See, you can provide assurance on prospective financial information. What is meant by prospective financial information? Financial information related to future is known as prospective financial information. Historical financial information means financial information of past. You are compiling and preparing financial statements. Generally, as on 31st March of every year, you will prepare financial statements. Now, that financial statements are historical financial statements only, because you are compiling all the transactions that has already taken place, right? All the transactions taken place in the past year, you are compiling them and preparing financial statements, so you will call it as historical financial statements. So if you are providing assurance on historical financial statements, you will call it as audit, right? See, you need to be very clear with this. If you are providing reasonable assurance on historical financial statements, you will call it as audit. Getting it? Similarly, if you provide same reasonable assurance on items other than historical financial statements. You will call it as assurance engagement. You can ask a doubt, sir, in case of audit also we are providing assurance on historical financial statements, can't we call audit as a assurance engagement? Yes, audit is also a assurance engagement, but what the standard has done is, if you are providing assurance on historical financial statements, it has given a specific name to it as audit. So you have to call it as audit only. You cannot call it as assurance engagement. Understanding? If at all you provide assurance on items other than historical financial statements, like example, internal control or prospective financial statements, in such a situation you will call it as assurance engagement. Getting it? Yes, sir. So on this concept we will be having a lot of questions. Okay, so here you have to say that assurance will be provided not only on historical financial statements, you can also provide assurance on prospective financial information and also on operating effectiveness of internal controls. On these aspects also you can provide assurance. Getting it? And you need to explain what is meant by prospective financial information. Basically prospective financial information is the financial information related to future which is prepared based on certain assumptions about the future. Like that you have to describe prospective financial information. Getting it? Yes, sir. Next question number 9. An assurance engagement involves a three-party relationship. Discuss meaning of three parties. Simple. What are the three parties? First of all, auditor. The person who provides the audit is the auditor. This is the first party. Next, management. Nothing but responsible party. The one who prepares the financial statements is the second party. So first one is auditor, second one is responsible party. Next, why audit is being done? To provide assurance to the users. So intended users or the third party. These are the three people that will be there in the assurance engagement. First one is auditor, second one is responsible party, third one is intended users. The same three things you need to explain. Okay, practitioner, responsible party, intended users. Next, chartered accountant is specifically asked to check accounts whether fraud exists. State with reasons whether it is an example of reasonable assurance engagement. Reasonable assurance engagement means they are asking whether it is a audit. Can you call this kind of engagement as audit? No, because chartered accountant has been appointed to verify whether a fraud is there. For that specific purpose, you are appointing chartered accountant. In such a situation, you will call that engagement as investigation, not a audit. If you have been appointed to provide assurance, reasonable assurance on complete financial statements, then only you will call it as audit. In this situation, you will call it as investigation, not a audit. Got it? Yes, sir. Next, an audit does not provide absolute assurance. Yes, it will not provide absolute assurance. Discuss how nature of audit procedure itself is one of the reasons due to which auditor cannot provide absolute assurance. So I told you there are a lot of inherent limitations of audit because of which auditor cannot provide absolute assurance, right? See, can auditor provide absolute assurance? No. Why? Because of inherent limitations. There are a lot of inherent limitations. One of the inherent limitation is nature of audit procedures. Okay, nature of audit procedures itself are such that they will not allow the auditor to provide absolute assurance. So under nature of audit procedure, some of the examples are use of audit sampling. See, because of using of auditing sampling, you will not audit all the items, you will verify only some items on sample basis, so you cannot obtain absolute assurance. Next, management may not provide complete information. See, when you go to the entity, it is the management who provides you information for doing the audit. Auditor doesn't know which information is present where. Management has to give the information to you. Now you can just ask the management to give complete information, but you cannot influence, force the management to give complete information. Okay, you don't know whether management is giving complete information or not. This is also one of the example. You cannot influence the management. Understanding? Next, concealing of fraud. Let's say management has committed some fraud or any other person has committed fraud, now your audit procedures maximum they will try to find out that fraud. But if the fraud has been carefully concealed by the fraud perpetrator, then it might become difficult even for the audit procedures also to identify the fraud. Correct or not? So these are some of the examples that you can use for nature of audit procedures, because of which you cannot give absolute assurance. Understanding? Yes, sir. Next, question number 12. Management of Hot Drinks Limited suspects that some employees of company may be involved in making fraudulent payments to dummy workers at its various plants in the country. Therefore, they are considering appointment of a firm of auditors to conduct audit involving detailed examination of accounts. However, one senior person among board members, Mr. P, objects to use the word audit in proposed assignment. See, here the purpose of assignment is management is feeling that in a particular area there is a fraud going on. To identify that fraud, to investigate that fraud, they wanted to appoint chartered accountant. They doesn't wanted chartered accountant to provide assurance on complete financial statements. They just wanted to find out whether fraud is going or not. Now, can you call this engagement as audit? No, you have to call this as investigation. Correct or not? So here using the word audit is wrong. Yes. Now comment. Also discuss how audit is different from investigation. See, in case of audit, you will provide a reasonable assurance on the financial statements, whereas investigation is a critical examination of accounts with a special purpose of finding out the facts, whereas in case of audit you will provide just opinion. Now the nature of audit is general and broad. The scope of audit is general and it is broad. It covers all the areas of financial statements. But investigation is not like that. It specifically focuses on a single area where fraud is taking place. So it is specific and narrow. Example they have given for audit, historical financial statement, and for investigation you can take example as the one that is given in the question itself. Okay, if at all there is any fraud going on, to identify that fraud, investigator can be appointed, right? Yes, sir. Next, RST Limited, a retail company, has set up internal controls requiring all invoices to be stamped and signed by a authorized person in goods receiving section of the company, stating the date and time of receiving goods in premises to ensure that only those purchase bills are produced for payment for which goods have been actually received. So once the goods have been received in the godown, on the invoice the respective person who is there in the godown has to write the date, time, and he needs to stamp that invoice. Only after stamping it has to be sent to the accounts department for making the payment. So can we call this as an internal control? Yes, this is the internal control. Now during the audit, auditor finds that two employees, purchasing manager and accounts clerk, have worked together to bypass this control. So they have implemented segregation of duties, right? One has to write date and stamp the invoice, and that has to be given to another person, that is accounts department. The accountant will make the payment. Now this segregation of duties has been implemented, but in the company these people they have colluded, employees have colluded, and they have uh, broken this internal control to commit a fraud. So submitting fake invoices that resulted in payment for goods that were never received. You are required to state the object of audit as per SA 200 when it comes to ensuring reliability of financial statement. Tell me what is the objective of audit. There will be this paragraph in SA 200: to obtain reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error, thereby enabling the auditor to obtain to express an opinion on whether financial statements materially prepared as per applicable financial reporting framework or not. So this is the objective of auditor as per SA 200. The same objective you have to copy paste here. Next what they are asking. Explain why auditor can provide only reasonable rather than absolute assurance. Why? Because of inherent limitations of audit, you can provide only reasonable assurance that the financial statements are free from material misstatement due to fraud or error in the context of given situation. In the given situation, what happened? The internal controls have failed, right? So internal control examples come under nature of financial reporting, right? So there are various inherent limitations of audit. Under that inherent limitation, one of the inherent limitation is nature of financial reporting. Under nature of financial reporting, one of the example is inherent limitation of internal control. In the question, they are discussing about internal controls, failure of internal controls, collusion among the employees, right? So you need to mention that only, nature of financial reporting, under that internal inherent limitation of internal control. Got it? Yes. Next. Question number 14. Kriti, a CA student, has joined articles in a reputed audit firm. She considers audit engagement to be assurance engagement. Yes, audit is the assurance engagement. Her understanding is that audit engagement is the only kind of assurance engagement in which practitioners give written assurance report in appropriate form. Is that correct? No. Will you give written assurance report only in case of audit? No. Even in case of assurance on prospective financial statements also, you will give written report. Even in case of review also, you will give written report. So her understanding that auditor will give written assurance report only in case of audit is wrong. Her first understanding is correct, but second understanding is wrong. However, her friend however, her friend Somaya does not agree with her. She is of the view that assurance engagement are not restricted to audit alone. Yes, Somaya is correct, because you can provide assurance on prospective financial information also. You can provide assurance on internal controls also. So besides, Somaya also thinks that assurance engagement can also relate to matters other than historical financial information, whose view appears to be correct. State with reason. The view of Somaya is appears to be correct. The reason is, you need to explain. You can provide assurance on prospective financial information as per SAE 3400. You can also provide assurance on internal control. So views of Somaya is correct, like that you need to mention. See, the same thing they would have mentioned. Assurance on prospective financial information, assurance on internal control. These two examples you have to take. So this answer already we have discussed earlier, but the question changed. Understanding? Answer is same, but the question changed. Next, question number 15. Rajul Limited engaged an external practitioner, CA Rajul, to provide assurance on its prospective financial information for the upcoming year. Okay. Which includes projections for a new product line. The company projected 15% increase in revenue, estimating total sales of 75 crore, driven by expected launch of this new product. Mention the applicable engagement and quality control standard and the level of assurance that will be provided in the given situation. Also explain prospective financial information is different from historical financial information. So here they are asking a lot of questions. First of all, you have to explain difference between prospective financial information and historical financial information. Historical financial statement financial information is related to past, whereas prospective financial information is related to future. And prospective financial information you will prepare based on assumptions. All these points you have to mention. Understanding that is difference between prospective and historical financial information. Next, they are also asking, in the present engagement to provide assurance on prospective financial information, which standard will be applicable? SAE 3400 standard on assurance engagement 3400 will be applicable for this particular engagement, that you need to mention. And they're also asking, mention the applicable engagement and the level of assurance that will be provided. So the level of assurance that you will provide will be moderate assurance, or you can say limited assurance. Both moderate or limited, both are same. When you are providing assurance on prospective financial information, you will provide moderate level of assurance, or you can call it as a limited assurance. Understanding? One more point you need to mention is, you will provide assurance not on the amounts that are present in the prospective financial information. Okay, you will not provide assurance on amounts that are present in the prospective financial information. You will provide assurance on the assumptions that has been used for preparing this prospective financial information. That is one more point you need to mention. Okay, all these points you have to mention in your answer. Next, Jaya Limited, a mid-sized trading company, recently faced challenges in securing a bank loan due to doubts about the reliability of its financial statements. The management realized the importance of having audited accounts to build confidence among the lenders and other stakeholders. Elucidate the benefits and need of audit. They are asking advantages of audit. See, whenever you are writing advantages of audit, you have to think from point of view of each stakeholder. First of all, will audit provide confidence to all the stakeholders? Yes, it increases confidence of all the stakeholders. Next, for bankers, audit will help in making credit decisions. Yes. For government, audit will help in checking whether taxes have been calculated properly or not. Next, on employees, audit will act as a moral check from preventing them from committing frauds. Next, audit also will help for identifying frauds and errors. Correct or not? Yes. So from each, from the point of view of each stakeholder, you have to write. Next, for the shareholders, audit will act as an independent verification mechanism. Right? All these points you need to mention. See, confidence to users, independent mechanism, moral check on employees, determining tax liabilities for government. Next, auditor financial statements can be relied by lenders for making credit decisions. Audit may also detect fraud or error or both. Next, audit reviews the existence and operation of various controls operating in the entity. This point also you need to write. So all these are the benefits of audit, advantages of audit. So you have to think from the point of view of each stakeholder, bankers, government, shareholders, all the stakeholders taken together. Understand? Yes. Next, Hari Limited was having pager. Pager means a messaging tool. Like if you have seen the movie Pushpa, in Pushpa movie, Allu Arjun uses that pager, wherein he will get messages. Right? Pager is nothing but a device on which you will get messages. Okay. So Hari Limited was having a pager manufacturing plant, and looking at the demand, it was of the view that company will grow continuously in future. So based on demand, it is of the view that company will grow drastically in future. But with the introduction of mobile phones in the market, plant was shut down completely. The shareholders of the company were of the view that auditor failed to perform their duty and have not informed to them about the company's inability to continue its business. Now, for this, the stakeholders are blaming auditor, saying that auditor did not tell us that the company will shut down. See, how will the auditor know about future? Correct or not? How can auditor guess about future? This is also one of the inherent limitation of audit. Future events cannot be guessed by the auditor. Correct? Otherwise, they might not have suffered the loss like that they are saying. Is their view correct? No. List down the factors giving rise to inherent limitations due to which auditor cannot provide guarantee that financial statements are free from material misstatement. 5 inherent limitations you have to write down. First inherent limitation, nature of financial reporting. Under nature of financial reporting, you have to take the examples of inherent limitations of internal control. Next, nature of audit procedures. Under this, you have to take 3 examples. One is sampling. Next one is management might not give complete information. Next, concealment of fraud. Next, timeliness of the available information. This is the third one. Next, audit is not the investigation. Finally, future events. All these 5 points you have to mention as inherent limitations. Getting it? Yes, sir. Next, question number 18. XYZ Limited, a manufacturing company based in India, operates multiple plants across the country and deals in complex machinery, which requires specialized maintenance and valuation expertise. XYZ appointed CA Dhruv as a statutory auditor. During the audit, he observed that management consistently applied the same method for valuation of inventory over the past few years, but this year, without proper disclosure, they switched to a different valuation method, which resulted in higher reported profits. So basically, management changed the accounting policy and they have not disclosed it in the financial statements. Does such a matter fall within the scope of audit? So, is this matter within the scope of audit? Yes, it is within the scope of audit. Why? Because disclosure of the financial information, proper disclosure of financial information, that comes within the scope of audit, right? So I have told you that code CRPF, C for coverage of all the aspects of entity, R for reliability on sufficiency of information, and P for proper disclosure of financial information. All these things, they come within the scope of audit, CRPF. Okay, yes sir. Same thing you have to explain. Next, question number 19. See, okay, question number 19. PD and Co. Chartered Accountants were appointed as statutory auditors of MR Limited for the financial year 23-24. MR Limited included the following clause in the appointment letter to the auditors. The auditor shall be responsible for detecting frauds that may happen in the company during the financial year. See, can they put this clause in the engagement letter that auditor has to detect all the frauds that happen in the company? No, it is not possible for the auditor to detect all the frauds. Why? Because of inherent limitations of the audit. Now, the auditor objected to inclusion of such clause in the appointment letter discussed in the light of scope of audit. You should also say that there are inherent limitations because of which auditor cannot detect all the frauds, and audit is not an investigation also, right? This point also you should mention. Audit is not an investigation to identify all the frauds. In case of investigation, you will find out the frauds that are taking place, but audit is not such an engagement. So you need to mention this thing. So scope of audit in detection of fraud. In conducting audit of financial statements in accordance with SA 200, you need to provide reasonable assurance. You have first of all mentioned your uh, objective. Next, audit is not an investigation. This point has to be written. Okay. And audit is distinct from investigation. Investigation is a critical examination. You have to explain what is meant by investigation. We have already seen audit versus investigation. In that investigation, we have seen the definition of investigation, what will be done in investigation, that you need to mention. And the scope of audit is general and broad, whereas scope of investigation is specific and narrow. Basically, here you have given differentiation between investigation and fraud. If you just identify that because of inherent limitations of audit, you cannot identify all the frauds, and one such inherent limitation is audit is not a investigation. If you identify that, you can just differentiate between audit and investigation, and the answer gets completed. Understanding? Yes sir. Next, question number 20. An audit is a reasonable assurance engagement, whereas review is a limited assurance engagement. Yes, we have already discussed this. Both types of assurance engagement provide assurance to user. Yes, but the differ in degree of assurance offered. Okay, what they are asking, explain the difference between reasonable assurance and limited assurance engagement. We have already seen this. Reasonable assurance engagement is a high level of assurance. Limited assurance is a lower level than compared to the reasonable assurance. And the procedures that you perform in case of reasonable assurance will be elaborate and extensive, because this is the audit. Example is audit. Whereas in case of limited assurance, fewer procedures you will perform. Example is limited review engagement. Limited review engagement is mandatory for only listed companies, right? Yes sir. Next, question number 21. XYZ Limited, a manufacturing company engaged in production of various types of yarn, is planning to expand its operations into new geographical market and also add new products. Okay. company has prepared prospective financial information. You need to observe prospective financial information to be presented to potential investors and financial institutions to secure funding for expansion. XYZ engages a firm of auditor to conduct assurance engagement on this prospective financial information. During engagement, auditor reviewed and assumptions made by XYZ management and issued a report. Okay. Explain the key difference between prospective financial information and historical financial information. Already we have seen same type of question, correct or not? How does this distinction impact the level of assurance provided in an assurance engagement? So you have to differentiate between historical and prospective financial information. Already we have discussed this answer, right? And you will provide a moderate level of assurance. Moderate level means nothing but a limited level of assurance, I told you, right? Yes. Next question number 22. Assurance engagement means an engagement in which a practitioner expresses conclusion designed to enhance the degree of confidence of intended users other than responsible party about the outcome of evaluation or measurement of subject matter against the criteria. Yes, this we know. In this context, give 3 examples of assurance engagement highlighting difference in the nature of assurance provided by such engagement. First of all, you will provide assurance on historical financial statements. You will call it as audit. That you can give first example. Next, you can also provide assurance on prospective financial information. You will call it as you will call it as assurance engagement. Yes, AE series is applicable. So examination of prospective financial information. Next, you can also provide limited assurance on historical financial statements, which you will call it as the review. So review of financial information. These 3 different types of assurance engagements you can give as examples. Okay. Yes. If they have asked fourth one, you can give assurance on operating effectiveness of internal controls. That also you can add as example. Understanding? Simple. If you just have an idea of 3 or 4 items on which you will provide assurance, you can frame the answer. Okay. Yeah. Next. Question number 23. Mention any 3 standards issued under authority of ICAI Council which are collectively known as engagement standards. We have seen 5 standards. They are asking only engagement standards. So only 4 standards. What are they? Auditing standards, nothing but standards on auditing. Next, SAE series, standards on assurance engagement. Next, SRE series, standards on review engagement. Next, SRS series, standards on related services. If at all they have added engagement and quality control standards, then you can use standard on quality control also. Since they have not added the word quality, you will just mention 4 standards. Also mention the purpose of issue of these standards. Why the auditing standards have been issued? In order to ensure uniformity, correct or not? In order to improve quality of audit, in order to improve quality of financial reporting, right? In order to provide knowledge to the chartered accountants on how to do the audit. For all these purposes, auditing standards have been issued. See, quality of financial reporting, uniformity, professional knowledge, audit quality, and also establishing benchmarks. All these are the purposes for which auditing standards have been issued, right? Yes, sir. Next, question number 24. Mini and Associates Chartered Accountants were appointed as auditor of Sin Limited, a construction company. During the audit, CA Mini, a partner of the firm, noticed the following. The company has several ongoing projects, but only selected project revenues have been reported. Okay. So they have not reported some of the revenues. Several expense vouchers are either missing or handwritten and lack proper authorization. So in the financial statements, they have excluded some of the expenditure vouchers. The company has changed its depreciation method from the straight line method to return on value method without adequate disclosure. They have not. See, you can change your accounting policy, but provide a proper disclosure of that accounting policy. They have not provided that disclosure. Now what they are saying, these matters were brought to the attention of management. However, management argued that these issues fall outside the scope of auditor. Are these issues outside the scope of auditor? No, they are within the scope of auditor only. You have to write all the 3 things: coverage of all areas that impact the financial statements, reliability, sufficiency of information, next, proper presentation, disclosure of financial information, CRPF. All the 3 points you have to write and say that these things are within the scope of audit only. Got it? So see, on scope of audit, there are 3 to 4 questions that have been asked in the examination, and even on the assurance engagement. On this concept of assurance engagement also a lot of questions are asked, like that prospective financial information, historical financial information. So on these concepts you need to be very much thorough. Okay, there is high chance that they will ask these questions. Next, question number 25. CA students Sriranga and Manga were discussing on the assurance which the auditing services provided to the users in the form of opinion on the financial statements, okay, by means of written report. Such an assurance lends credibility to financial statements. You are required to state some of the aspects examined by the auditor to ensure that financial statements which are audited are not misleading. See, in the class I have given you 6 example of areas that the auditor will verify while doing the audit. They are asking that only. See, you are required to state some of the aspects examined by the auditor. So whatever that 6 points which we have discussed, you need to write down that. The code is CCTV Om Sai. What is CCTV Om Sai? First, C for financial statements. See, under financial statements, with respect to financial statements, there are 4 points. CCTV. First, see, financial statements are showing clear and unambiguous picture. That is first C. Next C stands for the amounts in the financial statements are properly classified, described, and disclosed. Okay. So first, there is no there is the financial statements are clear and no unambiguity. And next C for proper classification. Next, financial statements show true and fair view. Next, final V for financial statements have been drawn with reference to books of accounts, because whatever the financial statements you prepare, they should match with books of accounts or not. So here V means not single V, double V you have to take. Double V means like this, W, with reference to books of accounts, financial statements has to be drawn. So CCTV, financial statements. Next, in the books of accounts, whether there are any transactions that has been omitted, that will be seen. Next, for whatever the entry that has been made in the books of accounts, is there proper sufficient appropriate audit evidence or not, that also will be seen by the auditor. So these are the 6 things that the auditor will check while doing the audit. Examples of 6 things that the auditor will check. Okay, 4 things with respect to financial statements auditor will check, 2 things with respect to books of accounts auditor will check. Got it? Yes, sir. So CCTV Om Sai. Next, question number 26. Mickey and associate chartered accountants were appointed as auditors of STI Limited, a textile manufacturing company, for the financial year 2024-25. Management of the company discussed with the newly appointed auditors that company has been suffering losses for the last few years, and also directors are suspecting that accounts are not properly maintained and might contain errors and frauds. So in the given situation, management of the company requested auditors to give complete assurance guarantee about the financial statements of company. Is it possible? No, auditor cannot give absolute assurance. Complete assurance cannot be given. Can the auditors give complete assurance? Not possible. Discuss with reference to objective of audit. So you have to say objective of audit is to obtain reasonable assurance that financial statements as a whole are free from material misstatement, whether due to fraud or error. All that point, as we have seen in SA 200, you have to mention. Next, why you cannot give absolute assurance? Because of inherent limitations. All that inherent limitations you have to mention. Okay, same thing that we have discussed earlier. This type of question we have seen earlier also, right? Yes. Next, question number 27. See, you can mention all the inherent limitation, and you have to give more focus that audit is not an investigation. Okay, because in investigation only you will find out all the frauds. In audit you cannot find out all the frauds. Okay, you can mention all the inherent limitations and focus more on investigation, because in the question they are focusing more on identifying of frauds. Auditor cannot identify all the frauds because audit is not an investigation. On that point you focus more. Okay, yes sir. Next, question number 27. Mr. Praveen, an article clerk, wants to know the applicable engagement standards in the following situation. Okay, let us suggest the applicable engagement standard. An assignment to assist management of Healthy Foods Limited with the preparation and presentation of historical financial information without obtaining assurance on the on that information. So if you are not providing any assurance, means for that engagement which series is applicable, first of all identify the series. Yes, AE is applicable or no? In SAE assurance is provided, no, so no. Yes, RE is applicable or no? In RE also, yes, RE also will provide limited assurance, so that also not applicable. Yes, STAR is applicable, standard on related services. In standard on related services, you will not provide any assurance. So SRS 2000 4010 is the standard that deals with compilation engagement. Compilation means just helping the management to prepare the financial statements. You will not provide any assurance on that. So for that engagement, for this point one engagement, SRS 4410 is applicable. Next, an assignment to examine prospective financial information. To examine prospective financial information, you are providing assurance. So SAE 3400 will be applicable for that. So you need to suggest the same 3400 SRS 4410. Further explain, Mr. Praveen, difference between reasonable assurance engagement and limited assurance engagement. Already we have seen difference between reasonable and limited assurance engagement. Same thing you need to write down. Next, question number 28. You are appointed as a statutory auditor of Zebra Industries Limited for financial year 24-25. During the course of audit, you observe that a company's management frequently delays in providing certain documents and explanation requested by you. A portion of accounting records related to special procurement is supported only by basic knowledge without proper vendor details. You also notice that some transactions appear to be with entities that may be related to the company, but management denies the existence of any such relationship. Further, during verification, you find that some documents produced as evidence appear usually uniform and lack standard commercial markings, raising concerns about their authenticity. So you are having concern about the authenticity of the documents. Since your audit is conducted on test check basis, you are unable to verify all such transactions. If you see here, they are using sampling, and they are also saying that company's management is not giving complete information. So all these points are examples for which inherent limitation? Are you remembering? Nature of audit procedures. Under nature of audit procedure inherent limitation, we have seen three examples: sampling, management might not provide complete information, concealing of fraud, right? So this question is referring to that inherent limitation. See, based on above, explain inherent limitation of audit that restrict the auditor from obtaining absolute assurance that financial statements are free from metal misstatement. You need to refer to nature of audit procedure. Sampling, management may not provide complete information, concealing of fraud. Got it? See, you need to observe what the case scenario, what the information in the question is speaking about. Based on that, you need to link to the concept. Getting it? So here they are speaking about sampling, here they are speaking about management, and they have also spoke about transactions with related parties in which there might be frauds that might be properly concealed, right? So all these three are examples for nature of audit procedures, which is an inherent limitation. You have to mention that. Getting it? Yes, sir. Next. Question number 29. RKP and Co Chartered Accountants were appointed as statutory auditors of Orion Engineering Limited, a company engaged in manufacturing heavy industries equipment. During the course of audit, certain shareholders raised concerns before the auditors regarding the following matters. Let's see. They asked the auditor to certify whether sophisticated imported machinery installed in the factory was in perfect physical condition and to estimate its remaining useful life. Tell me, is auditor having expertise? Is auditor competent enough to value plant and machinery and to make estimation about useful life? No, he is not having that much competence. He is not expert in that area. So this is not within the scope of audit because it is outside the competence of auditor. Okay, sir. Next, some shareholders also requested auditor to confirm the genuineness of certain supplier invoices and contracts, alleging that some documents might be forged. See, whether a document is a forged document or not, that will be identified by forensic department. Auditor cannot identify the forged document, so that is also not in the scope of audit. Next, A group of investors further demanded that auditor conduct a detailed investigation into alleged fraud by senior employee, including questioning employees and recording statements under oath. So, does audit involves detailed investigation? No. So, this is also not within the scope of audit. All these three things are not within the scope of audit. You need to explain the same thing, that these are not within the scope of audit, saying that matters outside auditor's technical competence, authentication of documentation, and conducting official investigation, all these are not within the scope of audit. And did they also ask a difference? Yeah, also distinguish between audit and investigation. So audit and investigation, already we have seen. Investigation is a fact finding approach. In investigation you will focus on one particular area, it is a narrow, right? All those things you have to write down. So by this we have discussed all the questions from chapter number 1. Now I'll open chapter number 2. Yes, guys, now we'll discuss question and answers of second chapter. In this second chapter, we will be covering ethics plus SA 210. These two concepts we will be covering in this particular chapter. And the weightage of this particular chapter is 4 to 5 marks. You will get 4 to 5 marks from this chapter. So yes, let us start discussing questions. Question number 1. CAP Suryakantam has conducted audit of accounts of an entity for a particular year. ICAI has issued a letter to him relating to certain matters concerning audit. He did not even bother to reply to the letter despite reminders. So, ICAI has requested certain information through a letter, but the chartered accountant CAP Suryakantam has not replied to that particular letter. So, in this situation, which fundamental principle CAP Suryakantam is lacking or violated? Can we say professional behavior is being violated? So basically professional behavior says that you should not do anything which brings disrepute to the profession, and you should also comply with requirements of all the laws and regulations. Now if you see here in Chartered Accountancy Act, it is mentioned that whatever the information that ICAI asks, you need to give reply to it. If you don't reply to ICAI, you are not following CA Act. Since you are not following a particular law or regulation, it will be treated that you are not behaving professionally. Got it? So in this situation, the fundamental principle that has been violated is professional behavior. Let's see what they're asking. Discuss which fundamental principle governing the professional ethics is disregarded by him. So I already explained you which fundamental principle is violated and why it is violated. So professional behavior says you need to comply with relevant laws and regulation. In the given situation, which law CAP Suryakantam not complied? Chartered Accountancy Act 1949 has not been complied. Got it? Yes, sir. Moving to question number 2. A chartered accountant in practice issued a certificate showing original cost of plant and machinery installed in premises of client for 9 crore rupees to save some regulatory fees for his client. However, original cost of plant and machinery was 15 crore as per records of the client. Which fundamental principle governing professional ethics is violated? So, a particular plant and machinery's value is 15 crores, but in order to save certain regulatory fee for the client, auditor has signed a certificate stating that the value of this plant and machinery is 9 crores only. Now, which fundamental principle is violated? Can we say integrity? Why integrity? If you see the integrity, it says that if chartered accountant knowingly or unknowingly associates himself with any information which is false or misleading. In such a situation, it will be said that chartered accountant is not acting in a integrity manner. In this situation, if you see, chartered accountant has associated himself with a particular information, that is plant and machinery's value, knowing that it is wrong. Correct. So if you see, integrity requires accountant to be straightforward and honest. Most of the students, they will remember just this first point, that integrity requires the chartered accountant to be straightforward and honest. They will forget the second point, which says that a professional accountant shall not knowingly be associated with reports, returns, communications, or other information where the accountant believes that information contains materially false or misstatements. So if any information contains, any statement contains wrong information, you should not get associated with that information. In such a situation also, you will be treated as lacking integrity. Getting it? Yes, sir. So in the given case, false certificate knowingly issued by misstating original cost of machinery, therefore fundamental principle integrity is violated. Right? Yes, sir. Next question number 3. CA Raman Gupta is offered appointment as auditor of a company. One of his distant uncles held some shares in the company. Holding of such shares by distant relative is not prohibited under provisions of law, nor does it affect his independence. Okay, fine. Before he could accept appointment, he received unfortunate news of death of his uncle, who had died without any children. He came to know that he was a nominee of these shares having substantial value. It landed him in a tricky situation. What should be proper course of action for him? So what happened here? There is a chartered accountant. He got appointed as auditor of a company, and one of the relative of this particular chartered accountant is holding shares in this particular company. Now, this does not create any threat, but what happened? Unfortunately, this relative has died, and this person has kept our chartered accountant as nominee. So the shares got transferred into the name of our chartered accountant. Now, being shareholder of this company, if you accept the audit, which threat to independence happens? Self interest threat. Correct or not? Yes, sir. Now, knowing that there is a self interest threat, will you be silent? You will implement certain safeguard, or you will try to eliminate the threat. Correct. In this situation, how can you eliminate the threat? You should suggest this particular chartered accountant to sell the shares that he acquired through inheritance. By selling the shares, he is completely eliminating this self interest threat. So this is how you need to explain in the answer. See, this is independence. So they have given the meaning of independence, and threats are those aspects that prevent auditor from being independent. Yes, that is the meaning of threat. And when such threats exist, auditor, what he should do? He should desist from the task or eliminate the threat completely, or put safeguards so as to reduce the threat to an acceptably low level. These are the three options available to deal with the threat. Now, in the current situation, it has created a self-interest threat. So, since it has created self-interest threat, you can eliminate this self-interest threat. How? By selling shares immediately before accepting the engagement. Got it? So, this is how you need to suggest in the given answer. Next question number 4. A chartered accountant receives about 40% of his audit fees from a single client. Discuss how it could affect independence of a chartered accountant as auditor of this client. So if you are getting significant portion of your revenue from single client, it will create a self interest threat. See, you should always remember, self interest threat occurs because of financial interest. So in any situation, if you are having financial interest like investment in shares of company, giving loan to company or taking loan from the company, or depending on the company for major portion of your fees, like this, wherever monetary terms are involved, and because of that monetary thing you are not able to act independently, then that creates a self interest threat. Clear? Yes. So here which threat creates is occurred, self interest threat occurred, because there is a financial aspect, you are dependent on the client for major portion of your fees. Next question number 5. CA Murali Madhavan provides accounting and bookkeeping services to a leading NGO engaged in environmental protection work. He is also offered audit of accounts of NGO. Identify and discuss what kind of threat to independence may be involved in this given situation. Tell me, you are preparing books of accounts of the NGO, and you are also appointed as auditor of that NGO. Will this create self review threat? Yes, you are only doing the work and you are only doing the audit of that work. Of course, it will create a self review threat. You need to write the same. It creates self review threat, and you will explain the situation. You will explain what is meant by independence, how what is meant by threat to independence, and when such a threat exists, what you should do. These three are the common points in the examination. Whenever they ask you a question with respect to threat to independence, you need to write these three common points. First of all, you will explain what is meant by independence. After that, you will explain what is meant by threat to independence. After that, you will explain if there is a threat to independence, what you should do. These 3 points commonly you will write. After that, you will say in the current scenario which type of a threat has occurred, and what is the meaning of that threat, and how it has occurred. This is how you need to present the answer in case a question is given with respect to uh, threats to independence. Getting it? Yes, sir. Next, question number 6. The auditors of a company have only relied upon management representation letter regarding treatment of certain tax matters under appeal by the company. The auditors have not carried out any other audit procedures to justify management's treatment of the said tax matters under appeal in the financial statements. What is lacking on the part of auditor? Here, can you say auditor has not exercised professional skepticism, right? Because he has just relied on the representation of the management. He should become alert in this situation, because there is a dispute going on. You should become alert, and whatever the evidence you obtain, you need to critically assess it. Forget about assessing the evidence. Here you are not at all obtaining any other evidence apart from management representation. Can we say you acted carelessly here? Yes. So this comes under lacking of professional skepticism. Okay. So whenever a question comes with respect to professional skepticism, you need to explain what is professional skepticism. Professional skepticism involves three things. What are those three things? Being alert, and having a questioning mind, and third one is critical assessment of audit evidence. You need to explain that professional skepticism means all these things, all these three things, and you will say that in the given situation professional skepticism has been compromised. Got it? Yes, sir. Next, question number 7. Briefly outline how principle based approach differs from rule based approach. What is this rule based approach, principle based approach? If you remember, there are two approaches to comply with ethics. One is principle based, another one is rule based. What is principle based approach? In case of principle based approach, you will not exactly follow the given rule, but you will try to achieve underlying purpose, right? You will call it as spirit of ethics. This is the key term. In case of principle based approach, you will try to achieve spirit of the ethics, and of course you will exercise professional judgment in case of principle based approach. So exercise of professional judgment is involved. Whereas in case of rule based approach, in the class I used to tell, rule based approach is balaya approach. Whatever might happen, you will strictly follow the rule, correct? And of course, so you will strictly follow the rules. It has a narrow outlook and it is very rigid. So these are the key terms that you should explain in your answer with respect to principle based approach and rule based approach. Got it? Yes, sir. Next, question number 8. How application of a professional skepticism throughout audit is helpful in reducing the audit risk? If you observe here, they are asking advantages of professional skepticism. You need to clearly observe the question. In case of audit, what happens is students, they will fail to understand what question is asking. If you observe here, they are asking advantages of professional skepticism. So what are the advantages of professional skepticism? First of all, before explaining advantages, you will explain what is professional skepticism. That is common, the 3 points which we have discussed in the previous question. After that, the advantages are, it helps you to avoid overlooking the unusual circumstances, over generalization, and it will also avoid you for in using inappropriate assumptions with respect to determining nature, timing, and extent of audit procedures. Here, for these three are the advantages. To remember these three, you can use this mnemonic OA. Generally, OA means overaction. Shortcut for OA is overaction. Okay, so you have to add one more O into that overaction and make it as double OA, which is mnemonic for advantages of professional skepticism: overlooking unusual circumstances, overgeneralizing when drawing conclusions, and using inappropriate assumptions. These are the three advantages of professional skepticism. Next, question number 9. Truthful Products Private Limited is engaged in trading stationery items. During the year 23-24, there was a huge fire in one storage location of the company, resulting in loss of inventory of 5 crore. As a result, operations of the company were badly affected for about 2 months. Unfortunately, insurance claim of the company was rejected due to certain defects in the policy issued, and the loss was booked by the company in the year 23-24. So a huge loss of 5 crore occurred and insurance company rejected the claim. All that complete 5 crore you have booked as loss in the current year 23-24. Okay, afterwards there was no change in the nature of business of company in relation to last year. The draft financial statements of company reflect the following. So in the draft financial statements, if you observe, for financial year 22-23, for financial year 23-24, comparison current year last year, revenue for last year is 80 crore, current year it has become 100 crore, so 20 crore increase. And net profit is 6 crore for the current year, and sorry, for the previous year, and for the current year it has become 10 crore. See, if you observe in the current year, they have booked a loss of 5 crore. Even booking that loss of that extraordinary loss of 5 crore, there is a increase in the profit of company. Is it unusual or not? Yes, it is unusual. See, there might be possibility that genuinely company has earned 10 crore. That possibility is also there. But since there is a 5 crore loss and profit is increased 4 crore, it has become 10 crore, it should create certain doubt to the auditor. Okay, now CAD, who has been statutory auditor for the past 3 years, so CAD is doing audit of this company for the past 3 years, has decided to rely upon the same test of details as performed in the previous year. So test of details is nothing but the audit procedure. So CAD, he decided to use same audit evidence that has been obtained in the previous year. He decided not to perform any audit procedures in the current year. In the given situation, what is lacking on the part of auditor? Can we say auditor is not exercising professional skepticism? Yes. Why? Because there is a unusual situation. There is a increase in the profit, and 5 crore has been booked as a loss in the current year. Even after booking that loss, profit has increased to 10 crore. How can that happen? Can you say this is an unusual situation? Whenever such unusual circumstances are there, should the auditor become alert? Yes, he should become alert, and he should question it. He should exercise questioning mind. But without doing all that things, he decided to just rely on the audit evidence of the previous year. Can we say he is not exercising professional skepticism in the current situation? Yes, he is not exercising professional skepticism. You should write the same thing. You will explain what is meant by professional skepticism, and because of maintaining professional skepticism, what advantages you will get, you will write that. And in the given situation, what has happened? Profit increased from they have calculated net profit ratio on 80 crore, 6% it is 7.5%, and on 100 crore, 10 crore profit means 10% net profit ratio. So net profit ratio increased from 7.5% to 10% in the current year. It's fine, it can increase. But in the current year, you have also booked a loss of 5 crore. Even after booking that loss, net profit ratio increased. So this is a unusual circumstance. Despite of that unusual circumstance, auditor decided to rely upon the same test of details of the previous year, which is not correct. So you need to conclude that here auditor did not exercise professional skepticism. And what auditor should have done? He may include substantive analytical procedure to analyze the variations and seek necessary explanation from the management. He should have performed certain analytical procedures, and the variations that he has found, he should have asked the management the reasons for that variation, correct? Which he has not done in the current situation. You need to say the same thing. And this one, this last point, this is not related. In the suggested answer they have given this point, but even if you don't write this point, you will get the full marks. Getting it? Yes sir. Next, here they have explained what things has to be documented by the auditor. He need to document overall audit strategy, audit plan, changes that has been made. This is not asked in the question, so you need not write this point in the answer, but in the suggested answer they have given it. Even though you don't write it, you will get the full marks. Clear? Yes sir. Next, question number 10. Familiarity threats are self-evident and occur when auditors form relationship with the client where they end up being too sympathetic to the client's interest. Explain. Okay, see, you need to explain in which situation familiarity threat occurs. There are certain 4 examples that are present in the material. You need to write those 4 examples also. Here you can add it as or the same question which is asked in another MTP. So what you will say, you will explain that because of the relationship that the auditor develops with the client, he becomes too sympathetic to the client's interest, and it can occur because of certain examples: close relative of audit team working in senior position, former partner of audit firm is acting as a director of the company now, or long association between auditor and the client, and acceptance of significant gifts or hospitality from the client. These are some examples of situations which creates familiarity threat. And if you see in this question, they also asked, also briefly state how provisions of Companies Act 2013 help in addressing such threat. If you observe, in the Companies Act 2013, there is a provision which acts as safeguard to safeguard to familiarity threat. Nothing but rotation of auditors. If basically in final level you will be learning at that concept of rotation of auditors, wherein a individual auditor cannot act as auditor of same company for a period of 5 continuous years, and there will be a cooling period of 5 years. I guess this concept it is there even in CA Inter law also, if I am not wrong. So what are the provisions of Companies Act that act as a safeguard to familiarity threat is this one only. Provisions related to rotation of auditors. Rotation of auditors means nothing but an individual auditor cannot act as auditor of same company for one term of 5 consecutive years, and a audit firm cannot act as auditor of a same company for two terms of 5 consecutive years, and there will be a cooling period of 5 years. These concepts will be there in that particular rotation of auditors. So because of rotation of auditors, what is happening? You are not allowing the same person to act as auditor of the company for continuously longer period of time. Yes. Next, question number 11, which is May 2024 examination question. Let's see. Try whether you will be able to answer this question or not. A professional accountant is expected to comply with the fundamental principles of professional ethics at all the times. Yes. Explain which fundamental principle governing professional ethics is violated in the following situation. So, out of the 5 fundamental principles, which is violated, you need to explain. First situation. Chartered accountant in practice accepted appointment as auditor of a firm in which his sister was a partner. So, in a particular entity, your sister is a partner. In that entity, you are appointed as an auditor. Can you say in this situation, you will lose your objectivity? Yes, you might take decision in favor of your sister, right? Yes, so objectivity is compromised. Next, chartered accountant in practice was approached by his friend to seek some insider information about a company which was a client of the chartered accountant. He could not refuse his friend's request. Insider information means the information which is not made available to public is known as insider information. Generally, in case of listed companies, you will find this term insider information. So, if you are a auditor of a company, you will get access to lot of insider information, confidential information, which is not yet made available to the public. Now that insider information you should not disclose to others. In this situation, the chartered accountant disclosed the insider information to his friend. Can we say he has compromised confidentiality? Yes, confidentiality is compromised. Next, chartered accountant in practice failed to inform his client about change in laws applicable to his client. So, whenever there is any change in the law, chartered accountant has to get himself updated. We will call this as professional competence and due care. So, if chartered accountant does not update himself about the laws and regulation and does not intimate the client about change in the laws and regulation, it will be said that he has compromised professional competence and due care. Got it? Yes. So these are the three principles that are compromised: objectivity, confidentiality, professional competence, and due care. You need to explain those things. Next, September 24 question. Question number 12. CAP is a professional accountant in service. In service means employment. Okay, employee. In terms of employment and professional relationship with employer, he has to be alert to possibility of inadvertent disclosure of any information outside the employing organization. See, whatever the 5 fundamental principles are there, those 5 fundamental principles, they are applicable both to chartered accountant in practice as well as a chartered accountant in service. Okay, however, in view of disclosure required by law, CAP had to divulge the information and documents as evidence in course of legal proceedings. So, CAP has to disclose certain information of the client as part of legal proceedings, since it is required by law or regulation that was happening in the given situation. Now, whether CAP has violated any fundamental principle governing professional ethics in this case, see, generally here confidentiality, they are asking about confidentiality. Now, the client's information or the employer's information you have to keep confidentially. But there are three exceptions to that confidentiality. What are those three exceptions? If the information is required by law or regulation, you can keep confidentiality aside. If client himself has given you permission to disclose the information, then also you can keep confidentiality aside. Or there is a professional duty on you to disclose the information, then also you can keep confidentiality aside. Professional duty means, in the class I have given example of peer review, investigation by NFRA, all those situations they come under professional duty, correct? So in these three situations you can disclose confidential information. So can you say in the question, the situation that has been given, it comes under exception? Yes, since it comes under exception which is required by law or regulation, CAP will not be held responsible for violation of confidentiality because it comes under exception that you need to explain. Got it? Yes. So the question is about exceptions to confidentiality. Next, question number 13 is Jan 25 examination question. CAH is managing partner of HK and Co, a chartered accountant firm, having registered office at Delhi, with the annual task of reviewing whether any threat to independence is observed in the firm. CAH noted down the following observations received from the staff and partners of the firm for the financial year 23-24. Basically, some situations are given. In that situation, which threat to independence occurs, you need to write it. See, let us see. First one, CAJ, partner of firm, performed statutory audit as well as non-audit engagement for Mrs. Takeaway Private Limited. Which threat? Self review threat. Why? Because in non-audit engagement you might have performed a work, and in the audit engagement you might have to verify that same work, so that creates a self review threat. Next, CAM, partner of firm, who has done income tax audit for Mrs. Happy Associates, wherein CAM has material significant indirect financial interest. Whenever there is a financial interest, I told which threat it is? Self interest threat. Correct or not? Yes, sir. Next, cost of air travel and stay accommodation of family members of audit team for audit of Chennai was borne by client stationed at Chennai. See, travel expense of audit team borne by client, that's fine. But they are saying family members of audit team are also borne by the client. Can you say this will create a familiarity threat? Why? Because why will client spend money on your family if he is not that much familiar with you? Correct or not? Yes. So this creates familiarity threat. One of the clients, Mrs. Chalk Limited, threatened to replace. Threatening means wherever you find a threatening, it becomes intimidation threat. Spelling might be wrong. Intimidation threat. Oh, let me write correct spelling. Intimidation threat. Right? Yes. Next, CAN, partner of firm who audited Mrs. NM Private Limited, became arbitrator for dispute between Mrs. NM Private Limited and one of its vendor. Arbitrator means nothing but just like a judge. Okay, in case any dispute happens, you will go to the court. In the court there will be judge, right? Arbitration is a alternate dispute resolution mechanism apart from court. If you go to the court, it will take a lot of time. So to get the judgment in lesser time, you will go for arbitration. Now, chartered accountant, auditor of company is acting as a arbitrator for the company. So here it creates a advocacy threat. Being a arbitrator, then there is a high chance that you might advocate the client, you might speak on behalf of the client, which creates advocacy threat. Next, CAN accepted the assignment of tax audit on behalf of firm of TRF Industries. Management agreed to pay him contingent fees. Contingent fees means fees that is based on findings. If you find 10 misstatements, I will pay 5 lakh rupees. If you find 5 misstatements, I will pay 10 lakh rupees. If you don't find any misstatements, I will pay 15 lakh rupees. That is known as contingent fees. Fee linked to the output. So here fees is a financial. So it creates a self-interest threat. Understanding? Yes. So you need to explain it. You need to present the answer in this particular manner. Got it? Yes, sir. Next, question number 14. Identify and explain fundamental principles being referred to in the following cases. Again, same format. See, in this chapter, in this ethics, mostly if they ask you the question, they will give some 4 or 5 situations and they will ask, tell which fundamental principle is compromised here, or which threat to independence has occurred here. 90% of the case, this type of question only will come from this ethics chapter. Okay, so you should be very clear with that 5 threats to independence and the 5 fundamental principles. If you are clear with this 10 points, for sure you will get 4 to 5 marks. Okay, yes, sir. Jan 25 exam question. So if you see in the Jan 25, they have asked 2 questions. This one also Jan 25. This one also Jan 25. So that means 10 marks from ethics only. Jan 25. Very lucky. 10 or 8 marks. So, professional accountant should act diligently and in accordance with applicable technical and professional standards while providing professional services. Nothing but professional competence and due care. Yes. Professional accountant shall not knowingly be associated with reports where he believes that information contains a materially false or misleading statement. Nothing but integrity. I told you, na, second point of integrity is this only. Most of the students will forget this second point. So you should remember that second point. So you'll just explain it. Explain what is meant by professional competence and tell how professional competence is compromised if in the question a case scenario is given. Similarly, explain integrity. Okay. Yes, sir. Got it, sir. Clear, sir. Now, questions related to ethics concept are completed. At the end, still there are some 3 or 4 questions related to ethics. We will see that 3 or 4 questions also, and then we will go to essay 210, so that all the questions related to ethics at one time we will complete, and all the questions related to essay 210 will complete one time. Right? Yes. Yeah. This one. Question number 24. Mentioned below are the threats to independence of auditors. Classify them with the reasons into the appropriate type of threats, that is advocacy, intimidation, familiarity, self-review, self-interest. Yes, we'll see. Close business relationship with a client. This creates familiarity threat. This is one of the example for familiarity threat which we have discussed. Next, auditor performs services that are themselves subject matter, nothing but self review threat. Next, auditor deals with shares or securities of a audited company. This is important. Most of the students, they will confuse here. They are saying auditor deals with shares or security. Now, what is meant by dealing? You can take 2 assumptions here. Auditor dealing in shares means auditor investing in shares, securities of the company. That is one assumption. If you take that assumption, wherein deals means investing
investing, then it creates self interest threat. Another assumption that is possible is deals means auditor acting as broker or underwriter or advocating in the IPO, promoting the company. Okay, if you take the meaning of deals as this, then it creates advocacy threat. Okay, both the assumptions are possible, but ICAI in its study material, it has taken this assumption. You have to be very clear with this understanding. You can also take the assumption that deals means investing, and you can say it as a self-interest threat. Okay, yes sir. Next, long association between specific auditors and their specific client counterparts. This also creates familiarity threat. Okay, yes. Here basically close business, sorry, this first one, close business relationship. Business relationship means finance. So it comes under self-interest, not familiarity threat. This is example. This example you will find for self-interest threat, not familiarity threat. It was my mistake, right? Yes. So self-interested and reasoning for that self-interest, self-review, reason, advocacy threat, reason. So third point, they have taken dealing means not as investing. Dealing means promoting the shares of company, acting as an underwriter. Those kind of things they have taken for the word dealing, and they have wrote as advocacy threat. Next, familiarity threat, reasoning, intimidation threat, reasoning, intimidation. Okay, this one, last one. This is the fifth point. Auditor deterred from acting objectively with an adequate degree of professional skepticism. So auditor deterred means auditor was stopped by the management. Management threatened the auditor from acting objectively by maintaining a professional skepticism. This comes under professional, sorry, this comes under intimidation threat, right? Yes. So intimidation threat. So this is how you need to present this particular answer. Next. So this was asked in September 25 examination. Next, question number 25. If you observe, all the examination questions from ethics chapter are in that format only, which I told you, right? Yeah. Next. CA Jatin is auditor of XYZ Pharma. His brother-in-law's partnership firm. His family relationship creates a conflict of interest that could unduly influence his professional judgment, making it difficult for him to provide unbiased opinion on the firm's financial statements. Nothing but he is lacking his objectivity. Okay. In another assignment of tax audit of a company, CA Jatin is also required to prepare the company's tax returns. He fails to check the latest provision for Income Tax Act, which allows for major new deduction resulting in client overpaying income tax. Nothing but you have not updated yourself with law or regulation. That means professional competence, right? Yes. Next, CA Jatin is also preparing GST returns of one of his clients. The client instructs him to intentionally understate the sales figures to reduce the tax liability. Nothing but integrity is compromised. Correct or not? Yes. So all the three situations you'll explain. Integrity, professional competence, objectivity. Next question number 26. CA Tripath engagement partner based at New Delhi is external auditor of Lab of Nature, a firm. Since last 3 years, the firm is engaged in business of providing tourism services including holiday packages to its club members. It has also provided auditor, including his team members, free holiday for a week every year in one of its premium resorts in Ooty in the state of Tamil Nadu. Nothing but auditor accepting free hospitality from the client. This creates familiarity threat because of accepting the hospitality from the client. You might become too sympathetic to the interest of to the decisions of the client. Correct? Yes. The company has also booked free air travel for engagement team members during all these years. Discuss why chartered accountant is not acting ethically, how are familiarity that's created in the above situation. So, see, firm is providing free hospitality to engagement team members, including engagement partner. In this situation, fundamental principle governing professional ethics are violated. Why? Because of that free hospitality, you might lose your objectivity, and the situation given in the question signifies that auditor have formed relationship with the client where they may end up being too sympathetic to the client's interest. This is nothing but a familiarity threat. So in this way, familiarity threats are created in the situation. Got it? Yes, sir. Next, question number 27. RS and Co chartered accountants were appointed as statutory auditors of Xifi Infra Limited, a listed company engaged in infrastructure development. During the course of audit, it was observed that audit partner CAR had a close personal relationship with CFO of the company. So, which threat it creates? It creates familiarity threat, and there will be lack of objectivity, right? Yes. So if they ask from threat to independence point, you will say familiarity threat creates. If they ask which fundamental principle has been lacked, objectivity, you will say correct. Yes. Next. Firm had also provided consultancy services for designing internal financial controls of Sci-Fi Infra Limited during the same financial year. So self review threat. Additionally, substantial portion of a firm's total revenue was dependent on fees received from the sci-fi. That means self-interest threat. Now, a minority shareholder raised concerns that although auditor may be acting objectively, the circumstances create doubt regarding the auditor's independence. So the circumstances, these three circumstances, they are such that they are creating a doubt on whether auditor is acting independently or not. That means nothing but for following independence, there are two types. One is independence in mind and independence in appearance. In mind, auditor might be actually independent only, but in appearance, when the third party, like minority shareholders, when they are seeing all these circumstances, they are getting a feeling that auditor has compromised objectivity and auditor is not acting independently. So auditor in this situation, he is not independent in appearance. You need to write that point. Okay. So in the light of above, explain whether independence of auditor is compromised. Independence in appearance is compromised. Also discuss the concept of independence of mind and independence in appearance. Just now I have explained you what is meant by independence in mind. Actually, in mind acting independently. Independence in appearance means a reasonable third party, an informed reasonable third party, if he looks at the relationship between auditor and client, he should feel that independence is not compromised. That is known as independence in appearance. Whether both independence in, so see, you need to explain that only. Independence in mind, independence in appearance. And auditor must not only exist independence in fact, that is independence in mind, but he should also be independence in appearance. Now, the following three situations makes it look like auditor is compromising independence in appearance. Got it? Yes. So you should mention that not just one type of independence is sufficient. Auditor should be independent in mind as well also independent in appearance. Both are required. In this situation, independence in appearance might be compromised. Next, question number 28. CA Rohit is conducting audit of Suman Exports Limited. During the audit, he notices that certain sales invoices provided by client contradict the dispatch records obtained from the warehouse. So, two evidences are contradicting with each other. He also observes that managing director gives evasive answers, means managing director not responding properly when asked about certain high value cash expenses. So this creates a doubt about fraud. Additionally, some documents submitted appear to have been altered and certain transactions seem unusual compared to previous year. In this context, explain how CRO should apply the concept of professional skepticism. He should basically become alert. What specific matter should he remain alert to while doing the audit? With respect to four matters, he should become alert. First one, audit evidence that contradicts each other. Next, possibility of fraud. So to these situations, he should become alert. Next, information that brings into question reliability of documents, because in the question they said that documents have been altered. This creates a doubt about reliability of documents and circumstances that suggest need for more audit procedures. The above circumstances given in the question, they suggest for need for additional audit procedures, more audit procedures. So all these situations requires the auditor to be alert. Understanding? Yes, sir. So those were the questions related to ethics. Now we'll see the questions related to essay 210. Question number 15. Chirag, as part of article training, is a part of engagement team conducting audit of a company. He has read somewhere that engagement letter issued by auditor to client also includes expected form and content of auditor's report. Yes, in the engagement letter, expected form and content of audit report also should be given. Now, he was at loss to understand how could an auditor include form and content of report beforehand. See, you will give audit report after doing the audit. After doing audit, you will give audit report, but engagement letter has to be given before doing the audit, correct or not? So what will be the content of audit report, what will be the format of audit report, all that you will know only after doing the audit. But in the engagement letter they are saying that the form and content of audit report should be mentioned in the engagement letter. How will you know form and content of audit report before doing the audit? Not possible, right? So here what you will do is in the engagement letter you will give basic format of and the basic content of audit report, and you will mention that this form and the content of audit report which I am giving in the engagement letter, that is subject to change in the future based on my findings. That point you will mention. See here, form and content of report may need to be amended in the light of audit findings in the future. That point you need to mention. Okay, this entire question is about this point only. Clear? Yes, sir. Next, question number 16. The management of an entity feels that it is not necessary for it to give in writing explicitly to the auditor that it understands its responsibility for preparation of financial statements in accordance with applicable financial reporting framework. Is that understanding correct? No. It is the responsibility of a management to give in writing that they undertake the complete responsibility for preparing financial statements. This is one of the preconditions for accepting the audit, correct or not? Discuss whether it is necessary for the management to do so. In case management refuses, why should auditor not accept the engagement. Yes, it is required for the management to give in writing in the engagement letter that they accept responsibility for preparing financial statements. Why? Because it is one of the precondition. Since it is one of the precondition as per SA 210, auditor will not accept the audit engagement if management refuses to give or to accept its responsibility of preparing financial statements. Got it? Like that you need to explain. So, if agreement of management is not obtained, with respect to matters related to understanding responsibility of management with respect to preparation of financial statements, internal control, and for preparation of financial statements and providing access to all information. If that agreement is not given by management, auditor shall not accept the engagement. Why? Because it is one of the precondition. Next, a chartered accountant is conducting audit of a client for last 2 years. Before proceeding to start audit for next year, he notices that there is a substantial change in management. Besides, the client has ventured into areas of business activity which were not present at the time of accepting the initial audit engagement. First of all, the next year audit will be recurring audit for this particular chart accountant. Yes, it will be recurring audit because for the past 2 years he only doing the audit. Now in that recurring audit, should he give new engagement letter or can he continue the old engagement letter only? It depends on certain factors. So difficult the responsibility of auditor in the in this regard in context of SA 210. So if you remember, if you see in the question, nowhere they have asked about whether auditor should give new engagement letter or not. Like that they have not asked. By seeing the scenario, you only should identify that the question is asking about the concept of giving engagement letter, new engagement letter in case of recurring audit, because they have explained about recurring audit saying that this is a recurring audit, and there are two situations that has caused the requirement for new engagement letter, and they have also made reference to SA 210. So you need to explain all the situations in which new engagement letter should be given in case of recurring audit. There are certain 8 points which we have discussed, right? What are they? If entity has misunderstood the objective and scope of audit in the previous year, or there is a change in the ownership or change in the senior management, in these two situations also you will consider giving new engagement letter, or there is a change in financial reporting framework, or there is a change in legal and regulatory requirement, or there is a change in other reporting requirements. All these three are related. These two are related, and there is any revised or special term. So if the terms of engagement itself have changed, will you not give a new engagement letter? Of course you have to give a new engagement letter. And finally, there is a change in the nature and size of the entity's business. So in the given situation, point 3 and point 5 have happened. Because of these reasons, you need to give new engagement letter in case of recurring audit. Yes. Next question number 18. CAH has been offered audit of financial statements of a society engaged in promoting social causes such as setting up drug de-addiction centers for misguided youth and rehabilitating such young people by helping them find avenues of gainful employment. However, CAH failed to send audit engagement letter to the society's governing body and proceeded to conduct the audit in the absence of this letter. The governing body is of the view that purpose of such an audit is to provide absolute assurance against the probable errors. Since there is no engagement letter, governing body is feeling that in case of audit, auditor will provide absolute assurance, like that the governing body of NGO is feeling. But in case of audit, will you provide absolute assurance? No, you will provide only reasonable assurance. If there was an engagement letter, in the engagement letter you would have explained that audit will provide only reasonable assurance but not absolute assurance. Like that you would have explained to the management, nothing but the governing body, they would have got a clarity. But in in this situation, what has happened? They have understood that audit means absolute assurance engagement and frauds in the financial statement. Does it constitute violation of fundamental principle governing professional ethics? See, they have linked the concept of engagement letter to ethics. Now, auditor not giving the engagement letter to the client, this situation indicates violation of which fundamental principle? Tell me. Can we say professional competence and due care? Yes. Why? Because you have to comply with all laws and regulation, correct or not? You need to update your knowledge, and as per the laws and regulation, whatever is required, that you have to do. Now, SA 210 says that auditor needs to give a engagement letter. So you have not complied with the law. So that creates a professional competence and due care, lack of professional competence and due care. You have not complied with the requirement of law or regulation. Understanding? Yes. See, even auditing standards are also one type of law only. Understanding? So not complying with auditing standard, also known as, not also can be treated as not complying with laws and regulation. Clear? So in this situation, not giving engagement letter, it will violate professional competence and due care. You have not taken due care while accepting the engagement. In that manner also you can say. Got it? Yes. Next. Question number 19. CA Paras has accepted audit of financial statements of an entity according to the standards on auditing. The auditor is required to send engagement letter to the entity. What are the key areas that should be included in the engagement letter? Under what circumstances auditor not required to record the terms of engagement letter in such a written agreement? There are two questions here. First question is this. Second question is this. First of all, we'll see what they are asking. First question. First question they are asking, what should be the things that should be included in the engagement letter? What will you include? The financial reporting framework which is being followed, that you will identify, right? Next, management responsibility, auditor's responsibility. Next, you will also include the form and content of audit report, expected form and content of audit report. All these things you will include in the audit engagement letter. See, objective and scope, responsibility of auditor, responsibility of management, applicable financial reporting framework, form and content of audit report. So these are the 5 things that should be mandatorily included in the engagement letter, right? Next question. In which situation you need not include these things in the engagement letter? In which situation you need not have a written engagement letter? There is only one situation. If law or regulation already prescribed the terms and conditions that are applicable to the audit, and they are present in the particular law or regulation, in such a situation, you need not again draft a written engagement letter, because already all the terms and conditions prescribed by law and regulation same will be applicable here also. Understand? For example, you can take example. In case of audit of bank, RBI already prescribed all the terms and conditions that are applicable to the audit. In such a situation, you need not again enter into a engagement letter with the bank, because that same uh, terms and condition prescribed by RBI, law and regulation, will be applicable for this, right? So same thing you'll explain. Note, if law or regulation prescribes in sufficient detail about terms of audit engagement, auditor need not record them in written agreement, provided that such law or regulation applies and the management acknowledges and understands its responsibilities. Got it? Yes. This is the answer to the second part of the question. Next. Deepa Limited initially requested an audit engagement for the financial year 23-24. However, midway through the audit process, management claims that they are unable to provide complete supporting documentation for a significant portion of their receivables. As a result, management asked the auditor to change in the terms of engagement to a review engagement. So, after accepting the audit engagement, management has requested for change in the terms of engagement. Now, when management requests for change in the terms of engagement, will you accept that or will you not accept that? That depends upon reasons that the management giving. If the reasons management giving are justifiable reasons, then you will accept the change. If the reasons management giving are not justifiable reasons, then you will not accept the change. Okay, we will see it. We'll see first what the question is asking, arguing that it would prevent the issuance of qualified opinion. Auditor is now facing a challenge in determining whether this change is justified or not. Comment in accordance with relevant essay. So what happened in the situation? Management, with respect to certain items, it was not having proper documentation, proper papers. So it went to auditor and asked the auditor, please change the terms of audit engagement because we are not having certain information. You might be able to, you might have to give qualified opinion if you continue doing the audit with these terms. So we don't want qualified opinion. You please change the terms of audit to review, like that they have asked. Now in this situation, whether to accept the change or not, this chart will help you. So you will ask the management what are the reasons for such change. If the reasons are justifiable, what is meant by a justifiable reason? Only in two situations you will call it as a justifiable reason. First, if there is a change in the circumstances. Okay, so there is a change in the circumstances because of which a requirement of entity has also changed. Because of that, if management is asking the auditor to change the terms, you will call it as a justifiable reason, or there is a misunderstanding of the terms by the management. If the change is requested by the management because of these two reasons only, then you will call it as justifiable reason. If change is requested because of any other reason apart from these two, you will not call it as justifiable reason. In this current situation, what is the reason why management has requested for the change? Does it fall in any of these two? No, management was not having information, and to avoid getting a qualified opinion, they are requesting for change. So that is not a justifiable change. So if it is not a justifiable change, what you will do? You will check whether it is possible to withdraw as per laws and regulation. If it is possible, you will withdraw. If it is not possible, you will give a modified opinion. The same thing you need to write in the answer. Here, since it is not a justifiable reason, you will try to check whether it is withdraw, whether you can withdraw from the engagement as per law. If it is not possible to withdraw, you will give modified opinion. The same thing you need to write. Getting it? Yes. So same you will find. So the reason given is not reasonable, not justifiable. Auditor shall not agree to change in the terms of engagement if there is no reasonable justification. And you will explain what is meant by reasonable justification. Next, question number 21. CA Puneet is appointed as auditor of Kamala Limited for the financial year 23-24. Okay, management of Kamala Limited has requested the auditor to change the terms of original engagement. Same question, same as that of previous one. Management is requesting to change the terms of engagement letter. Now you need to see what is the reason. As the company has diversified its business and few new products have been introduced by the company, whether CA Puneet can agree to the request made by the management, under which circumstances can the client make a request to the auditor for a change in the terms of engagement. So since there is a significant change in the nature and size of the business, the terms of engagement, they can be changed, right? It falls under justifiable reason, right? So in the given situation, Kamala Limited has diversified business and few new products has also been introduced by company, which is indicative of significant change in nature or size of the business. In the view of above, CA Puneet can agree to request made by the management for change in the terms of engagement, because as the circumstances change, due to the changed circumstances, you need to change the engagement letter also. This is a justifiable reason only. Next question they are asking is, under which circumstances can the client make a request to the auditor for change in the terms of engagement? So basically, under three circumstances, client can request for change in the terms of engagement letter. You need to be very careful here. What the question is asking? Question is asking just to tell you in what circumstances a change to the engagement letter can be requested by the client. whether it is justifiable or unjustifiable, that is irrespective of that, what are the total situations, what are the total reasons because of which a client can request for the change. There are three reasons. First of all, change in the circumstance, misunderstanding, or a restriction on the scope of engagement, whether imposed by management or caused by the circumstances. Because of these three reasons, client can request for the change, but only first two reasons are justifiable reason. Third reason is not a justifiable reason. And the previous question was example for this reason. Understanding? Totally for three reasons, client can request for change. Of that three reasons, only first two reasons are justifiable, you will accept. Third reason will not be justifiable reason, so you will not accept. The previous question was example for this third reason. Understanding? Yes. So in this question, they are not asking what are the justifiable reasons. They are asking what are the total reasons because of which a client can request for change in the terms of engagement. Got it? Yes, sir. Next. Luck Limited, a mid-sized manufacturing company, has approached CAS, a qualified chartered accountant, to conduct audit for the financial year ended 31st March 2025. The company requests CAS to give acceptance for the audit so that audit can be commenced within time. With reference to SA 210, how the auditor will establish that whether preconditions for an audit are present or not. So what are the preconditions for the auditor? First of all, the applicable financial reporting framework should be acceptable, right? Financial reporting framework should be acceptable. Next, management should agree for its responsibility of preparing financial statements, establishing internal controls, and also providing access to all information, giving additional information that the auditor might ask, and also providing unrestricted access to all the people within or outside the entity so that auditor can speak with them. So these are the preconditions for the audit. Next, enumerate the factors that may make it appropriate to revise the terms of audit engagement or remind the entity of existing terms. Nothing but in which situations auditor has to consider giving a new engagement letter in case of recurring audits. These points we have already discussed, right? When there is a change in the terms, or there is change in ownership, change in management, change in laws or regulation, change in FRFW, other reporting requirements, right? In all these situations, you will consider giving a new engagement letter to the client, right? Yes. So these are the question and answers. In total, we have discussed 28 questions from this chapter, right? Both ethics as well as essay 210. Now I'll open third chapter.
Yes, guys. Now we'll discuss question and answers of next chapter. Basically, this chapter it is audit strategy, planning, and execution. Nothing but essay 300. Complete essay 300 we will be covering in this particular chapter. And weightage of this chapter is 8 to 12 marks you will get. Very small chapter but very important chapter. Okay, let us start discussing questions. So question number 1, MG and Co, a firm of auditors having standing of 30 years, is appointed as statutory auditor of a company engaged in manufacturing of defense equipment. Due to opening of defense sector by government to private players in recent times, many new companies have entered the fray to manufacture sophisticated defense equipment. Considering technical and complex nature of operations, auditors recognize that involvement of experts in audit is required. Since manufacture of defense equipment is a complex activity, auditors felt that to audit this particular entity, there might be requirement of certain experts who are having expertise in the area of defense manufacturing. Does consideration for involvement of experts by auditors fall in the domain of planning of audit? So what they are saying, auditors, they are feeling that an expert has to be hired for doing audit of this entity. Now, does this matter of deciding whether to hire an expert or not to hire an expert and in which area expert will be required in deciding these things? Does this matter? Is it a part of a planning stage or not? Is what they are asking. Tell me. See, from this entire chapter, this concept is the most toughest and difficult concept. See, that points are easy only, just 5 points will be there in that. But students will be confused with respect to the questions from this concept. So, there are 4 5 questions in this chapter with respect to that concept. I will tell you that concept. You remember it as it is so that you will not feel difficulty in solving those questions. Now, audit planning. Basically, audit is divided into 3 stages: planning stage, execution stage, and reporting stage, right? Now, in the planning stage, what will you do? You will develop audit plan, audit strategy, audit program, right? So, for developing that audit plan, audit strategy, audit program, you have to perform certain 5 things. So, these 5 things are also part of planning stage only. What are those 5 things? This is the concept which most of the students will face difficulty in answering the questions. So I will tell you those 5 points or those 5 aspects which are part of a planning stage only. You remember them. First, planning includes performing analytical procedures as a part of risk assessment procedures. You can ask, sir, risk assessment procedure is dealt in SA 315. SA 315, it is nothing but it comes under execution stage. Why we are saying that performing risk assessment procedure is part of planning stage? Because to develop audit plan, what will be there in the audit plan? Audit procedures only will be there, correct or not? Now, to decide which procedures has to be performed as a part of audit, should you uh, do you require an idea of risk that is there in this organization or not? Yes, you require an idea of risk that is there in this organization. Only based on that you can develop your further audit procedures in the audit plan. So for developing audit plan, you have to perform some of risk assessment procedures. So performing some of the risk assessment procedure is part of planning. Okay, performing analytical procedures as risk assessment procedure. Similarly, see, risk assessment procedures involve 3 things. What are they? Inquiry, inspection, observation, and analytical procedure, right? So performing that analytical procedures as risk assessment procedure is a part of a planning stage. Similarly, performing other risk assessment procedure. What are those other risk assessment procedure? One is inquiry, another one is inspection and observation. So all in all, performing risk assessment procedure is part of planning stage only. This you have to remember. Next, understanding legal and regulatory framework of entity. So before developing audit plan, before developing audit strategy, you should understand what laws and regulations are applicable to this entity, correct or not? Yes. So this is also part of planning stage only. Next, determining materiality. You can say, sir, materiality will be determined as per SA 320. Why it is part of planning stage? Because if an area is more material, more important, you will audit that area thoroughly. If it is not material, you will audit that area not that much extent, correct? So your audit procedures that you perform, they are dependent on materiality also. So to decide your audit procedures in the audit plan, you have to first of all determine materiality. So even determining materiality is also part of a planning stage only. Understanding? Just a second. Yeah, he is also part of planning stage only. Next, involvement of expert. So while doing the audit of this particular entity, are there any areas in this entity which requires involvement of an expert? If yes, if expert has to be appointed, then in the planning stage only you will decide which expert has to be appointed, in which area expert has to be used. These things you will decide in the planning stage only. So decision with respect to involvement of expert is also part of a planning stage only. These five aspects are part of a planning stage. You remember these 5 points. There are 4 to 5 questions in this chapter on these 5 points. Okay, yes sir. So now tell me whether decision with respect to involvement of experts is that a decision part of a planning stage? Yes, it is a part of planning stage. Just now we have seen. So therefore, while planning an audit, auditors would have to consider whether involvement of expert is necessary. Next, question number 2. CA Karthik is planning for audit of a company engaged in manufacture of cosmetics. Considering nature of operations of company, he had planned to include testing controls of the company over purchases, sales and inventories. Okay. One fine day, he reaches corporate office and asks for manuals and required documentation to ensure surprise element in testing. So he wanted to test certain areas. Without intimating the entity, he went to the organization and he is asking for manuals and records of that area. He had never shared with management his intention to carry out above procedures. His approach of CA Karthik proper. So CA Karthik did not tell the management prior that he is going to audit this area. He requires this information. Without telling that, he went to the management for doing the audit. Is his approach proper? Tell me. See, if auditor does not inform to the management about which areas he is going to audit, can management arrange the required records? Can management keep ready the required documents related to that area? Not possible. So to enable the management to keep ready the required documents and records, the auditor has to once intimate to the management that he is going to audit these areas. Understanding? But while intimating, you should take care that effectiveness of audit will not be compromised. That means you should not communicate your complete plan such that management will before only get to know about the audit procedures that you are going to perform. You should not disclose the complete plan. You should just give a information that is sufficient for the management to make the records and documents ready for the purpose of audit. Getting it? Yes. So in this situation, the approach of CA Karthik is not proper. See, when discussing the plan with the management, care is required to be taken in order not to compromise the effectiveness of the audit. And the approach of CA Karthik in the present situation is not proper. Next, question number 3. CA Mary, while planning audit of a company, feels that she would inquire from in-house legal counsel of the company status of pending litigation matters against the company to identify and assess risk of material misstatement. Considering above description, are you able to identify said procedures? See, what procedure she is trying to perform? Nothing but RAP, risk assessment procedure, she is trying to perform, because it is inquiry. Inquiry is a risk assessment procedure where these identified procedures are included in planning in accordance with SA 300. As per SA 300, risk assessment procedures will be part of audit plan. If you remember, in audit plan there will be risk assessment procedures as per 315, further audit procedures as per 330, and other audit procedures, right? So auditors should develop audit plan which contains nature, timing, extent of planned risk assessment procedure, planned further audit procedures, and other planned audit procedures. Procedures given in case or planned risk assessment procedure, because it is an inquiry. As part of that inquiry, you are trying to identify the risk in the area of litigation, right? She is inquiring about litigation. Yeah, pending litigation. Next, question number 4. CA Shubhendu is a statutory auditor of social media company. Due to change in information technology regulations by government, it has become mandatory for such companies to constitute grievance redressal mechanism. What is grievance redressal mechanism? If customers are having any complaints, there should be proper mechanism in the company wherein customer can raise a complaint and resolve that issue. That is known as grievance redressal mechanism. So as per the latest law and regulation, all social media companies should have that grievance redressal mechanism for users of social media platform of the company. Failure to comply with regulations can potentially lead to civil and criminal liabilities against the company. Is above factor to be considered by auditor while framing audit strategy? Tell me whether this aspect should be considered by the auditor while framing the audit strategy. While developing audit strategy, you will consider 5 factors. What are those 5 factors? Firstly, characteristics of engagement, like scope of engagement, applicable financial reporting framework. There are certain examples for characteristics. Similarly, what are the reporting objectives? Reporting objectives means the timelines and what are the various reports auditor should issue, like that. There are certain examples for there. Next, direction of engagement team efforts. In which direction the engagement team efforts should be directed while doing the audit? This factor also you will consider while developing overall audit strategy. Now under this there are certain examples like volume of transactions. If volume of transactions in a particular area is very high, then audit team efforts will be directed more in that area. Similarly, recent change in law or regulation. If in a particular area the the law or regulation has changed, in such a situation audit team efforts will be directed more in that area because the changed laws and regulations are applicable to that area. So in this situation, if you see the case scenario that is given to us, it is example of area in which new law or regulation has been introduced or change in laws and regulation, which is one of the example for direction of engagement team efforts. So will you consider this for developing audit strategy? Yes, you will consider this point for developing overall audit strategy, because if in any area new law or regulation has occurred, because of that that area has got impacted, means auditors teams efforts will be more in that area, and this is one of the factor that should be considered while developing overall audit strategy. So you will consider this aspect for developing overall audit strategy. If you have doubt, you can open the book. There will be 5 factors in in factors to be considered in developing overall audit strategy. And one more factor you should consider is the results of preliminary engagement activities. Preliminary engagement activities in SA 300 only will be seeing it, right? Client acceptance and continuance procedure, compliance with ethical requirements, common understanding of terms of engagement. All these 3 points comes under preliminary engagement activities, and nature, timing, extent of resources. So this concept is also very much important in SA 300. 5 factors that should be considered in developing overall audit strategy. Lot of questions have been asked even from this concept also. So you should remember that concept. Next, question number 5. Rohit undergoing practical training is part of engagement team conducting audit of a company engaged in manufacturing of paints. He has been provided with audit program pertaining to sales. It lists out various items to be checked and verified by him, including invoices, rate list, posting in debtors accounts, correlation of invoices with e-way bills on sample basis, etc. During verification, he notices that many e-way bills have been cancelled by the company within 24 hours of generation in the month of March. There is no specific instruction in audit program in this regard. He keeps mum. Is attitude of Rohit proper? So there is an unusual situation wherein the invoices, after they have been raised, immediately within 24 months they have been cancelled. There are a lot of such invoices in the month of March. Now in the audit program there is no procedure with respect to this aspect. So the article assistant, that is Mr. Rohit, he keeps silent. Is attitude of Rohit correct? No. Here you need to write this point wherein the audit assistant should keep open mind. He should not just stick to the audit program. He should perform whatever is there in the audit program, and he should keep an open mind. He should go beyond the audit program. That point you need to write. So you will also say that you cannot use single audit program for all the entities. Why? Because of two reasons. Businesses vary in nature, size and composition, and also internal controls that are operating in the organizations also vary. The operating effectiveness of internal controls vary. So efficiency and operation of internal controls also vary. Because of this reason, it is not practicable to develop one audit program for all the businesses. So what you will do, you will have a standard audit program, and as you gain the experience, you will add more procedures to that standard audit program, or you will delete the unnecessary procedures. And audit assistant, this is the main point. This is, even though you don't write this, you will get the marks, but this has to be there. Assistant engaged in job should be encouraged to keep open mind. Attitude of Rohit is not proper. At the end you will conclude. Okay, so this is how you have to present your answer. Next, question number 6. Subodh has recently joined an audit firm as articled clerk. He was in the process of assembling audit working papers in audit file of COP Limited. As per the instructions of his senior, while assembling, he noticed following working paper in audit file: timing of audit activities. So, with respect to various activities, planning activity, what date and time it should be done; review, what date and time; audit field work, what date and time; review by manager, what date. Like this, with respect to different activities, different times has been mentioned in that particular document. The above working paper lists certain factors which are considered by the auditor while establishing audit strategy. Basically this comes under second factor: reporting objectives and the timelines. Because under reporting objectives you will have one of the example: timetable of entities reporting activity. Okay, so since it is speaking about the time, this comes under second objective. Here I have shown this in this chart. Under this second objective, you will have one of the example: entities timetable for reporting. So this question is about that second factor. Explain how these consideration highlighted in above working paper could have helped the auditor. See, it could have helped the auditor in planning timing of his audit. You should mention specifically about second point. See, one of the factor to be taken into consideration while establishing audit strategy relates to ascertaining the reporting objectives of engagement. So some of the examples under that are: entities timetable for reporting, discuss with management regarding type and timing of reports, organization of meetings to discuss nature, timing, extent of audit work with management, and expected nature, timing, communication among engagement team members. So meeting among engagement team member, meeting with management, timetable for reporting, and again discussion with management regarding type and timing of report. These four examples you have to remember for that particular second factor. So in the given case, working paper highlights that auditor has taken into account expected timelines to plan the audit and nature of communications required. So whatever the timings you are seeing here, these would have helped the auditor in planning timing, okay, in to plan audit and nature of communication required, taken into account expected timelines, timing with respect to the audit procedures and also communications required. In that area it would have helped the auditor, which falls under second factor. Next, Sanjana is of the view that there exists some disadvantages in the use of audit program, but most of these can be removed by following some concrete steps. Do you agree with her perspective? Comment. So basically here you need to list down the disadvantages of audit program and what steps you have to take in order to overcome that disadvantages. Basic disadvantages are, if you develop a audit program and give it to the article assistant to follow, he might feel that the work has become mechanical and it becomes rigid and inflexible, both are same. And there will be some article assistant, there will be some audit assistants who might take shelter under the audit program. If a particular point is not there in the audit program, article assistant will not perform that procedure, and when asked by the principal, he will say that principal, that audit procedure is not there in the audit program, so I have not performed. Like that, inefficient audit staff might take shelter under the audit program. That is also one of the disadvantage. And there will be some article assistants who are quite opposite, who wanted to explore more. Now for such a type of audit assistants, if you give the audit program and tell them to just stick to this audit program, what happens, they might feel that their hands are being tied. Correct or not? See, a hard and fast audit program may kill initiative of efficient and enterprising assistants. Now in order to overcome these disadvantages, what you have to do, the principal, the auditor, he should not just supervise, he has to do imaginative supervision. Imaginative supervision means, first of all, what is meant by supervision? Supervision means just checking, directing your engagement team is known as supervision. Review of the work that is done is known as supervision. Imaginative supervision means you will not just check the work done, you will be ahead, like what problems, what errors can occur in this area, you will think about the future now only, and from that aspect you will check the work. That is known as imaginative supervision. So if you have imaginative supervision, what happens, you will imagine what errors can occur in this organization, in which areas the chance of a misstatement is more, and you will include all those areas in the audit program before only. So imaginative supervision will help you to cover almost all the areas where the chance of error is high. In your audit program you will be able to cover all those areas. Next, auditor must have receptive attitude. So whatever your article assistants are bringing to you, you should give a free hand to them, you should encourage them to communicate more and more things to you, you should have a receptive attitude. And assistants should be encouraged to observe more objectively and bring significant matters to notice of supervision of principal, same as that of point number B. So and you can also add, assistants should be encouraged to keep open mind. Okay, so those are the steps that you will take in order to overcome the disadvantages of audit program. Next, question number 8. CAD is planning audit of a listed company. List specific documentation requirements in accordance with SA 300 in relation to planning such an audit. How such planning documentation is useful? So they are asking, as per SA 300, what is the documentation requirement? You have to document overall audit strategy, audit plan, and any significant changes that are made to the plan and strategy. These are the three things that you will document. What is the advantage of documenting these things? That also they have asked in the question. So what is the advantage? It will act as a record of key decisions that have been taken by you during the audit. It will also act as the record of nature, timing, extent of audit procedures that you have performed. And finally, it will act as a record of reasons for change in the strategy and plan. During the audit, if you have changed strategy and plan, what is the reason why you have changed that plan and strategy? It will act as a record of those reasons. These are advantages of audit documentation from the perspective of SA 300. Next, Messrs. TP and Co., a firm of chartered accountants, has been conducting audit of KSR Limited since last 4 years. KSR Limited has diversified their business into newer areas during the last year. The senior member of audit team handed over standard audit program of earlier years to audit assistant and instructed them to follow the same. Assistants are conducting the audit accordingly. Whether attitude of audit assistants is justified, guide them. This is a repeated question only. Basically, you cannot have single audit program for all the entities because of different size and nature of the businesses and efficiency and effectiveness of the internal control. So what you will do, you will have a standard audit program, and as you gain the experience, you will add new procedures to that program, and you will eliminate the audit procedures that are not required. And you should not just give the audit program to the article assistant and ask him to strictly follow it. You should also say the article assistant to keep open minded. All these points you should write and conclude that in this situation attitude of this person is not proper. Okay, so same things you will write. Based on nature, size and composition, the audit program will change. So you will have a standard audit program. As the audit experience is gained, you may alter the program by adding new procedures, or you can also delete unnecessary procedures as you gain experience. And you should ask to keep an open mind beyond the program, and TP and Co is not justified. So these are the points you will write in your answer. Next question number 10. CAN engagement partner of LPS and Associates is planning for audit of large company as part of preliminary engagement activities being performed in this regard. He wants to ensure that compliance with independence requirements is adhered. How shall he form a conclusion that audit firm complies with independence requirements? So, a particular auditor is doing the audit. Now, how this auditor will ensure that in the audit firm for this particular audit, the independence requirements are complied. So, what he will do is he will do three things. First of all, firm will be having policies and procedures regarding maintenance of independence, right? So, he will ask the firm whether any threats that have been identified at the firm level, will they impact his audit? So that is the first point. Obtain relevant information from firm to identify and evaluate circumstances and relationship that create threat to the independence. So in this audit that he is going to do, are there any factors that create threat to his independence? For that he will ask information from the firm. After that, at the firm level, there would have been certain identified breaches. Now, will those identified breaches at firm level, will they create any impact for this audit? That also you will see. Evaluate information on identified breaches, if any, to determine whether they create threat to independence for the audit engagement. And finally, take appropriate action. If you have identified any threat to independence, what will you do? In second chapter we have seen, you will try to eliminate that threat completely, or you will try to implement safeguards to reduce the threat to acceptable level. If it is not possible, you will completely withdraw from the engagement, right? Same things you will write. Take appropriate action to eliminate the threat, reduce them to acceptable level, or if considered appropriate, withdraw from the engagement. Got it? Yes, sir. Next question number 11. During the audit of ABC Limited, a medium-sized manufacturing company, engagement partner is responsible for directing and supervising the work of engagement team. Team includes both experienced members and several new trainees. Additionally, certain areas of audit have been identified as high risk, such as revenue recognition, inventory valuation, due to recent changes in ABC Limited's accounting policy. Now, this is the question from here. What factors should the engagement team members consider when determining nature, timing, extent of direction, supervision, and review of engagement team's work? So, engagement partner, he will review the work that is done by the engagement team. Correct or not? Yes. Now, while reviewing the work of engagement team, in deciding how much extent the work has to be reviewed, what factors will be considered? Simple factors: size and nature of the entity. If the size of entity is huge, extent of your review will also be huge. Correct or not? So size and complexity. Next, area of the audit. If that area is very important, your review will be more. So area of audit. Next, identified romum. If the romum of a particular area is very high, your review of that area will also be very high. So assessed risk of material misstatement, nothing but romum. Next, the article assistant who has done that work is highly intelligent. In such a situation, review of his work will be less. If he is not that much intelligent, you will review his work more. So capabilities and competence of individual team member performing the audit work. These are the four factors that you will consider in deciding the extent of your review. Got it? Yes, sir. Got it, sir. Next, question number 12. Lotus Limited, a rapidly growing manufacturing company, appointed Riddhi & Co as a statutory auditor. The engagement team of Riddhi & Co identified key areas requiring scrutiny, such as revenue recognition, inventory valuation, and related party transaction. Based on his professional judgment, CA Ravi, the engagement partner, directed the engagement team to focus on these critical areas, emphasizing the need for detailed testing to ensure accuracy and compliance. So, auditor has directed his engagement team efforts on certain areas. Direction of engagement team efforts, is this one of the factor that you will consider in developing overall audit strategy? Yes. So this question is about that only. Give some examples of factors need to be considered by CRAV for establishing the audit strategy. See, for this question, you can write all the five factors: characteristic of engagement, and direction of engagement team efforts, reporting objectives, results of preliminary engagement activities. All the five factors you can write, and you can give examples for this factor, third factor, or you can just write about this third factor and give examples for it. Anything will be fine. Okay. So direction of engagement team efforts, some of the examples of areas where engagement team efforts will be more. First, if the volume of transactions in a particular area is high, then engagement team efforts will be high. So volume of transaction. Next, significant industry development, change in applicable financial reporting framework, or significant changes in laws and regulation. These three things: significant industry development, changes in financial reporting framework, change in law legal environment. So in these are some of the examples of areas where engagement team efforts will be more. Next, question number 13. Audit program is a list of examination and verification steps to be applied and set out in such a way that interrelation of one step to another is clearly shown and designed, keeping in view the assertion apparent in the statements of account produced for audit or based on appraisal of accounting records of the client. For example, while auditing companies' inventory program may include steps to verify physical counting, ownership, and rights. All this question is irrelevant. Actual question starts from here. What are the advantages of audit program? So what are the advantages of audit program? There are 8 advantages of audit program. So 4 advantages from the point of view of article assistance, 4 advantages from the point of view of the principal. So from the point of view of article assistance, there will be 4 advantages. From the point of view of principal, there will be 4 advantages. If you divide these advantages into these two and remember, that will be easy. First, we will see advantages from the point of view of article assistant. First of all, it will give a clear picture of the work that has to be done by the article assistant, because in the audit program there will be list of procedures. So article assistant will get to know this is the total work that he has to done, that he has to do. That is one of the advantage of audit program. Next, it will act as a clear set of instruction to the article assistant. Yes, this is also one of the advantage. Next, it will be helpful in selecting the article assistant. Yes, which article assistants or which audit assistants has to be selected into the engagement team in deciding that audit program is helpful. Because if audit program involves more detailed audit procedures, extensive difficult audit procedure, you will select highly intelligent audit assistant into the team, correct? Yes. Next, audit program will help in fixing accountability on the audit assistants, because once the entire work is done, audit assistant will sign the audit program. By signing, he is accepting responsibility, accountability for the procedures that are there in the audit program. So these are the 4 advantages that involves article assistance or the audit assistance. First, provides assistant carrying out work with clear set of instructions, provides a total perspective of work to be done, selection of assistants, and one more, this one, fifth one, assistants by putting their signature on program accept responsibility for the work that is carried out. So these are 4 advantages that involves article assistance or the audit assistance. Next, from the point of view of principal, the auditor. So this audit program will act as a evidence for the auditor to prove that work is done properly. So it acts as evidence in the event of any charge of negligence. Next, the principal, he will be handling many audits simultaneously. In order to check progress of each audit, he can take the audit programs of that particular audit, and by going through that audit program, he will get to know the progress of each audit. So control the progress of various audits. And by having a clear audit program, it will help you in avoiding danger of ignoring or overlooking certain books and records. And finally, it serves as a guide for audits to be carried out in the future. So the next year audit program, you will develop it based on the past year audit program. These are the 4 advantages from the point of view of a principal, the auditor, main auditor. Okay, if you divide like this and read, it will be easy to remember. Okay. Yes sir. So now we have seen advantages of audit program, right? Similarly, there are also advantages of audit strategy, and there are also advantages of audit planning. You should not confuse. Now we have seen audit program, advantages of audit program. So in this chapter, in this essay 300, there are advantages of these 3. You have to clearly check in the question which advantage they are asking. If they are asking advantages of audit program, you have to write these 8. If they ask advantage of audit strategy, audit plan, I will let you know. There are further questions in this discussion that we are going to make. There I will explain you how to remember these remaining advantages. Okay. Yes sir. In establishing overall audit strategy, auditor shall, among other consideration, ascertain the nature, timing, extent of resources necessary to perform the engagement. Explain those consideration in detail. So, while developing overall audit strategy, what are the considerations that you will take into account? Nothing but 5 factors that you will consider for developing audit strategy. What are those 5 factors? Characteristics of engagement, reporting objectives, direction of engagement team efforts, results of preliminary engagement activities, and finally the fifth one, nature, timing, extent of resources. These are the 5 factors. Same 5 you will write. 5 factors that I told you now, that concept is very important. Lot of questions are there. This particular chart, this one. So this one is important, and this one is also important. Lot of questions are there on those two. Okay. Next, engagement partner of a firm of auditor is explaining to his audit team undergoing practical training the interrelationship between audit strategy and audit plan. Discuss the points which the engagement partner will explain to his team. So, what are the points which establishes relationship between audit plan and strategy? Strategy is prepared first, plan is prepared next. Plan is more detailed when compared to the strategy. Strategy sets guidelines for preparing plan. If you change the strategy, plan also changes. So all these points you need to write down. Okay. Yes sir. Next, APR and associated chartered accountant firm are appointed as auditor of Time Limited and Bakes Limited. Volume and nature of business of both companies are entirely different. CAR is the engagement partner for Bakes. So R is doing audit of Bakes. P is the engagement partner for Time Limited. CAR formulates an audit program for conducting the audit of Bakes Limited. He suggests the CAP to use the same audit program for Time Limited also. Is it possible? No, you cannot have a single audit program and use it for all the entities. Why? Already we have discussed that concept lot of times, right? But CAP is of the opinion that this audit program will not be useful for audit of Time Limited. Yes, he is right. In light of above mention the matters that should generally be considered while preparing audit program, is CAP correct in emphasizing for different audit program for Time Limited? Yes, CAP is correct. And what are some of the matters that you will consider? There are 7 matters that you will consider while developing audit program. First of all, audit program has to be developed within the scope that is fixed by the audit strategy. So scope and limitation, and audit program, it should be of course in writing, right? And the audit procedures that you prescribed in the audit, that you prescribe in the audit program, they should be in such a manner that by performing them you will be able to obtain best evidence possible. So determine the evidence reasonably available and apply only those procedures which are relevant for the situation. Don't prescribe unnecessary procedures in the audit program. See, apply only those steps procedure which are useful in accomplishing the verification purpose of the specific situation. And each and every audit area should be given a audit objective, and you need to consider all possibilities of errors, and there should be proper coordination with respect to the procedures to be applied to related items. Like for example, procedures that you apply on sales and procedures that you apply on debtors, there will be certain common procedures. Now when you are developing audit program, you have to take care that those procedures do not repeat twice. Understanding? Like that, proper coordination should be there. And this is simple, which we have already seen. It is not practicable to have single audit program for all the audits, because businesses vary in nature, size and composition, and operation and efficiency of internal controls also vary. Because of that two reasons, it is not practicable to have single audit program for all the entities. Next, question number 17. CAE is auditor of LM Limited. Before commencing with the current year's audit, he initiated planning for the audit. Planning includes the need to consider certain matters prior to identification and assessment of risk of material misstatement. Enumerate such matters. So planning includes consideration of certain matters, certain five matters. First question, first chart which I gave, what are those five matters? Performing analytical procedures as risk assessment procedures, performing other risk assessment procedures, determining materiality, decision with respect to involvement of expert, and finally fifth one, obtaining general understanding of legal and regulatory requirements that are applicable to the entity. These are the five things that are part of audit planning stage only. So this question is about that only. Generally, students they will feel confused with respect to this question. You have to properly read and understand the question and identify what they are asking. Okay. Yes, sir. Next, question number 18. EFG Limited has appointed Messrs. MN and Co. Chartered Accountants as a statutory auditor for the year 24-25. CAN engagement partner completed his. See, all this is irrelevant. At the end, if you see, they'll ask, describe how the process of establishment of overall audit strategy will assist him in managing deployment of his human resources for various audit areas. Nothing but they are asking advantages of audit strategy. So what are the advantages of audit strategy? Four advantages. All the advantages of audit strategy are related to resources only. It will help you in determining quality of resources, quantity of resources, deployment of timing of resources, and managing all those resources. These are the four advantages of audit strategy. Advantages of audit program are different. Four advantages from audit assistant's point of view, four advantages from principal auditor point of view. That is audit program advantages. Audit strategy advantages, they are related to resources. You need to remember that. So four advantages: employment of quality of resources, quantity of resources, timing of resources, management of resources. You need to be very attentive in this advantages area. Next, AP and Co Chartered Accountants are appointed as a statutory auditor for Heavy Industries Limited, a listed company engaged in manufacturing of electric vehicles for the financial year 23-24. As per the recent guidelines issued by regulatory authority, every listed company is required to maintain digital database of all personnel who could access the books of the company to avoid insider trading. In case of non-compliance, hefty fines may be imposed on the company. CAP is the engagement partner from auditor firm for the audit of Heavy Industries Limited. During planning, CAP planned that he would inquire from in-house IT head of the company about the maintenance of digital database to identify and assess risk of non-compliance with regulatory guidelines. In the light of above facts, explain whether CAP is required to consider about maintenance of digital database while framing the audit strategy. This type of question we have already seen. While developing audit strategy, one of the factor you should consider is the direction of engagement team efforts. Now, under direction of engagement team efforts, there is one example. If in any area there is a change in the requirements of laws and regulation, that area there should be more efforts from the engagement team towards that area. So here in this situation, there is a particular change in law and regulation. As per that change in law and regulation, entity has to maintain a digital database of people who can access the books of accounts. Now, while developing audit strategy, should auditor consider this? Yes, he should consider this, and engagement team efforts should be directed more towards this area. So as per SA 300, process of establishing overall strategy, assess audit, determining subject to completion of auditor's risk assessment project, key resources. Yes, auditor shall take into consideration following factors. What are those five factors? Characteristic of engagement, auditor's professional judgment or significant in directing the engagement team efforts. All those 5 factors you will write. After that, in the given situation, regulatory guideline requires heavy industries limited, a listed company, to maintain digital database of all those personnel who could have access to books of accounts of the company. Further hefty penalties will be imposed. Therefore, it is very essential that auditor, while establishing overall audit strategy, whether company maintains such database and complies with the requirements or not, he needs to consider. Thus, in view of above, it can be concluded that CAP should incorporate assessment of digital database maintenance in overall audit strategy, because it becomes part of directing engagement team efforts. This is one of the example of directing engagement team efforts. See, this concept, this question, it is based on this particular chart, this particular this particular chart this particular chart direction of engagement team efforts, change in law or regulation. Okay, requirement of law or regulation. And what procedure CAP has followed for these? CAP wanted to inquire with in-house IT professional. Is that procedure proper? Yes, it is proper, because information with respect to the digital database will be available with information technology people only. So auditor should ask them only. So he has performed correct procedure. You should say that planned inquiry with IT head is in line with SA 300. Question number 20. CA Tina, auditor of Sky Limited, asks its finance and audit head to prepare audit strategy for a conducting audit of Sky Limited. Can chartered accountant ask the management to prepare audit strategy and plan? No. Whose responsibility it is to prepare audit plan and strategy? Auditor, he himself has to prepare, correct or not? So here is the approach of CA Tina proper? No. Let's see further what they are asking. CA Tina also insists him to draw detailed audit procedures in response to auditor's request. The finance head of the company completes the audit strategy as well as audit procedure. Auditor told finance head prepared the audit strategy. Subsequently, auditor realizes that effectiveness of audit is compromised and it was his responsibility to prepare the overall audit strategy. Comment. After everything is over, now auditor realized that it is his responsibility to prepare audit strategy. So here you need to clearly say that it is responsibility of auditor to prepare overall audit strategy. And in the present situation, CA Tina was wrong, that you need to conclude. Getting it? Yes, sir. Next, question number 21. Assistant of CA Bhavik is assigned responsibility of drafting audit program related to purchases appearing in the financial statements of Arya Industries, a partnership firm, for financial year 23-24. The said firm is a GST registered taxpayer and is engaged in manufacturing of packing boxes from a special type of paper taxable under GST. Draft sample audit program for purchases. So with respect to purchase of that particular paper, you have to design a audit program. See, here in the question they have asked you audit program for purchases. Like this they can ask you audit program for any item. You have to remember the format of audit program. First there will be name of the company's name, and for which financial year it is prepared, who is preparing it, who reviewed it, and who approved it. These are the 5 things that you mention. After that there will be table in which there will be 5 columns. First there will be serial number common. Next, nature of procedure that you are performing, and extent of check, that means on how many items you are performing this procedure, and what was your sample selection method. Let's say there are 1 lakh purchase transactions. Of that 1 lakh purchase transaction, you are purchasing this audit procedure only on 10,000 sample items. How did you select this sample? Basis for sample, and who has done this procedure. This is the format. In that format, you need to list down all the procedures. So for purchases, what will be the procedure? Vouching, you will perform vouching, right? That only. Vouch few purchase invoices. After that, trace whether these purchase invoices have been properly recorded in books of accounts or not. So trace this invoice into accounts book. Next, whether these purchases are they reflecting in GST portal. If they are GST purchases, they will also get reflected because they are saying paper taxable under GST. So in GST portal also under GSTR TB, it should get GSTR 2B, it should get reflected as purchase. You will check that also. Verify few purchase invoice on paper on GST portal. And whenever you have purchased the goods, the relevant entry should be passed even in the goods register as goods inward, right? So check that also. Few purchases in test few purchase invoices of paper in stock records to ensure that these have been added to stocks of raw material. Got it? Yes, sir. Next, question number 22. Basically all this question is irrelevant. We'll just read this at the end. Briefly explain why it is necessary to plan the audit of XYZ limited financial statements. So they are asking advantages of planning the audit. I told you there are three advantages. First advantage is related to audit program, next audit strategy, now audit planning. So there are six advantages of audit planning. To remember that six advantages, here is the mnemonic D P. Just a second. First O D P S. This is the mnemonic for remembering advantages related to planning. How? So first, devote appropriate attention. D means this D. D. After that, resolve potential problem. P. This P. Afterwards, organize and manage the audit engagement. O. This one O. Afterwards, again coming to D. Facilitating direction and supervision of engagement team. Again, repeat it. D. After that, assisting where applicable in coordination of work done by others. Coordination. C. C means half. Here there is middle O. Na? Half means half of the O is C. Okay. And next, yes. Yes for selection of engagement team members. Yes. So with this mnemonic, you can remember advantages of audit planning. So these are the three plannings. These are the three advantages. One is planning, one is with respect to strategy. With respect to strategy, all advantages are related to resources only, right? And another advantage is with respect to program. Four advantages from point of view of article assistance, four from the point of view of principal audit. Got it? I hope the advantages is clear to you. Next, the auditor shall the auditor shall take into consideration reporting objectives of engagement so as to plan timing of different audit procedures and also nature of communications while establishing audit strategy. Give any four instances of reporting objectives. This is nothing but while developing overall audit strategy, you will consider five factors that chart. First factor is characteristic of engagement. Second factor is reporting objectives only, correct? So for that reporting objectives, they are asking you to give examples. What examples? Timetable of entities reporting. See, entities timetable for reporting. Next, discussion with management regarding type and timing of the report, and discussion with management with respect to nature, timing, extent of audit work, and discussion among engagement team members. So communication among engagement team members. These are four examples for reporting objectives. Simple. To or with respect to discussion among management, discussion among engagement team, and this one also discussion among management with respect to time and type of report, and first one is timetable. Okay, yes. Next question number 24. CA student Kalyan was going through a topic on audit program and learnt that an audit program is designed to provide most appropriate audit evidence by prescribing procedures and techniques to verify an assertion. Yes. Guide the student in answering the following. Why, what type of audit evidence shall an auditor look into as the most appropriate evidence in verification of a assertion? See, it depends on the circumstances and knowledge of the auditor. Which type of audit evidence is most appropriate for the given situation, for the given assertion? It depends on knowledge of the auditor. See, transactions are varied in nature and impact. Procedures to be prescribed depend on prior knowledge of what evidence is reasonably available in respect of each transaction, and specify the most appropriate audit evidence in respect of verification of cash in hand. Still, auditor, he will verify various kinds of he will perform various types of procedures and he will obtain various types of evidences. We will see some of the types of evidences that auditor can obtain. Documentary examination he can do, by that he will obtain documents as evidence. Physical examination, statements and explanation of managements and official, statement explanation of third parties, arithmetical calculation, all these are some examples of audit procedures and audit evidences. And for cash in hand, they are asking for cash in hand, what is the verification procedure? Counting is the best verification procedure. And for verification of investment, what is the best procedure? Asking external confirmation from the bank and taking a banker's certificate is the best evidence, right? Banker certificate that you have to write down. Next, CA Taman is the auditor of a company dealing in trading of mobile accessories. This year, the company has also started assembling of mobile phones. The audit manager instructed the team to develop audit program based on the previous year's audit plan and proceed with the audit. However, CA Taman disagreed, explaining to the audit manager that before commencing the audit and throughout its course, she would plan the nature, timing, extent of direction and supervision of engagement team members and the review of their work. Explain what factors will CA Taman consider when planning the nature, timing, extent of direction and supervision of engagement team members and review of their work? See, what are the four factors that you consider in directing and reviewing the work of engagement team members? Size of the entity, right? And competence of your engagement team member who has done that particular work, ROM, risk of material misstatement of that particular area, and also the importance of that area that you are auditing. These four factors you will consider. This answer we have already seen. This type of question already it came earlier. If during the course of audit CA Taman discovers information that significantly differs from what was available when audit procedures were initially planned, then what he must do? See, when she finds some evidences which, see what they are saying, if during course of audit CA Taman discovers information that significantly differs from what was available when audit procedure were initially performed. So audit evidence that you are obtaining as part of audit, that evidence is differing, contradicting from another evidence that you are having. In such situation, what you will do, you will decide whether you should revise your audit program, audit strategy, audit plan or not. So you should consider revising your audit plan and strategy. So in case during course of audit CA Taman discovers information that significantly differs from what was available when audit procedure were initially planned, she would update and change the overall audit strategy and audit plan as necessary during the course of audit. So because of this situation, you have to consider whether you should change, update your audit plan and strategy or not. Next, Mica Associates Chartered Accountants are appointed as statutory auditors of B Limited for the first time in financial year 24-25. Before commencing the audit, engagement partner considers the integrity of directors, evaluates compliance with ethical requirements, including independence, sends an engagement letter to avoid misunderstanding. Explain the above stage of audit planning process as considered by the engagement partner. This is nothing but a preliminary engagement activities. Before accepting the engagement, you will do three preliminary engagement activities. What are they? Client acceptance and continuance procedures, compliance with ethical requirements. So if you accept this engagement, whether you will be able to comply with ethical requirements, and common understanding of terms of engagement. These 3 points you need to write. See, performing procedures regarding client acceptance and continuance. Under that, you will check integrity of principal owners, competence of engagement team, implication of matter during previous audit, and in case of initial audit engagement, communication with predecessor auditor. Next, evaluating compliance with ethical requirements and establishing an understanding of terms of engagement. So these 3 points are the preliminary engagement activities. If you remember, while discussing SA 300, I have divided complete SA 300 into two parts. One is the preliminary engagement activities, another one is planning activities. Under preliminary engagement activities, we have seen these three only. Next, in planning activities, we have seen audit plan, audit strategy, audit program, right? Yes. Next. This is a huge question. Let us read it. RST and Co Chartered Accountants have been the statutory auditor of Bright Vision Limited, a company engaged in wholesale trading of electronic goods for the last 6 years. During the financial year 24-25, company significantly changed its business model by introducing online sales, appointing multiple third-party warehouse operators, implementing new ERP, revising its credit policy. So all these changes it has made. However, audit team continued to follow the same audit program that had been designed 3 years ago, which was primarily structured for traditional wholesale model with centralized warehousing and manual accounting control. So even though these many changes taken place, audit team they are following the previously 3 years back they have designed the audit program. That same audit program they are following. The engagement partner did not conduct any formal periodic review of the audit program. The assistants carried out the audit process strictly as per the existing program without modifying the extent of checking, sampling plan, or procedures relating to inventory verification and receivable. Subsequently, material misstatements were detected in revenue recognition and inventory records held with third-party warehouses. Management alleged that auditor has conducted the audit negligently. Discuss whether auditor was justified in continuing the old audit program. Here, whenever there is any change in the circumstances, you have to update the audit program. Basically, continuously you have to update the audit program. You have to review the audit program, and based on the changed requirements you have to update your audit program, right? So there should be periodic review of the audit program, and the whole audit may be held negligently conducted if you don't update your audit program and do the audit as per previous audit program only. In the given situation, the same thing has happened. Whatever has happened in the given situation, we explain that. And whose responsibility to update and revise the program lies with the principal auditor. Rigidity is not valid provided periodic review is undertaken. So generally, one of the disadvantage of audit program is that it is very rigid, but you can overcome that rigidity of audit program if you periodically review the audit program and update the audit program based on the changed circumstances. That's what they have said. So in the present situation, you need to conclude that auditor was not justified in continuing the obsolete means outdated audit program. Auditor has to update his audit program as per the changed requirements. Got it? Yes, sir. Next, question number 28. An audit firm SPR and Co is preparing the detailed audit plan for new client Rajeshwari Limited. Overall audit strategy has already been established. Engagement partner emphasizes that plan must be sufficiently detailed to guide the entire engagement team and ensure compliance with SA 300. Regarding development of audit plan, outline the three key descriptions that SA 300 requires must be included in the audit plan. So what are the three things that should be there in the audit plan? Risk assessment procedures as per 300, as per SA 315, further audit procedures as per SA 330, and other audit procedures. These are the three things that should be there. So same you will mention. Next, also briefly explain that audit plan is more detailed than overall audit strategy and give an example of how timing of, see, this is simple. Also explain audit plan is more detailed than overall audit strategy. This you can simply explain. Next one is important. Give example of how timing of planning about audit procedures might evolve during the course of audit. So they are asking you, explain, give an example of how development of audit plan evolves over the period of audit. One of the example is, first of all, audit plan contains risk assessment procedures, further audit procedures, and other audit procedures, right? Now here you will first of all perform risk assessment procedures. By performing risk assessment procedures, you will identify the risk, correct or not? Based on risk of the area, you will determine further audit procedures, correct or not? So as the audit progresses, as you identify more and more risks, you will determine more and more further audit procedures. That means the further audit procedures that you perform during the audit will be determined as the audit progresses, and as the audit progresses, you will update your audit plan with that further audit procedures. This is one of the example of how audit plan evolves as the audit progresses. Getting it? So same thing you have to write. For example, this is important, this example. In the class we have detailedly understood this, right? So planning of auditors risk assessment procedures occurs early in the audit process. However, planning the nature, timing, extent of specific further audit procedures depends on the outcome of those risk assessment procedures. So as the audit progresses, as you find more and more risks, you will include more and more further audit procedures. As you include more and more further audit procedures, you need to update your audit plan, because these further audit procedures will be included in the audit plan only. So that is one of the example of how audit plan progresses, of how audit plan evolves as the audit progresses. Getting it? Yes, sir. Next, question number 29. R and Co chartered accountants have been appointed as auditors of XYZ Limited, a company operating in multi-business segments including manufacturing and financial services. The company is subject to industry-specific reporting requirements issued by the financial regulator. During audit planning, engagement partner emphasizes the importance of identifying characteristics of engagement, defining its scope while establishing overall audit strategy. So, while establishing overall audit strategy, the first factor that you will consider is the characteristics of engagement, correct or not? Some of the examples they are asking, as an auditor, explain characteristics of engagement, defining its scope. So financial reporting framework, this is one of the example for characteristic of engagement. Industry specific reporting requirements is also one of the example. Nature of business, audit evidence obtained in the previous audits, all these are some of the examples for characteristics of the engagement. Next, question number 30. CA Krish is planning the audit of financial statements of Black and White Limited for financial year 24-25 with the objective of conducting it in an effective manner. He also carried out audit of previous year, and the audit report was issued in the month of June 2024. He started planning the audit procedures to ensure an effective, efficient audit for the current year. He is assisted by Mr. Shiv, an article assistant, in the audit planning process. During the planning discussions, Mr. Shiv raises few queries regarding the audit planning stage. As a senior, help Mr. Shiv by resolving the following queries. What are they? When does planning for an audit actually start and end? So planning for the current year audit, it will start immediately after completion of a previous year audit, and it will continue till the end of current year audit. Okay, so it will start immediately after ending previous year audit, and it will continue till the end of current year audit. Next, Whether auditor can change planning decision during the audit or not. If yes, what are the possible reasons? Can you revise your audit plan and strategy as the audit progresses? Yes, you can revise. What are the reasons? Result of unexpected events, change in the conditions, audit evidence obtained as a result of audit procedures, change in laws and regulation. All these are some of the reasons because of which you can update your audit plan and strategy as the audit progresses. Got it? Yes, sir. So this is a discussion of question and answers with respect to chapter number 3, that is audit strategy planning and program, essay 300. Next, I'll open the next chapter. Yes, now we'll discuss question and answers of fourth chapter. In this chapter, we will be covering 5 standards. What are those standards? We will be covering essay 315, essay 330, and essay 450, essay 320, and also essay 265. All these 5 standards we will be covering in this particular chapter. And while learning also, you have to read all these standards together, because there is a link between these standards. In your ICAI study material, they have given these standards in different chapters. If you learn as per that, you will not get full conceptual clarity. So I have kept all these standards together in a single chapter. Okay? Yes. So, and in this chapter also, question and answers I have divided standard wise. First we will be seeing all the questions of 315. Next we will be seeing all questions of 320. Next 330. Like that, standard wise I have divided the questions within the chapter also. Got it? Yes, sir. So question number 1. XYZ Limited is engaged in the business and running several stores dealing in variety of items such as ready-made garments for all seasons, shoes, gift items, watches, etc. So these are the different items in which the company is dealing. There are a security tags on each and every item. So for each and every item, there is a security tag that is attached. Can you say that security tag as a internal control? Yes, it is a internal control. Moreover, inventory records are physically verified on monthly basis. So, inventory records they are verifying, the auditor is verifying on a monthly basis. Discuss the types of inherent control detection risk as perceived by the auditor. So, in the given situation, where you can find inherent risk, if you observe, there are different types of items: watches, gift item, shoes, garments. Now there is a possibility that all these items can get mixed up, and employees might not find some of the items. Some of the items can get missing. Correct? So this is one of the inherent risk that is present, because they are dealing with a lot of SKUs, that is stock keeping units, nothing but lot of items. So that is the inherent risk. Next, control risk. Here, for each and every item, there is a security tag. There is a risk that even after security tag is there, the tags might not work properly and the item might be stolen. So there is a risk that controls. In this situation, security tags might not detect, prevent, correct the error or the fraud. So that is the control risk that is present over here. And finally, inventory records are physically verified, it seems. Now, even though inventory records are physically verified, there is a possibility that your procedures might not identify the misstatements or frauds in the inventory records. That is the detection risk. So these are the 3 risks that you can find in this particular given scenario. Got it? Yes. So like this, they can give any scenario and ask you to find out inherent risk, control risk, detection risks in that scenario. You need to remember what is inherent risk concept. what is control risk, what is detection risk. If you remember the concept, you can apply it to any given situation. Okay, yes sir. Same you will explain how inherent risk is there, control risk is there, detection risk is there. Next, question number 2. A partnership firm of chartered accountants, HT and Associates, was appointed to audit the books of accounts of Wind and Ice Limited for the financial year 2021. There was a risk that HT and Associates would give inappropriate audit opinion if financial statements of Wind and Ice are materially misstated. This is nothing but the definition of audit risk. Correct or not? Audit risk is nothing but the risk of giving inappropriate audit opinion when there are misstatements in the financial statements. So state the risk mentioned. It is nothing but audit risk. So it is the audit risk. Very simple. See, first 10-15 questions in this essay 315, they are from the study material, which are very much easy. Okay, if you really remember the concept, you can easily answer these first 10-15 questions. Next, question number 3. Wear and Tear Private Limited is a startup engaged in providing holistic solutions to problem of paddy stubble burning, mainly catering to needs of farmers of northwestern India. Due to importance given by governments to this issue, companies have entered into market in the past few years. Since government is giving many importance to this issue, many companies have entered into the market, into this business. Many of these companies have not been successful and have gone bust. Have gone bust means nothing but they have become bankrupt. As an auditor of a company, can you spot the component of risks of material misstatement involved above? Here, can you say there is a inherent risk in the industry? So the business nature itself is such that many companies are going bust. So there is an inherent risk involved in the given situation, right? Yes, there is a inherent risk. Next, question number 4. A company has devised control that its inventory of perishable goods is stored in appropriate conditions in a controlled environment to prevent any damages to inventory. Responsibility is fixed on two persons to monitor environment using sensors and to report on deviations. Identify the component of risk of material misstatement involved as an auditor of company. If you observe here, they have implemented controls. Now there is a chance that the controls that they have implemented might not work. Correct. So this is the risk that is involved. Next, nothing but control risk. Next, question number 5. Shree Foods Private Limited is engaged in manufacturing of garlic bread. The auditors of company have planned audit procedures in respect of recognition of revenues of company. Despite that, there is a possibility that misstatements in revenue recognition are not identified by planned audit procedures. So the risk that audit procedures that you perform cannot identify the misstatements is nothing but detection risk. That is a definition of detection risk. So this is the detection risk. Very simple, right? Next, Jojo Limited is planning to list on Bombay Stock Exchange next year. As an auditor of Jojo Limited, identify any one reason of increased audit risk due to listing of company next year. So it seems the company is going to list in the stock exchange next year. They are asking you, because of a company getting listed on stock exchange, what risk is there in the company? Now, when company is listing on stock exchange, it will issue shares to public. In order to get more demand for the shares from the public, there is a possibility that company might show more revenue, company might show more profits. So there is a possibility that company might manipulate its financial statements. That is the risk that is present in the situation. So because of getting listed in the stock market, company might misstate its financial statements by increasing revenue, by increasing profit, by booking all the fake sales, right? See, there could be possibility of intentional manipulation of financial statements so that good response is received to the public issue. So this is the risk that is involved because of a company getting listed on the stock market. Next, question number 7. On perusing financial statements of Zozo Limited put up for audit, it is observed by auditor that current ratio has improved from 1.2 is to 1 to 1.75 is to 1. So in the previous year, current ratio is 1.2 is to 1. In the current year, it has increased to 1.75 is to 1. You have to see this question number 7 as continuation of question number 6 because same Zozo Limited. Now identify what kind of risk assessment procedures are being performed by the auditor by comparing current ratio of previous year with current ratio of current year. What audit procedure auditor is performing? Nothing but he is performing ratio analysis. Ratio analysis is nothing but one type of analytical procedure, correct or not? Yes. So auditor is performing ratio analysis, which is nothing but a analytical procedure. So he is performing analytical procedure. That is the answer to first question. Next question, has it any relation with listing of company next year on Bombay Stock Exchange? First of all, what is meant by current ratio? It means that in this situation, if you observe, if current ratio is 1.2 is to 1 means for every 1.2 rupees of current assets, there is 1 rupee of current liability. That is the meaning. Now current assets have increased from 1.2 to 1.75 drastically. They have increased. There could be a possibility that in order to show better financial position, company might have increased its current assets by manipulating the records. Is there such possibility? Yes, there is a possibility. I am saying just a possibility, not that a company for sure manipulated. Might be genuinely current ratio might have increased. That possibility is also there, correct or not? Yes. So there is just a risk that a company might have manipulated its books of accounts, right? Yes sir. So same thing you have to say, current ratio has improved from previous year. There could be possibility of misstatement in current assets and current liabilities. Next, question number 8. One of the team members of auditors of highly capable limited was of the view that materiality and audit risk are only considered at planning stage of audit. Comment as an auditor, tell me, will you consider materiality and audit risk only at planning stage or throughout the audit? You will consider materiality and audit risk throughout the audit, not just at planning stage. You have to write the same thing, that materiality and audit risk will be considered throughout the audit but not only at the planning stage. That you have to write down. Got it? Yes. Next, question number 9. The auditor of ABC Textiles Limited chalks out an audit plan without understanding the entity's business. Is that correct? Can you prepare audit plan without understanding the entity's business? No. In order to have proper audit plan and audit strategy, you have to understand the entity's business, right? Yes. Since he has carried out many audits of textile companies, there is no need to understand the nature of business of ABC Limited. Like that he is thinking. Is it correct? No. Even if you have audited many textile businesses, you have to understand the company's business once you start the audit of the new company. Got it? Yes. So advise the auditor how he should proceed. You should advise him saying that first of all he should obtain understanding of the business of the entity. Got it? Yes sir. Next, question number 10. While auditing books of accounts of Heavy Material Limited for the financial year 22-23, A team member of auditor of Heavy Material Limited showed no inclination means no interest towards understanding the business and business environment of above mentioned company. Again, same as that of similar question to ninth. Is the approach of team member of auditor of Heavy Material Limited correct or incorrect? Of course, it is incorrect. You have to understand the business of the entity, right? Yes. Next, question number 11. CA Tina, while inspecting financial statements of company, notices that gross profit ratio of company has increased from 14% in the year 22-23 to 24% in the year 23-24. A exponential increase, an increase of almost 10%. Now, considering the above, she has assessed the risk of material misstatement to be high with respect to assertions related to revenue and various direct expenses. CA Tina wants to know few possible reasons which could have led to abnormal jump in the gross profit ratio. Okay. During the discussion among engagement team members, her junior, Miss Tisha, expressed her view that detection risk in this engagement should be kept at high level. Now they are asking you two questions. List out a few possible reasons which could have led to abnormal jump in the gross profit ratio. See, there could be many reasons. Like, in order to increase gross profit ratio, company might have overvalued closing stock. Correct, overvaluation of closing stock. Or in order to increase gross profit ratio, company might have overstated sales. So these two you can do in the credit side. And in the debit side, company might have understated direct expenses. Correct. So these are some of the possibilities that the entity might have done in order to increase its gross profit ratio. Or on the other hand, genuinely also the gross profit ratio might have increased, right? You need to give those reasons. Next, do you agree with the viewpoint of Tisha? Provide reasons for your answer. So what Tisha is saying, let us read once more what Tisha is saying. During discussion among engagement team members, her junior Miss Tisha expressed her view that detection risk in this engagement should be kept high. Now, if you observe in the question, they are saying this point: risk of material misstatement is high. If ROMM is high, then detection risk should be less. There is a inverse relationship between ROMM and detection risk. So when ROMM has been kept high, detection risk should be kept very low. You cannot take much chance, right? So the view of Tisha saying that detection risk should be kept at high level is wrong. Her view is wrong. You need to conclude that her view is wrong because there is a inverse relationship between risk of material misstatement and detection risk that you need to explain. Got it? Yes, sir. So same things you will find even in the answer also. The three situations I gave you and the view of Tisha is not proper. Why you will explain the same reason which I gave you? You have to explain it. Got it? Yes, sir. Next, question number 12. Auditor GR and Associates appointed for audit of PNG Limited, a manufacturing company engaged in manufacturing of various food items. While planning an audit, auditor does not think that it would be necessary to understand internal controls. Advise the auditor in this regard. Again, while planning the audit, should you understand the internal controls? Yes, you should understand the internal controls. That will help you in designing a proper audit procedures. Correct or not? Yes. So you have to say that auditor shall obtain understanding of internal controls. Next, question number 13. The team member of auditor of Simple and Easy Limited was of the view that understanding the internal control of the company would not help them in any manner in relation to audit procedure to be applied while conducting the audit. Again, similar to question number 12, you have to say that understanding internal control is helpful for the purpose of audit. CS Smriti is auditor of a company. As part of audit, she is going through company policies and practices regarding employee recruitment, training, orientation, and related matters. She seems to be very much interested in finding out whether company hires best candidates from applicant pool. Identify what she is trying to do. She is trying to understand the control environment. Correct or not? Yes. And obtain understanding of the internal controls. How gaining knowledge about this aspect is useful for her as an auditor. See, the study of company policies and practices regarding employee recruitment, training, orientation, and related matters, including hiring of best candidates, is part of understanding HR function of the company. It in turn helps in understanding control environment. If you remember, internal control system, there are five components for the internal control system. What are the five components of internal control system? First component is control environment. Second component is management's risk assessment process. Third component is control activity. Fourth component is information system and communication. And fifth component is monitoring. Of these five components, for control environment, that is for first component, there are certain elements. One of that element is HR policies. If you remember, I have also written the chart over here. Five components of internal control system. These are the, see, this is very much important from the examination point of view. That's why I have given the separate chart for each. For under control environment, there will be certain elements. For risk assessment process, there will be procedure. Under control activity, there will be certain four control activities: information system and monitoring. See, this is simple. I In the class I used to give you an example to you. For car to work properly, all the components of car like engine, wheel, wheels, and the steering, gear rod, brakes, all these components should work properly. Only then car as a whole will work properly. Correct or not? Similarly, for the internal control system to work properly, there are these five components which should work properly. If these five components work properly, internal control system as a whole will work properly. Getting it? Yes, sir. So under control environment, understanding HR policies is one of the element. So by understanding HR policies, auditor is understanding the control environment of the organization. That we have to say in the answer. Next, question number 15. During the audit of same company, that is above company, CS Smriti is keen to find out whether there exists proper system of segregation of duties in the company. She wants to be sure that person responsible for recording of transaction is different from person authorizing it. Yes, that is a segregation of duty. Discuss what she is trying to do and how its understanding is significant to her as an auditor. She is trying to understand the actual control activity, which is the third component of internal control system. You have to say that only. She is trying to understand control activities. By understanding the control activities, it will help the auditor in understanding whether controls is working properly or not, whether they have been implemented effectively or not. In understanding that, the auditor will understand the control activity. Got it? Yes, sir. Next, question number 16. Mr. Y, one of the team member of auditors of What and Where Limited, was very keen in knowing whether internal control of company would safeguard the company's assets. Advise Mr. Y. See, in order to get confidence of whether internal controls in the organization will safeguard the assets of company or not, you have to review them. Correct or not? So you will advise Mr. Y to review those internal controls. Based on review, you will get the confidence. Right? Yes, sir. Next, question number 17. In order to evaluate internal control of your and my limited, a team member of the auditors used a method according to which number of questions related to internal control of company were required to be answered by employees of the company. So auditor framed list of questions that should be answered by employees of company. Which method auditor is using? He is using internal control questionnaire. Why not checklist? In case of checklist, questions should be or procedures should be performed by audit staff, right? Yes. So you have to say that he is using internal control questionnaire. Next, question number 18. Healthy and Useful Limited is into small manufacturing as well as trading business. For the purpose of evaluating internal control of Healthy and Useful Limited, a team member of the auditors of the company used a method according to which whole description of internal control that was operating in the said company was to be recorded. So in which method you will record complete description of internal control system in the form of paragraphs? Narrative record. So here they are using narrative record. You need to say that they are using narrative record. Next, Zomba Products Private Limited is a small company. The control system in the company are rudimentary. Rudimentary means very old controls, not updated controls. How you as an auditor of company would proceed to evaluate internal control of the company? Since the entity is a small company and the controls are rudimentary, that means not that much sophisticated. In such situation you will use narrative record, right? That is the best method for in this situation. So narrative record, see, all these points you will find in the concept related to narrative record. If you are clear with respect to narrative record, internal control questionnaire, checklist and flowchart, you can easily answer all these questions, right? Yes, sir. Next, question number 20. A chartered accountant during course of audit of a company finds that cash is not deposited into bank frequently, although concerned staff of company was required to do so. Further, the official responsible for ensuring performance of above function has also not paid any attention to it. Discuss what does it represent from the auditor's perspective. It means that control is not operating effectively, so there is high chance of misstatement in that area. That is the understanding of the auditor from this particular scenario. Same thing you have to write. So it represents a control deficiency. Control is not working properly. Next, question number 21. While conducting audit of Zena Limited, CAE is trying to obtain understanding of different components of internal controls of the company. Such an understanding is necessary and is required to be documented in accordance with standards on auditing. Okay. In this context, how he shall obtain understanding of risk assessment process of company and how is this understanding important for the auditor? See, risk assessment, this is important. Who will do risk assessment? Auditor will do risk assessment and management will also do risk assessment. Both of these people will do risk assessment. Why auditor will do risk assessment? He will do risk assessment for the purpose of designing his further audit procedures. Why management will do risk assessment? Management will do risk assessment for the purpose of establishing internal controls. In the question they are asking you about risk assessment process of the company. That means risk assessment process done by the management. There will be 4 steps. You need to write down those 4 steps in the risk assessment of management. So they are asking you this, not this. Understanding? Yes. This risk assessment of management is part of components of internal control, components of internal control system. In that 5 components, first one control environment, second one is entities risk assessment process, nothing but this one only. So 4 steps are there. What is the first one? Auditor will see whether entity is having proper procedure for identification of the risks, and whether entity is assessing the significance of those risks or not, so estimating significance of those risks. Next, whether entity is checking the likelihood of occurrence of that risk, so assessing the likelihood. After that, what actions the entity has taken, so deciding about actions to address those risks. So auditor will check whether entity is following these 4 steps for the purpose of conducting entities risk assessment process. Now, understanding the entities risk assessment process, how will that help to the auditor? By understanding the entities risk assessment process, if auditor came to know that entities risk assessment process is good, then entity would have established proper internal controls. If entity's risk assessment process is not good, then entity would not have established proper internal controls, because I told you the reason why entity is conducting its risk assessment is for establishing the internal controls. If this risk assessment done by the entity is proper, internal controls will also be established properly. If risk assessment done by the entity is not proper, then internal controls will also not be established properly. So by checking this, auditor will get to know how entity has established internal controls. See, the entity's risk assessment process forms a basis for risk to be managed. If that process is appropriate, it would assist the auditor in identifying the ROMM. Risk can arise due to so and so reasons. Whether entity's risk assessment process is appropriate to circumstance is a matter of judgment of auditor. Right? This you have to explain. Next, question number 22. While planning the audit of Me Limited, CAM has planned nature, timing, extent of risk assessment procedures to identify and assess risk of material misstatement. How risk should be assessed by auditor CAM? It is also well known that assessment of risk is a matter of professional judgment. See, how the auditor will assess the risk? By performing risk assessment procedures. Correct or not? You will write that only. Auditor has to perform risk assessment procedures, and as part of that, auditor needs to understand the entity and its environment. Right? By doing that, auditor will do risk assessment. Next, see, audit procedures performed to obtain understanding of entity and its environment, including entity's internal control, to identify and assess risk of material misstatement, whether due to fraud or error. This is nothing but RAP, risk assessment procedures you will perform. Next, they are asking which specific matters are not included in the audit risk. See, audit risk does not include business risk of auditor. Okay, business risk of auditor is not part of audit risk. Now, what is meant by business risk? The risk that auditor will not get clients is known as auditor's business risk. Okay, it will take me half an hour to explain that business risk. In the class, I will be explaining that concept of business risk. You just remember that business risk is the risk that auditor will not get clients, is known as business risk of auditor. Now, that business risk is not part of audit risk. Got it? You need to state that only. So, auditor's business risk is not part of audit risk. Next, question number 23. Auditor of EFG Limited, a company engaged in tours and travel business, needs to obtain understanding of the company's control environment. To do this, auditor evaluates whether management has created and maintained culture of honesty and ethical behavior, strengths in control environment elements collectively provide. Okay, these things he is doing. What is the question they are asking? What is included in control environment? There are three things that will be included in the control environment. What are they? First one is governance and management. Governance and management. Next one, see, first one was with related to management function. Next one will be with respect to those charged with governance. See, attitudes, awareness, and actions of those charged with governance and management. So first 2 points related to first one management, second one those charged with governance, and finally last one control environment sets the tone of an organization. This is irrelevant point, but they have included it here, so you have to write it as it is. So these are the three things that will be included in the control environment. After that, explain elements of control environment. There are 7 elements of control environment, but it is sufficient if you just remember 6 elements, that is sufficient, or you can also remember 7 elements also. Okay, so what are those elements of control environment? First one is uh, upholding integrity and ethical values in the organization, promoting integrity in the organization. Next one is participation by those charged with governance. Next one is management's attitude and style of operation of management. Next one is organizational structure. Next one is HR policies. HR policies already we have discussed in one of the question, correct? So, and still one more is left, which is nothing but assignment of authority and responsibility. You, what you do is, for the purpose of remembering these 6 elements of control environment, you read this paragraph. By reading that, you will understand what that element is and how it is related. You have to think from this point of view, like each and every point that you read, how it will help for making the control environment better. If you think from that point of view, easily you can remember all these 6 elements. Understanding? So first one is communication and enforcement of integrity and ethical values. So the control environment in the organization should be in such a way that it promotes ethics, it promotes integrity, understanding, among the employees. Because if employees are having integrity, if employees are ethical, no matter what, if the controls are not working properly also, no fraud will happen. But if employees itself are fraudulent people, then how many controls you establish also, they will try to find out some loopholes and commit the fraud. So that is communication enforcement of integrity and ethical values. Like this, for each and every point you have to think how it will help the control environment. Next, participation by those charged with governance. If top level people itself do not give much importance to controls, how the low level employees will give importance? So participation by top those charged with governance is also required. Like that, all the remaining 6 points. Okay, and sixth point is linked to first point. You remember that, because at the time of hiring the employees itself, if you hire those people who are having high integrity and ethical value, it will help the first point, correct or not? So sixth point is linked to first point. So in this manner you can easily remember all the 6 points. Okay, yes. Next, question number 24. KR and Associates, an auditor of FDP Limited, observed that company has implemented various internal controls addressing financial reporting, operational efficiency, and compliance during their preliminary evaluation. CA current suggests that all controls should be assessed to mitigate the risk of material misstatement in the financial statements. Will you assess all the controls? No. Only those controls that are relevant for the purpose of audit, you will assess them. Correct or not? Yes. While CA Rajat is of the view that only those controls deemed relevant to the audit should be assessed based on professional judgment. Yes, CA Rajat's view is correct. Comment whether auditor should assess all the internal controls or limit the assessment to only those considered relevant by the auditor during the audit. Also discuss the factors influencing the auditor's judgment on relevance of controls. First of all, auditor needs to limit his assessment only for those controls that are relevant for the purpose of audit. You need to say that only. Entities objective and therefore controls relate to financial reporting, operation, and compliance. However, not all of these objective controls are relevant for the purpose of auditor's risk assessment. That is the answer to first question. And next, answer to the second question, what they are asking, discuss the factors influencing auditor's judgment about relevance of controls. So what factors will influence whether the control is important for the purpose of audit or not? There are certain factors. For this, you can remember the mnemonic Mr. C. What is Mr. C? First one, M for materiality of the particular item. Next, so materiality of the item influences the control. If the item is material, the control around it is important for the purpose of auditor. Next, risk, significance of related risk, nothing but Romum. If there is high Romum in that area, control around that area is important for the auditor. Next, yes, size of entity. Next, E, entity's business. Another E, entity's operation. Both are related to entity. Entity's business, entity's operation. Complexity of operations, nature of business of entity. And with respect to complexity, there is also nature and complexity of systems. So you can easily remember these 3 points. This one, this one, this one, easily you can remember. How? Nature of entities business, complexity of entities operation, nature and complexity of the systems. Easy? Yes. Next, circumstances and applicable component of internal control. Applicable component of internal control means that 5 components that we have discussed. And whether and how specific control individually or in combination with others prevents, detects, corrects some misstatements. So these are the points that will influence auditor decision of auditor's decision about whether the internal control is relevant for the purpose of auditor, whether that internal control is important for the purpose of audit or not. Next, question number 25. Knowledge of client's business play an important role in developing an overall audit. In fact, without adequate knowledge of client's business, proper audit is not possible. Yes, as per SA 315, identifying and assessing Romum through understanding the entity and its environment, auditors shall obtain understanding of relevant industry, regulatory, and other external factors, including applicable financial reporting framework, substantiate with the help of example. See, first of all, while doing the audit, you need to identify inherent risk. For the purpose of identifying inherent risk, you will obtain understanding of the entity and its environment. In order to understand entity and its environment, you will obtain understanding of 5 things. What are those 5 things? These are those 5 things. First one, relevant industry, regulatory, and other external factors. If you see industry, regulatory, all these are external factors. After that, you will understand internal factors such as nature of entity. After that, you will understand the entity's accounting system, accounting policies. So, entity selection and application of accounting policies. Next, you will understand entity's objectives and what are the strategies of the entity to achieve those objectives. And you will also understand how the performance of the entity is being measured. So all these are the 5 factors that you will understand as a part of understanding the entity and its environment. Now they are asking you, give certain examples for the first factor. So for relevant industry, give some example. For regulatory, give some example. For other external factor, give some examples. Okay, that is the question that they are asking. Now, if you see, for relevant industry factors, under industry factors, there will be 3 things. One is competitive environment, that means who are the competitors in the industry. After that, supplier and customer relationship, and after that, technological developments. All these 3 is part of industry factors. And for that, you will can give again same examples. What competitors are there? See, market and competition, product technology, and seasonal activity. Again, 3 same examples, copy paste. Next, regulatory factors. Under regulatory factors, there will be 2 things. One is financial reporting framework, and another one is other laws and regulations. See, financial reporting framework, legal and political environment. Again, for financial reporting framework, you will give same financial regulatory include accounting policy and industry specific practices, regulatory framework for regulated industry legislation and regulation that significantly affect the entity's operation, including direct supervisory activities such as the taxation, government policies currently affecting the conduct of entities business. See, you will give example of certain laws and regulations that are applicable to the entity, and also financial reporting framework that the entity is following. If you give that example, that is sufficient. Next, example of other external factors. What can be other external factors? Like interest rates applicable in that industry, and inflation rate, and availability of finance. These three examples you will give: interest rate, availability of finance, inflation. Got it? Yes, sir. Next, question number 26. CAQ is engagement partner for audit of departmental store. As part of risk assessment procedures, he wants to make inquiries of management and others within the entity. So inquiry is one of the risk assessment procedure. Yes. What kind of information can the auditor get by inquiring the following people? First, by inquiring internal audit personnel, you will get information about how internal controls in the organization is working. Next, by inquiring in-house legal counsel, you will get information about litigations, pending cases against the entity and the status of those cases. Next, inquiry of marketing or sales personnel. By inquiring them, you will get to know about what are the new marketing activities, what is the marketing budget, from which sources the sales are coming to the entity. All these things you will get to know by inquiring marketing and sales personnel. Next, information system and personnel. By inquiring information system people, you will get to know what information technology entity is using, what risks are there because of that information technology. These kind of things you will get to know by inquiring information system people, right? So the same thing you need to write. By inquiring these four types of people, you will get these kinds of information. Next, CA Amit is, see, this is September 24 examination question. CA Amit is auditor of Element Limited. While conducting the audit, he wanted to analyze the different components of internal control of the company. Identify and explain which component of internal control he is trying to understand in the following two cases. I told you there are 5 components to the internal control system. You have to remember that 5 components: control environment, entities, risk assessment process, information system and communication, control activity, and the fifth one, monitoring. By remembering that five components, you can easily answer this. First one, whether controls in Element Limited are operating as intended and they are modified as appropriate for change in the conditions. So auditor is, management is checking whether controls in our organization are operating properly. Should we change them, should we update them, like that they are checking. This comes under monitoring of the controls, right? Yes, so this is the fifth component, monitoring. So monitoring of controls. Next, whether there exists proper segregation of duties in the company and the person responsible for recording a transaction is different from the person authorizing it. Nothing but he is checking the actual control activity, nothing but the third component, right? So actual control activity. Next, question number 28. Identify and briefly explain component of risk of material misstatement involved in the following situations. If you observe, all these three already we have discussed. GHK Private Limited is startup engaged in providing comprehensive solutions to issue of paddy stubble burning. As an individual question, we have seen this paddy stubble burning, mainly catering to needs of farmers of northwestern India. Many companies entered into this and they have gone bust. Which risk? Inherent risk. Next, company devised control that inventory of perishable goods is stored in appropriate condition in a controlled environment. Which risk? Control risk. All these three we have seen as individual questions. They have combined all that three and gave as a single question. Okay. So inherent risk, control risk, detection risk. Clear? Yes. Next question number 29. CA Ram Manohar and his team have just started the statutory audit of listed company which is into manufacture of agro-pesticides. The auditors wish to plan and perform the audit so as to reduce the risk of material misstatement to an acceptably low level. Discuss how the auditors can satisfy objective of identifying and assessing risk of material misstatement. Your answer should be in line with auditing standards. So how auditor will perform risk assessment? 4 steps. What are the 4 steps? Identify the risk. Next, assess the significance of that risk. Next, compare likelihood of sorry compare the risk to what can go wrong at the assertion level. Next, fourth one is likelihood of occurrence of that misstatement. So identify the risk, assess the identified risk, relate the identified risk to what can go wrong, and finally consider the likelihood of misstatement. So these are the 4 steps in risk assessment. See how you will perform risk assessment. First, you will identify the risk. Once the risk is identified, you will assess whether this risk is important, whether this risk is not important, whether this risk will impact many areas. That is assessing, which is the second step. After assessing, if there is a risk, it doesn't mean that misstatement should occur in that area, right? So because of this risk, what is the likelihood of because of this risk, what can go wrong, what misstatement can occur in this area, that you will see, which is the third step. Next, what is the chance of occurrence of that misstatement? Nothing but what is the likelihood of occurrence of that misstatement, which is the fourth step. Got it? Yes, sir. Next, question number 30. Internal control questionnaire is a comprehensive series of questions concerning internal control. A company is engaged in business of manufacturing of chemicals. It has 2 plant locations in city A and 1 plant location in city B, involving huge value of assets. Building at 3 locations is owned by the company. Company is owning all these 3 buildings. As of now, you got to know that company is having 3 buildings which are completely owned by the company. Now the company earns handsome profits and does not want to suffer losses due to business interruptions. It has a dedicated department for looking after insurance matters. So for these 3 buildings to take up insurance, there is a separate insurance department. As an auditor, prepare internal control questionnaire. So internal control questionnaire contains a list of questions that should be asked to the people within the company concerning this department for obtaining staff responses. So you should prepare a list of questions that has to be asked with respect to internal control for insurance department. So what questions you will ask? See, here this is a practical question. You have to understand in that situation what questions I can ask. Like, is company calling tenders for selecting the insurer who is offering lowest price, and is company taking insurance for all the buildings, and is company taking insurance for complete value of building, how the value of building is being calculated, whether all the plant and machinery that is there in the building is covered under the insurance policy, did company claim any insurance policy, if the company claimed any insurance policy, did any litigation going on, did the insurance company give that money? Like that, you need to think from the practical point of view and frame the list of questions. Okay, you should not by heart this one, you have to practically think. Okay, for that you can just take reference of these things, like, are competitive quotes obtained from different insurers? That means you should not go only to one insurer for taking insurance policy. You have to approach different insurers and ask for quotations, whether such quotations are being asked or not. Next, is comprehensive insurance cover obtained for fire, flood, bulgari, earthquake risk? So the insurance policy that the company has taken, is it covering all the types of risks or only one type of risk? This also one type of question you can ask. Are all three locations covered? That means all three buildings covered in the insurance? Are all assets consisting building, plant and machinery and inventories are covered? Is there adequate procedure to ensure that assets acquired between two renewal dates are also covered? Is there any official who decides the value? So how the value of building will be calculated? Is there any official? Does officer who decides on policy value reviewed periodically adequacy of insurance cover? Is loss of profits insurance cover taken? Have there been any instances of rejection of claims or pending claims followed up with insurance? So these are practical questions. Basically, if you see in the ICAI study material, or if you take in my book, internal control questionnaire with respect to 4 areas has been given in the book. If at all they ask exam question in the examination, they will ask from that 4 areas only. Okay, one of that area is insurance policy. Similarly, like insurance, there is also internal control questionnaire for purchases. If at all they ask from that 4 areas only, they will ask, because only that 4 areas are there in the book. He will not, 99% chance that he will not test outside of that 4. Okay. Yes. So you need not worry. You just read the list of questions that are there for that 4 areas in the book. Okay. Yeah. Next. Question number 31. Obtaining an understanding of entity and its environment, including the entity's internal control, is a continuous and a dynamic process of gathering, updating, and analyzing information throughout the audit. The understanding establishes a frame of reference within which the auditor plans the audit and exercises the professional judgment throughout the audit. State few areas in which such an understanding is helpful to the auditor. So, understanding the entity and its environment, how auditor gets benefited by understanding the entity and its environment. By understanding entity and its environment, can you calculate risk of material misstatement? Yes. So risk of material misstatement. Can you determine materiality? Yes. So determining materiality. Next, will it help you to selection and application of accounting policies? Yes, it will help you to understand which accounting policies the entity is following. Is entity selected correct accounting policy that is applicable for the situation or not? You can get an idea about that by understanding the entity and its environment. Similarly, whatever the audit procedures you have performed and the audit evidences you have gathered, are those audit evidence sufficient for this entity or not? That also you can understand. That benefit also you will get by understanding the entity and its environment. See, sufficiency and appropriateness of audit evidence, developing expectation for use when performing analytical procedure, areas where special audit consideration may be necessary. So by understanding the entity, you will identify some areas which require special attention by auditor. So for that also, understanding the entity is helpful, correct or not? So all these are the advantages that the auditor will get by understanding the entity and its environment. Got it? Yes, sir. Next. Question number 32. WXY Biotech Limited is engaged in manufacturing specialized pharmaceutical products. During the financial year 24-25, company introduced new product, entered into complex revenue sharing agreement with foreign distributors, adopted a newly issued accounting standard dealing with revenue recognition, operates in an industry where several companies have recently faced insolvency. So, all these will give rise to inherent risk, correct or not? Yes. The management has implemented internal controls over accounting and financial reporting. The audit team is in the process of identifying and assessing ROMM. Explain the concept of inherent risk. So, what is meant by inherent risk? Inherent risk is the susceptibility of account balances and the class of transactions to misstatements, either individually or combined together, might become material, considering there are no internal controls. That is the definition of inherent risk. So you have explained the definition of inherent risk. After that, what they are asking, discuss how it is relevant in the above case. Why this inherent risk concept is the relevant in the above case? You have to say all these, you have to quote all these reasons as it is, and say that because of these new things that the entity is doing, there is inherent risk in the entity. Okay. Yes. So the same things only will give. See, in the given case, revenue sharing agreement, new accounting standard, all these things increase the inherent risk. Inherent risk factors are considered while designing test of controls. Why will you consider inherent risk? Based on inherent risk only, you will determine how much of the controls should be tested. Correct or not? Yes. If inherent risk is more, you will test the controls more. If inherent risk is less, you will test the controls less. Correct or not? Yes. See, this inherent risk, control risk, detection risk, all these three are related. I hope you know the, you know how these are related. First, you will identify inherent risk. Based on inherent risk, you will test the controls. Okay. So in the area of sales, how much inherent risk is there? Based on that, you will test controls operating around the sales. If inherent risk of sales is more, controls should be working more effectively. If inherent risk of sales is less, controls should be working, you will test less of controls. Correct or not? And if controls are not working properly, then the chance of misstatement in that area will be more. Since more misstatements will happen in this area, the detection risk that you keep will be less. This is how inherent risk, control risk, detection risk are interlinked. Generally in the class we will discuss this concept with the help of that cash example. Around 1 hour we will take for discussing this example itself. Correct? Yes. I hope you remember that cash, in area of cash, there is a more chance of theft, and to avoid that theft, CC cameras are implemented, and on CC cameras, people can put kerchief and take away the cash. Right? We discussed that in the class. Yeah. Next question number 33. Auditor of Sunshine Limited is of the view that due to greater management intervention to specify accounting treatment, risk of material misstatement is greater for non-routine transactions. See, non-routine transactions means transactions which do not occur that much frequently, like purchase of a subsidiary, purchase of a land. Does these transactions happen routinely every day? Will they happen? No. They are non-routine transactions, right? In case of non-routine transactions, is risk of material misstatement high? Yes, it is very high. Why? There are some reasons. See, is the view, they are saying that only the romum in case of non-routine transaction is high. Is the view of auditor correct? Yes, view of the auditor is correct. What is the view of auditor? He is thinking that in case of non-routine transaction, romum is high. Is that understanding correct? Yes, it is correct only. We will see. Specify the other matters due to which risk of material misstatement is greater for significant non-routine transaction. So first reason they have given is greater management intervention. In case of non-routine transaction, management will intervene and it will specify how that transaction has to be accounted for. Since management is intervening, the risk of material misstatement is high. Management might say wrong treatment, wrong assumptions it can take. This is the first reason. Same thing you will mention, greater management intervention, the same reason which is given in the question. Apart from that reason, there are three other reasons. Second one is manual intervention. First, management has intervened. Next, manual intervention also is there, because for non-routine transactions, it is very difficult to automate. You cannot implement automation for the transactions that occur very less frequently. So you have to manually enter them, you have to manually process those transactions. Since greater manual intervention is involved, the ROMM is high for that non-routine transaction. Next, complex calculation and nature of non-routine transaction, which may make it. The nature of non-routine transaction itself is such that there is more risk in that transaction, because it occurs very less frequently, employees don't know how to process that transaction, how to establish proper controls over the transaction. So the nature of the transaction itself, one of the reason because of which there will be higher ROMM in that area, right? Yes. So these four reasons you need to mention. Why these four reasons? These four are the reasons why there will be greater ROMM in the area of non-routine transaction. What is non-routine transaction? I have already explained it, right? Yes. Next. Question number 34. During audit of ABC Limited, audit team discussed the concept of audit risk. The engagement partner explained that audit risk is a function of risk of material misstatement and detection risk. Yes. He further stated that assessment of these risks depends on the audit procedures performed to obtain necessary information and evidence gathered throughout the audit. One of the junior auditors asked whether such risk assessment could be determined through precise measurement. Can you calculate the risk precisely? No, not possible. You cannot exactly calculate the risk because professional judgment is involved in risk assessment. So you cannot precisely calculate the risk. You need to say that only, that you cannot precisely calculate the risk because there is an element of professional judgment in that area. The partner clarified that risk assessment is a matter of professional judgment, not an exact calculation, and that such judgment comes from auditors' training, knowledge, experience, which help in forming the reasonable conclusions. Discuss the concept of audit risk. What is meant by audit risk? Risk that auditor might give inappropriate audit opinion when there are material misstatements in the financial statement. That is the definition of audit risk. Same thing you will write. Explain what is included and what is not included in the audit risk. See, audit risk includes inherent risk, control risk, and detection risk. What is not included? Business risk of the auditor is not included, and also the risk that auditor might give inappropriate opinion when there are no misstatements in the financial statements, that is also not included in the audit risk, right? Same thing you will write. So first you have explained the definition of audit risk, and does not include risk that auditor might express opinion that financial statements are materially misstated when they are not. This is not included, and the business risk of auditor also not included. If you remember, in the class I used to explain the two types of inappropriate audit opinions. First type is when there are misstatements in the financial statements, you are giving unmodified opinion. Only this will be treated as audit risk. Second situation, when there are no misstatements, you are giving a modified opinion. That will not be treated as audit risk. This third point is that only, that second situation. Got it? So these two, they will not be part of audit risk concept. Next. Assessment of audit risk is considered matter of professional judgment. Explain how auditors' training and experience support this judgment. See, professional judgment definition you have to write. Okay. Yes, you have to say that yes, audit risk is a matter of professional judgment, and while exercising the professional judgment, auditor will apply his experience, knowledge, or training. The same definition we have to write. Okay. Yes. Next. Question number 35. CA Aditi is in the process of evaluating the internal controls of a company by focusing on controls operating for creditors from whom various goods are being purchased by the company. So she is verifying controls around creditors. In this respect, she wants to collect information about existence, operation, and efficiency of internal controls in the company. She plans to prepare a set of questions to be circulated among the executives and the employees of company. Nothing but she is trying to prepare internal control questionnaire. I guess now you got to know what the question is going to be. They are asking, see, which method is being contemplated by her for evaluating internal control? Of course, internal control questionnaire. Prepare set of few questions regarding controls operating around creditors. This questions also, this concept also, as it is there in the book. Same questions you can write down. See, the only option is you have to either by heart these questions or think practically and write the questions. Okay, from these two you have to do anything. Okay, yeah. Next. Question number 36, which is again an important question about significant risks. See, Significant risks often relate to significant non-routine transaction or judgmental matters. Non-routine transactions or transactions that are unusual due to their size or nature and that therefore occur infrequently. Judgmental matters may include the development of accounting estimates for which there is significant measurement uncertainty. In context of significant risk, explain factors to be considered by auditor in exercising judgment as to which risks are significant risks. So, in identifying which risk is a significant risk, there are certain 6 factors auditor will consider. These 6 factors are very important. You have to remember those 6 factors like anything. You just remember the keyword. Entire thing you can easily write. First one is risk of fraud. If the risk is related to risk of fraud, then the chance that it is a significant risk is more. So one is risk of fraud. Next, risk related to transaction with related party. Since it is R, I am uh, saying both the points together. Risk of fraud, risk with related party. Next, risk related to transactions outside the normal course of business. If any transaction is outside the normal course of business, nothing but non-routine transaction. Okay, in such a situation, the risk in that transaction becoming significant risk is more. Okay, the chance of risk in that transaction becoming significant risk is more. Understanding? See, first of all, there will be lot of risks in the company. Of that risks, which risk is significant? Significant means nothing but important. You need to identify which risks are significant risks. In identifying that significant risks, you need to consider these factors, these 6 factors. If the risk is related to risk of fraud, that risk might become significant risk. If the risk in the area of transaction with related party, that risk can become significant risk. If the risk in the transaction that is outside the normal course of business, that risk can become significant risk. Similarly, risk in the complex, if the complexity of a transaction is very high, then that risk becoming significant risk, the chance is very high. Similarly, degree of subjectivity involved in measuring that, and whether risk is related to recent significant economic, accounting or other developments. So these 6 points you have to remember as factors to be considered in determining significant risks. Of these 6, 3 easily you can remember: risk of fraud, related party, outside the normal course. Remaining 3 you have to put effort for remembering. Understanding? Yes. See, you just focus on key terms. Remaining points as it is, you will remember. Okay. Next, question number 37. Much of the information obtained by the auditor inquiries is obtained from management and those responsible for financial reporting. However, auditor may also obtain information or different perspective in identifying ROMM through inquiries of others within the entity and other employees with different levels of authority. Explain the same in the view of above. Nothing but we have already seen this question. Inquiries can be conducted with IT personnel, marketing people, internal audit personnel, and you can also inquire internal legal counsel, right? So same thing you will write. By inquiry with internal audit personnel, you will get information about internal control. Inquiries of employees, inquiries of in-house legal counsel, you will get information about legal cases. Inquiries of marketing and sales personnel, inquiries of risk management people, operational and regulatory risks. So inquiry of risk management function. By inquiring risk management function, you can highlight this. By inquiring risk management function, people working in this function, you will get information about operational and regulatory risk. By inquiring information system personnel, you will get to know IT risks that the organization is facing. So this you have to write. So they are asking about inquiring with a different type of people, you will get different type of information. You please explain. By inquiring which type of people, you will get which type of information. You please explain that they are asking. Okay. Yes, sir. Next, question number 38. Dream Build Limited is an established player in the real estate sector and has developed strong internal controls across most areas. You are appointed as head of internal audit team, and you have a close relationship with the internal control system of the company, as it evaluates the effectiveness of internal controls and also suggests improvement in that internal control. See, they are speaking about internal audit. You have been appointed as head of internal audit department. Internal auditor will be having responsibility to verify internal controls. Apart from that, he should also verify governance and risk management function, right? So explain clearly stating activities related to internal controls. Nothing but they are asking about objectives of internal audit function. So you have to define that internal audit is a consultancy and assurance function which covers activities like governance, risk management, and control activities. Nothing but GRC, governance, risk management, and control activities. So same thing you will say, assurance and consulting activity, which covers entities, governance process, risk management, and internal control. Next, under internal control, while verifying internal controls, what are the four things that we will perform, four activities that the auditor will perform? Auditor will evaluate internal controls. Evaluate means checking the internal controls, how they are performing, are they sufficient, like that, checking them. Next, examination of financial and operational information. So in the organization, lot of financial and operational information gets generated. Whether controls around that operational and financial information is proper or not, you will see. So they are speaking about information, financial and operational information. Next is operating activities. Review operational activities. There will be various operational activities like purchase activities, hiring the employees, manufacturing activities. All these comes under operational activities. Auditor should also review controls around that operational activities. And finally, compliance with laws and regulation. Controls around compliance with laws and regulation. These are the four activities that are covered under internal control verification of the auditor. Internal auditor specifically. Okay, so you need to write, internal auditor is having three objectives. One is, you can just say GRC, governance, risk management, and control activity. Under control, he will verify these four things. Got it? Yes, sir. Next, CA Sakshi, statutory auditor of ZMC Limited, a medium-sized trading company, was reviewing the company's internal control system as part of her audit procedures. She noticed following instances where errors and lapses occurred. So, in the internal control system, following errors and lapses occurred. An employee failed to take action on an important report due to lack of understanding of its content, lack performing internal control without understanding its purpose. Can we say this as inherent limitation of internal control? Yes. Finance team made duplicate payments. Can we say this as a manual element of internal control is causing the inherent limitation in the internal control? Yes, manual element. Next, two employees colluded to override system check related to customer credit limits. Nothing but collusion of employees. This is also one of the inherent limitation. Yes. Owner approved certain transactions bypassing the standard operating procedures. Nothing but management to override of controls. If you see here, they are speaking all the inherent limitations of internal controls. Duties were not segregated properly due to limited staff. This is the disadvantage in case of smaller entities, right? So all these are inherent limitations of internal control. Let's see what they're asking. CA Sakshi discussed these findings with management and explained that such control failures, despite the existence of internal controls, are not rare. She also highlighted that internal control system inherently have certain limitations. Based on above, what is CA Sakshi trying to communicate to management? CA Sakshi is trying to communicate with the management that, see management, you have established internal controls, but these internal controls cannot work properly because of certain inherent limitations that they are having. And what are the inherent limitations of internal control system that may have led to these issues? All the 6 inherent limitations you have to write down. In the question itself, they have given all the inherent limitations. You need to just identify it and write down all the limitations. So human judgment, lack of understanding, collusion, judgment by management, limitation in case of small entities. This 5th point, you can say either judgment by management or management override of controls. Okay, yes. Next, question number 40. Identify and explain the assertions that the auditor will check by performing the following audit procedures. I hope you are clear with all the assertions: occurrence assertion, cutoff assertion, valuation assertion, accuracy assertion. All these assertions I guess you know their meaning. Now, there are certain situations and you need to answer in this situation which assertion auditor is trying to address. First one, any inventory held by entity on behalf of another entity has not been recognized as a part of inventory of the entity. That means inventory belonging to third party should not be shown in the books of accounts. Nothing but only if you have right over that inventory, you have to show it. Nothing but rights and obligation assertion. Employee benefit expenses have been incurred during the period in respect of personnel employed by the entity. That means occurrence assertion, only employee expenditure has actually incurred, only then you are showing in the financial statements. Otherwise, you should not show nothing but occurrence assertion. Inventory has been recognized at lower of a cost or net realizable value, simple valuation assertion, right? Next, sales shall include the dispatch of goods made at the year end as they belong to the relevant period. That means sales of current period only should be shown in the current period financial statements, nothing but cut off assertion. Next, any inventory held by third party on behalf of the entity has been included as part of the inventory balance. That means you should not have missed recording any of the inventory that belongs to you but held by third party. Nothing but completeness assertion. Complete inventory is shown in the books of accounts, right? Yes, sir. So rights and obligation, occurrence, valuation, cut off, completeness. You need to identify the assertion that is being addressed in each of the given scenario. Next, question number 41. See, all these questions we are discussing, they are related to essay 315 only. Still essay 320, 330, 450, 265, still those questions they will come. Okay. CA Mahavir is conducting training session for newly joined audit trainees. He explains the concept of audit risk and its 3 components, nothing but inherent risk, control risk, detection risk. He mentions that while 2 components of audit risk are beyond the auditor's control, what are those 2 components? Inherent risk, control risk. These 2 components are not in the hands of auditor. One component can be influenced by the auditor. What is that? Detection risk can be influenced by the auditor. Identify the component of audit risk that can be controlled by the auditor, which is nothing but detection risk. Give 2 examples of this component. So, what are some examples for detection risk? Let's say, for example, your audit procedures in the area of sales have not identified the misstatements because you performed audit procedures only on sample. Can we call it as detection risk? Yes, you can take this as one of the example for detection risk. Next, there are a lot of fixed assets in the entity, but you have not performed any procedures on the fixed assets, so you have not identified misstatements in the area of fixed assets. Can you call this as a detection risk? Yes. Like this, you can frame n number of examples wherein the link should be audit procedure you have not performed or you have not performed properly. Because of that, you have not detected the misstatement. By establishing this link, you can design as many number of examples as you wanted. Okay? Yes. So those are the examples you can give. Also explain how auditor can manage this component to keep audit risk at low level. So in order to keep audit risk at low level, you have to reduce the detection risk. If you reduce the detection risk, audit risk also reduces. This concept we have studied in depth in the regular class, how audit risk, inherent risk, control risk, detection risk, how all these three are related, right? Yes. So same things you will explain in the answer. Next, ABC Limited is a medium-sized manufacturing company having multiple departments and a large volume of transactions. The management claims that company has well-designed internal control system and an internal audit department in place. While planning the statutory audit, auditor decides to evaluate the internal control system of the company before determining the nature, timing, extent of audit procedure. So auditor is planning to verify internal control system of the entity. Now, during the review, auditor focuses not only on accounting controls but also on administrative controls and their impact on the financial reporting. Based on above facts, explain how evaluation of internal control system would benefit the auditor. See, this is very simple question. By verifying internal controls, what benefits you will get? You will get to know in which areas errors and fraud can happen. Yes, you will also get to know how internal controls are working. Are they working properly or not? You will get to know by verifying the internal control system. You will also get to know how internal audit department is working, correct or not. So like this, lot of benefits. It verifying internal controls will help you for designing your audit procedures, correct or not. Your further audit procedures will be designed based on internal controls only. Like this, you can write all the benefits. See, errors and frauds are likely to be located. Adequate internal control system. So whether the internal control system is adequate or not, about that you will get an idea. And to this point, this 10th point also related. What are the areas where internal control is weak? Okay, you will be able to identify whether internal control is adequate and in which area it is weak. Next, whether effective internal audit department is operating, and whether internal controller properly safeguarding the assets. See, you remember just the easy points. Out of these 11 points, you need not remember all the 11 points. Just 8 points which are easy, you remember. That will be sufficient. Okay. The second point, 10th point, it is a link. So remember it. Fifth point, third point, first point, they are easy. Remember them. And how reliable the reports, records, and certificates of the management can be. That you can get advantage. And the extent and the depth of examination that he needs to carry out in different areas of accounting, nothing but designing his fab further audit procedure. Like this, you can remember just some easy points, that will be sufficient. Okay. Yes, these are the benefits of understanding or verifying the internal controls. Yes, now we'll see question answers from essay 320, nothing but materiality. Question number 1. CA Raja is auditor of Buildwell Forgings Private Limited, having a revenue of 25 crores. The company has been sanctioned a term loan of 50 lakhs from a bank. However, as at the end of the year, only 1 lakh was availed due to delay in procurement of asset. The financial statements of company do not disclose nature of security against which loan has been taken. Schedule 3 of Companies Act 2013 requires disclosure in this respect. Discuss whether non-disclosure of nature of security is material for the auditor. If you see, as per the Companies Act, that means as per the requirements of laws and regulation, disclosure of this aspect is required, but company has not disclosed it. Since this disclosure is required by law or regulation, it will be treated as material. If you observe, as per essay 320, we have discussed, irrespective of materiality level fixed by the auditor, if law or regulation has a specific definition for materiality, that definition or that item should be treated as a material, correct. So in this situation, If there is any statutory requirement of disclosure, it is to be considered material. Why? Because it is required by statute. Schedule 3 mandates disclosure of nature of security in relation to loan, and the amount involved is irrelevant. Okay, irrespective of amount involved in it, since that disclosure is required by statute, it will be treated as material. Next, question number 2. CAY, statutory auditor of company, is in process of determining materiality for financial statements while planning the audit. Since materiality is a matter of professional judgment and is affected by auditors' perception of financial information needs of users of financial statements, he is reasonably making certain assumptions about users of financial statements. This is the important point that you need to observe in the question. Now, which reasonable matters are likely to be assumed by him in respect of users? While auditor determines materiality, auditor will make certain 4 assumptions about the users. What are those 4 assumptions? Auditor will assume that users are having knowledge about entities business activities. See, have reasonable knowledge about business and economic activities of entity. And auditor will also assume that users know that the financials have been prepared and also audited only to the extent of materiality levels. Auditor is not concerned with immaterial misstatements. This point is already known to the users. Like that, the auditor will assume, see, understand that financials are prepared and presented or audited to the levels of materiality. And the auditor will also assume that users already know that some of the amounts that are included in the financial statements, they are subjected to change, like provision for gratuity, provision for doubtful debts. These aspects which involved judgment in their calculation, those amounts are subject to change. So uncertainty is inherent in measurement of certain amounts. This is already known to the users. And auditor will also assume that users can make reasonable economic decisions. They are having reasonable knowledge. Like that, he will assume make reasonable economic decisions. Got it? So these are the 4 assumptions that the auditor will make with respect to the users. Next, question number 3. Callan Retail Limited is preparing its annual financial statements, and the auditors are tasked with determining materiality. The company has used revenue as benchmark as it is a key indicator of performance. However, Callan Retail has recently opened new stores and closed underperforming stores, which could significantly affect both revenue and profitability. As per given case, what factors should the auditor consider when selecting most appropriate benchmark? When selecting the benchmark, there are 5 factors that you will consider. What are they? First of all, what are the items that are there in the financial statements? Items of financial statements, because from that items only one item you will select as benchmark. So elements of financial statements. Next, auditor will also consider whether in these elements are there any items on which specific attention of users will go. Are there any such items? That also auditor will consider. See, attention of users. Next, auditor will consider nature of entity and at which stage the entity is at its present business stage. All these things you will consider. Nature of entity, where the entity is in its life cycle. Okay. And auditor will also consider the ownership structure of the entity. And finally, the benchmark should not be highly volatile. Auditor will ensure that benchmark should be less volatile. So relative volatility of a benchmark will also be considered by the auditor. So these are the 5 factors that auditor will consider before selecting benchmark. Got it? Yes. Next, moving to essay 330. Question number 1. SA 330 states that auditors shall design and perform test of controls to obtain sufficient appropriate audit evidence as to operating effectiveness of relevant controls. Yes. Briefly discuss when such tests are to be designed and performed in accordance with SA 330. So, in which situation auditor will test the controls? There are only two situations. If auditor feels that controls are operating effectively and auditor wanted to rely on that controls, then that is the first situation in which auditor will test that controls. And the second situation is auditor feels that substantive procedures alone are not sufficient for the given situation. Along with substantive procedures, even test of control should also be performed. In that situation also auditor will test the controls. So these are the two situations in which controls will be tested. See, auditor's assessment of Rome at assertion level includes expectation that controls are operating effectively, or substantive procedures alone cannot provide sufficient appropriate audit evidence. In these two situations, you will test the controls. Next, if an auditor intends to place greater reliance on effectiveness of control, so if auditor wanted to place more reliance on effectiveness of control, state its likely effect on audit evidence to be obtained as a result of such a test of control. See, if auditor wanted to place more reliance on test of control, then auditor needs to obtain more sufficient appropriate audit evidence regarding that particular aspect. That means more persuasive audit evidence he needs to obtain, because he is placing more reliance on the controls. Since he is placing more reliance on the controls, he needs to obtain more persuasive audit evidence that these controls are operating effectively, right? Yes. So you'll find the same. In designing and performing test of controls, auditor shall obtain more persuasive audit evidence the greater the reliance the auditor wants to place on the controls. Next, why a higher level of assurance may be sought by auditor about operating effectiveness of controls. Higher level of assurance may be sought about the operating effectiveness of control when approach adopted consists primarily of test of control. So they are asking in which situation auditor depends more on controls. If auditor decided to perform more of test of controls, then he will decide to get more evidence about the operating effectiveness of control. That is simple, right? Yes. Next, question number 2. When more persuasive, see, persuasive means more believable, BELIEVABLE, more believable audit evidence. So when more persuasive audit evidence is needed regarding effectiveness of a control, it may be appropriate to increase the extent of test of control. Yes, if you want to obtain more believable audit evidence, you have to increase the test of controls as well as the degree of reliance on control. Discuss the matters the auditor may consider in determining the extent of test of controls. So in deciding to how much extent should I test these controls, in deciding that what matters or what factors auditor will consider, these are simple things only. If that control is performed more frequently by the entity, in such a situation more transactions are getting affected because of that control, so auditor will decide I will test that control more. So frequency of performance of the control. If auditor wants to place reliance on the control for longer duration during the audit, then also see length of time. If auditor is expecting that rate of deviation in this control is very high, then he will test that control more because he is expecting more rate of deviation in that control, right? So same expected rate of deviation. Next, relevance and reliability of audit evidence. If the relevance and reliability of audit evidence that has been obtained by the auditor is more, then he will test that control less. Correct or not? Sorry, not less. If auditor wants to obtain more reliable and more reliable and relevant audit evidence, then auditor has to test that control more. If you test that control more only, you will get more reliable audit evidence, more sufficient audit evidence. Correct or not? Yes. So this is also one of the factor that will impact the auditor's decision of whether to test the control more or less, and the extent to which audit evidence is obtained from test of other controls. So these are certain factors that will impact auditors decision of whether to test this control more or test this control less. Got it? Yes, sir. Next, question number 3. CAB was the auditor of Star Limited. He wanted to ensure that company had correctly reconciled its bank accounts and also wanted to understand whether and how far internal control system was operating in the company. What kind of test of controls is CAB performing? If you observe here, preparation of bank reconciliation statement by the entity, is it a control? Yes. Auditor wants to test whether company had correctly reconciled its bank accounts. That means company has already performed a control, auditor wants to re-perform that control, so here auditor is using re-performance, right? Yes, so here your answer should be re-performance. Next, what are other procedures that can be applied while undertaking test of control? So apart from re-performance, what other procedures you can use as a test of controls? I already told you the procedures that you use as risk assessment procedures, same things you can use for test of controls also, like inquiry, observation, inspection. These things you can use even for test of controls also, you need to mention the same. Other procedures include inspection, inquiry, re-performance, observation also you can add. Okay, yes. Next, moving to essay 450. Question number 1. Mr. D, an auditor, while auditing ACE Limited, identified certain misstatements in relation to particular class of transactions and account balances. He had communicated same to those charged with governance and also taken written representation from for the same. State the audit documentation required by the auditor regarding misstatements. So as per SA 450, what documentation auditor has to maintain with respect to the misstatements? Basically, there are 3 points. First of all, auditor has to document the level that has been fixed by the auditor, below which the misstatements will be treated as clearly trivial. So what is that level that has been fixed by the auditor that he needs to document? So amount below which misstatements would be clearly trivial. Next, auditor should also document all the misstatements that have been identified. So all the misstatements accumulated during the year and whether they have been corrected or not. And with respect to uncorrected misstatements, auditor needs to document how and why he is treating those uncorrected misstatements as immaterial, whether they are immaterial, if yes, why, or whether he is treating them as material. This he needs to document. See, auditor's conclusion as to whether uncorrected misstatements are material individually or in aggregate and the basis for that conclusion. So these things he needs to document as per SA 450 with respect to the misstatements. Next, question number 2. You are nearing completion of audit of a company. On going through your working papers, it is noticed that finished goods inventory was overvalued by 2 crore rupees. It has also been noticed that freight of rupees 10 lakh paid on import machinery was charged to profit and loss statement. Can you charge it to profit and loss statement? No, you have to take it to balance sheet, right? You have to add it to the cost of machinery. So can you say these two are the misstatements? Yes, these two are misstatements. Now discuss how you should proceed and communicate in the above situation before signing the audit report. So first of all, these two are instances of misstatements. You have to bring them to the notice of management and ask the management to correct those misstatements. If management doesn't correct them, bring them to the notice of those charged with governance and ask those charged with governance to correct those misstatements. If those charged with governance also doesn't correct the misstatements, then you will consider impact of those misstatements on your opinion in the audit report. This is how you will deal with these misstatements, right? Yes, same thing you will write. Next, question number 3. Spom & Co is a firm of chartered accountants established in 2010 with major focus on audit practice. In financial year 24-25, firm has 4 partners, 15 article assistants handling various internal audit, statutory audit assignments. Partners and article assistants meet monthly to discuss various aspects of practical as well as academic issues. While discussing about various aspects of audit risk of material misstatement, etc., partner S asks one of the article assistants to explain the concept of misstatement. Tell me what is definition of misstatement. If there is a difference between amount to classification to presentation to disclosure that is required as per applicable financial reporting framework, and the amount to classification to presentation to disclosure that the management has followed, if there is a difference between these two, then you will call it as misstatement. So you have to write the same definition. After that, with the help of at least 5 examples, you have to give 5 examples of misstatements. You can frame n number of misstatements, like sales has taken place for 10 lakh rupees, but company has entered it at 11 lakh rupees. There is a particular fixed asset that is present in the physically, but in the books of accounts it is not there. Depreciation not charged to fixed assets. Understand? Like this, you can frame n number of misstatements. Whatever misstatement you remember at the time of writing examination, you can note it. Got it? Yes. So examples of misstatements, it is very easy to create misstatements, examples for misstatements. Next, question number 4. UP Up and High Private Limited has started its export business during the year 23-24. The company was catering to domestic market only in the past years. CAH, statutory auditor of the company, is of the view that company has understated its revenue by 50 lakhs in the year 23-24 by not complying with requirements of accounting standard 9 relating to revenue recognition. Now discuss responsibility of statutory auditor to communicate with management in the above situation in accordance with SA 450. We have already seen this now. Auditor has to communicate the misstatements that he has identified during the audit on a timely basis to management. If management doesn't correct, bring them to the notice of those charged with governance. Same point you need to write down. Understanding? Next question they are asking, also explain usefulness of such a communication. If auditor communicates misstatements to management, what is the advantage? Management will get to know what misstatements are there, and management will keep their books of accounts clean by correcting those misstatements, right? That is the advantage that the management gets. So takes necessary action and maintain accurate accounting books and records. That is the advantage of communicating misstatements to management and those charged with governance. Next, we'll move to essay 265. Question number 1. CA Sumit has been appointed as a statutory auditor of CORE Limited. List out some matters that he may consider in determining whether a deficiency or a combination of deficiencies in internal control constitutes a significant deficiency. So, in order to treat a particular deficiency in the internal control as a significant deficiency, auditor will consider certain factors. So what are those factors? If that deficiency in the internal control is leading to material misstatements, so there is a particular area, around this area there is internal control, and in that internal control there is a deficiency. Because of this deficiency, material misstatements are occurring in this area, then this deficiency can be called as significant deficiency. Understood? Next, susceptibility to loss or fraud. Because of this deficiency, if fraud or loss can occur in this area, that deficiency also you can call it as significant deficiency. Subjectivity and complexity. If this area is highly complex calculations are involved, and for determining the amount, subjectivity of management is involved. If subjectivity and complexity is involved, romum of the area will be high, and around this area controls are there in which there is deficiency. Since romum of this area is high and controls are having deficiency, that deficiency you can treat it as significant deficiency. Understanding? Next, financial statement amounts exposed to deficiencies. Volume of activities, more volume of activities occurring, the deficiency can be treated as significant deficiency. Interaction of deficiencies, there is a possibility that one or more deficiencies in internal control together combined they can become significant deficiency. Correct or not? So you need to consider these factors. See, If these things are present, it is not that for sure that deficiency is a significant deficiency. No, if these factors are present, the chance of that deficiency becoming a significant deficiency will be high. Auditor needs to consider these factors, okay, in taking decision of whether the deficiency is a significant deficiency or not. Next, essay 265, question number 2. CA Vasu was appointed as a statutory auditor of Mrs. Pizza Limited for the financial year 23-24. While reviewing the internal controls, he observed that company has entered into many transactions with many firms in which directors are interested. That means related party transactions. The company's specified procedure was bypassed in such a transaction. CA Vasu considered it as a significant deficiency in the internal control over related party transaction. He communicated this deficiency to those charged with governance as under. So this is how he has communicated. Controls over significant transaction with related parties are weak. So he has communicated in just a single line. Now, in view of above, please explain, as per SA 265, whether significant deficiency communicated by CA Vasu to those charged with governance is appropriate. Communicating significant deficiency just in one line, is it appropriate? No. You have to describe the deficiency, and you have to explain the potential impact of this deficiency, and you should also give context of this deficiency to those charged with governance. Without giving all these things, if you just communicate in single line, that is not proper. The same thing you will explain here also. So you need to communicate potential effects and the context of communication and the description, three things. And they are also asking what is meant by deficiency in internal control. See, two situations will be called as deficiency in the internal control. For a particular area, control is there, but it is not working properly, it is not detecting you, preventing you, correcting you misstatements, then you will call that control is deficient or having deficiency. Another situation, required control is not at all present. In such a situation also, you will call that deficiency as significant deficiency. Getting it? Yes, sir. So both the situations you will mention. Next, question number 3. On reviewing internal control over inventories as part of statutory audit of a company, auditor finds that physical verification is not being conducted at regular intervals as stipulated by the management. Auditor finds it to be significant deficiency in internal control over inventories. He points it out to management in one liner. Physical verification of inventory is not being conducted at regular intervals as stipulated by management. Is above communication proper? No. Same what we have seen in the previous question, same in a different scenario they have asked. You have to write again the same thing. Next, question number 4. Deficiency or combination of deficiencies in internal control that in the auditor's professional judgment is of sufficient importance to merit the attention of those charged with governance. Give examples of indicators of significant deficiencies in internal control. So some of the examples for significant deficiencies in internal control. See, evidence of ineffective aspects of control environment. So in the control environment, you are finding that there are deficiencies. Control environment is one of the component of internal control, correct or not? If the control environment itself is having deficiencies, the deficiencies in the entire internal control system, you will treat them as significant deficiency. Next, absence of risk assessment process. Risk assessment process is also one of the component of internal control system. If the risk assessment process is not done properly, because of that deficiencies in internal control occurred, then also you will treat it as significant deficiency. Evidence of ineffective entity risk assessment process, again same point. Evidence of ineffective response to identified significant risks. So certain significant risks have been identified, and you have not, you means management has not properly responded to that significant risks. Management identifying and responding to the significant risk is also a control, and management is not exercising that control, you will treat it as significant deficiency in the control. Understanding? So like this, various examples you can frame and give. Next, question number 5. What do you mean by deficiency in the internal control? Just now we have seen two situations, and significant deficiency. When you will treat that deficiency as a significant deficiency in the internal control? See, if auditor found a deficiency and in the auditor's professional judgment, he is feeling that this deficiency is so much important that I have to bring it to the notice of those charged with governance, then you will treat it as a significant deficiency in the internal control. Understanding? Yes. So the same definition you will give. Next, question number 6. During the statutory audit of Orient Chemicals Limited, auditor CA Raj obtained understanding of company's internal control system as part of identifying and assessing risk of material misstatement. During the audit, auditor observed the following. Same employee was responsible for recording supplier invoices and authorizing payments. Inventory counts were conducted without independent verification. Certain purchase approvals were bypassed due to system overrides. All these deficiencies he found. Auditor considers these deficiencies as significant deficiencies as per SA 265. Now explain auditor's objective in respect of such deficiencies. See, the auditor's objective is simple. Auditor has to check whether there are any deficiencies in the internal control. So identified one or more deficiencies, and he needs to apply his PJ and decide whether the deficiency constitutes a significant deficiency or not. If he feels that this is a significant deficiency, he needs to communicate it to those charged with governance in writing. Understanding? And auditor will also communicate those deficiencies to management also if he feels necessary. Got it? Yes, these are the objectives of auditor with respect to significant deficiencies. Next, question number 7. During the audit of Element Limited, auditor identified certain significant deficiencies in internal control system which could adversely affect the reliability of financial reporting. Auditor is required to communicate such deficiencies to those charged with governance and also to management on timely basis. Further, auditor is required to ensure that written communication clearly specifies the nature and implication of such deficiencies. Yes. With reference to above, explain. Auditor's responsibility for communication of significant deficiency. Same 4 points which we have seen. Same points you will write. After that, matters that auditor shall include in the written communication of such a significant deficiency. This we have some points we have seen. You need to describe the deficiency, right? Description of deficiency, and you should also mention potential effect of that deficiency, right? So potential effect of the deficiency, and you in your communication you have to give sufficient context of communication, right? Understand the context of the communication you need to give to the those charged with governance, and these 3 points are important. Tell me, is there any responsibility on you to provide opinion on internal controls? No, you are not having any responsibility to provide opinion on internal controls. You have to mention the same thing. See, the purpose of audit was for the auditor to express opinion on financial statements, but not internal control. The audit included consideration of internal control relevant to preparation of financial statements in order to design audit procedures. I have verified some of the internal controls so that I can perform my audit procedures on financial statements. My work becomes easy because if I verify internal controls around a particular area and I came to know that internal controls are operating effectively, then I can reduce my further audit procedures. So for the purpose of making my work of audit easy, I have verified internal controls. You are saying that, okay, that are appropriate in the circumstances, but not for the purpose of expressing opinion on the effectiveness of internal control. And matters being reported are limited to those deficiencies that the auditor has identified during the audit. You'll also say that, see, those charged with governance, whatever deficiencies I'm communicating, these deficiencies, these are just identified by me. Okay, there can be some deficiencies which I have not identified. I am just communicating only those deficiencies which I have identified. That also you are making it clear to those charged with governance. Got it? Yes. So these things you need to communicate in your written communication. Got it? Basically, the written communication that you make to those charged with governance about deficiencies in internal control, there is a separate name for that communication. You will call it as letter of weakness. Actually you will not find this term in your ICAI study material, but they might ask you in the final level, you will find this term. So in the inter level also they might use the term letter of weakness in the question paper. So you be clear that letter of weakness means nothing but the letter that you are writing to those charged with governance about significant deficiencies in internal control. Next, question number 8, it is similar to question number 2 about CA Vasu. So question number 1 or 2, yeah, question number 2, CA Vasu, same question, it got repeated. I will just delete that question number 8, unnecessarily why repeated questions, right? I will delete this question. So by this we have completed discussion of fourth chapter, question and answers, right? So we have discussed the question and answers of essay 315, essay 330, essay 320, and also essay 450, and also essay 265. Question and answers of all these standards are covered in this particular chapter, right? Now let me open next chapter. Now we'll start chapter number 5. This chapter number 5 is completely reporting. Whenever reporting means complete 700 series standards, you'll be getting under this reporting. So here we will be covering SA 700, SA 701, SA 705, SA 706, and SA 710. Question and answers of all these standards we will be covering in this particular chapter number 5. And coming to the weightage of this particular chapter, it is 8 to 12 marks. See, this fifth chapter and next sixth chapter will be CARO. Both fifth and sixth taken together, it is 8 to 12 marks. Basically from CARO you will get 4 marks, and from this reporting 700 standards you will get 6 to 8 marks. Okay, that is the weightage of this particular chapter. Let us start with question number 1. So question number 1, CA Ayush has recently qualified and has joined a CA firm. On going through various audit reports, he observed that different phrases were used to express unmodified opinion on the financial statements. On inquiring with senior, he got to know that all those phrases can be regarded as being equivalent. Which phrases are appropriate and which phrases are inappropriate while drafting unmodified opinion? So if you wanted to give unmodified opinion as per SA 700, what are the phrases for that unmodified opinion that you can give in the audit report? If you see, this has come in September 24 examination. Basically I told you, if the management is following the fair presentation framework, then your wordings of unmodified opinion will be like this. See, you can use from A or B, any of these paragraph you can use. In our opinion, accompanying financial statements present fairly in all material respects as per financial reporting framework. You can use this line, or you can use, in our opinion, accompanying financial statements give true and fair view in accordance with applicable financial reporting framework. From these two lines, you can use any particular line when you are giving unmodified opinion. Now you can get a doubt, sir, what is the difference between these two lines? The meaning of those two lines is the same, just that in one line they have used present fairly, in another line they have used true and fair view. Meaning of both these terms, present fairly or true and fair view, meaning of both the terms is same. Sir, what is the meaning of present fairly or true and fair view? See, nothing but whatever actual situation of the entity is, that actual situation has been shown as it is in the financial statements. Management has not manipulated the financial statements. That is meaning of true and fair view or present fairly. Understanding? So if you want to give unmodified opinion and the entity is following fair presentation framework, you can use any of these two paragraphs. And what should not be used? You should not use wordings like subject to, or with the foregoing explanation. If you are giving unmodified opinion, you should not use these wordings. You have to use only present fairly or true and fair you. Why you should not use subject to or foregoing? This term subject to, you will use it in case of qualified opinion. You will say that except for the matters described in the basis for a qualified opinion, like that you will say. So these using of these words is inappropriate if you want to give unmodified opinion. Got it? Yes. If you write this, you will get 3 marks. Next, question number 2. Mrs. Amitabh and Associates are the statutory auditors of Ringston Limited, which is a company engaged in the business of manufacture of pen drives. Auditor has started drafting the audit report for financial year 21-22. CA Amitabh, the engagement partner, is of the view that financial statements of Ringston Limited present true and fair view. Give draft of the opinion paragraph. Now, for this company, he wanted to give unmodified opinion, and they're asking you to draft opinion paragraph. Now, when drafting opinion paragraph, you have to remember that in the opinion paragraph, 5 things should be mandatorily present. By including that 5 things, you have to draft the opinion paragraph. What are those 5 things? Name of the entity. So these are the 5 things. Name of the entity, and you need to state that the financial statements have been audited. So state that financial statements have been audited, and you should also give title of each statement comprising the financial statement. So title of each statement comprising the financial statement. That means nothing but balance sheet, profit and loss statement, cash flow statement. These are the statements comprising the financial statement. So the name of each of that statement you need to mention in the opinion paragraph, and period covered by these statements and reference to notes to accounts. So by including all these 5 things, you have to frame opinion paragraph. You already know name of the entity, you also know what is the items that are comprising, and financial year they have given reference to note, and you need to state that financials have been audited. See, by including those 5 things, this is how you can draft the opinion paragraph. See, we have audited the financial statements of Ringston Limited. So they are saying we have audited. Name of company comprising balance sheet as on 31st March. So statement comprising financials and also period covered, and the statement of profit and loss and the notes to financial statements, including a summary of significant accounting policies and other explanatory information. So reference to notes to accounts is also made. So this is how you will draft your opinion paragraph, and you will use that word give statements, give the information required by the act in the manner, and they give true and fair view, either true and fair view or present fairly. From these two, this one or this one, from those two, anyone you will mention as your opinion. That's it. Next, question number 3. Messrs. Kitewright and Associates are the statutory auditors of Prime Deluxe Limited for the financial year 21-22. At the time of finalizing the audit report, one of the engagement team members, Mr. Robin, asked the engagement partner, CA Kite, as to what all should be included in the basis of opinion paragraph. So what should be included in the basis for opinion paragraph? 4 things. Auditing standards. You should say that you have conducted your audit as per auditing standards, and you should say that you have obtained sufficient appropriate audit evidence. That is also one of the base for your opinion. And you should say, you should make reference to responsibility, auditor's responsibility paragraph, because your responsibility is also one of the base for your audit, basis for the opinion that you have done in the audit. And the final one is, you should say that you have acted independently and complied with the code of ethics issued by ICAI. So all these 4 things are basis for your opinion, like that you will mention the 4 things. See, I have also given the chart. These 4 things you should mention in the basis for opinion paragraph. Just like in the opinion paragraph, by mentioning 5 things you have framed, na? Just like that, in the basis for opinion paragraph also, by mentioning these 4 things, you have to frame your opinion, basis for opinion paragraph. See, we have conducted audit as per standards on auditing specified under section 140(10) of Companies Act. Those further describe the auditor's responsibility, and we have acted independently and complied with code of ethics, and audit evidence is sufficient and appropriate. So by putting those four terms, you can frame your basis for opinion. Okay, you can frame your basis for opinion in your own language, in your own terms you can frame, but ensure that these four things will be present in the paragraph while framing the basis for opinion paragraph. Got it? Yes, sir. Next, question number 4. Diamond Shine Limited is a company engaged in manufacture of detergent. Messrs. Bright and Associates are the statutory auditors of company. Explain how paragraph related to management responsibility will come in the auditor's report. See, management responsibility, 4 responsibilities you should include: preparation of financial statements, establishment of internal controls, assessing the entity's ability to continue as a going concern, and the final one, those responsible for oversight function of the financial reporting process. These 4 things you have to mention and frame the management responsibility paragraph. Simple, right? Yes. Next, question number 5. Messrs. Ajay Vijay and Associates are the statutory auditors of Sarovar Limited for the financial year 21-22. The company is engaged in business of manufacture of water bottles. At the time of finalizing the audit report, one of the audit team members asked CA Ajay, the engagement partner, to advise as to how auditor's responsibility paragraph can be shown as appendix to the auditor's report. Draft the auditor's responsibility paragraph so as to give advice the audit team member. If you remember, auditor's responsibility paragraph, it can be given in 3 ways. First of all, within the body of audit report, you can mention auditor's responsibility paragraph, or as an appendix to the audit report, you can mention auditor's responsibility paragraph. Or if the auditor's responsibilities are already prescribed in any particular website, you can simply make reference to that particular website. These are all the options that are available. Correct? Yes. Now they are asking, if auditor's responsibility is given as an annexure to the audit report, then how will you present that auditor's responsibility paragraph in the audit report? Okay, if auditor's responsibility is given as annexure, how you should mention that in the audit report? Like this you will mention. See, first of all, you will say that in the audit report, in the auditor's responsibility paragraph, you will say, our objectives are to obtain reasonable assurance about whether financial statements are free, as a whole are free from material misstatement, whether due to fraud or error. Nothing but the objective of auditor as per SA 200. You will copy paste and you will mention what is meant by reasonable assurance. So reasonable assurance is a high level of assurance, but is not a guarantee that audit conducted uh, in accordance with SA will detect all the material misstatements. Like that, you will explain meaning of reasonable assurance, and you will also state what is meant by material misstatement. Misstatements can arise because of fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decisions of users. So you will first of all mention the objective of auditor as per SA 200, and since in the objective you are saying that you will give only reasonable assurance, you will also explain what is meant by reasonable assurance, and in your objective you are using the term material misstatement, so you will explain what is meant by misstatement and when it becomes material. All that you will explain first of all here. Next, you will say that remaining responsibilities of auditor have been given as an annexure to the audit report. You please go to the annexure of so and so number and see the auditor's responsibility. Like that, you will mention. See, a further description of our responsibility for audit of financial statements is included in Appendix X. Whatever the number of that appendix is, that number you will mention of the auditor's report. This description, which is located at so and so page number, you will also include page number of the audit report where you can find that auditor's responsibility. Like that, you will present if you want to give auditor's responsibility as an annexure. Understanding? So this is how you will present auditor's responsibility paragraph in the audit report if you want to give auditor's responsibility as an annexure. Okay, you will just mention the objective and remaining responsibilities. You will say that we have mentioned remaining responsibilities in the appendix or the annexure. Clear? Yes, sir. Next question number 6. Maithili Thakur, a CA student, was perusing audit report of the company. Her eyes fell on an 18-digit alphanumeric number. See, whenever you see the term 18-digit alphanumeric number, you should remember it is UDIN, Unique Document Identification Number. At the end of audit report, below the signature of auditor and membership number. Make her understand objective and significance of such a randomly generated number. Is it required to be stated in case of audit report? First of all, what is the purpose of that UDIN, unique documentation identification number? The significance of UDIN, it has been introduced to curb the malpractices of fake chartered accountants, right? Fake chartered accountants, they are signing the audit reports saying that they are chartered accountants. To curb that malpractice, this UDIN has been introduced by ICAI, and they are saying, is it mandatory for the UDIN to be mentioned in the audit report? Yes, it is mandatory to mention UDIN in the audit report. Got it? Yes. Same will check up the malpractice of non-CAs, and it is required to state the UDIN in case of audit report and certificates. Next question number 7. CA Maya Memani has conducted audit of company. She has asked Sana, a CA student undergoing training in her office, to prepare draft audit report. Sana was part of engagement team conducting the audit. She has been further told to prepare draft report expressing unmodified opinion. After drafting para comprising unmodified opinion, Sana feels no need to provide basis for opinion. Discuss why her thinking is not proper. See, even though you are giving the unmodified opinion, you must give the basis for opinion in the audit report. It is required as per SS 700. So you have to say that thinking of Sana is not proper. She must give basis for opinion paragraph in the audit report, even though she has given unmodified opinion only. Got it? Yes. Next. Question number 8. Auditor's report shall include section with heading responsibilities of management for the financial statements. Yes. Now SA 200 explains the premise relating to responsibilities of management and where appropriate those charged with governance on which an audit in accordance with SAC is conducted. Explain what they are saying. Basically, in the audit report, you will include management responsibility paragraph, right? They are saying that SA 200, that is overall objectives of auditor and the conduct of audit in accordance with the standards on auditing. That standard has explained premise. Premise means assumption. So that standard explains that audit that the auditor conducts is based on the assumption that management fulfills certain responsibilities of the management. Now they are asking what are those responsibilities of the management. If you go and see SA 200, this is basically bare standard of SA 200. You can find it in the ICAI website. Now if you see SA 200, I have marked it here. If you see here, SA 200 is having a premise. Premise means nothing but assumption. It will be assumed that this assumption relating to responsibilities of management and where appropriate those start with governance. So what responsibilities management are having, that responsibilities will be assumed by auditor, that management will discharge these responsibilities, like that auditor will assume, okay, while accepting the audit. So what are those responsibilities? We have already seen that those responsibilities. See, preparing financial statements, establishing internal control, making going concern assessment, and responsibilities or oversight function. Same here we have seen in one particular question. This question, fourth question, similar to eighth question, but by giving these things premise, SA 200, by giving all those things, he tried to confuse you. Okay, here you need to write the responsibilities of management. Got it? And yes, responsibilities of management has also been discussed in SA 200, that only he mentioned in the question. Okay, to confuse you, if he use these big terms, premise, assumption, these kind of terms, if he uses, you should not get confused. Understanding? Yes. Question will be simple only. ICAI will use complex terminologies to make you people fear. Understanding? You should not fear. Question number 9. Messrs. SR and Associates are statutory auditors of Vani Textile and Garments Limited, a company engaged in business of manufacturing of various textile products. The auditor has completed audit and is in the process of forming an opinion on the financial statements for the financial year 23-24. CAS engagement partner wants to conclude whether financial statements as a whole are free from material misstatements, whether due to fraud or error. Guide him about the factors he should consider to reach that conclusion. See, in order to conclude whether financial statements as a whole are free from material misstatement or not, you need to obtain a reasonable assurance about that. In order to obtain that reasonable assurance, you will get sufficient appropriate audit evidence, and sufficient appropriate audit evidence regarding what? Regarding that there are no misstatements in the financial statements, and whether uncorrected misstatements are material. If at all there are any misstatements that have not been corrected by the management, are they material? Regarding that also you will obtain evidence. Based on all these things only you will arrive at opinion, right? So these are the things that you will consider. Still, evaluation required. The auditor shall evaluate whether financial statements are prepared as per financial reporting framework or not. This is a basic objective of audit. While giving the opinion, you have to evaluate this, whether whether financials have been prepared as per applicable financial reporting framework or not. And you should also, this evaluation shall include consideration of adequate aspects of entities accounting practices, including indicators of possible management bias. Next, question number 10. While forming an opinion on financial statements, auditor is required to evaluate various aspects relating to presentation and disclosure of the financial statements. Explain the specific evaluation that the auditor is required to perform while evaluating the financial statements. Further, state the additional evaluation required when financial statements are prepared in accordance with fair presentation framework. See, with respect to presentation of financial statements, auditor needs to verify certain things. So what are those things that the auditor needs to specifically verify with respect to presentation and disclosure aspect of financial statements that they are asking in the question? So what aspects you will see? You will check whether all the accounting policies that the management is following, have they properly disclosed them in the financial statements or not. So significant accounting policies, have they been correctly disclosed or not? And the accounting policies selected by the management, are they consistent or not? They should be consistently applied now, that you will see. Next, assumptions that the management has made, are they reasonable? Assumptions and the estimates that the management has made, are they reasonable? And next, whether information presented in financial statement is relevant, reliable, comparable and understandable. See, all these are the things that you will see with respect to exclusively presentation and disclosure of financial statements. And finally, terminology that is used in the financial statements, including title of each financial statement, is appropriate. So appropriate terminology you have to use in the financial statements. Got it? Yes. And some more specific evaluation. If the entity is following fair presentation framework, in such a situation, you will also evaluate the overall presentation structure, content of the financial statements, and whether financial statements, including related notes, represent underlying transactions and events in a manner that achieve the fair presentation. So if management is following fair presentation framework, whether the presentation of financial statements has been made in such a manner that fair presentation will be achieved or not, such a type of presentation is made or not, you will check. Got it? Yes sir. That is essay, question and answers of essay 700. Next, moving to essay 701. Question number 1. As per essay 701, objective of auditor are to determine key audit matters and, having formed an opinion on the financial statements, communicate those matters by describing them in the auditor's report. Yes, that is the objective of essay 701, key audit matter. Okay. Which factors are to be taken into account by auditor while determining key audit matter, and how key audit matters are communicated in the audit report? So they are basically asking, how will you determine key audit matters? There are basically three filters. for determining key audit matters. Let's say this is all the information related to the entity. Now you will not communicate all this information as key audit matter. You will apply first filter. What is the first filter that you will apply? You will select all the matters communicated to those charged with governance. Okay, from all the matters you will select those matters that are communicated to those charged with governance. Now on these matters that are communicated to those charged with governance, you will apply second filter. What is the second filter that you will apply? You will identify the matters that require auditors significant attention. Okay, this red one is the items that require auditor significant attention. Now, for determining the matters that require auditors' significant attention, you will consider three factors. What are those three factors? Matters where the ROMM is very high and significant transaction taken place during the year. That also you might determine them as auditors, as matters that require auditors' significant attention. And finally, matters that require high management judgment. So by with the help of these three factors, you will identify the matters that require significant attention. Now after the second filter you will apply again third filter, which is from these red matters that in the professional judgment of the auditor which are significant for the current period audit. Okay, so matters which the auditor feels in his professional judgment that these are very significant for the current period audit, this matters he will communicate as this matters as what happened to this, as key audit matters. So this is how you will determine key audit matters by applying three filters. Same thing you will write here. So from all matters communicated to those charged with governance, first filter, you will apply second filter, matters that require auditors significant attention. For determining, for selecting the matters that require significant attention, you will apply three factors. First one, high assessed ROMM, next management judgment, and significant events or transaction. From this, by applying professional judgment which are most significant for the purpose of a current year, you will select them as key audit matter and you will communicate them as key audit matters. Got it? Yes sir, got it sir. Next question they are asking is how key audit matters are communicated in the audit report. See, how will you communicate key audit matters in the audit report? First of all, the main heading will be key audit matters. Under that, the introductory paragraph will be definition of key audit matter. What is meant by a key audit matter? You will define. Key audit matters are those matters that in the auditor's professional judgment were of more significance in the audit of current period financial statements. Like that, you will define the key audit matter. After that, you will say that I am not giving any separate opinion on these key audit matters. The opinion that I have given for entire financial statements, that is applicable even for this key audit matter also. You don't assume that I am giving a separate opinion on this. Like that you will say. After that, you will communicate each and every key audit matter in a separate subheading. This is how you will communicate the key audit matters in the audit report. Got it? Yes. So I guess this is basically not examination question. It was asked in RTP May 25. Next. Question number 2. Communicating key audit matters in the auditor's report is in the context of auditor having formed an opinion on the financial statements as a whole. Yes. Communicating key audit matter in the auditor's report is not considered as a substitute or alternative for a number of important items. What are those items? So, communicating key audit matter is not a substitute for a modified opinion. That means because of a particular misstatement, you have to give modified opinion. Now, management cannot say that auditor, because of this misstatement you don't give modified opinion, instead you communicate this misstatement in key audit matter. By communicating this misstatement in key audit matter, you avoid giving a modified opinion, like that management can't and like that auditor cannot do. That is known as giving key audit matter is not a substitute for modified opinion. Similarly, giving the key audit matter is not a substitute for a disclosure that should have been given in the financial statements. Similarly, giving a modified opinion is not a substitute for a matter that has to be communicated as per SA 517 material uncertainty related to going concern paragraph. Similarly, key audit matter is not substitute for any separate opinion that the auditor has to give on any of the matter. Okay, so CAM is not substitute for all of these four things. Next, SA 701 communicating key audit matter in auditor's report deals with auditor's responsibility to communicate key audit matters in the audit report. Yes. Explain definition of key audit matter and how auditor will determine key audit matters. Just now we have seen a definition of key audit matter we have seen, and how to select key audit matters by applying three filters. So same thing you will write, applying three filters and definition of key audit matter, which we have already discussed, right? Yes. Next, question number 4. CA student Ravi is learning the concept of key audit matters. However, he is confused between modification of audit report and reporting of key audit matter. You are required to guide him in explaining the following. Purpose of communicating key audit matter. What is the purpose of communicating key audit matter? It will enhance the communicative value of the audit report, correct or not? The communications in the audit report will get increased because of this key audit matter, right? That is one of the advantage. So enhances the communicative value of audit report. Similarly, it will also assist the user in understanding those matters that in the professional judgment of auditor were of most significance in the audit. So these are the advantages of key audit matter, or purpose of communicating key audit matter. And key audit matter is not substitute for these four things which we have already seen, A, B, C, D, right? Yes, that is SA 701. Next, questions from SA 705, which is nothing but modifications to the auditor's opinion. So question number 1. Singh and Associates, while carrying out statutory audit of Rubber Industries Limited, observed that debtors are not making payments invoice wise, as the debtors constitute 60% of total assets. So auditors requested management to provide external confirmations of all the debtors outstanding for an amount exceeding 1 lakh rupees. However, management resisted and no external confirmation were made available. Auditor's firm has decided to disclaim an opinion on the financial statements and seek your guidance on amendments that should be made in the basis for opinion section and elements required by SA 700 which need not be included in the auditor's report. Guide them suitably. So the question is simple. Auditor wanted to give disclaimer of opinion. If auditor wants to give disclaimer of opinion, what should be eliminated from basis for opinion paragraph and how basis for opinion paragraph should look? First of all, the heading for basis for opinion should change as basis for disclaimer of opinion. You need to write that. So basis for opinion should change as basis for disclaimer of opinion. After that, generally in the basis for opinion paragraph, four things will be there, right? Of that four, two things should be eliminated. What are those two things? First of all, you should not say that you have obtained sufficient appropriate audit evidence. That point needs to be eliminated. And you should also eliminate reference to the auditor's responsibility paragraph. These two things should be eliminated. See, further, when auditor disclaims opinion on financial statements, auditor's report shall not include following: reference to auditor's responsibility and audit evidence obtained is sufficient and appropriate. These two things should not be there. Basically, if you see in the basis for opinion paragraph, what are the four things that will be there? These four things will be there, correct, in the basis for opinion paragraph. If at all you are giving a disclaimer Disclaimer means not claiming any opinion. In such a situation, this one should not be there and also this one should not be there. Only these two should be there. Understood? Yes. Next, modified opinion. When question number 2, when auditor modifies the audit opinion, auditor shall use the heading qualified opinion, adverse opinion, disclaimer of opinion as appropriate for the opinion section. Briefly explain when auditor should express qualified, adverse and disclaimer of opinion. So when should auditor give qualified opinion? Basically for that you remember this chart. This chart will help you a lot. First of all, for deciding the type of modified opinion, you will make that a decision based on three things. First one, whether audit evidence is available to prove the misstatement, and is the misstatement material, and is the misstatement pervasive. Based on these three things, you will decide the type of audit opinion. So when will you give qualified opinion? Whether audit evidence available or not, but misstatements if any are material but not pervasive. In these two situations you will give qualified opinion. Next, audit evidence is available and misstatements or material also pervasive, then you will give adverse opinion. Next, audit evidence is not available, but if at all there are any misstatements, they will be both material as well as pervasive, you will give disclaimer of opinion. Same thing. Okay, same this chart you have to write in the form of paragraphs here. Got it? Yes. So if you remember this chart, it will be very useful. Almost 99% of the cases, questions that they ask from SS 705, you can answer those questions with the help of this chart. Mostly they will give a scenario and they will ask, in the given scenario, which opinion you will give, qualified, adverse, disclaimer. So for determining that, you can take help of this particular chart. Got it? Yes, sir. See, next all questions will be based on that chart only. Question number 3. Super Duper Limited is a company engaged in manufacture of office furniture. Messrs. Young, Old and Associates are statutory auditors of company for the financial year 21-22. During the year under audit, engagement partner CA Young noticed that company has not bifurcated its loans into long term and short term. So company not bifurcated loans into long term and short term. CA Young understands that such misstatement is not pervasive but material. Here if you see, you are having evidence about the misstatement and that misstatement is material but not pervasive. Which opinion you will give? Qualified opinion you will give. Same thing you will say. So qualified opinion. Next, question number 4. Messrs. Tajraj and Associates are the statutory auditors of Polex Limited, engaged in the manufacture of premium watches. For the financial year 21-22, during the course of audit, CA Taj, the engagement partner, found that stocks and debtors of the company constituting 80% of the total assets of the company are not realizable. Further, cashier of the company has committed fraud during the year under audit. Both the facts are not reflected in the financial statements. If that things are not reflected in the financial statements, then will you say financial statements are misstated? Yes, they are misstated. Accordingly, CA Taj is of the view that impact of both the situations on financial statement is material as well as pervasive. So here you are having evidence about misstatement and that misstatements are material and they are also pervasive. So you have to give adverse opinion. So adverse opinion. And since in the question they are also speaking about fraud, right? Cashier has committed fraud. So whenever fraud has come, you need to remember reporting requirements, two reporting requirements. One is clause 11 of CARO and 143 subsection 12 of Companies Act. Reference to these two reporting also you should make. So further, CA Taj should also consider reporting responsibility as per CARO 20 clause 11 and 143 subsection 12. Got it? Yes. So in the question, wherever you find fraud, you can mention this two reporting requirements. Next, question number 5. Delightful Limited is a company engaged in production of smiley balls. During financial year 21-22, company transferred its accounts to computerized system SAP from the manual system of accounts. Since employees of company were not well versed with SAP system, there were many errors in the accounting accounting during the transaction period. That means errors are pervasive. Yes. As such, statutory auditors of company were not able to extract correct data. That means no evidence available, and there are many misstatements from the system. Such data was not available manually also. Further, employees and management of the company were not supportive in providing requisite information to the audit team. Explain the kind of audit report you will give. Here, if you see audit evidence not available, misstatements are material and pervasive, you will give disclaimer of opinion. So, disclaimer of opinion, right? Yeah. Next. Question number 6. CA Sarasbhai Patel, while conducting audit of entity, feels that there is an atmosphere of non-cooperation all around. He has not been provided with necessary support for attending inventory count process of the entity as at year end. Besides, CFO is not providing him present address of customers as well as suppliers for sending external confirmation. So you are not getting evidence. Even mail IDs have not been provided on pretext of business confidentiality. He was not able to verify revenues of entity due to lack of complete details. For verifying expenses, he has been asking for bills on sample basis, but staff have not have making lame excuses. So there are auditor is not able to obtain evidences with respect to many areas, and there can be misstatements that are present in many areas. So evidence is not available. Misstatements, they can be present in many areas, that is pervasive, and of course they will also be material also. So the matter was brought to the knowledge of higher echelons of management, but of no avail. Auditor feels that there could be misstatements and their possible effects would be material, affecting many aspects of financial statements. So evidence not available, misstatements material, and pervasive effect, you will give disclaimer of opinion. Assuming it is not possible to withdraw from engagement, what type of opinion you will give? Of course, disclaimer. So disclaimer of opinion. Next, question number 7. During an audit, auditor becomes aware that management has imposed a limitation on scope of the audit after engagement was accepted. So after engagement has been accepted, if management puts limitation on scope, explain steps the auditor should take and possible implications on auditor's report if sufficient appropriate audit evidence cannot be obtained as per requirements of SA 705. You can use help of this particular chart. So management is imposing limitations on you, right? In such situation, you will first of all request the management, please remove the limitations, like that you will request. If they don't remove, you will bring it to the notice of those charged with governance, and you will request those charged with governance to remove the limitations. If those charged with governance also does not remove the limitations, then what you will do, you will see whether I can obtain audit evidence by performing alternate audit procedure. See, communicate TCWG whether alternate audit procedures can be performed to obtain audit evidence. If you are unable to obtain audit evidence through alternate audit procedures also, in such a situation you will check what could be the effect of misstatements on the financial statements. If the effect is material but not pervasive, you will give qualified opinion. If the effect of misstatements on a financial statement is both material as well as pervasive, then you will check whether you can withdraw from the engagement. Is withdrawal possible? If withdrawal is not possible, you will continue the engagement and you will give disclaimer of opinion. So with the help of this chart, you will write this entire answer. Same thing will be there in the answer also. Okay, same this chart only will be there. Okay, yes. Next, question number 8. SA 705 modifications to opinion in the independent auditor's report deals with circumstances in which auditor is required to modify the opinion on financial statements. Yes. Explain this statement and also state the objective of auditor as per SA 705. See, explaining the statement means what will you explain? You will say that yes, that statement is correct only. When there are misstatements in the financial statements or financials have not been prepared as per applicable financial reporting framework, then auditor will give modified opinion, like that you will mention. And objective of auditor, what is the objective of auditor? Auditor concludes, see, the objective of auditor is to express clearly an appropriately modified opinion on the financial statements when auditor concludes based on audit evidence that financial statements as a whole are not free from material misstatements, or auditor is unable to obtain sufficient appropriate audit evidence. In those two situations, arriving at proper modified opinion is the objective of auditor as per SA 705. This is basically a very unimportant and silly question. Okay. Next, question and answers of SA 706, emphasis of matter and other matter paragraph. Question number 1. NHG and Co Chartered Accountants is statutory auditor of Messrs Backlog Private Limited for financial year 23-24. BPL is engaged in providing telecom services and received a notice from telecom regulator to deposit fee for violating norms. BPL went into litigation and filed an appeal with the Telecom Appellate Authority, and the matter is pending for decision as at the end of the financial year. However, company has disclosed the same in the financial statements. So, company made this disclosure in the financial statements about this matter of pending fees. Audit team members have completed the audit procedures for the year 23-24 and are in the process of drafting audit report. Audit team leader knows that matter of norms violation and pending appeal need to be included in the audit report and seeks your guidance on how to report the matter in auditor's report. If the disclosure has already been made in the financial statements and auditor wants to communicate the same thing in the audit report, can he use emphasis of matter paragraph? Yes, he can emphasize on the matter or disclosure that is already disclosed in the financial statements. So in this situation, you can suggest the auditor to use emphasis of matter paragraph. And while emphasizing this matter in EOM paragraph, you should tell that the heading of the paragraph should be emphasis of matter. That should be the heading, and include in paragraph clear reference to the matter being emphasized. So in the emphasis of matter paragraph, you have to mention clear reference to the note number of the financial statements where this disclosure can be found by the users. So such clear reference should be made and indicate that auditor's opinion is not modified in respect of matter emphasized. So this is how you can communicate it in emphasis of matter paragraph. Next, question number 2. Pure Services Limited is into litigation relating to some legal action initiated by industry regulator. The matter has reached jurisdictional high court. Keeping in view uncertainty related to further outcome of the matter, statutory auditor of company has decided to include emphasis of matter paragraph in the auditor's report. So statutory auditor wanted to include this aspect in the emphasis of a matter paragraph. Now briefly discuss the consideration to be taken care by statutory auditor when UAM paragraph is included in the audit report. Same consideration which we have seen in the previous answer. So heading should be emphasis of matter, clear reference should be there, and information should have been properly presented in the financial statements and indicate that auditor's opinion is not modified with respect to that matter. After that, state any 2 examples of circumstances where auditor may consider it necessary to include emphasis of matter. There are n number of examples you can take. Let's say for example, entity has earlyly adopted the requirement of a accounting standard, nothing but early application of accounting standard, you can emphasize it. Or entity has a certain litigation going on, pending litigation, it has disclosed in the financials, auditor can emphasize it. Or a severe catastrophe has happened after 31st March, entity disclosed it in the financials, auditor can emphasize it in emphasis of matter paragraph. Like this, lot of examples you can take. Next, question number 3. Lomax Limited is a company engaged in business of manufacture of candles. CA Kamalnath is the statutory auditor of company for the financial year 21-22. During the year under audit, there was a fire in company's factory, as a result of which some of the company's plant and machinery was destroyed. Same was disclosed in the company's financial statements in notes to accounts, annexed to financial statements for the year 31st March 2022. Kamalnath decided to communicate this matter in auditor's report, as he is of the view that the matter is of such importance that it is fundamental to users' understanding of financial statements. Help CA Kamalnath to deal with the situation in the auditor's report. So you will include this in the emphasis of matter paragraph, right? Emphasis of matter paragraph. You will say that we draw attention to note number so and so of the financial statements which describe the effect of fire in the company's factory. Our opinion is not modified in respect of this particular matter. This is how you will emphasize, right? So all the three questions related to emphasis of matter only. Next, essay 710, comparative information, right? So question number 1. So this comparative information, it can be of two types. What are they? Corresponding figures, comparative financial statements, right? Yes. Oval Enterprises Limited is under legal obligation to represent its current year's financial statements along with previous year financial statements, nothing but comparative financial statements. So company has to present comparative financial statements. Whenever you are presenting comparative financial statements, you have to give opinion on both the financial statements, right? Yes. Now, Karan and Associate Chartered Accountant has been appointed as statutory auditor for the year. CA Karan noticed that last year's financial statements contain an adverse opinion for the financial statements as a whole due to misstatement in evaluation and disclosure of debtors. Guide CA Karan for his duty regarding the treatment and addressing the issue while drafting the audit report for current year. See, if last year audit report contains adverse opinion because there was a misstatement in the last year financial statements, and that misstatement continued in the current year also, that misstatement is not resolved, in such a situation auditor has to modify current year financial statements. Also, there are two options. You can modify current year financial statements by making reference to the comparative financial statements, or you can include in the other matter paragraph stating that because of the issue of comparability matter, I am modifying current year figures. Like that, you can say these two options are available. See, if the auditor's report on prior period included modified opinion and matter which gave rise to modification is unresolved, auditor shall modify the auditor's opinion on current period financial statements. In the basis for modification opinion paragraph in the auditor's report, auditor shall either, sorry, I told you as other matter paragraph, right? Sorry, in the basis for modification opinion paragraph, you will use any of these two wordings. What you will say? First option, refer to both current period figures and corresponding figures. Generally, if entity has presented corresponding figures, you will say corresponding figures. If the entity has presented comparative financial statements, you will say comparative financial statements. Here in the question they have given comparative financial statements, right? So here also you better write as comparative financial statements. And comparative financial statements when the effect of matter on the current period figures is material. So the effect of misstatement of previous year is material in the current period. In such a situation, you will say that you will refer both current year figures and also comparative financial statements. Otherwise, in other cases, explain that audit opinion has been modified because of the effect of unresolved matter of comparability. If the effect of a misstatement is not material in the current period, you will just say that because of comparability issue, I am modifying current period figures. Got it? Yes. And of course, this one is a common reporting for both comparative financial statements and corresponding figures. If the previous year financial statements are audited by some other auditor, in the other matter paragraph, you need to mention that previous year figures are audited by predecessor auditor and the type of opinion that has been expressed and the date of that report. This is the common reporting requirement. Next, question number 2. See, in essay 710, at the end we will see that reporting requirement, reporting exclusively applicable to corresponding figures, exclusively applicable to comparative financial statements, and reporting common to both. From that reporting only questions will come. If you see this question, it is from that reporting only. Next question also from reporting only. See, senior member of firm Sony and Associate Chartered Accountant informed to its auditing staff that at the time of audit reporting regarding corresponding figures, when corresponding figures are presented, auditor's opinion shall not refer to corresponding figures except in the specified circumstances. So, general rule with respect to corresponding figures is that if corresponding figures are presented, auditor's opinion should not provide any opinion on the corresponding figures. But there are two exceptions. What are those two exceptions? The first exception, if auditor's report on prior period included modified opinion and the matter which gave rise to modification is unresolved, then same as we have seen in the previous question, these 2 points you will mention. So because of comparability issue, you will say that I am modifying current year period figures, or if the misstatement is material for the current period, you will refer both current year figures and corresponding figures. And if auditor is of opinion and has sufficient evidence in this regard that material misstatement exists in the financial statements of prior period, but unmodified opinion was given earlier, in this scenario, auditor shall express qualified or adverse opinion. This is also from reporting only. So if prior period financials were not audited, auditor shall state in other matter paragraph that the comparative information is unaudited. So all this is explained in the reporting aspects, right? So with respect to corresponding figures, whatever the reporting requirement is applicable, you will write. Understanding? Yes. So this is question and answer discussion of a complete 700 series. I'll open next chapter, CARO. Yes, now we'll discuss question and answers of CARO 2020. Starting with question number 1. SKN Limited, a biopharma company and global manufacturers of select critical care medical products, has been sanctioned working capital limits of 5.99 crore. Whenever you see the term working capital limit or inventory, you should remember clause number 2, because clause number 2 speaks about that inventory and working capital loan, right? Yes, from a nationalized bank on the basis of security of current assets. During the year under audit, statutory auditor of SKN Limited considers that inventory is material to the financial statements and performs audit procedures over the company's final inventory records to determine whether they accurately reflect actual inventory count and without any major discrepancies for each class of inventory. What are the reporting requirements regarding physical inventory verification, physical verification of inventory under CARO 2020 in this case? Basically, clause number 2, it deals about physical verification of inventory. Clause 2, subclause A is about physical verification of inventory, and subclause B is about that working capital loan. So here you need to mention clause 2, subclause A. So if you see, if you mention both also, there is nothing wrong, but question is asking about clause 2, subclause A. So what clause 2, subclause A says? Auditor has to verify whether management is conducting a physical inventory verification at a reasonable intervals of time or not. And during such verification, if there is any discrepancy of 10% or more, whether it has been properly accounted for in the books of accounts or not. So this is the reporting requirement as per clause 2, subclause A. Correct? In this you have to remember one point, which is this one, class wise. So discrepancy of 10% or more, you have to check class wise. Sir, what is this class wise? I'll explain you. So what are the different classes of inventories that will be available? Raw material, work in progress, finished goods. These are different classes of inventories that will be available. Correct? Now in the books of accounts, these are the values of those inventory, and physically these amounts of inventory are present. Now when you physically verify the inventory, how will you verify? In the books of accounts how much it is there, and physically how much it is there, like that only you will verify. Correct? So discrepancy between books of accounts and physical inventory is 10% or more, you have to report it class wise, right? That means you have to calculate that 10% on value that is present in books of accounts. So if you see for raw material in books of accounts, 10 crore is the value. 10% of 10 crore is 1 crore, and physical verification it is 8 crore. How much is the difference? 10 crore minus 8 crore, 2 crore. Is it more than 1 crore? Yes, it is more than 1 crore. So auditor will report this in CARO. Similarly, work in progress, books of accounts it is 7 crore. 10% of 7 crore, 70 lakhs, and physical verification it is 6.9 crore. How much is the difference? Just 10 lakh. Is this 10 lakhs more than 70 lakhs? No. So this will not be reported. Similarly, finished goods, books of accounts 12 crore. 10% how much it will be? 1.2 crore. And physical verification it is 12.5 lakh. How much is the difference? 50 lakhs. Is 50 lakhs more than 1.2 crore? No. So you will not report this. Like this, class wise you have to check the difference, but not total inventory. Okay, you should not say total inventory is 29 crore. 10% of 29 crore is 2.9 crore, and physical verification it is 27.4 crore. So difference is 1.6 crore. Since 1.6 crore is less than 2.9 crore, I will not report anything in the CARO. No, like that you should not see. You have to check class wise difference. Understanding? Yes, sir. So that is one major point you need to remember under clause 2. And subclause B of clause 2, it says if company has taken any working capital loan of 5 crore or more, then auditor has to verify whether the stock statements, debtor statements that have been submitted by the company to the bankers, are they matching with the books of accounts or not. These are the two reporting requirements as per clause 2. Correct? Yes. Same thing you will write. See, CARO, whenever any question comes from CARO, the major task is to identify from which clause this question belongs to. Once you remember the clause number, now once you identify the clause number, now you can easily write the provision. Mostly at the inter level, they will not test that much deeply CARO. Mostly it will be writing the provision of CARO, provision of that particular clause. That will be the question. Understanding? So at CA Inter level, your task is to identify to which clause that question belongs to, and remember that clause and write that clause. Clear? Yes. Next. Question number 2. Mrs. PQ Limited has a turnover of 807 crore during the financial year 23-24. It has outstanding dues towards GST of 10 lakhs. GST, is it a statutory due? Yes, it is a statutory due. Whenever they are speaking about statutory due, you have to remember clause number 7. Disputed statutory due, undisputed statutory due. Okay, yes. So it seems they are having outstanding GST of 10 lakh rupees since June 2023. When inquired by auditor, company's management informed him that they have filed a objection letter for the said demand with the GST authorities. However, no response is received from GST department. State the reporting responsibility of the auditor under paragraph 3 clause 7 of company auditor report order 2020. Now, here, apart from identifying the clause, they have also kept a small twist. They have added objection letter. We will understand about that objection letter. Before that, clause 7, right? You need to see whether this question is about disputed statutory due or undisputed statutory due, right? In clause 7, subclause A deals with undisputed statutory due. With respect to undisputed statutory due, outstanding undisputed statutory due as on balance sheet date, which are outstanding for more than 6 months, should be reported by the auditor. That is a reporting requirement as per clause A. And as per subclause B, clause 7 subclause B, with respect to disputed statutory due, if at all any dispute is going on between company and the respective department, you will call it as disputed statutory due. Now, with respect to disputed statutory due, you will not pay that statutory due until and unless dispute is resolved. Correct? Now, you have to report in clause 7 subclause B what is the amount involved in the dispute and with which forum, that means with which authority that dispute is pending. These two things has to be reported with respect to subclause B of clause 7. Now, you need to identify the question is falling under clause 7 subclause A or clause 7 subclause B. That means, is there any dispute or no dispute? Now they are saying objection letter has been filed by the company. Now, filing an objection letter, does that mean a dispute? The answer is no. See, there is no concept of objection letter in the GST. If at all you have to dispute the GST amount, you have to file the appeal. Okay, so if appeal has been filed, in such a situation you can say that yes, there is a dispute going on, but objection letter doesn't amount to dispute. Okay, okay, you have filed an objection letter and the department has not given any response for that. At least if department has given response stating that your objection is wrong, you have to pay this much amount only, then company filed the appeal, then you can say that yes, there is a dispute going on. So in this situation there is no dispute. You have to remember, just filing objection letter is not a dispute. Clear? When it can be called as a dispute, when you have filed an appeal, you can call it as dispute, because under GST there is no concept of this objection letter at all. If you see entire GST Act, there is no such concept of objection letter. Okay, if you have to dispute an amount, you have to file an appeal. Getting it? Yes. So this question comes under clause 7 subclause A, undisputed statutory due. Okay, undisputed statutory due, you have identified the clause. Now you have to check whether this is outstanding for more than 6 months, because only if it is outstanding for more than 6 months as on balance sheet date, you will report it, otherwise you will not report. They are saying it is outstanding from the month of June 2023. That means as on 31st March 2024, that amount is outstanding for more than 6 months only. So you have to report this. Clear? Yes. Same you have to write. Subclause A you need to mention, and subclause B, if at all there is any dispute, the forum with which the dispute is pending and the amount involved has to be reported. And in the present situation, objection letter does not constitute any dispute. This is a major conclusion you have to give. Understanding? If you see, this question has been asked in the examination. September 24 exam. Next, question number 3. This is also an examination question. Question number 3. You have been appointed as a statutory auditor of a limited company. The company is registered as Nidhi company. Whenever Nidhi company means clause number 12, right? So what are the reporting requirements of a Nidhi company under the company's auditors report order 2020? There are 3 reporting requirements under clause 12. What are they? Auditor has to check whether Nidhi company is maintaining net own funds to deposit ratio of 1:20. That means for every 1 rupee of own fund that the Nidhi company is having, it can accept maximum of 20 rupees deposit. Whether that ratio is being maintained by the Nidhi company or not. That is the first thing that the auditor needs to check and report. Second one, auditor needs to check whether Nidhi company is maintaining 10% of total term deposits as unencumbered. Unencumbered means freely available. That means Nidhi company, of the total deposits that it accepts, it cannot give complete amount as loan to others. If it give complete amount as loan to others, whenever any deposit holder comes to Nidhi company asking for a refund of deposit, it will not be having money to give back. So to ensure liquidity in the Nidhi company, of the total deposits that the Nidhi company accepts, 10% should be kept unencumbered. That means 10% should be kept free for use, and only balance 90% can be given as loans. Understanding? So whether that a 10% unencumbered term deposits has been maintained or not, that needs to be checked. And finally, auditor should also check whether Nidhi company is promptly paying the interest, promptly repaying the deposits on maturity or not. So whether there has been any default in payment of interest on deposits or repayment thereof for any period. If so, auditor will report along with the details. Got it? Simple. Question is simple. Just that you need to identify clause number correctly, and once you identify the clause number, the 3 sub clauses you need to write down. Clear? Yes, sir. Next, question number 4. CARO 2020 shall apply to every company, including foreign company. However, it specifically exempts certain class of companies. State which class of companies are specifically exempt from applicability of CARO. So they are asking about applicability of CARO. You have to write applicability of CARO. For all the companies, including foreign company, CARO is applicable except certain companies. What are those companies? Section 8 company, banking company, insurance company, one-person company, and a private limited company which is not a subsidiary or a holding of a public company having turnover of less than 10 crore rupees and borrowings of less than 1 crore rupees and equity share capital along with reserves surplus less than 1 crore rupees. If these conditions are satisfied, see, all these 3 should be satisfied. If these conditions are satisfied, then private limited company can also claim exemption from applicability of CARO. For remembering these companies, you can use this mnemonic. One person has purchased a insurance policy from a banking company. Banks also are selling insurance policies these days. So one person has purchased insurance policy from a banking company for his 8 children. Okay, so one person means one person company, insurance policy means insurance company, banking company, and 8 children means section 8 company. And finally, that private limited company one you can write. Got it? Yes, sir. Next, and one more important thing is CARO is not applicable for CFS, audit of consolidated financial statements, except clause 21. Okay, only clause 21 of CARO is applicable to audit of consolidated financial statements, right? Yes. Next, question number 5. During the audit of limited company, as a statutory auditor, you discovered that fraud amounting to 5 lakh has been committed by the company. What are the reporting requirements regarding fraud under company's auditors report order 2020? See, in this question, they have specifically asked about reporting requirement, fraud reporting requirement as per CARO. But in some questions, what they might do is they will not mention this term from the company's auditors report order. This they will not mention. They will just ask you to write reporting requirements for fraud. They will give the scenario and they will ask a reporting requirement for fraud. In such a situation, there is high possibility that you will confuse, because since we are reading question and answers from CARO chapter, you know that yes, this question belongs to CARO chapter. But in the exam, they will ask questions from all the chapters. From all the chapters, you need to identify in which areas reporting requirement with respect to fraud is there. Correct or not? Yes. So you need to remember that fraud reporting is there in 2 areas. First is CARO 2020 clause number 11 and Companies Act 143 subsection 12. In these 2 areas, fraud reporting requirement is there. What is the difference between these two? As per clause 11 of CARO, fraud by the company or on the company by any officers, employees, any third party, all of that will be covered under clause 11. But under Companies Act 143 subsection 12, only fraud on the company by officers or employees will be covered. That is a major difference. And how it has to be reported as per Companies Act, you can just take a screenshot of this particular chart. Okay, you can take a screenshot of this particular chart so that it will be helpful to you, the reporting requirement with respect to fraud. Okay, yes. Now here the question is about clause 11 CARO 2020, right? So basically, auditor, he needs to report whether any fraud on the company or by the company has been noticed by the auditor during the audit. If yes, he will report it. And whether, because as per Companies Act also there is a reporting requirement now, as per 143 subsection 12, that reporting requirement is basically, if auditor has found any fraud on the company by employees or officers exceeding 1 crore rupees, he has to report that fraud to central government also, as per 143 subsection 12. Now, how will you report the fraud to central government? There is a particular form ADT4. In that form ADT4, you will report the fraud to central government. All this is as per 143 subsection 12. Now, there is a link between 143.12 and CARO clause 11. What is that link? CARO clause 11 asks the auditor to report whether he has reported any fraud to central government under section 143 subsection 12 by filing form ADT4. If he has reported to central government, you just mention that here also in clause 11. See, whether any report under 143.12 in by auditor in form ADT4 as prescribed in rule 13 of company report order has been reported to central government. If yes, auditor will mention it here also. And next, auditor should also report whether he has considered the complaints received under whistleblower mechanism. What is meant by a whistleblower mechanism? Whistleblower mechanism means nothing but in the company to identify frauds. Basically, if let's say for example employee 1 is committing the fraud in the company, the chance that about this fraud, knowledge about this fraud that employee 1 is committing, the chance that it is known to his colleague is very high, right? Because those people, they will be working together every day, so the chance that this employee is doing the fraud is being known to another employee is very high, correct? So this whistleblower mechanism in the company will give opportunity for the employees of the company or any people within the company to report about other people to the top management. Understanding? So by using that mechanism, the employees of the organization can report the frauds or any other issues in the company with the top management. That mechanism is known as whistleblower mechanism. Now, company during the year, it would have received a lot of complaints under that whistleblower mechanism, correct or not? Yes. So statutory auditor, he needs to consider the complaints received under that whistleblower mechanism. Getting it? Yes. Whether he has considered or not, he needs to report. Got it? Yes, sir. Next, question number 6. Discuss the reporting requirements of CARO 2020 regarding statutory dues. Statutory dues, just now we have seen clause number 7. Next, transaction with related party. Transaction with related party means clause number 13, right? So under clause number 13, it is simple. You will just report whether company has complied with requirements of section 177 and 188 of a Companies Act with respect to related party transactions or not. That's what you will report. What is there in 177, 188? That is very huge section which you will learn at the final level in ASPOM CETIA. You will learn. Got it? Yes. Basically, there will be certain restrictions, certain conditions will be there in 177 and 188 with respect to transaction with related parties. You need to comply with those conditions and restrictions. Got it? Yes, sir. Next. Question number 7. Section 143 subsection 1 of Companies Act 2013 states that every auditor of a company shall have access to books of accounts and vouchers of company and shall be entitled to require from officers of company such information or explanation as considered necessary and shall inquire into such matters, state those matters to be inquired. See, they are basically asking 6 matters that should be inquired by the auditor under section 143 subsection 1. Here that 6 matters you can easily remember, but the point is you should know the difference between 143 subsection 1, 143 subsection 3. Under 143 subsection 3 also there are certain 10 matters, correct? Now in 143 subsection 1, whatever the matters are there, after verifying those matters, only if auditor has any negative remarks about those matters, any qualified remarks auditor is having, only then he will report it. If he is having, if he is completely satisfied, everything is positive only, he will not report those matters. But 143 subsection 3 is not like that. Whether you are satisfied with those points or not satisfied, in both the situations you have to report 143 subsection 3 points. That is the major difference between 140 subsection 1 and 143 subsection 3. Now what points are there in 140 subsection 1? 6 points. First, whether loans and advances given by the company are properly secured, and whether the terms and conditions are prejudicial to the interest of the company, that you need to check and report. And second point, whether transactions of the company which are represented by merely book entries are prejudicial to the interest of company. See, prejudicial means nothing but terms and conditions are such that they are causing loss, harm to the company, is known as prejudicial. Next, if company is not an investment company, okay, and whether it has sold any of its securities, like it would have made investments now. If a company is not an investment company, then also it can make investments in shares, securities, debentures, bonds, right? So a company not being an investment company, whether any of its investments like shares, debentures, bonds, has it sold them at a price less than its cost of acquisition. If it has sold its investments at a price less than its cost of acquisition, auditor needs to report it. Understood? Now if you remember these 3 points, first loans and advances, transactions, shares, debentures, these things, remaining points are also related to same points only. See, point A is about loans and advances now. Point D, point D is also about loans and advances only. Whether loans and advances given by the company has been shown as deposits, you need to report. Next, point B is about transactions na. Point E is also about certain transactions, which is nothing but personal transaction. Whether personal expenses have been charged to revenue account. Next, point C is about shares, debentures, these things na. Point F is also about shares. Company, if at all it has issued any shares during the year for cash, auditor needs to check whether cash has actually been received. If cash has not actually been received, whether that position has been properly accounted for in the books of accounts. That means stating that cash is not yet received, it has to be received yet, like that, whether it has been properly accounted for in the books of accounts or not, auditor needs to report. These are the 6 points under 143 subsection 1. Next, question number 8. Mr. Z, at time of appointment as independent auditor in EF Limited, a listed company, came to know that Companies Act 2013 has placed greater emphasis on effective implementation and reporting on internal controls for listed company. He wants to know that responsibilities as casted under Companies Act 2013 with regard to internal financial control. Basically, auditor in case of certain companies, he needs to give opinion on internal financial controls over financial reporting. We will be calling it as IFCFR, correct? Now, not only on auditor, Companies Act has put certain responsibilities on various people about this internal financial controls or financial reporting. So they are asking what responsibilities has been put on directors, what responsibilities has been put on independent directors, and what responsibility has been put on audit committee. All this they are asking. First of all, speaking about directors. Directors, at the end of the year, they will prepare DRS, Director Responsibility Statement, correct or not? Now, in that Director's Responsibility Statement, directors has to mention whether they have fulfilled their responsibility with respect to implementation of internal financial controls over financial reporting. See, shall state whether directors has laid down internal financial controls to be followed by the company. So this is a responsibility put on directors. Next, coming to the responsibility that has been put on independent directors. Now, for independent directors, there is a code of conduct. there is the schedule 4 to the Companies Act. In the schedule 4 to the Companies Act, there are certain points that has been specified which should be followed by the independent directors. Now under that schedule 4, see, company and independent directors shall abide by provisions of schedule 4, which lays down code for independent directors. Now in that code for independent directors, see, as per this code, role and function of independent directors include that they shall satisfy themselves on the integrity of financial information and that financial control and system of risk management are robust. So one of their responsibility as independent directors is to get themselves satisfied whether company has implemented proper robust internal financial control or financial reporting or not. So there is a responsibility on independent directors also with respect to satisfying that internal financial controls are proper, where this responsibility has been put in schedule 4 code of conduct to independent directors. Got it? Yes sir. Next, on the auditors also there is a certain responsibility. Basically auditors, they have to provide opinion on internal financial control over financial reporting, but however that opinion is not applicable for all the companies. If the company is, if the private company is one person company, then for that auditor need not provide opinion on internal financial control or financial reporting. Similarly, if the private company's turnover is less than 50 crore and its borrowings is less than 25 crore, for that company also auditor need not provide opinion on internal financial controls. Except for these two companies, for remaining all companies, there is a responsibility on auditor to provide opinion or to give this internal financial control or financial reporting. That report has to be given by the auditor. Got it? Yes. Next, on audit committee, they are also asking audit committee. Now, audit committee also, this is simple. They should ensure, see, every audit committee shall act in accordance with the terms of reference specified in writing by board, which shall inter alia include evaluation of internal financial control and risk management system. Just like independent directors gets themselves satisfied, audit committee also should evaluate internal financial control or financial reporting, and if any amendments or any updates to the internal financial control is required, audit committee will suggest to the directors. So even audit committee is also having responsibility with respect to this internal financial controls. Next, clause number 9. This is examination question. Company has raised funds by issuing fully convertible debentures. These funds were raised for expansion and diversification of business. However, company utilized these funds for repayment of long-term loans and advances. This is nothing but a diversification of funds raised through private placement or preferential allotment. Correct? Which clause? Clause number 10. So, while raising funds through private placement or preferential allotment, you will mention to those people that we will be using these funds for certain specific purpose. You have to use that funds only for that purpose. If you use that funds for some other purpose, it will be treated as a diversion of funds, and auditor needs to report that a diversion of funds in clause number 10. Same thing. See, you need to mention this. Basically clause 10 subclause B. Clause 10 subclause A is also same, but funds raised through IPO FPO is dealt by clause 10 subclause A. Funds raised through private placement preferential allotment is dealt by clause 10 subclause B. Both points are same, but just that funds raised through different manner. Got it? See, auditor is required to report under clause 10 subclause B of paragraph 3 of CARO 2020 whether company has made any preferential allotment or private placement. See, this is nothing but the entire copy paste of complete clause. Okay, of shares or convertible debentures during the year, and if so, whether requirement of section 42 and 62 of Companies Act 2013 have been complied with, and funds raised have been used for the purpose for which funds were raised. If they are used for some other purpose, if not, provide the details in respect of amount involved and nature of non-compliance. Got it? Yes, sir. Basically, this section 42, it deals with preferential allotment. Section 62 deals with private placement. There are certain conditions with respect to preferential allotment, private placement in 42 and 62, which you will, I guess you would have learned in the Companies Act in the law. Correct? Yes. In the view of our, yes, there is a, in the given situation there is a diversion of fund, right? You told that you will use it for certain expansion purpose, but you have used for repayment of long term loans, so there is a diversion and you will report it. Next, question number 10. CA Ravi Patnaik is conducting audit of a company for which reporting requirements under CARO 2020 are applicable. He finds that cash credit facilities amounting to 4 crore were released to the company by branch of bank for meeting its working capital requirements. He finds that out of above 1 crore have been used by company for installing effluent treatment plan. This is also diversion of funds. See, clause 9, clause 10. Clause 10 is complete diversion of funds raised from IPO, FPO, and this private placement preferential allotment. Clause 9 is also having one subclause which deals with diversion of funds raised through bank loan. That means if you have taken bank loan stating that you will use it for short term purposes, that is working capital loan you have taken. If you take working capital loan, you have to use it for short term purposes. But if you use that money for long term purposes, auditor has to report it. Here in the question, what happened? Company has taken working capital loan, that means short term purpose, but it has used that money for establishing a effluent treatment plant, right? Installing effluent treatment plant. See, this effluent treatment plant is a long term purpose because this is a particular machinery that is established to control environment pollution that is causing from the company or from the factory. Now this asset, it will be used for long term purposes. For 10-15 years you will use this asset or more than that. So this is a long term purpose. Now funds raised from short term purpose you cannot use for long term purpose. There is a diversion of funds. So there is clause 9 subclause D which deals with this aspect. See, clause 9 subclause D of CARO 2020, whether funds raised on short term basis have been utilized for long term purposes. If yes, nature amount has to be indicated. You need to indicate that 4 crore is the amount that has been involved and they have used it for so and so purpose. Like that you have to report. See, entire CARO questions are nothing but you should identify the clause number and what that clause is saying. If you remember those things, complete CARO is like a cakewalk. Okay. Next, question number 11. CA student Manoj is studying on the exemptions available to private limited company in respect of certain reporting requirements. You are required to guide Manoj on the following: applicability of reporting requirements on adequacy of internal financial control or financial reporting. See, just now we have seen for which companies internal financial control or financial reporting is exempted. For all companies it is applicable except a private company which is a 1% company and a private company which is having turnover of less than 50 crores and borrowings of less than 25 crore. In this situation, that is not applicable. Next, applicability of CARO. CARO, just now we have seen one person has purchased insurance policy from a banking company for his 8 children, and a private company which is having a turnover of less than 10 crore, which is having borrowing of less than 1 crore, which is having share capital and reserve surplus of less than 1 crore. If all these are satisfied, private limited company also can take exemption from CARO, right? All those points you need to write down. Next, question number 12. Docs Limited, a service provider company engaged in providing. See, here they are saying Docs Limited, that means it is a public company, not a private company. Service provider company engaged in providing courier services. So this is not a banking company, not an insurance company. Pan India as well as internationally. Has appointed internal auditor Mr. G in accordance with the requirements of a Companies Act 2013 during the financial year 23-24. The company's annual turnover during the 22-23 and 23-24 has been 300 crore. Okay. In each of the above year, business of company has been profitable. Mr. G heads the internal audit department of the company, assessing governance activities, assisting in improving risk management activities and reviewing controls. Discuss reporting responsibility of statutory auditor of the company under Companies Act 2013, specifically in relation to internal audit. So internal audit is dealt by clause number 14, right? So as per clause 14 only, na? Yeah, clause 14 only. As per clause 14, statutory auditor has to check whether the internal audit department that the company is having, is it sufficient with respect to the size and nature of business of the company. So internal audit department, is it incommensurate with the size of the company or not? That you need to report. That is the first point. Next point, statutory auditor, by the time he comes, there will be already internal audit done and there will be 4 internal audit reports. So statutory auditor has to read those internal audit reports and he has to consider those internal audit reports. So you have to report in subclause B of clause 14 whether you have considered the internal auditors reports or not. Got it? Yes. Next question number 13. Money Limited is a listed company engaged in business of manufacturing during the financial year 24-25. Company has given loans to its subsidiary and provided corporate guarantee on behalf of a related party. State the reporting responsibility of auditor under clause 3. Direct question. Under clause 3 there are 6 subclauses. All that 6 subclauses you have to write down. Right. So this is CARO 2020 question and answers. See, I'm not explaining this clause 3 because it is as it is a copy paste. All the clauses, all the points of clause 3 they have been copy pasted, and the question is also direct question. Directly they are asking you to explain clause 3. Okay. Yes. So by this, question and answers of CARO are also completed. Now I'll open next chapter. Yes, guys. Now we'll discuss question and answers of chapter number 7, which is audit evidence. Here basically in this chapter we'll be covering mostly all the 500 series standards. We'll be discussing Q&A of SA 500, 501, 505, 510, 520, 530. Along with this, we'll also be seeing question answers of SA 230. So question and answers of all these standards we'll be discussing in this particular chapter. And coming to the weightage, you will be getting around 10 to 15 marks from this particular chapter. Clear? Yes. Now we'll start question and answer discussion one by one. Question number 1. Auditor of JPJ Limited explained to the audit team members about the relationship between audit evidence and opinion of the auditor. Explain what relationship exists between audit evidence and opinion of auditor. Tell me, is there any relationship between audit evidence that the auditor obtains and the opinion that the auditor gives? Yes, there is a relationship. What relationship? Basically, the opinion that the auditor gives in the audit report, that is based on the audit evidence that you obtain. Correct or not? While determining the type of modified opinion of the 3 things, one of the thing that we will see is the availability of audit evidence also. Correct or not? So based on audit evidence only, you will give your audit opinion. That is the relationship between audit evidence and the audit opinion. That's what you need to write as your answer. See what they said. With the help of that audit evidence obtained only, auditor will form an opinion on the financial statements. That is the relationship between audit evidence and the audit opinion, right? Yes. Next, question number 2. There was a partnership firm of chartered accountants, VM and Associates. Mr. M, one of the partners of VM and Associates, while explaining to his audit team members about importance of audit evidence, informed them about sufficiency and appropriateness of audit evidence. These are the 2 characteristics of the audit evidence, right? Yes. Now Mr. A, one of the members of audit team of VM and Associates, was of the view that sufficiency of audit evidence means simplicity of audit evidence. Is that correct? No. Sufficiency refers to quantity of audit evidence, not the simplicity of audit evidence. So his view is wrong. You have to say that sufficiency refers to quantity of audit evidence. And next, appropriateness of audit evidence means ease of obtaining audit evidence. Is appropriateness of audit evidence refers to ease of obtaining audit evidence? No. What is meant by appropriateness of audit evidence? It is qualitative aspect of the evidence, correct or not, which will be further impacted by two things: relevance, reliability, correct? So appropriateness doesn't mean ease of obtaining audit evidence. Appropriateness refers to quality of audit evidence. Explain whether sufficiency and appropriateness of audit evidence means simplicity and ease of obtaining audit evidence. The answer is no. The meanings given are not correct. You have to further say that sufficiency refers to the quantity of audit evidence and appropriateness refers to the quality of audit evidence. That's what you have to say. Next, moving to question number 3. While auditing the books of accounts of AB Limited for the financial year 22-23, auditor of the company used an audit procedure according to which complete documents and records of the company were checked in detail in order to obtain audit evidence. Explain the audit procedure used by the auditor of Extremely Distinct Limited. So what audit procedure did he perform? It seems he has detailedly verified the documents of the company. You will call it as inspection, correct? Yes. So you have to say yes, the auditor has performed inspection. Inspection can be performed with respect to two things. First one is verification of books of accounts and documents, and also verification of fixed assets. These two things you will call it as inspection only, right? Yes. Next, question number 4. On perusal of financial statements of a company, auditor of the company finds that notes to accounts contain aging of trade payables in accordance with requirement of Schedule 3 of the Companies Act 2013. Okay. Aging of trade payable schedule means like from 0 to 30 days, how many trade payables are outstanding. From 31 to 60 days, how many trade payables are outstanding. From 61 to 90 days, how many trade payables are outstanding. Like this, days wise outstanding trade payables, you will prepare a statement. You will call it as aging of trade payables. Now, accountant of company is responsible for ensuring proper aging of trade payables included in the notes to accounts. Auditor wants to verify whether the aging of trade payables made in financial statements is proper or not. Identify what he is trying to do. So, what procedure auditor is trying to perform? If you observe, aging of trade payable already performed by the management, right? Yes. Now auditor wants to again reperform that aging of trade payable. You will call this audit procedure as reperformance. See, most of the students, they will confuse with respect to two audit procedures. One is reperformance, another one is recalculation. What is the difference between reperformance and recalculation? So a procedure which has already been performed by the management, auditor again performing that procedure, you will call it as reperformance. Mostly no calculation will be involved here. In case of reperformance, calculation, formulas, these things will not be involved. Whereas recalculation involves management has already performed a calculation. That calculation, auditor again testing it. You will call it as recalculation. Examples: management would have already calculated a depreciation. Auditor, he will again calculate the depreciation. You will call it as recalculation. Getting it? Whereas example for reperformance, you can take that aging of trade payables, which we have seen in the question, as example for reperformance. Even BRS, management would have prepared bank reconciliation statement. Auditor, he will again verify that BRS. You will call it as reperformance procedure. Understanding? Yes, sir. So don't confuse with respect to reperformance and recalculation. So in the question, it is performance. Next, question number 5. CA Surya Gayatri is conducting audit of an entity. During the course of audit, she has made oral inquiries from head accountant regarding preparing of bank reconciliation every month as has been laid down by the management. Discuss whether inquiries as stated above would provide satisfaction to her that controls in respect of preparing bank reconciliation statement have operated effectively. Tell me whether inquiry alone can provide you sufficient appropriate audit evidence. Answer is no. You should always use inquiry along with audit procedures. Inquiry alone doesn't or cannot provide you sufficient evidence. Inquiry means what? Inquiry means nothing but asking questions to the other people. Based on that questions, you will get the answers, right? You will get the information out of inquiry. Now, whether that information is correct or not, you have to corroborate it by performing other audit procedures. Who knows, that other person might be saying wrong information also, correct or not? So you cannot completely rely on inquiries. Whatever the information you have obtained through inquiry, that needs to be corroborated through other audit evidences obtained through performing of other audit procedures. Getting it? Yes. So here you need to write the same. Inquiry alone ordinarily does not provide sufficient appropriate audit evidence of the absence of material misstatement at the assertion level. Mere inquiry does not lead to obtaining sufficient appropriate audit evidence. Same point. So in this given situation, what CS Surya Gayatri should do? Along with inquiry, she should also observe the controls. She should herself test the controls. In such manner, she can corroborate the information obtained through inquiry. That's what you need to suggest. See, in the instant case, CS Surya Gayatri should verify whether proper bank reconciliation have been carried out monthly as stipulated by the management. So she herself should verify whether bank reconciliations are being prepared on a monthly basis, on a periodical basis or not. Understanding? Apart from inquiry, you yourself should also verify it. Next, question number 6. A company has stipulated a control that reconciliation of its records showing quantitative details of its property, plant and equipment are carried out at regular intervals with physical verification of such items. Auditor has found that such reconciliations are being carried out as stipulated. Discuss whether above factor increases reliability of other internally generated evidence within the company relating to existence of such items. So they are performing reconciliations on a regular periods. That means internal controls are operating effectively. If internal controls are operating effectively, in such a situation, the chance of misstatement around that area will be less, correct or not? Since controls are also operating effectively, whatever the evidence that you obtain with respect to those items, the probability of those evidences being correct or the reliability, instead of saying as correct, you can say reliability of those evidences will increase because controls around those areas are operating effectively. Because of that, the reliability of evidence increases. So can you say in the present situation reliability of evidence increases? Yes, it increases. So you need to write the same. Reliability of audit evidence that is generated internally is increased when related controls, including those over its preparation and maintenance imposed by entity, or operating effectively. Next, question number 7. Maintaining accounts using accounting software having a feature of recording audit trail can be useful for an auditor. Discuss some of the advantages of such a feature in accounting software for auditors. So what is meant by audit trail? Audit trail is a feature of accounting software that maintains a track that keeps a log of who has passed the entries, at what time they have passed, which entries have been passed, when the entries have been altered. All these things will be logged by this audit trial feature. Correct or not? Yes. So now, can you say this audit trial feature as a internal control? Yes, audit trial is a internal control. It helps in preventing, detecting, correcting misstatements. Anything that helps in preventing, correcting, detecting misstatements, you will call it as internal control. Since audit trial is helping to achieve that, you can call audit trial as a internal control. Now, if audit trial is operating effectively, will it enhance the internal control system in the organization? Yes, it enhances. So one of the first advantages that only it helps to enhance means nothing but improve internal controls and data security in the organization. Correct? Yes. Next, I told you that audit trial, it will keep record of who passed the entry, who altered the entry. If it keeps the record of such people who have passed, who has altered each and every entry, can you be able to fix responsibility on that person who has passed the entry? Yes. If in future you came to know that that entry has been passed wrongly, or a fraudulent entry, fake entry they have passed, you can check the audit trial feature who have passed it, and you can fix responsibility. You can easily identify them. So audit trial helps in fixing the responsibility also. Next, it also helps you to rebuild the events, and audit trial analysis can help to identify reason for the problem. So if any error has occurred, any fraud has occurred, by going through the audit trial, you will be able to know how it has occurred, why it has occurred, who has passed that. All these things you will be able to know. And it can also help in ensuring operation of system as intended. These are some of the general advantages of audit trial. Next, question number 8. Expert Industries Limited is engaged in petrochemical business. Due to nature of its business, company has hired PQR Associates, a reputed firm of chartered accountants. So these are hired by the company to determine quantity and valuation of inventories for preparation of financial statements. Since these are experts appointed by management, can we call them as management experts? Yes. Auditor of Expert Industries Limited want to use same as audit evidence. So whatever the information that the management's expert have prepared, auditor also wanted to use the same information as audit evidence. In such a situation, before using the work of PQR associates, that is management's expert, what aspects should be taken care by the auditor? First of all, with respect to experts, there will be two types of experts. One is management expert, nothing but appointed by the management. Another one is auditors expert. So management expert is dealt by SA 500 only, whereas auditors expert is dealt by SA 620, which you don't have in your syllabus. So you will be just seeing this part. Now, can statutory auditor of company, can he use the work of management expert? Yes, he can use. Can he directly use? No. Before using the work of management expert, auditor has to check three things. What are those three things that the auditor has to check? First of all, auditor has to check competence of this management expert. Competence of management expert means nothing but capability, capacity, knowledge of the management expert. If management expert is highly competent, then he would have performed his work properly. If he would have performed his work properly, auditor can rely more on his work. Correct or not? Yes. So first thing you will check is the competence of the management expert. Next, you will understand the work that is done by the management expert. So how he has done the work, what assumptions he has taken, what are the fields that are there in this work, all that you will understand. After that, you will check appropriateness of that work for the auditor's purpose. See, management expert is having high knowledge and he has also done his work properly. Now, that work is not relevant for the purpose of auditor. Will you use it? No. Only if that work is appropriate for the auditor, you will use. Otherwise, you will not use. So, the third thing that you will check is the appropriateness of management experts' work. So, these are the three things that you will see before deciding to use the work of management experts. So, three things: competence, capabilities, understanding of the work, and appropriateness of management experts work. Next, question number 9. The reliability of audit evidence depends on its source, nature, circumstances under which it is obtained, including the controls over its preparation and maintenance. Although exceptions may exist, few generalizations can be made about the reliability of audit evidence. Considering above discussed, such generalizations that can be made about the reliability of audit evidence. There are 5 generalizations with respect to reliability of audit evidence. What are they? First one, audit evidence that is obtained externally is more reliable than the audit evidence that is obtained internally. Correct or not? Yes. Second one, internally generated audit evidence will also be more reliable provided the internal controls around it are operating effectively. This is the second generalization. Next, audit evidence obtained in original documents is more reliable than the photocopies or Xerox. Correct or not? Yes. Next, audit evidence through documentary form is more reliable than oral or visual. That is the fourth generalization. And finally, the fifth generalization is audit evidence that is obtained directly by the auditor is more reliable than the audit evidence obtained through the management. Right? Yes. These are the 5 generalizations with respect to reliability of audit evidence. Next, question number 10. See, same 5 points you will find here also. Moving to question number 10. The management of D Limited have engaged actuary. Actuary is nothing but a expert who is having more knowledge in the area of provisions, estimations. In all these areas, he is having more expert knowledge. So, actuary, management has appointed a actuary, nothing but they have appointed a management expert to ascertain actuarial valuation of gratuity for provision to be made in the accounts. As an auditor of D Limited, you plan to use the report of said expert as audit evidence for ascertaining appropriate valuation of provisions. As an auditor, what will you do to evaluate competence, capability, objectivity, and understanding of work of actuary expert who has carried out actuarial valuation? In the 8th question, we have seen in order to take a decision of whether to use the work of a management expert or not, you will check 3 things. What are those 3 things? Competence of a management expert. Next, understanding the work that is done by the management expert and appropriateness of that work. Right? Now, for each of these 3 things, there are certain points that you will see. Like, in order to evaluate competence of management's expert, that is, in order to understand how knowledgeable management's expert is, how you will understand that? There are many options available. You can once speak with him. By speaking with him for an half an hour, you will get to know what is his knowledge. Correct or not? Yes. If he has wrote any books, you can read those books. By reading his books also, you will get knowledge about his professional competence. You can check whether he is having any qualifications, just like CA qualification. Is he having any other qualifications? If he is having such qualifications, he will be having more knowledge. Correct or not? So, like this, some aspects you will see, or you will also speak with other auditors who have used this management experts work in the past. Correct or not? So, these are some ways in order to understand or in order to identify the capability, competence of management's experts. See, personal experience, discussion with the expert, discussion with others who are familiar with the expert work, knowledge of experts qualification, published papers or books written by the expert. Through these things you will get to know about competence, capability, knowledge of the expert. Next, auditor should also obtain understanding of the work of that expert. Understanding of work of that expert means nothing but what assumptions has he used, what are the different fields, what are the different areas of expertise available in that field. Like for example, if you take doctor, there will be different fields. There will be specialists for heart, there will be specialists for brain, nerves, like this. For each area there will be specialists. Similarly here also, in the area of the work of experts, are there any fields in which he is a specialist, that you will see understand the relevant field of expertise, whether that expert's field has areas of speciality within it that are relevant to the audit, whether any professional or other standards or regulatory requirements are applicable to the work of that experts, and what assumptions and methods have been used by the management expert. So by understanding these things, you will be able to understand the work of that expert. Understand? Yes. Next, question number 11. While conducting audit of PUMI Limited, statutory auditors collected written representations from management. Audit was finalized in addition to other audit procedures, but without making any inquiries. As the statutory auditors were short of time, in the light of this information, elaborate inquiry as one of the methods of collecting audit evidence. So they are asking you to write certain points about inquiry. First of all, you will write what is meant by inquiry. Through inquiry, you will obtain information by asking the questions, nothing but seeking of information. So you will write the definition, and you will also say that this inquiry procedure is used extensively throughout the audit in various areas that you will mention. And inquiry consists of two parts. Firstly, you will ask questions. When you ask questions, you will get the information. That is first part. Asking questions is the first part. Now whatever the information that you get, that information need to be evaluated. So evaluation of information obtained through inquiry is the second part of inquiry procedure. Understanding? So auditor, you will mention that also. Evaluating responses to inquiries is an integral part of inquiry process. And next, when you inquire with other parties, you will get three types of information. Firstly, let's say I am an auditor, I have done inquiry. Now when I do inquiry, I will get information that might not be earlier known to me. That is the first type of information. Or I might get information that is already known to me. That is the second type of information. Or I might get information that completely differs from the information that I already knew. These are the three types of information that I might get through inquiry. Same thing you will write. So responses to inquiry may provide auditor with information not previously possessed or with corroborative audit evidence. Alternatively, responses might provide information that differs significantly from other information that the auditor has obtained. Although corroboration of evidence obtained through inquiry is often of particular importance in case of inquiries about management intention. See, let's say for example, here already there is an example here. In case of going concern, let's say entity is having a doubt about entity's ability to continue as a going concern. In such a situation, you ask for the management, your entity might not be able to continue as a going concern. There are these events or conditions. Management told that, see auditor, we are planning to take loan from the bank, this much amount of loan. With this loan we will be able to continue our business, so there is no problem to our going concern. Management has not yet taken the loan, it is intending to take the loan. Now it is the plan of management to take the loan. Now whether management will actually take the loan or will not take the loan, that is not known to the auditor. How will you know? the future action of the management. But management, you inquired with the management and the management told that they will take loan. This is the intention of management. Now, with respect to intention of management, what corroborative evidence you will obtain? When you inquired with respect to intention of management, you got certain information. Whether this information is correct or not, how will you corroborate with other evidence? No other procedure available. Generally, what auditor will do is he will check the history of past management actions. Like in the past, management would have told certain plans to the auditor, just like now in the current year they are saying that they are planning to take the loan. Similarly, in the past year also, in the past years also, they might have said some of their plans. Auditor will see whether management has executed whatever they have said in the past or not. Understanding? Through that, auditor will get some confidence. If in the past whatever management has told they have executed them, in such a situation auditor will get confidence that yes, management is standing by their words, whatever they are saying they are executing. Like that, you will get some type of evidence. So with respect to management's intention, the only corroborative evidence is observing the management's past history of carrying out its stated intentions. And this I already explained you. Inquiry alone cannot be used as audit procedure. Whatever the information you obtain through inquiry, that will not provide you sufficient appropriate audit evidence. You should always obtain some other corroborative evidence also. Getting it? Yes, sir. Next, question number 12. Identify and explain briefly the audit procedure used by auditor to obtain audit evidence in the following situation. This would be simple. They have given certain scenarios, certain four scenarios, and asking you to identify which procedure is being followed in each of this scenario. First, while auditing the books of accounts of Ant Limited for the financial year 23-24, auditor checked the complete documents and records of the company in detail to obtain audit evidence. Checking documents of a company comes under inspection, right? Yes. Next, Mr. M, auditor of company, looks at the process of inventory counting by the entity's personnel and of performance of control activities. So, auditor is looking at the inventory counting. Looking comes under observation, right? This is the observation procedure. Next, XYZ Limited is engaged in export of goods to Europe. The sales invoices raised in euros or converted into Indian rupees as per applicable norms. The auditor wants to verify whether conversion of foreign currency into Indian rupees is proper or not. So, foreign currency converted into Indian rupees. So, there is a calculation involved. Management already calculated. Auditor again wants to verify it. Can we call this comes under recalculation? Yes, sir. It comes under recalculation. Next, CA Isha is appointed as auditor of TUV Limited. During the initial stage of audit, she reviewed the gross profit ratio of the company. She also compared gross profit ratio of TUV Limited with the other companies operating in the similar industry. Nothing but she has performed ratio analysis. Ratio analysis comes under analytical procedures, right? Yes, sir. So all those things: inspection, observation, recalculation, analytical procedures. Next, question number 13. FRP and associates are the statutory auditors of Paint Private Limited. Okay. Company is into the business of trading and has operations across India. CAM, partner in charge of the audit, is carrying out the audit procedures with his audit team. He entrusted CA Ravi, one of the team member, the task of obtaining various audit evidences connected with the audit and submitted the same to the engagement partner for finalizing the audit report. Okay. Now, this is the actual question. How can CAM ensure that evidences collected by CA Ravi during the audit will be sufficient for the purpose of audit or not? So, whether the audit evidence that has been collected, is it sufficient for the purpose of audit or not? How will you determine that? For determining that, there are three factors. Based on that three factors, you will decide whether audit evidence that you have obtained, is it sufficient for the given purpose or not. So what are those three factors? First one is materiality. So if the item you are auditing is more material, then more evidence has to be obtained, correct or not? If it is less material, less evidence is sufficient. Next factor is risk of material misstatement. If the area is having high romum, then more evidence you have to obtain. If it is having less romum, then less evidence has to be obtained. Next, size and characteristics of population. Size of population means if the population is huge, more evidence you have to obtain. If the population is less evidence you have to obtain. Similarly, characteristics of a population, that means characteristics means if the population is homogeneous, means the characteristic of all the population is same, homogeneous, then less evidence is sufficient. If the characteristic of population is heterogeneous, then more evidence you have to obtain, right? So these are the factors that will influence the audit evidence, the sufficiency of audit evidence. Next, question number 14. Messrs. YZW and Co. Chartered Accountants have been appointed as statutory auditors of First Health Private Limited for the financial year 24-25. CAY is the engagement partner for this assignment. First Health Private Limited operates in the business of hospitals and pharmaceuticals with 60 hospitals and 200 pharmacy stores across the country. The company has a turnover of 680 crores and profit after tax of 32 crores in the current year. While verifying the assertions about book debts, CAY was informed about the availability of clients' ledger invoices, debit notes, and credit notes as audit evidence. CAY accepts these documents as audit evidence, considering them to be available. Now, this is very important. With respect to book debts in the company, it seems ledger invoices, okay, ledger invoices, debit notes, credit notes, these are available in the company, it seems. And since these are available in the company, auditor has accepted them only as available audit evidence. Okay. Now, is this decision correct based on meaning of the term available? So what is meant by the term available? See, this term available will be used in combination with audit evidence. Audit evidence available. That means there can be two understandings. Audit evidence available with the entity or should have been available with entity. What will be the correct meaning of audit? What will be the correct meaning of the term available? The correct meaning of the term available is not whatever the evidence that is available with the entity. No, auditor should try to gather the evidence that should have been available with the entity for the given situation. Understanding? So with respect to trade receivables, what should have been the available information? External confirmation should have been available, correct or not? Just because with the entity only sales invoice is available, auditor should not just accept it as audit evidence. What should have been available for the given situation, that should be collected, not just taking whatever is available is sufficient. Understanding? So that is the meaning of the term available. Hope you are clear with the term. So meaning of the term available is second one, not the first one. You need to explain the same. So is the decision correct? The answer is not correct. You should not accept whatever is available with the entity. You should ask the entity to give what should have been available. Getting it? Yes. So in the given situation, Miss YZW and Co Chartered Accountants have been appointed as statutory auditors. Yes, yes, all this is information that is already known to you. Now this is new. The word available does not mean that the evidence available with the client is the only available evidence. The auditor should know what normally should have been available in the context of the transaction, having regard to the circumstances and the use. So, in view of above, it can be concluded that decision of CAY to consider clients' ledger invoices, debit notes, credit notes as audit evidence, considering them to be available, is not correct, because just sale invoice is not sufficient. You should also ask for external confirmation, right? Whatever is available with the entity, you should not just accept it as available. Getting it? Yeah. Next question they are asking, also explain how an auditor should select the most appropriate evidence when testing the accuracy of any assertion to form an opinion. So, how will you select the most appropriate evidence? Generally, by performing audit procedures, you will select the evidence. And there are various types of evidences that are available. You need to write down the list. And it is also a matter of expert knowledge and experience. So auditor based upon his professional judgment, based upon his knowledge, he has to decide which type of information has to be accepted as evidence. And generally documentary evidence, examination can be done, physical examination, statements and explanation of management can be accepted as evidence. Generally explanation of management comes from inquiry. Similarly, statements and explanation of third parties, you can also inquire with third parties. Arithmetical calculation by auditor, it comes under recalculation procedure. State of internal control and internal checks, interrelationship between various accounting data, this comes under analytical procedure. Subsidiary and memorandum records, minutes books, subsequent action by the client and by others. So all these are the audit evidences that can be taken by the auditor, different forms of audit evidences. Next, question number 15. CA Rimi is appointed as an auditor of AC Private Limited. During the audit, she decided to use various audit procedures to gather sufficient and appropriate audit evidence, such as following. While verifying the fixed asset, she examined factory equipment and verified the presence of each item. What is this procedure? Nothing but inspection. Correct or not? Yes. You need to remember, inspection can be done with respect to books of accounts records, and it can also be done with respect to fixed assets. Okay. Next, to verify the company's accounts receivable, she directly sends balance confirmation to some of the customers. Nothing but external confirmation procedure. Next, CA Rimi examined purchase invoices, contracts, and authorization records to assess the validity of payments and the approval process. She examined purchase invoices, contracts, and authorization records to assess the validity. Nothing but inspection. I told you, inspection can be done with respect to records and fixed assets also. Next, she independently performs. She independently performs bank reconciliation that was originally carried out by the accounts department. I told you, bank BRS example can be taken for re-performance. She also checked the accuracy of depreciation calculations made by the client. This comes under recalculation. See, generally most of the students, they will be confused with respect to re-performance and recalculation. See, re-performance involves re-performing of procedures that were already done by management. Recalculation involves calculation of certain things like depreciation. Management already calculated depreciation, you are again recalculating it. That comes under recalculation, not re-performance. Understanding? For re-performance, you can take examples as aging schedule of debtors is a re-performance, BRS is a re-performance. Getting it? Yes, sir. So inspection, external confirmation, inspection, reperformance, recalculation, all the things that we have discussed. Next question number 16. Suniti, a CA student, is a part of engagement team conducting audit of a company, Tim Private Limited, according to audit program. She is responsible for verifying purchases and PPE items appearing in books of accounts from records, bills of company. Besides, she has also been entrusted responsibility to obtain written representation from management regarding carrying out of physical verification of investments during the year, sorry, inventories during the year. During course of her work, she finds that one purchase bill amounting to 5 lakh pertaining to Tim Industries. So you need to observe name of the company. It is Tim Industries. Purchase bill belongs to Tim Industries, has been entered in the books of Tim Private Limited. So you have purchased from one person and entered it in other person's account. Can you say this as a misstatement? Yes, this is a misstatement. Next, management has refused to provide a written representation relating to physical verification of inventories during the year. She has brought it to knowledge of engagement partner, who has decided to use lack of such representation as audit evidence. Discuss whether each of above constitutes audit evidence. State reasoning for your answer. First of all, in the first situation, you got to know that purchase invoice of one person entered in another company's account. Can that be accepted as evidence? Yes, it can be accepted as evidence. In the next situation, you have asked written representation from the management. Management not giving the written representation. So, non-availability of information can also be treated as evidence to prove that required information is not given. Getting it? So the second situation also can be treated as evidence by the auditor. Got it? Yeah. Same thing you will explain, stating that non-availability. This point is important. Non-availability point is important. This one. Further, absence of information. So absence of information can also be treated as a evidence. Understanding? Because in the audit opinion that you give, it is based on the evidence. The opinion that you give is based on the evidence. If evidence is not available, non-availability is also a evidence to you on which you can base your opinion. Getting it? Yes. So further, absence of information, for example, management's refusal to provide a requested representation is used by auditor and therefore also constitutes audit evidence. This is important. This you need to remember. Next, question number 17. Sameer and Co. Chartered Accountants are conducting audit of ABC Limited for the year ended 31st March 2025. While testing accounts payable, audit team decided to examine the recorded balances appearing in the books to verify the existence and valuation of liabilities. However, engagement partner pointed out that this may not be sufficient to detect possible understatement of payables. See, in order to determine understatement of payables, will you examine the recorded payables or subsequent transactions and other information? You will verify subsequent transaction and other information, correct or not? In order to check overstatement of payables, you will verify the recorded payables. Understanding? See, these are books of accounts. In the books of accounts, certain trade payables are entered. By verifying this trade payables, you will get to know about any overstatement. Understanding? In order to identify overvaluation, overstatement of trade payables, you have to check recorded trade payables. In order to identify understatement, by verifying recorded trade payables, you will not get any idea about understatement. You have to verify subsequent transactions. By verifying subsequent transactions, you will get to know about understatement of trade payables. Getting it? So in the question, whatever he's saying is correct only. By verifying trade payables that are recorded in the books of accounts, you will not get any sufficient evidence with respect to understatement of payables. He advised the team to test subsequent disbursements. unpaid invoices, supplier statements, and unmatched receiving reports. So by verifying these things, you will get to know about understatement of payables. Now explain with reference to above concept of relevance of audit evidence. What is meant by relevance of audit evidence? Relevance of audit evidence is the logical connection between two things. What are they? Audit procedure that you are performing and the assertion that you wanted to address. So logical connection between the audit procedure you are performing and the assertion that you want to address is known as the relevance of the audit evidence. Correct or not? Next, state why the auditor should consider both relevance and reliability of audit evidence while forming his opinion on the financial statement. See, relevance and reliability together, they will impact appropriateness of audit evidence. Okay, since these two will impact appropriateness of audit evidence, auditor has to consider these two things while forming his opinion based on audit evidence. Same thing you have to say. The second point is that only. Next, I guess we're almost completing SA 500. Question number 18. During audit of Kavita Limited, auditor performs various audit procedures such as inspection, observation, confirmation, recalculation, reperformance, and analytical procedures. Some information obtained supports management assertions, while other information appears to contradict. Contradict means not matching. Two evidences not matching is called as contradicting of each other. Now the auditor also considers data obtained from entities' accounting records and from the previous year's audit. Now explain how the auditor obtains sufficient appropriate audit evidence to form an opinion on the financial statement. See, how will the auditor obtain audit evidence? By performing audit procedures, auditor will obtain audit evidence. You will write the same thing only. See, by performing audit procedures, you will obtain audit evidence. And audit evidence can be obtained from other sources such as previous year audit also. Here only they have mentioned it, right? And information that is prepared by management's expert can also act as audit evidence. Correct or not? I guess in the question they have told it. Okay, in the question it is not there, but information which has been prepared by the management expert, that also can be used as audit evidence by the auditor. Correct or not? Yes, you can write that point also. See, information that may be used as audit evidence may have been prepared using work of management's expert. And you can obtain audit evidence from the entity's accounting records also. And absence of information is also a type of audit evidence, right? So all the points with respect to audit evidence you have to write down. See, whatever the points you know about audit evidence, you can write it. Understanding? Yes. Next, final question of 500, question number 19. Auditor of Global Manufacturing Limited is planning to use inspection as an audit procedure to achieve various audit objectives relating to company's financial statements. Okay. Discuss inspection as an audit procedure as per SA 500 audit evidence. Identify the factors affecting varying degrees of reliability of audit evidence obtained through inspection, and provide an example of how inspection can be applied as a test of controls. First of all, we'll answer one by one. First of all, what is meant by inspection? We will answer it. Inspection involves the examining of records, documents, books of accounts, and also examination of fixed assets of entity. That comes under inspection. So you have to write the definition of inspection first of all. Next, they are asking, discuss inspection as an audit procedure as per SA 500. Okay, some documents represent direct audit evidence of existence of asset. For example, document constituting financial instruments such as stock. These are some documents that you will verify. Next, they are asking, provide an example of how inspection can be applied to test of controls. So here you can give example of one particular control, which is authorization. Authorization means in the company, when employees wanted to spend expenditure like 200, 300, they wanted to spend expenditure, higher officer has to authorize that expenditure. Correct or not? So there will be a voucher. In that voucher, the higher officer, he will put the signature. This signature acts as authorization for other employees to incur that expenditure. So or this is, can this authorization be treated as a internal control? Yes, it is a internal control. Now auditor, he can inspect various vouchers with respect to various expenditure to check whether that expenditure has been properly authorized by the officer or not. So through observation, sorry, through inspection of documents, you are testing whether the control, that is authorization, has been done properly or not. So that example you can give. So example of how inspection can be applied as test of control. Next, also auditor wants to determine which assertion is reliably addressed when tangible asset is inspected. So when you inspect the tangible asset, which assertion you are addressing? Are you addressing valuation assertion? No. Through inspection, how will you address valuation assertion? If you inspect the asset, you will get to know whether that asset is actually in existence or not, correct or not. So you are addressing existence assertion through inspection. Same thing you will write. So example is, you can give that authorization example. And inspection of tangible assets provide about existence of asset, but not necessarily about the entity's rights and obligation. So that is about inspection. And the last question of SA 500. Now moving to question and answers of SA 501. SA 501 is also about audit evidence only, but with respect to certain three specific items. What are they? With respect to inventory, how to obtain audit evidence; with respect to litigations and claims, how to obtain audit evidence; and with respect to segment information, how to obtain audit evidence. These aspects are dealt by SA 510, sorry, SA 501, right? Now we will see the question and answers of that particular standard. Question number 1. Quality Products Limited is engaged in manufacturing of bicycles. As part of manufacturing activities, it sends raw material to some business entities and procures finished components from them. As on 31st March 2024, inventory is lying with such business entities or material. Being statutory auditor of Quality Products Limited, how you will obtain sufficient appropriate audit evidence regarding existence and condition of inventory lying with such business entity? So they are asking about how auditor will obtain audit evidence with respect to inventory that is lying with the third party. How will you obtain? Tell me. First of all, you will send confirmation request to that third party. See, third party entity is saying that this much amount of inventory is lying with you, which belongs to the entity. Is that correct? Do you agree with that? Like that, you will ask for a confirmation request from the third party. After that, you can also visit the third party's location, or on your behalf you can send some other auditor to verify inventory that is present at the third party's location. And you can verify various documents, because when movement of goods has happened from the entity to third party's location, there will be various stock transfer documents that will be generated. You can also check those documents, right? So all these are the things through which you will verify the inventory. You will obtain audit evidence about the inventory lying with the third party. So request confirmation from third party, perform inspection or other audit procedures appropriate in the circumstance. See, inspection means you yourself can go and inspect the inventory at the third party's location, or you can inspect the documentation related to the inventory that is lying at the third party's location. Got it? Yes, sir. Next, moving to question number 2. CA Kavita, auditor of Healthify Limited, while assessing potential risks of material misstatement related to litigations at Healthify Limited. So this question is belonging to litigation and claims. Okay, identified possible legal claim that could affect the financial statements. she sent a general inquiry letter to company's external legal counsel. External legal counsel means nothing but lawyer of the company. So auditor sent inquiry letter, general inquiry letter to the legal counsel, Mohit and Co., the name of legal counsel, seeking clarification. However, Mohit and Co. informed her that their professional rules prohibited them from responding to these general inquiries. Guide CA Kavita that what other option is available to obtain necessary information for the audit. See, if you can't send or the legal counsel can't respond to the general letter of inquiry, what you can do is you can send specific letter of inquiry. So what is the difference between a general letter of inquiry and a specific letter of inquiry? In general letter of inquiry, you will not specify the cases that are there against the entity. You will just ask the legal counsel himself. See, legal counsel, you please give us all the list of cases pending against the entity and what are their statuses. You please give us. This is known as general letter of inquiry. Specific letter of inquiry means you will quote the name of uh, case against the entity. See, legal counsel, so and so person has filed this case against the entity. Entity is saying that they will win the case. What is your opinion? Like this, you will ask. Specifically, you will ask. Is known as specific letter of inquiry. So, if you feel that the legal counsel can't respond to the general letter of inquiry, the option available to you is to send specific letter of inquiry. Got it? Yes. So what will be there in that specific letter of inquiry? See, specific letter of inquiry contains the following things: list of litigations and claims. You yourself will give list of claims with respect to which you wanted the information. You only will give the list in the specific letter of inquiry. And where available, management's assessment of outcome of each of the identified litigation. See, generally how specific letter of inquiry will look is like this: name of case, management's assessment. Management assessment means nothing but what management is thinking, whether they will win or they will lose the case. That is management assessment. And financial impact. So if they lose the case, how much will be the financial impact that management is saying. And here at last you will have legal counsel's view about the same. So this is how specific letter of inquiry will look like: name of the case, management's intention, whether they will win or lose, financial impact if they lose, and what legal counsel is thinking about. Legal counsel has to fill this column. Getting it? Yes. Its estimate of financial implication including the cost involved, and request that entity's external counsel confirm the reasonableness of management's assessment and provide the auditor with further information if the list is incomplete. So legal counsel, you will ask the information from him in this last column. Got it? So the option available to CA Kavita is to send specific letter of inquiry. Got it? Yes, sir. Next, question number 3. CSZ, the auditor of MNO Limited, during the course of audit, assesses risk of material misstatement regarding the litigation and claims involving the company. CSZ is not convinced with the management's explanation regarding the status of litigations or claims. It is considered unlikely that entities external legal counsel will respond appropriately to letter of general inquiry. Auditor sent a letter of specific inquiry requesting the entity's external legal counsel to communicate directly with the auditor. List out the inclusions in the letter of specific inquiry. Just now we have seen same these points you have to write down. These things will be included as it is. Next, in certain circumstances, auditor may judge it necessary to meet the entity's external legal counsel to discuss the likely outcome of the litigation or claim? Yes. What will be auditor's reporting responsibility if management refuses to give permission to auditor to communicate or meet with the external legal counsel? See, if management refuses to allow the auditor to meet external legal counsel, then auditor might not be able to obtain audit evidence with respect to that area. He will check whether he can obtain audit evidence by performing alternate audit procedures. If through alternate audit procedures also he cannot perform, he cannot obtain audit evidence, in such a situation he will show impact on his opinion. What impact this aspect will have on his opinion? He will basically modify the opinion because of non availability of the audit evidence. So that is how he will show the impact. See, if management refuses to give auditor permission to communicate or meet with the entity's external legal counsel, or entity's external legal counsel refuses to respond or is prohibited from responding, and the auditor is unable to obtain sufficient appropriate audit evidence by performing alternate audit procedures, then auditor shall modify the opinion. Why he will modify the opinion? Because he is not getting the evidence. Getting it? Yes. Next question, number 4. Audit procedures performed so far by auditor of a company indicate that there is a possibility that a company has disclosed all material litigation cases involving the company. See, no, there is a possibility that company might not have disclosed all the material litigations against it. Does such a situation warrant direct communication by auditor with external lawyer of the company? Yes. If the auditor is having a doubt that a company might not have disclosed all the litigations in the financial statements, then auditor can consult, speak with the company's external legal counsel to get the idea or list of all the cases pending against the entity. So yes, this situation will warrant direct communication by the auditor with external legal counsel. Got it? Yes. Next, question number 5. Parag India Limited is a manufacturer of various FMCG. FMCG means nothing but fast moving consumer goods range of products. The company is having several cases of litigation pending in the court. The auditor wanted to identify litigation claim resulting to risk of material misstatement, suggests the auditor with reference to SAs. See, in order to identify, see, first of all, whose responsibility it is to identify all the litigations and claims in the entity and disclose them in the financial statements. Whose responsibility it is? It is the responsibility of management, because management will prepare the financial statements. So at the time of preparing financial statements, they only should identify all litigations and claims and they should properly disclose it. Now what auditor will do? Auditor, by performing audit procedures, he will obtain audit evidence to ensure that all the litigations and claims that the entity is having, they have been disclosed. Like that he will obtain audit evidence. So to obtain such audit evidence, what audit procedures auditor will perform? That is what the question is asking. First of all, auditor will inquire with the management of the entity, because it is the management who knows what cases are pending against the entity. So the first source for the auditor is management only. He will inquire with the management what litigations and claims are there in your organization. After that, he will also go through the minutes book of meetings, board meeting, shareholders meeting, that whenever meeting happens, minutes book will be there. That through that minutes book he will read. Why? Because in the board meeting, board of directors, they will discuss about their plans of how to handle the litigations, various litigations that the company is involved in, how to handle them, what is their progress. These things will be discussed in the meetings. So by reading minutes book, auditor will get to know whether there are any litigations which the company is trying to hide from me, because they would have discussed them in the meeting, right? If they would have discussed, auditor will get to know in the minutes book. Similarly, auditor will also go through the legal expenditure account. If you see in the profit and loss statement, in the other expenses, you will find legal expenses. Now auditor asked the company management, what litigations are there against you, like that, any cases are there against you, like that auditor asked. Management said that no auditor, we don't have any pending litigations, there are no cases pending against us, like that the management told when auditor has inquired. Now auditor, he went to profit and loss statement, and there in the legal expenditure account he is seeing a legal expense of 5 crore rupees. If there is no litigations pending against the company, why will there be 5 crore rupees legal expenditure in the company? Legal expenditure means nothing but the fees you have paid to the lawyer, and any fines, penalties that has been paid by you, because you might have lost any cases in the court, so court judge might have told you to pay that amount. All those things, they come under legal expenditure. Legal expenditure means nothing but the amount that you incur to defend the litigations and cases filed against you. So if management is saying no cases in the legal expenditure account, there is a amount, that means management is saying wrong. So by going through legal expenditure account also, you will get to know whether there are any pending litigation. So these are the three things: inquiry, review minutes, legal expense account. Got it? Yes, sir. Next, question number 6. ABC Limited is engaged in manufacturing of different type of yarns. On going through its financial statements for the past years, it is observed that inventory is material to financial statements. You, as an auditor of company, wanted to obtain sufficient appropriate audit evidence regarding existence and condition of inventory as appearing in the financial statements. Discuss how would you proceed as an auditor. See, in order to obtain evidence about the existence of inventory, the thing that you will do is you will attend at the physical inventory verification that is done by the management, right? By attending at the physical inventory verification, what will you do? Will you just eat the snacks that are kept by the management? No. By attending at the physical inventory verification, you have to do four things. What are those four things? You need to evaluate the instructions given by the management to their employees for conducting the physical inventory verification. That is the first thing that you have to do. Next, you have to observe the count procedures that are being done by the employees of the management. Next, you have to inspect certain inventories, right? That is the third thing that you have to do. And finally, you yourself has to conduct some test counting of inventory. These are the four things that you have to do by attending at the physical inventory verification. Got it? So that's what they are asking. The question is about how will you obtain evidence with respect to existence of inventory. You will attend a physical inventory verification and you will perform these things to obtain evidence. Got it? Yes, sir. Next, question number 7. TRM Limited is a company engaged in manufacture of a beauty products. It has hair care segment, skin care segment, kids beauty products. Lot of segments are there. Auditor wants to obtain sufficient appropriate audit evidence regarding the presentation and disclosure of segment information in accordance with the applicable financial reporting framework. Suggest the audit procedures in the given case. So, first of all, tell me whose responsibility it is to ensure or to present segment information. Is it responsibility of auditor? No, it is the responsibility of management to present segment information in the financial statement. Then what is the responsibility of auditor? Auditor's responsibility is to check that segment information, right? So for checking that segment information, what procedures you will perform, that we will see. Okay, first of all, for preparing segment information, management would have followed certain methodology, right? So auditor will first of all understand the method used by the management for preparing segment information. So what method will be there? See, generally there will be common expenditures that you might incur for all the segments. Commonly you might incur some expenditure, right? Now you have to bifurcate this common expenditure among all the segments. How you have bifurcated, what ratio you have used, whether sales ratio you have used or the actual expenditure. So that is nothing but a method understanding. So auditor will understand method used by the management for preparing the segment information. After that, Next step is, whatever the method that the management has used, by using that method, can they achieve the presentation of segment information that is required as per applicable financial reporting framework or not? That the auditor will see. Understanding? Yes. Next, auditor he himself will apply that method, and he will check by applying this method whether all the calculations that are being done for the segment information are they proper, and finally at the end you will perform certain analytical procedures. So these are the four things that you will perform to obtain audit evidence with respect to the segment information. Got it? Yes sir. Next, question number 8. Key Limited has appointed NFO and Co. Chartered Accountants as statutory auditors. Since inventory is a material component of financial statements, CAF plans to attend physical inventory counting. Provide any 5 matters that CAF should consider when planning their attendance at physical inventory counting. See, when you attend for physical inventory verification, before attending you have to plan the physical inventory verification. So in planning physical inventory verification, there are certain factors that you will consider. There are a lot of factors. They are asking you to write down only 5 factors. You can write the risk of material misstatement of the inventory. So ROMM of the inventory you will consider in the planning of inventory verification. Next, internal controls operating around the inventory, that also you will consider, right? Yes. Next, at how many locations the inventory is present, this also you will consider. And what is the nature of that inventory, because based on the type of inventory, the way how you have to verify it will vary, correct or not? Yes. Next, how many stages of work in progress are there in this in the manufacturing process of the organization, that also you will consider. And whether is there any requirement of hiring expert for conducting the physical inventory verification, that also you will consider. Understanding? Next, whether adequate procedures are expected to be established and proper instructions are issued for physical inventory counting. So adequate procedures are present or not, and did the management issued proper instructions for conducting physical inventory verification or not, these things you will see, right? And whether perpetual inventory system is being maintained or periodic inventory system is being maintained, you will see that also, because based on the system of inventory keeping also, system of recording of the inventory also, the way how you have to verify will vary. What is the difference between perpetual inventory and periodic inventory system? See, perpetual inventory system means as and when the transaction take place, the records will get updated immediately on a real time basis, that is known as perpetual inventory system. Periodic inventory system means once in every 10 days or once in every 15 days the records will get updated, batch processing will happen. That is the difference between periodic inventory system and perpetual inventory system. These two are the systems or methods for maintaining inventory records. So these are certain factors that you will consider for planning the physical inventory verification. Next, question number 9. ABC Limited is a large drug manufacturing unit having units at Hyderabad and Ahmedabad. The management has nominated an expert team from different functions of the organization to conduct the year-end verification of inventories and for finalization of accounts for the financial year 24-25. The statutory auditors also, as a part of their audit verification, wish to attend the year-end physical inventory verification planned by the management. Okay. The inventory at all locations are considered material to financial statements. Auditor encountered the following situations. Let us see what are the situations he encountered. First of all, Hyderabad unit. Due to administrative reasons, management had taken up stock verification of inventory on 15th March 2025 itself. So, due to generally physical inventory verification, it has to be conducted as on 31st March. But management has conducted physical inventory verification on 15th March only. If you conduct physical inventory verification on 15th March, auditor will attend it and he will get the evidence with respect to inventory present as on 15th March. But auditor wants evidence with respect to inventory present as on 31st March, correct or not? So here what auditor will do is, auditor will add purchases, reduces sale to this, and he will check whether this is matching with the inventory as on 31st March or not, and he will perform audit procedures to ensure purchases and sales have been recorded properly or not. On these transactions he will perform audit procedures. This is how you have to deal with that situation. So see, Hyderabad unit, how will you deal with that situation? If physical inventory counting is conducted at date other than the date of financial statements, auditor shall, in addition to procedures required above, perform audit procedure to obtain audit evidence about whether changes in inventory between count date and date of financial statements are properly recorded. Changes in inventory between count date and date of financial statements means nothing but why will the change of inventory occurs? Because of purchases and sales only, correct or not? So changes in inventory is nothing but purchases and sales together, you can call it as changes in inventory. You will perform audit procedures on changes in inventory to ensure whether they have been recorded properly or not. Got it? Yes, sir. Next, with respect to Ahmedabad unit, the company had taken up the inventory verification as planned on 31st March 2025. However, there was news of local disturbances in the city of Ahmedabad during the last week of March 2025, whereby auditor cancelled his planned visit for attending inventory verification. In the above circumstances, what additional audit procedures are to be undertaken by statutory auditor for inventory verification? See, management has conducted physical inventory verification on 31st March only, but on 31st March in that city some disturbances, some riots, some fighting is going on. They have used the term local disturbances is going on. Because of that, auditor was not able to attend the physical inventory verification as on 31st March. Okay, now here while answering this particular situation you have to take the assumption. If you take the assumption that on 31st March it was not possible, but on 2nd of April or 3rd of April, that is within next 2 or 3 days, all the disturbances are cleared. Disturbances are cleared. In such a situation, you can perform audit procedures. You can perform physical inventory verification on alternate date. Okay, that is on 4th or 5th April, you can perform on alternate date, and you can perform audit procedures on the intervening transactions between 31st March and 5th April, whatever the intervening transactions taken place, on that you can perform audit procedures and you can obtain audit evidence. If you take that assumption, if you take another assumption that disturbances have not cleared, they have continued for years together. Okay, it is completely impracticable for the auditor. If you assume that it is impracticable to the auditor to attend at the physical inventory verification, then you will say that auditor will see whether he can perform audit procedures through alternate audit procedures, right? Like sending drones or some other alternate audit procedure apart from physical inventory verification, physically going there. Understanding? So the answer to the second part depends on the assumption that you take, but in the given question it is better to take assumption 1, but ICAI has taken assumption 2 and given their answer. Okay, you can take whatever the assumption you wanted and you can write your answer. Got it? But in the answer ICAI did not mention their assumption. It's better in the answer if you mention your assumption also. Okay, yes. So ICAI has taken assumption that it is completely impracticable for the auditor to attend the physical inventory verification. So he has to perform alternate audit procedure. If he is not able to obtain audit evidence through alternate audit procedure also, then he will modify the opinion. Of course, no option you have. Next, question number 10. While performing statutory audit of a Contra Industries Private Limited, a company engaged in manufacturing and assembling of LED lights, CA Varun has decided to attend physical inventory count process of the company on 30th and 31st March 2024. Okay, the inventories are lying at three different locations. Two such locations, A and B, are in one city, and third location, C, is in another city. Further, company also sends inventory to some service providers for quality control and testing, as such facilities are not available with the company. CA Varun is well versed with this type of industry and has prepared a list of following matters which could be relevant to him in planning attendance at physical inventory count process. See, this complete first para is irrelevant. Without reading that first para also you can answer. From here it is relevant. Okay, so for attending at physical inventory verification, CA Varun has considered certain factors. So what are those factors he considered? Nature of inventory he has considered. Yes, that should be considered. If you see in question number 8, we have seen factors to be considered, right? Of these factors only he has considered some factors. Next, materiality of inventory he considered. Stages of completion of work in progress, maintenance of perpetual inventory system, materiality of inventories lying with the service providers he considered, timing of physical inventory verification he considered. So all these factors he considered. Now let us see what they are asking. There are two important matters which do not find place in above list. So certain two factors are missing from this list, it seems. What are those two factors? You have to identify. See, without considering these crucial matters, it would be difficult for the auditor to properly plan his attendance at inventory count process in accordance with relevant essay. Discuss such matters. So what are the two factors that got missed from here? First one is internal control operating around the area of inventory. You have to consider it. Next, you should also consider whether the procedures that are there for maintaining inventory and instructions given by the management for conducting physical inventory verification, are they adequate? You should consider that also, right? These are the two factors that are missing from here. Still, you should also consider risk of material misstatement of the inventory, ROMM of the inventory, that also you can consider. And you should also consider whether there is any requirement to hire external expert for conducting physical inventory verification. Those things also can be considered, but two main important things are these two only. Okay, adequate procedures are there, and nature of internal control related to inventory. Those two were missing from these factors to be considered. That is question and answers of essay 501. Now moving to question and answers of essay 505, external confirmation. Mostly the questions of this particular standard, they are very easy. Let's start. Question number 1. During financial year 22-23, auditor of Healthy and Wealthy Limited asked a trade receivable to respond directly to auditor whether or not amount they were required to pay to Healthy and Wealthy Limited was 1,23,000. The trade receivable confirmed to the auditor of Healthy and Wealthy Limited that they were required to pay an amount of 1,23,000 to Healthy and Wealthy Limited. State and explain the type of a confirmation request. What type of confirmation request they are speaking about in the question? It is a positive confirmation request, right? Why? Because that trade receivable, he has to respond both if he agrees or if he doesn't agree. In both the situations he has to respond. So you will call it as a positive confirmation request. Correct or not? Yes. So positive confirmation request. Next, question number 2. While conducting the audit of AB Limited, auditor of K Auditor K of KLM and Associates Chartered Accountants observes that there are large number of trade payables and receivables standing in the books of accounts as at 31st March. Auditor wanted to send confirmation request to few trade receivables, but management refused the auditor to send a confirmation request. How would auditor proceed? So auditor wanted to send confirmation request to some of debtors and creditors. Management refused. how should you deal with the situation? First of all, you will ask the management reasons for the refusal, and if those reasons are reasonable, you will see whether you can obtain audit evidence by performing alternate audit procedures. And you felt that by performing alternate audit procedures also you cannot obtain audit evidence. In such a situation, you will modify your opinion, right? This is how you have to deal. Inquire the reasons for refusal, evaluate implications of management refusal, perform alternate audit procedures designed to obtain relevant and reliable audit evidence. If through alternate audit procedures also you cannot perform audit, you cannot obtain sufficient appropriate audit evidence, in such a situation you have to modify the opinion, right? So if auditor concludes that management refusal to allow the auditor to send external confirmation request is unreasonable, or the auditor is unable to obtain relevant and reliable audit evidence from alternate audit procedure, auditor will communicate with TCWG, and auditor shall determine the implications for the audit and the auditor's opinion in accordance with SA 705. Got it? Yes, sir. Next question number 3. CA Jignesh Desai is in the middle of audit of a company. The company is fairly large, large one, and has a well functioning internal audit department. While considering sending out external confirmation request to trade receivables outstanding as on date of financial statements, he has delegated the process of choosing trade receivables, designing requests, receiving responses from customers to internal audit department. So statutory auditor has delegated these things with respect to external confirmation to internal audit department. Can you delegate these things to internal audit department? No. Auditor has to exercise control over certain aspects of external confirmation, right? What are they? Selecting the information to be confirmed, selecting the uh, party to whom confirmation request has to be sent, and designing of the confirmation request, sending the request and follow up request. On all these things, statutory auditor he himself has to exercise the control. Got it? Yes, sir. Same thing you have to write. In the given situation, whatever CA Jignesh Desai has done, that is not proper, because statutory auditor shall maintain control over determining the information to be confirmed, selecting the appropriate confirming party, designing the confirmation request, and sending the request including the follow-up request. On all these things, statutory auditor has to maintain a control, but some of these things have been delegated to internal audit department, which is not proper. Next, question number 4. On reviewing schedule of trade receivables of a company, CA Mary finds that in respect of one outstanding balance, the CFO of company is not willing to allow her to send external confirmation request. So management refusing to send the external confirmation due to the reason that sending out such request could spoil precariously placed business relationship with the customer. On further inquiry, she finds out that there is a dispute going on with the company relating to some quality issues of goods sent to customer, and matter is sub judice. Sub judice means pending in the court of law. Efforts are also being made by the company for out of court settlement. Reviewing correspondence with customer, she finds that issue is near resolution and no fraud risk factor exists. Is unwillingness of CFO justifiable? Here there is a dispute going on between the customer and the company, and that case is also pending in the court of law with respect to amount that has to be paid to the customer. Now auditor wants to send the external confirmation to that particular customer. CFO is saying that, see, auditor, already there is a dispute going on between this customer and us. We are not agreeing to pay this amount. He has filed a case against us. If you send external confirmation to that particular customer, there is a chance that he might use your external confirmation as a proof against us in the court of law. We might lose the case. So saying that, CFO said that you please don't send the external confirmation request. Is the reason given by CFO, is that reason justifiable? The answer is yes, it is justifiable reason only. In this situation, what the auditor has to do? Auditor has to see whether he can obtain audit evidence by performing alternate audit procedures. Got it? Yes, sir. So it is reasonable only, is it justifiable only, you have to say that. Next, question number 5. CAX is contemplating the use of negative confirmation request as the sole substantive audit procedure to verify certain accounts payable balances reflected in the financial statements of a company. She wanted to use negative confirmation request. Which conditions need to be met to use negative confirmation request as stated above? So tell me, in order to use negative confirmation request, there are certain conditions that should be present. What are they? First of all, that items should be large number of small homogeneous amounts, correct? That is the first condition that should be present. Next condition, the risk of material misstatement in that area should be low, and rate of ex, uh, rate of deviation should also be low. Nothing but low exception rate. Rate means nothing but another name for Romum, you can say. Exception rate means misstatement is only known as exception, right? In the books of accounts, debtor balance is showing as 2 lakh rupees, and in the external confirmation request that you have sent, debtor is saying that he has to pay only 1,90,000 rupees. This situation you will call it as exception. If the confirmation request doesn't match with the amount that is shown in the books of accounts, you will call it as exception. Now the rate of exception that is expected is very low. In such situation, you can use a negative confirmation request. And finally, auditor has nothing to believe that the debtor will disregard his request. If these 4 conditions are present, then auditor can use a negative confirmation request. What is meant by disregard the request? Auditor has sent external confirmation request. Now debtor is not at all caring about that request. Debtor is not at all opening that request, not at all seeing that request, is known as the disregarding the request. So auditor has nothing to believe that debtor will disregard his confirmation request. In such a situation, also auditor can use negative confirmation request. Understanding? Here you need to remember, all these 4 conditions should be present, not any one of the condition. Only if all the 4 conditions are present, you can use a negative confirmation request. Got it? Yes, sir. Another question they are asking. Additionally, CAX is of the view that negative confirmation request provide same level of persuasive audit evidence as in case of positive confirmation. Is that correct? Will negative confirmation request provide same level of persuasive evidence as positive confirmation request? No. Positive confirmation request always provides more persuasive audit evidence. The same thing you have to write down. Got it? Yes, sir. Next, question number 6. During the audit of accounts for the year ended 31st March 2024, auditor of FD Limited wanted confirmation from a trade receivable which was outstanding for more than 6 months, amounting to 4,25,000. The auditor sent a confirmation letter to the party requesting them to respond directly to him whether or not they agree with the amount outstanding from them. Which request this is? This is a positive confirmation request, because you are asking to respond both whether you agree or don't agree. Okay. That trade receivable confirmed to the auditor FD Limited that they were required to pay amount of only 4,20,000. In the confirmation request, you got the confirmation that they have to pay only 4,20,000, but in the books of accounts it is 4,25,000. You will call this situation as exception, right? To FD Limited as per their books of accounts. State and explain the type of confirmation request sent by the auditor, positive confirmation request, and course of action that he should take on confirmation received from the trade receivable. Here exception is identified. Once the exception is identified, you have to check. So in the books of accounts it is 4,25,000, but in the confirmation request received it is 4,20,000. Now auditor has to further investigate which one is correct. Amount shown in books of accounts is correct, or amount confirmed by the third party, the debtor, is correct. You have to further investigate to identify which amount is correct. Got it? Yes, that is the action that you have to take. So investigate and reconcile the discrepancy. Next, question number 7. CAT, the statutory auditor of a company, is in the process of designing external confirmation requests to be sent to trade receivable outstanding as on 31st March 2024. As a properly designed confirmation requests are essential to ensure the reliability and effectiveness of the audit evidence obtained. Further, well-structured request helps in reducing the risk of misstatement, non-responses, misunderstandings by the recipient. Okay, all this is irrelevant. From here, it is relevant. In this context, explain why designing a proper confirmation request is necessary and discuss key factors an auditor should consider when designing the confirmation request. So, when designing the confirmation request, what are the key factors that you will consider? There are a lot of factors. The risk of material misstatement of that area for which you are asking the confirmation, and the assertion that you are addressing, and whether management is giving permission for that third party to respond, and whether that third party is having the required information in order to respond. You will consider that, and you will also consider the method of communication, mode of communication, how you are communicating, that also you will consider. Correct or not? So like this, lot of factors. See, assertions addressed, identified romum, layout and presentation, prior experience, method of communication, management authorization, ability of the intended confirming party. One more question they asked is, explain why designing proper confirmation request is necessary. See, based on the design of a confirmation request, the response rate will depend. If you design the confirmation request properly, the chance of getting response will increase. If you don't design the confirmation request properly, the chance of getting response will fall down. That you have to mention here. In the answer, it is not there, you can write down. Designing confirmation request properly increases the chance of getting a correct response. That you have to write down. Okay, you can add it in the answer. Okay, yeah. Next, question number 8. CA Pari is conducting the audit of Heavy Limited, a company with a large number of customers, which are generally small retail shop owners. While verifying sundry data, CA Pari assesses the risk of material misstatement as low and internal control is operating effectively. If ROMM is low, internal controls are operating effectively, can you use negative confirmation request? Yes. And they are also saying small amounts, right? Large number of customers with small amounts. So almost all the conditions are getting satisfied. With reference to SA 505, which type of confirmation request is most likely to be used? He will use, of course, negative confirmation request. What are the conditions necessary for using such confirmation request? 4 conditions just now we have seen. Same, that 4 conditions you have to write down. Got it? Yes, sir. Next, question number 9. With respect to SA 505 external confirmation, name the appropriate term that may be used in relation to below statements. So they have given certain definitions. You need to identify the name of that definition. See, audit evidence obtained as a direct written response to the auditor from a third party in paper form or by electronic or other medium. What is this definition? External confirmation, right? Yes. Request that the confirming party respond directly to the auditor indicating whether the confirming party agrees or disagrees with the information in the request or providing the requested information. You call it as positive confirmation request. Request that confirming party responds directly to the auditor only if the confirming party disagrees with the information provided in the request. You will call it as negative confirmation request, because only if he doesn't agree, he has to respond. Failure of a confirming party to respond or fully respond to a positive confirmation request or a confirmation request written undelivered. Failure to respond is nothing but non-response. Correct or not? Yes. Next, you can add it as E. A response that indicates a difference between information requested to be confirmed or contained in the entity's record and the information provided by the confirming party. I told you this definition, nothing but exception. Correct or not? So these are the 5 definitions. Next, question number 10. XYZ Limited is engaged in manufacturing activities as at 31st March 2025. The trade receivable balance amounted to 8 crores. The statutory auditor selected 25 customer balances for external confirmation in accordance with the applicable standards on auditing relating to external confirmation. The results of confirmation procedure were as follows. First, 15 customers responded directly to the auditor indicating agreement with the information requested. So you have requested the information, that third party has agreed with that information. In this situation, what you will do? No action from the side of auditor. Since they have agreed the balance, that's it. You got the proper audit evidence, you will keep that audit evidence. No action from the side of auditor, right? Yes. Next, 3 responses were received directly to the auditor indicating disagreement with the information provided in the request. These parties were supposed to respond only if they disagrees with the information provided in the request. Nothing but exception is identified. Correct or not? It seems in the books of accounts one amount is there and parties have told that they have to pay some other amount. Understanding? So this situation is nothing but a exception here. Which confirmation request has been sent? By reading this you will understand. These parties were supposed to respond only if they disagree with the information. That means this confirmation request is a negative confirmation request. Now if the exception is identified, what the auditor has to do? He has to further investigate the situation and identify which one is misstatement, whether amount shown in the books of accounts is misstatement or amount confirmed by the third party is misstatement, or both are misstatements, both are wrong amounts. That is also possible. Correct or not? Yes. Next, 5 customers did not respond despite follow up requests. So you will call this as, you will categorize this as, see, basically the thing is, all the responses that you get, you will categorize them for the purpose of evaluation. You will categorize them. What is this evaluation? See, external confirmation procedure is of two types, two parts. First one is sending the request. This is the first part. By sending the request, external confirmation procedure will not get completed. Once you send the request, you will get back the reply, right? You will get back the response. You need to evaluate those responses also. So evaluation of responses is also part of external confirmation procedure only. Got it? So as part of evaluation of response, you will bifurcate the responses into 4 categories. That only we are seeing now. Okay. So this is non-response. If you have not received any response even after sending follow-up request, then what you will do? You will try to obtain audit evidence by performing alternate audit procedures. Correct or not? Yes. 2 customers responded stating that balances as per their records were lower than those mentioned in the confirmation request. Again, exception. So if exception identified, what you will do? You will investigate it further to identify which one is misstatement. Now they are asking, in the light of above relevant standard on auditing, explain how the auditor should evaluate the above responses. I have already told you how you will evaluate each of the situation, and state whether further audit procedures are required. Yes, in this particular situation, further audit procedures are required, whereas in first situation further audit procedure not required, right? So the same thing you will explain in your answer. So the 4 categories, the responses may be categorized as follows: response by appropriate party confirming the amount, here no action by you; response deemed unreliable; non-response; response indicating exception. Got it? Yes sir. So those are question answers from SA 505, external confirmation. Now we'll start discussion of question and answers related to SA 510. SA 510 is about initial audit engagement, right? Opening balances, initial audit engagement. What is meant by initial audit engagement? In 2 situations, you will call an audit engagement as initial audit engagement. If previous year financials are not at all audited, or previous year financials are audited by some other predecessor auditor. In those two situations, you will call the current year audit of such entity as initial audit engagement, right? Yeah. So question number 1, Messrs. PQR and Associates are the statutory auditors of TUV Limited for the financial year 22-23. They have been appointed as statutory auditors of TUV Limited for the first time. What is the objective of engagement partner in terms of SA 510? So, with respect to, as per SA 510, with respect to opening balances, what is the objective of auditor? Tell me. First objective, to ensure that there are no material misstatements in the opening balances, to obtain audit evidence about that. Next, to obtain audit evidence that accounting policies that are reflected in opening balances have been consistently followed, right? These two are the objectives as per SA 510. So same objectives you will write as per SA 510 in conducting initial audit engagement. Objective of auditor is to obtain sufficient appropriate audit evidence about whether opening balances contain any misstatements and whether appropriate accounting policies are reflected in the opening balances and they have been consistently applied in the current period financial statements also. So should you consistently apply accounting policies? Yes, you have to consistently apply the same accounting policies that have been followed in the previous year. If you want, can you change the accounting policy? Yes, you can change the accounting policy, but whenever you change the accounting policy, accounting treatment should be properly done in the books of accounts. That's what you have to check. So if at all there are any changes to the accounting policy, then properly accounted for and adequately presented and disclosed in the financial statements or not, that has to be checked by you. Got it? Yes sir. Next, question number 2. In an initial audit engagement, in the case of inventories, current period audit procedures on closing inventory balance provide little audit evidence regarding inventory on hand at the beginning of the period. They are saying that performing physical verification, performing audit procedures on closing balance of inventory will provide you certain evidences with respect to opening balances. That's what they are saying. Is it possible? Yes, it is possible. How? So this is closing balance of inventory and this is opening balance of inventory, right? Now how will you verify closing balance of inventory? You will physically verify closing balance of inventory, and you will also perform audit procedures on purchases, right? Purchases made during the period and sales, correct or not? You will perform audit procedures. Now by performing audit procedures on these current period items, will you get audit evidence about opening balance? Yes, of course. How? For closing balance of inventory, if you reduce purchases, purchases has to be reduced. Less purchases, add sales to the closing balance, then you will arrive at the opening balance of inventory, correct or not? Yes. So by doing audit procedures on a current period, you will get certain evidence about the opening balance. That's what they are saying. That is true only. Now with respect to that, what they are asking, therefore in such a case additional audit procedures become necessary so that auditor may obtain sufficient appropriate audit evidence. Discuss those additional audit procedures. So in this scenario, what additional audit procedures you will perform on inventory? See, you will observe current physical inventory counting. Yes, this is a common audit procedure only. Perform audit procedures on valuation of opening inventory items. You will see how opening inventory items have been valued, have they been overvalued, which method they are following, FIFO or LIFO, right? Weighted average, various methods are there. Now you will check that which method they are following, how the valuation of opening inventory has been done. And performing audit procedures on gross profit and cutoff. Cutoff means sales of current financial year should be recorded only in the current financial year. Previous year sales should not be recorded in the current years, and next year sales should not be recorded in the current year financial statements. Same with respect to purchase also. You will call it as a cutoff assertion, right? So you will also perform uh, audit procedures to obtain evidence with respect to cutoff assertion. These are certain additional audit procedures that you will perform. Next, question number 3. Raghav Mehra and co chartered accountants were appointed as statutory auditors of Jeep Manufacturing Limited for the financial year 24-25. The company is engaged in large scale production of automobile components and maintains significant opening balances relating to inventory, trade receivables, and fixed assets. The financial statements for previous year, that is 23-24, were audited by another firm, SK Verma and Associates, who had issued an unmodified audit opinion. During the audit, CA Raghav Mehra decided not to perform any audit procedures on the opening balances. He was of the view that since the previous year financial statements had already been audited by qualified auditor, reliance could be placed on the same and no further verification was necessary. See, you can rely on the predecessor auditor's work, but you cannot completely rely on his work only with respect to opening balances. You yourself also should perform certain audit procedures. You cannot completely rely on the predecessor auditor's report or predecessor auditor's procedures for the purpose of opening balances. So here in the given situation, the approach of CA Raghav Mehra is not proper, right? Yes. Now the audit manager expressed concern that such an approach may not be in accordance with the standards on auditing. Yes, concern raised by audit manager is correct only. In the light of above facts, examine whether approach of CA Raghav Mehra is correct. No, it's not correct. State the audit procedures that should be performed regarding opening balances in such cases. So what audit procedures you will perform? If previous year financial statements have been audited, you will once peruse those audited financial statements. Peruse means nothing but you will read those audited financial statements. Next, you will also check whether there are any misstatements in the opening balances. Have they been correctly brought forward as the opening balances? The closing balances of a previous year, have they been correctly brought forward as the opening balances for the current year? That also you will check, correct or not. Still there are some more audit procedures that you will perform, like you will check whether accounting policies that have been followed in the opening balances, are they appropriate or not? Appropriate accounting policies have been followed or not, right? So see, determine whether prior period closing balances have been correctly brought forward to the current period or not, and determine whether opening balances reflect appropriate accounting policies. And where prior year financials were audited, peruse the copies of audited financial statements. Evaluate whether audit procedures performed in current period provide any evidence relevant to the opening balances. I already told you, with respect to current assets and current liabilities, audit procedures that you perform on current period transactions will provide you certain evidence about the opening balances. Like how? For example, debtors on 31st March 2027, Mr. A is a debtor. His balance is showing as 2 lakh rupees, right? Now this is the opening closing balance of previous year, which will be brought forward to the current year as a opening balance, correct? Now consider this as a opening balance as on 1st April 2027. Now audit procedures that you perform on current period transactions, they will provide evidence about the opening balances. How? Now let's say Mr. A has paid the amount on some 25th of April 2027. he has paid 2 lakh rupees. Now, this transaction of receiving 2 lakh rupees from Mr. A on 25th April, is it a current period transaction? Yes. Now, will you verify this current period transaction? Yes. Now, while verifying this current year transaction, you will get audit evidence about existence of Mr. A as on 31st March 2027, because only if Mr. A is a debtor on 31st March 2027, he will pay you the amount on 25th April 2027 as a 2 lakh rupees. Otherwise, why will he pay you? Correct or not? So, receipt of payment on 25th April 2027 proves that Mr. A is debtor as on 31st March 2027 for rupees 2 lakh rupees. That's the reason why he has paid the amount to you. Otherwise, he will not pay. Correct or not? Yes, sir. So, like that, some of the audit procedures performed on current period might provide evidence relevant to the opening balances, and some other specific audit procedures also you will perform. Got it? Yes, sir. Next, question number 4. FZH Limited has appointed you as auditor for the financial year 24-25. The company had a different auditor in the previous year. While planning the audit, you note that opening balances include significant inventory and receivable amounts. Manager informs you that accounting policies are generally consistent, but the prior year auditor's report contained qualification relating to valuation of receivables. As a statutory auditor of company, you need to obtain sufficient appropriate audit evidence regarding the opening balances. Yes. Now explain the matters that will influence the nature and extent of audit procedures you will consider for verifying the opening balances. So, what factors will be considered by you in deciding the type of audit procedures that you will perform for verifying the opening balances? What factors will influence? First of all, internal controls operating around that item, will it influence? Yes. If internal controls are operating effectively, your audit procedures will be less. If internal controls are not operating effectively, your audit procedures will be more. Correct or not? Similarly, risk of material misstatement also will influence. However, that point is not given here, but that also will influence your audit procedures. Next, nature of opening balance will also influence your audit procedure. Correct or not? Next, accounting policies that have been followed for valuation of the item, that will also influence your audit procedures, right? So these are certain factors that will influence the type of audit procedure that you will perform on the opening balances. So accounting policies followed by the entity, nature of the account balances, class of transaction and disclosures, significance of opening balance, nothing but importance of opening balance. If opening balance is more important, more detailedly, more audit procedures you will perform on that. And whether prior periods financial statements were audited, and if so, whether predecessor auditor's opinion was modified, right? So these are some factors that you will consider in deciding the type of audit procedures that you have to perform on the opening balances, right? Yes, sir. Yes, now we'll start essay 520, analytical procedures. Question number 1. An auditor of company intends to apply analytical procedures for verifying revenue, that means sales. Discuss any two analytical procedures which may be performed by auditor relating to revenues. You can say a lot of analytical procedures, like comparing current year sales of the entity with previous years, is trend analysis, is one type of analytical procedure. Comparing sales of the entity current period sales with the budgets, comparing sales of the entity with other entities in the industry, that is also analytical procedure. Next, plausible relationship between financial and non-financial data. So total number of items sold multiplied by average price. This is also analytical procedure only, correct or not? So all these are some of the examples of our analytical procedures over sales. So same you have to write, comparing revenue of current year with previous year, comparing revenue of current year with budgeted targets. Since they have asked two examples, they given two examples. If they have asked four or five also, you can write all the examples that I told you. Next, question number 2. CA Arrow wants to verify the payments made by XYZ Limited on account of building rent during the financial year 22-23. The rent amounts to 50,000 per month for the year. The monthly rent payments are consistent with the rent agreement. However, other companies in the similar industry are paying rent of 10,000 per month for similar location. How will applying the analytical procedure impact the verification process of such rental payments by XYZ Limited? So XYZ Limited is paying a rent of 50,000. In the rental agreement also it has been written as 50,000 only. Now if you don't perform analytical procedures, you will verify, you will read the rental agreement, and in the rental agreement it is showing 50,000 rupees, and every month rent payment you will verify it is 50,000 rupees, both are matching, so everything is fine, like that you will think. But if you perform analytical procedure and compare the rent that the entity is paying with the rent that other entities are paying for the same type of location, same type of space. Now in the question they are saying that other entities they are paying 10,000 rupees as rent for similar type of space in the same location. Now if you compare rent of entity with other entities, you will get to know that entity is paying more rent. Might be some fraud is going on. Wantedly entity might have entered into a rental agreement with the owner for a higher amount, and it might be paying 50,000 rupees to the owner for booking expenditure in the company's books of accounts, and the director might be taking 40,000 rupees through cash. That might be happening, such a kind of fraud might be happening, correct or not? So performing analytical procedure will help you in this situation to identify excess rent that the entity is paying. This is how you need to explain in your answer. Got it? Yes, sir. So compare rent payment of XYZ Limited with the similar payments made by other companies in the similar industry. However, in the given situation, CARO he did not made such a comparison, only checks the monthly payments and rent agreement. He would not have found such a inconsistency. So if you don't perform analytical procedure, you might not have identified such inconsistency between the rent that the entity is paying and the uh, entity that rent that other entities are paying. That inconsistency you cannot find out. Next, question number 3. Analytical procedure involves analysis of relationship among financial and non-financial data. Yes. Explain with the help of example as to how statutory auditor of ABC Limited will analyze such a relationship with respect to total wages paid by ABC Limited. So with respect to wages, how will you perform analytical procedure? Nothing. You have to compare financial and non-financial data. So for wages, what is the non-financial data? Number of workers. Is this non-financial data? Yes, sir. And what is the financial data? Average wage paid per each worker multiplied by number of days, right? So by calculating this, can you verify the wages? Yes, you will get an amount. You will get amount of wages, and you will see whether this amount of wages that you got, is it matching with the amount that has been shown in the profit and loss statement or not, right? So this is how you will perform analytical procedure for verifying the wages. Same thing you have to explain. So see, total wages is equal to wages per worker multiplied by total number of workers. You can also add multiplied by number of days worked. right? Yes. So that is how you will use analytical procedure with respect to wages. Next question number 4. CAM auditor of company has planned to use a substantive analytical procedure during course of audit. In this regard, he has decided to use such procedure in the following areas: for testing relationship between sales and cost of sales. Tell me, in this area can he use analytical procedure? See, in order to use analytical procedure, there should be a relationship between the items, and you should be able to predict that relationship. Now, between sales and cost of sales, is there a relationship? Yes. If sales increases, cost of sales also increases. Can you predict this relationship? Yes. As sales increase, cost of sales also increase. As sales decrease, cost of sales also decrease. You are able to predict this relationship. So, can you use analytical procedure here? Yes, you can use analytical procedure. You can compare sales and cost of sales. So you have to say there is a predictability, a relationship exists between these two. So analytical procedure can be used. Next, for testing rights over certain assets forming part of account balances. So you need to remember, analytical procedure cannot be applied on all the assertions. Only for certain assertions you can use analytical procedure. So for valuation assertion you can use analytical procedure, because in case of let's say for example that wages, since wages is a P&L item, you will call accuracy assertion, right? Accuracy assertion. And in case of balance sheet item, the same becomes valuation assertion. So for that you can use analytical procedure. Number of workers multiplied by wages, you will get the amount, nothing but valuation or the accuracy. So for valuation assertion or accuracy assertion you can use analytical procedure. But for rights and obligation assertion, that means to check whether entity is having right over that asset, entity is owner of that asset, to check that you cannot use analytical procedure. Similarly, existence, for existence assertion also you cannot use analytical procedure. Getting it? So you need to remember that analytical procedure cannot be used for all the assertions. Now if you see in the point b, they are saying for testing right over certain assets, rights and obligation. For rights and obligation, can you use analytical procedure? No, you cannot use. Same thing you need to say. Using substantive analytical procedure is also affected by nature of assertion. Substantive analytical procedure may be more effective in providing evidence for some assertions like completeness valuation than for others like rights and obligations. So in the current situation, for the second situation you cannot apply analytical procedure. For the first situation you can apply analytical procedure. Got it? Yes sir. Next, question number 5. CS Srishti, while auditing KSM Private Limited for the first time, utilized software to analyze financial data comparing amounts recorded in the financial statements for the current audit year with the preceding 2 years. Her objective was to evaluate risk of material misstatement. Identify the type of audit procedure performed by CS Srishti. What audit procedure she performed? She has performed analytical procedure as risk assessment procedure. Correct? See, analytical procedure can be used as both risk assessment procedure as well as a substantive audit procedure. Correct? Yes. In the given situation, discuss its relevance and explain whether auditor's opinion can solely rely on such procedures. First of all, what is the relevance of performing analytical procedure as risk assessment procedure? You will be able to identify the risk of material misstatements in that particular area. Unusual transactions you will be able to identify. Correct or not? Yes. That you need to explain. By performing analytical procedures as risk assessment procedure, you will identify unusual transactions or risks, you will identify, that you will explain. That is a relevance. And they are also asking whether auditor's opinion can solely rely on such analytical procedures. See, can you just perform analytical procedures as risk assessment procedures and give your opinion Based on this, tell me. Answer is no. After performing risk assessment procedures, based on that risk, you should also perform further audit procedures, FAP, right? These further audit procedures include substantive procedures, test of details, all those things, right? You should perform those further audit procedures also, and based on this you have to provide your opinion, correct? The same thing you need to explain. So risk assessment procedures are basis for identification and assessment of ROMM at the financial statement level and assertion level. However, they do not provide sufficient appropriate audit evidence on which to base the audit opinion, because after performing risk assessment procedures, you will also perform further audit procedures. Based on that, you will obtain audit evidence. So, it can be concluded that auditor's opinion cannot be solely based upon such procedures. Here, the explanation has not been given properly. You can also add that after performing risk assessment procedures based on the risk identified, you will perform further audit procedures also. Based on that, you will give your opinion, but not just based on risk assessment procedures you will give your opinion. Like that you can explain in detail. Got it? Yes. Next, question number 6. CAA is statutory auditor of AB Limited, a company engaged in manufacturing high precision industrial components used in the automobile sector. The company has experienced significant fluctuations in its gross profit ratio and raw material consumption during the current year as compared to the previous years. Okay. During the course of audit, CAA decides to apply substantive analytical procedures to evaluate the reasonableness of purchase prices, consumption levels, and revenue trends. For this purpose, he plans to rely on various data sources such as internally prepared budgets, cost sheets, management reports, and external industry statistics. However, upon preliminary review, CAA observes that budgets appear to be prepared aggressively to achieve performance target. Industry data relates to general manufacturing and not specifically to specialized components. Certain reports are generated from entities' IT systems, but adequacy of controls over such data is unclear. Considering the above, CAA is concerned about whether such data can be relied upon for designing substantive analytical procedures. See, for performing analytical procedure, you need to have data. Understanding? Only if you have data, you can perform analytical procedure. Like for analytical procedure on sales, you require data like number of goods sold, average price. For analytical procedures of wages, you need data like number of workers, average wage paid, correct or not? Only if data is given, you can perform analytical procedure. And if that data given is wrong data, can you rely on that wrong data? No. If the data itself is wrong, the amount that you arrive by performing analytical procedure, that will also will be wrong, correct or not? So in case of analytical procedures, reliability of data is very much important. Understanding? That's what they are saying. Now, in the given context, explain the relevant points CAA should consider while determining reliability of data for purpose of designing substantive analytical procedure. So in order to decide whether the data given by management is it reliable or not, in making the decision, what factors you will consider? First of all, you will consider the source from which the data is obtained, correct or not? Yes. And you will also consider the internal controls operating around preparation of that data, correct or not? If internal controls are working effectively, then you can place more reliance on that data, correct? Next, you will also consider comparability of that particular data. If if the data is more comparable with other data, more relationship exists with other data, then you can rely more on that data, correct or not? So see, source of information, comparability, nature and relevance of information, and controls over preparation of that information, all these things you will consider in deciding reliability of the data. Next, question number 7. Wonder Homes Private Limited owns a commercial building divided into several apartments that are rented out. During the course of audit, the auditor decides to apply substantive analytical procedure to verify rental income instead of performing detailed checking of individual rent agreements. The auditor predicts total rent based on number of apartments, monthly rental rate, and average vacancy rate. Okay, so how will you perform analytical procedure on rent? You will take total number of rooms multiplied by average rent multiplied by occupancy ratio, correct, multiplied by number of days. In this way you will calculate total amount of rental income, correct? Yes. So the same formula they have explained. Now explain how auditors approach in above case represents use of substantive analytical procedure. Nothing but you have to explain this formula. Here there is a non-financial information and there is a financial information. This is also non-financial information. By using a plausible relationship between this non-financial and financial information, you are expecting an amount, and you will compare whether this expectation is matching with the amount that is present in the P&L statement. In the P&L statement, as rental income you will show certain amount. Now whether these two are matching or not, you will check. So this is how you are performing analytical procedure. You will explain this. Understanding? That is the answer to first question. Next, state the circumstances where substantive analytical procedure are more applicable. See, if the transactions are very huge, like number of transactions are there, in such a situation analytical procedure are more useful. Also discuss how analytical procedure can provide persuasive audit evidence in such cases. See, substantive analytical procedure are generally more applicable to large volumes of transactions that tend to be predictable over time. There should be predictability. In this case, since rental income tends to remain consistent and predictable, analytical procedure are particularly useful and efficient. Got it? Yes. So these are question and answers from essay 520 analytical procedures. Now moving to essay 530 audit sampling. Question number 1. An auditor, while conducting audit of an entity, has selected samples based upon his personal experience and knowledge. Later on, it turns out that selected samples were not representative and it has led to faulty selection of samples. The auditor contends that samples were selected based upon his personal experience and knowledge. Can auditor escape from his responsibility in this regard? First of all, which method of sampling has he used? He has used non-statistical, and under non-statistical, judgmental sampling he has used, correct? And later on he is saying that because I have used judgmental sampling, I was not able to identify misstatements. So I don't have any responsibility for the opinion because I have used judgmental sampling. Can he escape from his responsibility stating that he has used judgmental sampling, he has not used proper sampling? By saying that reason, can he escape? The answer is no. Who told him to use judgmental sampling? He would have used statistical sampling only, correct or not? Did auditing standards putting any pressure on auditor saying that you use this sampling only? No. Sample SA 530 doesn't say the auditor to use sampling at all. First of all, if you want to, you can test complete transactions also, correct or not? So auditor cannot escape from his responsibility by saying that he has used so and so sampling method. Understanding? The same thing you have to say. So auditor cannot escape his responsibility in this regard. Next, question number 2. This is examination question, September 24 examination question. You are the statutory auditor of NP Limited. Looking at the huge size of similar transactions, you directed your team members to use statistical sampling. One of the team member, Mr. Q, wants to select samples based upon his personal experience and knowledge, as he is not aware of statistical sampling. You are required to explain, Mr. Q, why use of a statistical sampling method is more scientific and appropriate. Here nothing but you have to explain all the points you know about statistical sampling. In the statistical sampling there will be random selection involved, and there will also be probability theory involved. You need to write that point. And statistical sampling is more scientific when compared to non-statistical sampling, and statistical sampling is widely used because it is of more scientific nature. So all the points that you know you have to write. So random selection will be involved, use of probability theory will be involved, it is more scientific, its application is reasonably wide, nothing but widely used, and no personal bias will be involved. In case of judgmental sampling, non-statistical sampling, personal bias will be involved, but in case of statistical sampling, no bias will be involved. And in large organization with huge transactions, statistical sampling is always recommended as it is unbiased, right? So all the points you know about statistical sampling you have to write down. That will be your answer. Next, question number 3. Auditors cannot normally examine all information available to them, as it would be impracticable to do so, and using audit sampling will produce valid conclusions. Samples should be selected in such a manner that it is representative of the population from which the sample is being selected. Which sample selection method is used in the following two cases? Identify and explain them briefly. So they have given two cases. You need to identify which sampling method has been used. Let us read the case and we'll identify. First one, auditor divided the trade receivables into three groups. First, balances above 20 lakhs, group number 1. Balances between 10 lakh to 20 lakh, group number 2. Balances below 10 lakh, group number 3. Can we say they have stratified the population into groups? Yes, because stratification involves a division of items of populations into groups of items which are of homogeneous in nature. Correct or not? Stratum means what? Sorry, strata means all the items whose characteristics of are of same, they will be grouped into one group, is known as a strata. Correct? Yes. So here they have divided the items into strata, and then he selected different percentages of items from each group. Nothing but they have used stratified random sampling. Here they have applied stratified random sampling. Next, auditor uses a sample of 50 consecutive checks to test whether checks are signed by authorized signatories, rather than picking 50 single checks throughout the year. So 50 consecutive checks, a continuous block of items they have selected. This is nothing but block sampling, right? Yes. So stratified random sampling, block sampling. You need to explain how block sampling will be performed, and you need to apply that to the given situation and conclude that they have used block sampling. Similarly, with respect to stratified random sampling also, you have to first of all explain what is stratified random sampling and how it is applied in the current situation, and conclude that it is a stratified random sampling. Got it? Yes. Next, question number 4. Measures KLM and Co Chartered Accountants, a partnership firm, while designing test of controls and test of details in Yemen Limited, has to determine the items for testing that can be effective in meeting the purpose of audit procedures. So they have to determine the items for testing. For this, they decided to select specific items from the population. State the factors that can be considered by audit firm for selecting specific items from population, and also state specific items that can be included for such testing. Basically, this question, it is related to SA 500. This concept is discussed in SA 500, but this concept is related to sampling. That's why I have put this question in SA 530 instead of putting it in SA 500. First of all, for selection of items on which you have to perform audit procedures, there are three options. You can perform audit procedures on 100% of population. That is the first option. Second option is you can select sampling of items, right? By taking some items, on that some items you can perform audit procedures. Third option is selecting specific items on which to perform audit procedures. Selecting specific items means, you see, most of the students they will confuse between sampling and selecting specific items. In case of sampling, you will use that methods, you don't know which item will get selected into the sample, that is sampling. Whereas selecting specific items means auditor specifically wanted to select a particular item. Like for example, all the debtors, their value is 1 lakh 2 lakhs, like below 5 lakhs only all the debtors value is there, but there is one particular debtor whose value is 5 crore. Now since that debtor value is 5 crore, auditor specifically wanted to select that item. Understanding, this is known as specific selection of items for performing audit procedure. Understanding? Yes. So that's what they are asking. For specific selection of items, what factors you will consider? Simple: risk of material misstatement. If the ROMM of a particular area, if ROMM of a particular item is very high, you can select that item into, uh, you can select that item and perform audit procedures on that item. Correct or not? So you are considering one of the factor, ROMM of the item. So assessed risk of material misstatement. Next, auditors understanding of the entity and characteristics of population. So based on these three factors, you will select specific items. Now what can be those specific items? Auditor can decide that all the high value items I will select, like debtor 5 crore rupees, I given an example, that example you can take for this. Next, auditor can decide that all items over certain amount I will select and I will perform audit procedures. All amounts over certain items, over certain value means, like auditor can say that all the items whose value is more than 10 lakhs, I will select them and I will perform audit procedures. Okay. Next, items to obtain information. There might be certain items in the population about which auditor specifically wanted to gather certain information. In such a situation, auditor will specifically select that item. Got it? Yes, sir. Next, question number 5. CA Shubham, auditor of Sigma Limited, is performing test of controls and test of details using audit sampling. During these procedures, he observed deviations in compliance with management's prescribed procedures for sale transaction of small values of a product at one location during test of controls. So while performing test of controls, he has observed certain deviation. Okay. Additionally, misstatements were identified in the sample related to these small value sale transaction during test of details. How should he proceed to analyze the nature and cause of deviations and misstatements observed in the sample results? So whatever the deviations, whatever the misstatements that you have identified in the sample, that deviations, that misstatements should be evaluated. Correct or not? So how will you evaluate those misstatements and deviations? There are certain points you need to consider. You need to see whether there are any similar characteristics for these misstatements. So auditor has identified 5 misstatements in the sample. Now auditor will check what are the characteristics of these 5 misstatements. Let's say he has taken sample of sales, and in that sample of sales he has identified 5 misstatements. Now the characteristic of these 5 misstatements is such that all these 5 misstatements are found in the sales made to Mr. A. The characteristic of these misstatements is such that all that sales are made to Mr. A only. In such a situation, what the auditor will do? Auditor will go to the population and he will verify all the sales made to Mr. A. Correct or not? So like this, in the evaluation of misstatements identified in the sample, auditor needs to consider the characteristic of that particular misstatements. Got it? Yes, sir. So first one is that only. In analyzing the deviations and misstatements identified, auditor may observe that many have a common features, common characteristics. In such circumstance, auditor may decide to identify all items in the population that possess the common feature and extend audit procedure to those items. Auditor shall investigate nature and cause of deviations or misstatements. So you should also same point only. What is the nature of misstatement? What is the cause of this misstatement? Why this misstatement has occurred? And there is one more point. Auditor need to determine whether this misstatement is anomaly. Anomaly means, so in the sample, in the selected sample, auditor identified 5 misstatements. Okay. Now, of these 5 misstatements, there is one misstatement, which is anomaly. That means, anomaly means this misstatement is found only in the sample. Auditor is sure that in the population this kind of misstatement will not at all be there. Understanding? That is known as anomaly. Anomaly means rare misstatement which you have found only in the sample. You will not see that kind of misstatement in the entire population. Anywhere you will not see. Then you will call such a misstatement as anomaly. Now, whenever you found any anomaly, auditor needs to gather evidence to get confidence that for sure this is anomaly only. Got it? Yes, sir. So, in the extremely rare circumstances when auditor considers a misstatement or deviation discovered in a sample to be anomaly, auditor shall perform audit procedure to obtain high degree of certainty that it is not representative of population. He needs to obtain audit evidence that for sure this is anomaly only. Got it? Yes, sir. Next question number 6. During the audit of a company, CSZ is using a software to select samples pertaining to sales records of a company. While performing this process, a window opens in software prompting the user to enter certain information. CSZ is in the process of entering information in this regard as given below. So let us see what are the items that have been asked in that window that has been popped up. Selection interval, it seems they have given question mark. Interval, selection interval, in which sampling it will be there? In interval sampling. You can call it as either interval sampling or systematic sampling. Correct? Yes. So here in the given situation, the auditor is applying systematic sampling or interval sampling. Number of records that needs to be selected is 100. Nothing but this is the sample size. And starting record number to be selected is 1. Ending record number to select is 1000. Nothing but population. Total population size is 1000. File name is sales. Now here, how will you identify the sampling interval? Formula for interval is total population divided by sample size. Correct? In our situation, population size is 1000 multiplied by 100 is the sample size. You will get interval, sampling interval as 10. That means every 10th item you will select. Now, going through the above fields, which method of sampling is likely being used in the software? Interval sampling or systematic sampling they are using. Discuss which foremost consideration should be kept in mind by auditor for selecting samples in such manner. So whenever you are using systematic sampling, you have to keep in mind that the items in the population, the way in which the items have been kept in the population, there should not be any repetitive nature. They should not show any repetitive nature. Like for example, sales they are saying na, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like this till 1000 sales transactions are there. Now here the trend or the characteristic of this sale is such that every 10th sale transaction that has been made belongs to Mr. A. Similarly, after 10th it becomes 20, right? This also belongs to Mr. A. Like this, every 10th sale transaction is made to Mr. A only. In this situation, if you use interval sampling, what happens? You will select only all the sales made to Mr. A. You are ignoring sales made to remaining people, correct or not? So if population is having this kind of characteristics, you should avoid using interval sampling. That point you need to explain. Okay, so which foremost consideration should be kept in mind by auditor for selecting sampling in such manner means, this consideration you need to keep in mind. Next, additionally, partner of CSZ suggested him to select first 200 sale invoices from the sales book of the last month. Which method sampling he is suggesting? Block selection, block sampling he is suggesting, right? First 200 contiguous items, if you select, it becomes block sampling, right? So contiguous items is block sampling. Next, question number 7. Sanjeev, an articled clerk, is in an audit firm, is a part of engagement team conducting audit of a company for the year 23-24. It is a small company having turnover of about 25 crore. During the course of audit, he notices that a senior team member has taken following approach for selecting items for testing reflected in the financial statements to obtain audit evidence. He has selected to test items debited under the head machinery repair and maintenance, as expenditure relating to it during the year 23-24 has increased considerably as compared to last year. So he wanted to select this particular expenditure, so specific item he is selecting. Next, out of purchases, he has selected to test purchases from related parties amounting to 5 crore. Here also specific items he is selecting. Is he applying sampling here? No, he is not using sampling technique. Instead, he is selecting specific items. Understanding? He has also selected to test all individual items of expenditure exceeding 5 lakhs, again specific items. Besides, he has also selected amount of 0.5 lakh debited under head legal expenses to know purpose of payment made to external legal counsel. He wanted to obtain certain information about a particular expenditure, so he has specifically selected that expenditure. Here also he is selecting specific items. Now Sanjeev understands that senior team member is using audit sampling. Is he using audit sampling? No, he is not using audit sampling. See, from these three, he is not using audit sampling in the given situation. He is selecting specific items. Okay, audit sampling for selecting items for testing. Do you agree with him? No, you will not agree with Sanjeev. Sanjeev is saying that all these they come under sampling, but they are not, they don't come under sampling, they come under selecting of specific items. Which risk is involved in above approach? Since this is not a sample, sampling risk is not involved, non-sampling risk will be involved in above, correct or not? Yes, discuss with the reasons. So you will say that non-sampling risk will be involved, and you will explain how specific items can be selected. Got it? Yes sir. Next, question number 8. Verma and Kapoor chartered accountants were appointed as the statutory auditors of More Components Limited for the financial year 24-25. The company is engaged in manufacturing automobile spare parts and has a large number of sale transactions during the year. While planning the audit of a trade receivable amounting to 48 crore, engagement partner decided to perform test of details using audit sampling in accordance with SA 530 audit sampling. The audit team observed that population of receivables consisted of a few large balances and a large number of small balances. So few large balances and a large number of small balances are there. Further, engagement partner emphasized that sufficient assurance must be obtained that material misstatement in receivable is not overlooked. Accordingly, audit team discussed certain factors that would influence the sample size to be selected for test of details. With reference to SA 530 audit sampling, explain briefly the following factors that the auditor may consider while determining the sample size and test of details. Desired level of assurance. See, they are asking how desired level of assurance will impact the sample size. If auditor wants to obtain more assurance, then will he select more items into sample? Yes. If auditor wants to obtain less assurance, he will select less items into the sample. That's what you have to say. More assurance, more sample size; less assurance, less sample size. Next, stratification of a population. How stratification of a population will impact the sample size? If stratification is done properly, then less sample size you will select. If a stratification is not done properly, then more sample size you have to select. Same thing you have to write down. Got it? Yes. That is question and answers of SA 530 audit sampling. Now we'll see question and answers of SA 230, final standard of this particular chapter, right? Audit documentation. Question number 1. An important factor in determining the form, content, and the extent of audit documentation of significant matters is the extent of professional judgment exercised in performing the work and evaluating the results. See, what they are saying is in deciding in which form audit documentation has to be maintained and what should be the content of audit documentation and how much amount of audit documentation has to be maintained with respect to significant matters. Significant matters means certain important matters. So this will be impacted by the professional judgment that has been exercised by the auditor in performing that particular work. Now explain stating clearly examples of significant matters. So now they are asking you to give certain examples of significant matters. Significant matters means nothing but certain important factors, certain important matters during the audit. So some of the examples include any matters that give rise to significant risks will be treated as important matters, significant matters. In SA 315, we have seen significant risks, risk of fraud, transactions with related parties, transactions which are outside the normal course of business. Like this, certain 6 significant risks we have seen. So any matter that gives rise to the significant risks, you can treat it as a significant matter. Or another example, results of audit procedures which indicate that financial statements could be materially misstated. So because of performing any audit procedure, you have identified that because of that reason a material misstatement can be there in the financial statement, then that matter also can be treated as significant matter. And a need to revise the auditor's previous assessment of ROMM and auditor's responses to those risks. Next, circumstances that cause the auditor significant difficulty in applying necessary audit procedures. So, while applying audit procedures, while performing audit procedures, you have faced certain significant difficulties in performing those audit procedures. That matter also can be treated as a significant matter. Findings that could result in modification, because of any particular finding you have to modify your audit opinion, that finding also can be treated as a significant matter. So all these are some of the examples. Okay. Now an important factor in determining the form, content, and extent of audit documentation with respect to significant matter is the extent of PJ exercised. So this point it has been given in question itself, you have just copy pasted it. And documentation of professional judgments made where significant serves to explain the auditor's conclusion and to reinforce the quality of judgment. So professional judgment exercised by the auditor should also be documented. What is the use of documenting the professional judgment? It will help in future if someone is reviewing the audit documentation, that person who is reviewing the audit documentation, he will be able to understand the professional judgment made by the made by the auditor, and under what circumstances he has made that professional judgment, and quality of that judgment can be reviewed later on if you properly document the professional judgment. Such matters are of particular interest to those responsible for reviewing the audit documentation. I told you na, even in future when you review the audit documentation, at the time of that review, the documentation related to professional judgment will help that person who is reviewing to decide how the auditor has exercised the PJ and the quality of his judgment. All these things can be understood. Okay, see here in this answer, writing these examples is important, remaining these points are unnecessary. Okay, in the question they have asked the examples of certain significant matters. Okay, yes sir. Next question number 2. CAN, statutory auditor of Rock Limited, is in the process of final assembly of audit file. Under what circumstances statutory auditor can make changes to audit documentation during final assembly process of audit file? Give few examples of such changes. See, generally at the time of assembly of the audit file, you should not make any changes to that audit file, but certain administrative changes can be made to the audit file. So administrative, if the change is in the nature of administrative change, it can be made. What are the examples for certain administrative changes? Deletion of superseded documents, that means there will be second copy, third copy of documents that can be deleted, that change can be made, it is treated as administrative change. Sorting of documents, sorting means nothing but collating the documents and cross referencing is known as sorting of the documents. Next, signing of completion memorandum, or completion checklist, you can call signing of completion checklist or completion memorandum. See, completion checklist is nothing but once the audit documentation, audit file is finalized, there will be a checklist. In that checklist it will be written what documents should be kept in the audit file. So once a complete audit file has been kept, finalized, you will cross check whether this particular document is kept, whether this particular document is kept, like that with the checklist you will cross check. So signing of that checklist can be done at the end, understanding. Next, documenting audit evidence that auditor has obtained, discussed and agreed with the relevant members of engagement team before the date of auditor's report. So before the date of audit report only, you have collected a particular audit document or audit evidence, and you have discussed it with all your team members, but you have not taken that evidence from the management, that was with the management itself. Okay, now after completing the audit, you can take that evidence and keep it in your audit file. That will not be treated as a new evidence, because that evidence has already been discussed previously and you have verified it, understanding. That will also be treated as a administrative change. Got it? So these are certain examples for administrative changes. Next, question number 3. CA Tanuj, auditor of Kiran Limited, completed the audit work and issued auditor's report on 18th of August 2024 for the financial year ended 31st March 2024. During the final assembly of audit file, he discarded some supporting schedules as the same were outdated and corrected cross-referencing errors of working papers. Discarded means deleted. Since some of the documents were outdated, those documents have been deleted, it seems. And also certain cross referencing was made in the assembly process while final assembly of the audit file. No new audit conclusion were drawn and the final audit file was assembled on 10th October 2024. Here if you see, final audit file, it was assembled on 10th October. What is the time limit for assembly of audit file? It is 60 days from date of audit report, right? Here, what is the date of audit report? 18th August. From 18th August to 60 days means 18th November, 18th October. So 10th October. It is within 60 days only. So auditor has finalized the audit file within the time limit only, and these changes will be treated as administrative changes. So everything is proper only. On the basis of standards on auditing regarding audit documentation, comment on the action taken by CA Tanuj. Action taken by CA Tanuj is proper. There is nothing wrong. Changes may however be made to the audit documentation during the final assembly process if they are administrative nature, and audit file should be completed on a timely basis, generally within 60 days. This 60 days time limit has been given by SQC 1. Got it? Yes, sir. Next, question number 4. CAB, an auditor, after the completion of a busy audit season, was occupied in assembling of final audit files of one of his client. First of all, he started preparing various documents of that client and then kept those documents in various folders. He was preparing documents as well as audit file in paper form because he believed that it is mandatory. Is it mandatory to prepare audit documentation in paper form? No, you can prepare audit documentation electronically also. So his thinking is wrong. He could complete documentation as well as assembling of final audit file of that client after 3 months from the date of audit report. Is it within the time limit? No, the time limit is within 60 days. So he has exceeded the time limit. Generally, he retains audit file of the clients for 4 years, it seems. For how many years you should retain the audit file? For 7 years you have to retain. So everything he is doing wrongly from the date of audit report. Check the validity of action of CAB. All the actions are wrong. You need to suggest what are the correct actions. Got it? Yes, sir. So 7 years and 60 days, and it can be in other storage media also, right? Next, question number 5. Messrs. PK and Company Chartered Accountants or the statutory auditors of JC Limited, CA Tarun, partner of Messrs. PK and Company, was entrusted to supervise and verify the inventory items on 31st March 2024. During the process of verification, a large chunk of draft inventory sheets were accumulated and then a final inventory sheet was prepared. The audit assistant has kept all these drafts and final inventory sheet in the audit file. Is it necessary to keep all the draft versions also in the audit file? Not necessary. It is sufficient if you just keep the final version. Is the approach of audit assistant correct? No, his approach is not correct. Which papers or documents may not be included in the audit documentation? So, what papers need not be included in the audit documentation? Superseded documents, duplicate documents, and also documents that reflect a preliminary thinking, and any documents which are having a typographical errors which has been corrected later on. All those documents need not be kept as a part of audit documentation. All of those documents can be deleted. Got it? Yes, sir. Next, question number 6. CAPQ has prepared audit documentation of an entity describing the nature, timing, and extent of audit procedures performed during the course of audit. In documenting nature, timing, and extent of audit procedures performed, which matters shall be recorded. He is also of the view that such documentation alone as described above meets the requirement of standards on auditing. Comment upon validity of his views. First of all, while documenting, what matters has to be documented. See, with respect to each and every audit procedure that you have performed, you need to document characteristics of specific items or matters that have been tested. You need to document that. And who has performed this audit procedure? You need to document that, who performed the audit work and date on which such work was completed. After doing the work, some other person will review that work. So who reviewed the work and the date on which such a review was completed? All these things needs to be documented. Okay, now documenting just the characteristics and these things, is it sufficient? No. As per SA 230, auditor has to maintain the documentation in such a manner that an informed reasonable third party who is not having any knowledge about this particular audit, if such a third party looks at the audit documentation maintained by the auditor for this audit engagement, he should be able to understand the nature, timing, extent of audit procedures performed, and also the results of auditor procedures and the conclusions reached. All these things should be understood by a reasonable third party. See, this is the auditor who is doing audit of this particular company. Okay, he is doing audit of this company. Now there is a outside auditor, another person, another chartered accountant, who is not having any knowledge about this particular audit. Sorry, there was a power cut. So now the third person, another auditor who is not having any knowledge of this particular audit, by seeing the documentation which this auditor has maintained, by seeing this documentation, he should understand what audit procedures are performed and what conclusions are reached. These things should be understood. The three things: nature, timing, extent of audit procedures, results of those audit procedures, and the conclusions reached. In such a manner, audit documentation has to be maintained. Okay, yes sir. Next question number 7. During an audit of MNT Limited, CA Shub, the auditor, discovers an issue with stock valuation. To ensure accuracy and reliability of his observations, CA Shub needs to document the audit procedures, evidence collected, and his observations thoroughly. In this situation, how does audit documentation help CA Shub support his findings in audit in accordance with standards on auditing? Nothing but they are asking advantages of audit documentation. How audit documentation helps CA Shub means advantages of audit documentation. See, audit documentation will assist the engagement team to plan and perform the audit. That means the audit documentation of a previous year will help the engagement team of current year to plan their audit. Similarly, the principal, the auditor, he will be handling multiple audits simultaneously. Now, to review the audits and to get an idea of how much work has been completed in each audit, by reviewing the audit documentation, the principal auditor, he can get an idea. So assisting members of engagement team responsible for supervision to direct and supervise the audit work and to discharge their review responsibility. So for the principal auditor to direct, supervise and review the audit work, audit documentation will be useful. And also, with the help of audit documentation, you can fix accountability on the employees for the work that has been done by them. So fixing accountability, retaining record of matters of continuing significance, that is the self-explanatory point, and enabling conduct of quality control reviews. As per SQC1, there will be engagement quality control review. Now for engagement quality control reviewer to review the work, he needs documentation. With the help of documentation, he can review. Next, enabling conduct of external inspections. I told you, peer review board will conduct external inspection, peer review, and National Financial Reporting Authority (NFRA) will also conduct inspections. During such inspections, with the help of audit documentation only, they will review the work. Got it? Yes, sir. Next question number 8. So all those are the advantages of audit documentation. Next question number 8. While auditing books of accounts of a Very Careful Limited for the financial year 2021, a team member of auditors of Very Careful Limited was of the view that with regard to audit of company, No relation exists between audit file and audit documentation. Is it correct? No, audit file and audit documentation are related. In the audit file only you will keep all the audit documents, correct? So both of them are related. Explain the relationship between audit file and audit documentation. You should say that only. Collection of all audit documents with respect to particular engagement, you will call it as a audit file of that engagement, like that you have to explain. Next question number 9. During the course of audit of a company, an issue arose relating to treatment of interest cost of company on its restructured loans taken from a bank. This important matter was discussed with the CFO of the company and was properly resolved. Is it necessary for the auditor to include in its working paper? So, should auditor document this aspect which he has discussed with CFO? Yes, he has to document, because he needs to document all the matters that have been discussed with management and how they were addressed. These things should be documented. Next question number 10. Audit documentation summary may facilitate effective and efficient reviews and inspection of audit documentation, particularly for large and complex audits. Explain. First of all, what is audit documentation summary? Audit documentation summary is nothing but a summary of all the audit documentation, is known as audit documentation summary. See, the auditor may consider it helpful to prepare and retain as part of audit documentation a summary that describes significant matters identified during the audit and how they were addressed. So, significant matters and how those significant matters were addressed, these things will be kept in the audit documentation summary. You can also call it as audit documentation memorandum, both are same. And such a summary may facilitate effective and efficient review and inspection of audit documentation, because all the people might not be having sufficient time to read complete documentation maintained by the auditor. In such a situation, what they will do is they will just go through the summary documentation. Getting it? Yes. Next question number 11. Messrs. BPA and Associate Chartered Accountants was appointed as auditors of Nissan Limited, a company with pan-India presence, for the financial year 23-24. The audit report was issued on August 20, 2024. Okay. Following the issuance of audit report, CAP instructed junior team member Mr. Y to assemble the final audit file and prepare the completion memorandum. Okay. Explain the meaning and significance of completion memorandum. Just now here only we have seen the audit documentation summary. Same point you need to write, because audit documentation summary or completion memorandum both are same. Next, team member Y completed assembly of final audit file in March 2025. Does he completed within the time limit? No, the time limit is 60 days from August 20, 2024, but he has completed in March 2025. So after 60 days he has completed, so he has not completed within the time limit and handed it over to CAP. Was team member Y correct in this approach? No, he is not correct, because he has to complete it within 60 days. Next, question number 12. CA Shilpi, the engagement partner at MN Associates, is assigned the audit of following two companies. Z Limited, a small family run business with straightforward operations, minimal internal controls, and low transaction volume. TED Limited, a large multinational corporation with complex operations, multiple subsidiaries, high transaction volumes. During the audit planning stage, CA Shilpi highlights that form, content, and extent of audit documentation must be customized for each client based on specific factors. Yes, what she is saying is correct only. Discuss those factors on which form, content, and extent of audit documentation depends. This, I guess, we have already seen, right? Size and complexity of the entity. If the size of entity is very huge, more documentation you will maintain. Nature of transactions, nature of transactions that the entity is entering, that will also influence the amount of documentation that you will maintain. Nature of audit procedures and nature of transactions, and also identified ROMM. If ROMM is more documentation you will maintain. Significance of audit evidence. If the audit evidence is very important, more evidence you will gather. Nature and extent of exceptions. Exception means nothing but misstatement. Another name for misstatement is exception, you can say. Next, need to document a conclusion and audit methodology. If you are performing manual procedures, documentation will be in the physical form. If you are performing automated, then less documentation gets generated. Correct or not? Yes. So all these are certain factors that will influence the nature, timing, extent of audit documentation. Next, question number 13. Thakur and Co chartered accountants were conducting an audit of LLP. They have verified the receivables and conducted and concluded that all receivables are genuine and recoverable. However, before the final completion of audit, auditors came to know of severe financial crisis of one of receivables, Mr. Raj Enterprises, whose outstanding account balance was material to overall receivable figure as on date of financial statements. CA Thakur had discussions with the appropriate level of management to address the issue, and management finally agreed to make a provision for the same as suggested by the auditor. You are required to ensure how the auditor can fulfill documentation part of this matter. See, auditor need to document the discussions that are made with the management, significant findings, and how they have been dealt. So discussions of significant matters and how the auditor has addressed those inconsistencies. Mention any four different examples of audit documentation. You can mention as many number of audit documentations as you wanted. Issues memorandum, audit program, uh, audit planning, and letter of confirmation, summary of significant matters, correspondence with external legal counsel. All these things you can give as examples for audit documentation. See, whatever the evidences that you gather during the audit, all that you can keep it as a audit documentation. You can give as example for audit documentation. Okay. Yeah. Next, question number 14. FSY and Co chartered accountants completed the statutory audit of Himmat Limited for the year ended 31st March 2025. The audit partner instructed the audit team to finalize and assemble the audit documentation immediately after signing the auditor's report on 15th September 2025. However, the audit team took this instruction lightly and forgot to assemble the audit documentation. After 6 months, audit team started assembling the file and completed its documentation. So, time limit has been crossed, 60 days has been crossed. When audit partner became aware of this, he called a meeting of staff and discussed policies and procedures for timely completion of audit file, changes to audit documentation, and period of retention of engagement documentation. Period of retention is 7 years. So in your answer, you should mention that only period of retention is 7 years, and audit documentation assembly should be completed within 60 days. Explain various points discussed by audit partner with reference to relevant standards on auditing. Those points only, and examples of certain administrative changes that you can make during the audit that you need to write down. This all these points already we have discussed in previous questions, right? Same answer. Next, question number 15. B Limited B Limited is a listed manufacturing company. The statutory auditor CAP conducted the audit of the financial statements for the year ended 31st March 2025. During the course of audit, CAP and his audit team performed various audit procedures relating to revenue recognition, inventory valuation, and verification of fixed assets. However, while reviewing the audit files, it was observed that working papers prepared by audit team were incomplete and lacked clear documentation explaining the basis for certain conclusions reached by the auditor. A junior member of audit team questioned CAP regarding the purpose and objective of maintaining proper audit documentation and how such documentation supports the auditor's report and compliance with auditing standards. In context of above, explain objective of auditor in preparing audit documentation. So what is the objective of auditor for preparing audit documentation, and describe the nature of audit documentation as per relevant standards on auditing. So what is the objective of maintaining audit documentation? It will act as the record of basis for auditor's report. Whatever the opinion that he has given in the audit report, for that opinion the basis will be the audit documentation. Correct? The evidences will be kept in this audit documentation, and it will also act as evidence that audit was planned and performed as per auditing standards. Nature of audit documentation also same. You have to maintain such amount of audit documentation which will help you to maintain Record evidence of auditors basis for conclusion, same record of basis for auditors report. Both points are same but different terminologies they have used. Next, to prove that audit was planned and performed in accordance with auditing standards, your audit documentation should be able to achieve these two things. Got it? Yes. These are question and answer discussion of essay 230, and by this we have also completed all the question and answer discussion of 7th chapter also, right? Let me open next chapter. Yes guys, now we'll start with discussion of question and answers related to chapter number 8, completion and review. Here we will be discussing question and answers of 4 standards. Firstly, essay 560, essay 570, essay 580, and also essay 265. Standards of all these chapters we will be all these, sorry, question and answers of all these standards will be covering here. Sorry, not essay 265, essay 260. Okay, and weightage of this particular chapter is 7 to 10 marks. So let us start with the discussion of first question. Question number 1. CA Jacob is conducting audit of company for year 21-22. The company is engaged in export of ethnic rugs to buyers in Europe. The audit is nearing completion in month of July 2022. However, it becomes known to the auditor that one of the overseas buyer has made a legal claim against the company on 1st June 2022 for injury caused to customer of one European buyer due to substandard dyes used in the rugs of one lot of order shipped in August 2021. So in August 2021 they have shipped a particular lot of rugs. In that rugs, the colors that have been used are not proper, it seems. Because of that, one of the customer has suffered certain health issue. Now that customer filed a complaint on 1st June 2022. So June 2022. And how much is the amount involved in claim? The management of company has decided to agree to an out of court settlement of 5 crore rupees to protect its reputation. The financial statements of company are silent on this issue. Discuss how CAPK Jacob should proceed to deal with the above issue. First of all, is this an adjusting subsequent event or non-adjusting subsequent event? Identify. Adjusting subsequent event means the subsequent event that provides or that confirms the conditions that are present as on balance sheet date is known as adjusting subsequent event. Here the dyes, nothing but the colors that were used or harmful colors that was happened in August 2021. Management don't know that the customer will file the complaint, but this condition of use of harmful colors is in existent. See, here most of the students they will confuse. You should not see whether that condition before balance sheet date is it known to management or not known. You should not see that. You have to see whether that condition is in existence or not, irrespective of whether it is known or not known. Now use of harmful colors dyes on August 2021, that is not known to management, but that condition is present even though it is not known. Correct or not? Yes. And filing of case on June 2022 and out of court settlement of 5 crore rupees that has happened in June 2022 that confirms the condition that is in existence as on balance sheet date. Okay, so this is a adjusting subsequent event, and auditor should ask the management to provide provision for the same in the financial statements. That should be the action that CAPK Jacob has to take. So he should ask management to make necessary adjustment to the financial statements by providing provision. Right? Yes. Next question number 2. CA Chandini Khanna is going to complete audit of a company within next few days. She has performed necessary audit procedures like inquiry of management personnel, reading minutes of meetings held after the date of financial statements, going through books of accounts after date of financial statements to make sure all subsequent events before signing audit report have been considered by her. So almost all the audit procedures that are required to verify whether all subsequent events have been adjusted or not. All the procedures have been performed by CA Chandini Khanna. Now, still she wants to be certain that no such events have been left out. What she should do in such a situation, also discuss the rationale of doing so. So she has performed almost all the audit procedures to ensure that no adjusting subsequent event has been left out. Even after performing all that subsequent events, she still wanted to obtain more confidence. In this situation, to obtain such more confidence with respect to subsequent events, what she has to do? Can she obtain written representation from management and those charged with governance, asking them to confirm by writing that management and those charged with governance has communicated to the auditor all the subsequent events that are known to them? Can auditor ask the management such a written representation? Yes. Will such a written representation increases the level of confidence of auditor? Yes. So in the given situation, you have to suggest that only. See, she has already performed all the necessary audit procedures. Now she should request management and where appropriate TCWG to provide a written representation in accordance with SA 580. What is the rationale behind that? The rationale of obtaining written representation is that even after performing aforesaid procedures, she may not come to know all subsequent events. Therefore, it is necessary from auditor's point of view to obtain acknowledgement from management in the form of written representation that all such events for which applicable financial reporting framework requires adjustment or disclosures have been adjusted or disclosed. Because the reasoning why you are obtaining written representation is your audit procedures might not be able to identify all the adjusting subsequent events. So what you will do, you will ask the management to provide in writing that all the adjusting subsequent events have been adjusted. Got it? Yes, sir. Next question number 3. As per SA 580, when after the date of auditor's report, but before the date the financial statements are issued. So after the date of auditor's report, but before financial statements issued means subsequent event 3, right? If you remember in the class that timeline I have shown you, subsequent event 1, subsequent event 2, subsequent event 3. Just a second, I'll once show you that timeline again so that yes. So this timeline, So financial statements are issued on 31st March 2024. Approval of financial statements on 15th April. Who will approve? Board of directors. And auditors report is on 30 April, and date of financial statements is on 15th May. Now, as per your accounting standards, all these events will be treated as subsequent events, right? Now, as per auditing standards, this will be considered as subsequent event 1, and events occurring between date of approval of financials and date of auditor's report will be treated as subsequent event 2. And from now it changes. Facts which become known after the date of auditor report but before date financials are issued will be subsequent event 3. Next, facts which are known after financials are issued will be subsequent event 4. For the purpose of auditing standards, all these will be considered as subsequent events. See, this is subsequent event 1, 2, 3, 4 is not given by auditing standards. Just for the purpose of easy understanding, I have given the names as subsequent event 1, 2, 3, and 4, because the entire SA 560 depends on this particular timeline only. Got it? Yes. So here they are speaking about subsequent event 3. That means facts which are known to the auditor after the date of auditor's report but before the date financials are issued to the public. So a fact becomes known to the auditor that had it been known to the auditor at the date of auditor's report, it may have caused the auditor to amend the auditor's report. In this context, what is meant by date the financials are issued? The date financials are issued means nothing but the date on which financials, audited financial statements are issued to the general public, made available to the public, is known as date the financials are issued. So made available to the third parties. Next, can it be later than the date of providing auditor's report to the entity? Now, date of issue of audited financial statements to the public, can this date be after the date of audit report or before the date of audit report? Of course, for sure, financials have to be issued to the public only after the date of auditor's report. So always the date of issue of financials to the public will be on or after the date of audit report, right? You have to mention that same thing. Therefore, date of financial statements are issued can be later than the date of providing auditor's report to the entity. Next, question number 4. CA Rashmi is auditor of ABC Limited for the financial year ending 31st March 2024. The audit report for the year was signed by her on 19th April 2024. On 25th April 2024, company received a communication from central government that incentive amount of 5 crore pertaining to financials year 23-24 was approved. It was paid to the company before the end of April 2024. So on 19th April 2024, auditor has signed the financial statements and the audit report and issued it to the management. Now, on 25th April 2024, company received a communication that a incentive that is due from the government for 5 crore rupees will be received by the company by the end of April. Now the financial statements of company were not yet issued to the shareholders since still the financials, audited financials are not issued to the public. Now the board of directors wished to include the incentive amount in the financial statements and requested the auditor to issue fresh audit report for the year ended 31st March 2024. Now since incentive of 5 crores has been received, if this incentive is included in the current year financial statements, the income of the company will increase, correct or not? And this incentive is a adjusting subsequent event only, right? Now, so management decided to amend the financial statements. In this situation, what the auditor has to do with respect to this? First of all, this comes under SE 3, subsequent event 3, facts which are known after the date of auditor's report, but before financials are issued to the public, right? Now, with respect to subsequent event 3, auditor, he will first of all discuss the matter with management and where appropriate those charged with governance, and he will see whether because of this subsequent event any amendment to financials is required. So determine whether financial statements need any amendment. If financial statements need amendment, he needs to ask the management how you are going to deal with this particular situation. So inquire how management intends to address the matter. If management amends the financial statements and paragraph 12 is applicable, then you need to carry out audit procedure necessary in the circumstances of the amendment, and you need to restrict your audit procedures only to that amendment, because paragraph 12 is applicable. We have discussed about paragraph 12, which is very confusing. It will take around half an hour to discuss paragraph 12, right? A very big paragraph. If paragraph 12 is not applicable, auditor needs to extend the audit procedure till the date of new auditor's report. He cannot restrict his audit procedures only to that amendment, and provide a new auditor's report on the amended financial statements, right? Yes. In the instant case, you need to suggest the auditor same to provide amended audit report with new date of auditor's report, right? Yeah. Next, question number 5. During the audit of Zimzam Limited, CA Arjun, the auditor, shall perform audit procedures designed to obtain sufficient appropriate audit evidence that all events occurring between the date of financial statements and the date the auditors report that require adjustment of or disclosure in financial statements have been identified. With reference to standards on auditing, what specific audit procedures should CA Arjun include in risk assessment to address subsequent events effectively? See, in order to obtain audit evidence about whether management has identified all the subsequent events and disclosed or adjusted them in the financial statements or not, to obtain that audit evidence, what audit procedures auditor has to perform? That is the question that they are asking. Now, first of all, auditor, he needs to understand the procedures that the management is following, procedures that the management has established for identifying all the adjusting subsequent events. Okay, after that, you need to inquire with the management, did you identify any subsequent events by performing the procedures that you have designed? Like that, you will inquire with the management. And auditors should also read minutes of meetings of management, those charged with governance and shareholders. And auditors should also read latest interim latest interim financial statements. Audited financial statements, interim financial statements will be there na? That auditor needs to read. These 4 procedures he needs to perform. Okay, same 4 procedures you will find. Next, question number 6. CAJ is working as internal auditor in JKA Limited, a non-listed company. The responsibilities of internal auditor include reviewing financial information and performing detailed tests on transactions and balances. He is also responsible for compliance with laws and regulations and external requirements. Yes. Now, during the year 22-23, services of an employee of company were terminated. The said employee had filed a suit against the company in respect of certain compensation dues amounting to 10 lakhs, which were not paid to him. Based upon advice of legal counsel, the company had made a provision of 10 lakhs in the financial statements for the year 22-23. However, somewhere in June 23, there is an out of court settlement between company and employee for 6 lakh rupees. So, in the financial statements, company provided a provision of 10 lakhs, but in the month of June, out of court settlement has happened, and in that out of court settlement, company paid 6 lakhs to that particular employee. Now, the statutory audit of company is still under progress and audit report is not yet finalized. So, by the time of this out of court settlement, still the audit is going on. Audit report is not yet finalized. Now, how internal auditors should have proceeded in this situation? Now, tell me, is it a adjusting subsequent event or non-adjusting subsequent event? It is a adjusting subsequent event because company has provided provision also. The condition is existing as on the balance sheet date and it is confirmed by payment of 6 lakh rupees. So 10 crores 10 lakh provision is not required, just 6 lakhs expenditure you provide, that will be sufficient. So this is a adjusting event. Auditor needs to check whether management has properly adjusted the same in the financial statements or not. The same thing you need to write down. So it is an example of event which provide evidence of conditions that existed at the date of financial statements, and it provides evidence of adjustment in provision amount already made in the financial statement. Therefore, internal auditor should ask management to revise provision downwards to 6 lakhs only. Next, question number 7. So, Mindset Appliances Limited, a listed company engaged in manufacturing electrical equipment, closed its books of account for the year ended 31st March 2024. The statutory audit is in progress and the auditor proposes to sign the audit report on 30th June 2025. During the period between 31st March 2025 and 30th June 2025, following events have occurred. See, the question is simple. They have given certain situations and they will ask you to find out whether they are adjusting subsequent events or non-adjusting subsequent events. That's it, simple. See, a major debtor owing 8 crores as on 31st March 2025 was declared insolvent on 15th April 2025. No specific provision has been made against this debtor as at the year end. So, on 31st March, there is a debtor of 8 crore rupees. He has become insolvent on 15th April. Tell me whether this is a adjusting subsequent event or non-adjusting subsequent event. See, you should check whether condition is existing as on 31st March or not. You should not see whether the fact that the condition is in existence, whether it is known to management or not, that you should not see. Okay. Now tell me whether the condition that debtor might become insolvent is it in existence as on 31st March? See, within 15 days he has become insolvent, right? Insolvency will not happen within a short duration of time. It will take years, 3 4 years to happen. So even though the situation is not known to the management, the situation is present, correct? The financial crisis in the debtor is present, but that is not known to the management. Understanding? The important thing is whether the crisis is present or not, not whether that about the fact about that crisis is known to management or not. So as on 31st March, debtor is facing financial difficulties. Understanding? Because of that reason only, within just 15 days he has filed for insolvency. Getting it? So conditions are in existence and these conditions are confirmed on 15th April by filing of IP, insolvency petition. So this is a adjusting subsequent event. Next, a legal case for product liability for which a provision of 3 crores was created as on 31st March 2025 was settled out of court on 10th May 2025 for 1.8 crore rupees. Is this adjusting subsequent event? Yes, it is adjusting subsequent event. Just now in one of the question also we have seen similar kind of point, right? Yes. So this is also adjusting subsequent event. This is also adjusting subsequent event. Next, on 20th May 2025, company issued fresh equity shares through a qualified institutional placement. Is it adjusting subsequent event? No, this is a non-adjusting subsequent event. Issue of equity shares you will recognize in the year in which they have been issued, right? Next, On 25th May 2025, board approved plan to merge with another listed entity subject to regulatory approvals. This is also non-adjusting. Because of this event that is taking place after balance sheet date, you will not make any adjustments in the financial statements. Got it? You will just provide a disclosure. Next, on 5th June 2025, major fire destroyed finished goods inventory worth 6 crore. So, is fire accident existing as on 31st March? No, it is not existing. It has occurred only after 31st March. So, it is a non-adjusting subsequent event. Loss is expected to be fully recovered by insurance. Okay, even though the loss is fully recovered by insurance, it is a non-adjusting subsequent event. No provision is required as on 31st March. Just disclosure is sufficient. Got it? Yes, sir. Got it, sir. Understood, sir. Now they are asking classify the above events into appropriate categories of subsequent events. We have already categorized them. State the auditor's consideration and implication on financial statements. See, auditor consideration is nothing. With respect to adjusting subsequent events, auditor should ask the management to provide a provision adjust in the financial statements. With respect to non-adjusting subsequent events, he will just ask the management to provide disclosure if necessary. Understanding? Conclude whether management statement is appropriate. How did the management treated them? Here it is. The management has not made any adjustment in the financial statements but has disclosed all the above events, it seems. See, with respect to first two events, the treatment of management is not correct. It has to adjust. With respect to next three events, treatment of management is correct. Right? Yes. Next question number 8. XYZ Limited finalized its financial statements for the year ended 31st March 2025. Audit is in progress and auditor is expected to issue the report in July 2025. On 10th April 2025, a major debtor of company was declared insolvent and the company realized that the amount due from the debtor as on 31st March 2025 was not recoverable. In the month of May 2025, management also initiated discussion for possible merger with another company. So, first debtor becoming insolvent is a adjusting subsequent event and possible merger is a non-adjusting subsequent event. Auditors understand that financial statements may be affected by certain events that occur after the date of financial statements. Auditor of XYZ Limited considers that financial reporting framework ordinarily identify two types of events. What are they? Adjusting and non-adjusting. Explain how you would classify and deal with these subsequent events. So you will classify the above events that are there in the question, one as adjusting, another as non-adjusting. You have to write definition of adjusting subsequent event, non-adjusting subsequent event, and how you will deal with the two situations given in the question. Got it? Yes. Next, ninth question, it is same question as that of question number 1. Okay. Yes. So now the question and answers of SA 560 subsequent events is completed. Next, we'll start the discussion of SA 570 related question and answers. SA 570 is going concern. Question number 1. During the course of audit of company, CA Varun Agarwal notices that company is facing significant skilled labor shortages resulting in hampering of operations of company. The company's manufacturing is dependent upon skilled labor coming from villages in certain districts of eastern Uttar Pradesh. However, due to job opportunities available near villages now, many are not interested in going out from their native villages. Such a situation has led to company not being able to keep its commitments, losing out on orders and fall in its revenues. So all these are the events and conditions that may cast significant doubt on the entity's ability to continue as a going concern, right? And fixed costs of the company remain at high level. As a result, company is facing liquidity crunch and is not able to pay its creditors on time. The bankers of a company are also not willing to help the company to tide over liquidity crisis. The auditor is having doubts over going concern status of the company. How should management of company try to address auditors' concerns. What audit procedures may be performed by auditor in such a situation? So, in the company, there are certain events and conditions that are casting significant doubt on the entity's ability to continue as a going concern. Now, the question they are asking is how management should convince the auditor that our company is a going concern. We are not having any threat to the going concern. There is no threat to the going concern. Like this, how management can convince the auditor? So, management, it can prepare its future plan of actions and submit that future plan of actions that it has planned to take up in order to overcome this going concern. You submit that plan to the auditor. That management can do. Next, management can also prepare cash flow forecast for the future. Okay, saying that, see auditor, even though all these conditions are in existence, see our cash flow for the upcoming 12 months. Whatever the money that we receive in the upcoming 12 months, we will be able to pay the liabilities of the upcoming 12 months. Like that, you can prepare cash flow forecast and submit it to the auditor. Got it? Now, when cash flow forecast has been submitted to the auditor, how auditor will check that cash flow forecast? This is very important. With respect to cash flow forecast, auditor has to verify two things. For preparing forecast, management would have used certain data, correct? So auditor has to check reliability of data that is used for preparation of cash flow forecast. And also, cash flow forecast is related to future. Future itself means always assumptions will be involved. So whether appropriate assumptions have been used by the management or not for preparing cash flow forecast, that should also be checked by the auditor. So these are all the points that you need to write in your answer. Got it? See, so significant shortage, all these things, they will create doubt on entity's ability to continue as a going concern. In such a situation, management should try to address auditors' concerns. How? By preparing its future plan of action, and it can also prepare cash flow forecast. Now, how auditor will verify the cash flow forecast? See, first of all, evaluate management's plans for future action. See, management has given that these are our future plan of actions. Auditor, he needs to check feasibility of implementation of those future plan of actions. Can management implement them? Is it possible to implement those plan of actions? That needs to be evaluated. Next, with respect to cash flow forecast, evaluate reliability of underlying data and also adequate support for assumptions, and consider whether any additional information or facts have become available after management has made its assessment, right? So this is how you need to present your answer. These are the points that should be there in your answer. Next, question number 2. Auditor of company is having concerns about following of going concern basis of accounting followed by the management for preparation of financial statements. It asks management to justify preparation of financial statements. However, management is not willing to make its assessment and share with auditor. So manage, first of all, whose responsibility it is to assess entity's ability to continue as a going concern? Is it responsibility of auditor or management? It is the responsibility of management, because management prepares financial statements now. Since management is preparing financial statements, it is responsibility of management only to assess the entity's ability to continue as a going concern. Understanding? Now, what auditor has to do? Auditor has to check whether management has properly made its going concern assessment or not. Got it? Yeah. Now, management, it is not at all willing to make its going concern assessment. In such a situation, what auditor has to do? This comes under reporting. See, under SA 570, this reporting is very much important. I will show you this chart, you remember this properly. So in which situation, which type of opinion has to be given? So audit reporting, if use of going concern assumption is appropriate, that means proper only, but a material uncertainty exists, and that material uncertainty is properly disclosed in the financial statements. In such a situation, auditor will give unmodified opinion with material uncertainty related to going concern paragraph. See, unmodified opinion with material uncertainty related to going concern paragraph. Getting it? So management's use of going concern is proper only, but a material uncertainty exists. What is meant by material uncertainty? Uncertainty means not clear, not 100% sure. There is 50-50 chance, is known as material uncertainty. As of now, use of going concern assessment is proper only, but there is a material uncertainty. In such a situation, management should disclose that material uncertainty in the financial statements. If management has properly disclosed that material uncertainty in the financial statements, then auditor will give unmodified opinion only, but in the material uncertainty related to going concern paragraph, he will explain about that material uncertainty. Understanding? If management has not properly disclosed about material uncertainty, in such a situation, auditor will either qualify or give adverse opinion. Why qualified or adverse opinion? Because here evidence is available. Audit evidence that management has not disclosed the material uncertainty in financial statements is available, and misstatement is material. Based on pervasiveness of misstatement, you will give either qualified or adverse. If misstatements are pervasive, you will give adverse opinion. If misstatements are not pervasive, you will give qualified opinion. Under reporting chapter SA 705, we have discussed these rules. Next, use of going concern basis of accounting is inappropriate. Entity is not a going concern, but management has prepared its financial statements on the assumption that entity is a going concern. You will call such a situation as use of going concern assumption as inappropriate. In such a situation, auditor has to give adverse opinion. Why adverse opinion? Audit evidence is available, and misstatements, if at all, they are material only, and the complete financial statement is misstated. So misstatements are there in many areas, so they are pervasive also, so you will give adverse opinion. Next, management is unwilling to make the assessment. In the question that we are discussing, this point only they have asked. If management is unwilling to make the assessment, what will happen? Auditor will not get any evidence. Correct or not? If evidence is not there, auditor will give either qualified or disclaimer of opinion based on pervasiveness of the matter. So consider implications for audit report. In particular, you will give either qualified or disclaimer of opinion. You remember this particular chart. This is very much important under this SA 570. Got it? Yes, sir. So here auditor will give qualified opinion or disclaimer of opinion. The last part of the chart. Next, question number 3. While conducting audit of BYN Limited, CAY notices that company has lost one of its key markets along with important customers. Additionally, several highly successful competitors have emerged, impacting the business of company. Despite the existence of a material uncertainty, CAY finds the use of going concern based of accounting appropriate for preparation of financial statements. Company has also disclosed material uncertainty in the notes to accounts. First part of the chart adequately. How should he deal with the matter in the auditor's report? Here, since material uncertainty is properly disclosed in the financial statements, auditor will give unmodified opinion, but in the material uncertainty related to going concern paragraph, he will explain about the uncertainty, right? So unmodified opinion with material uncertainty related going concern paragraph. In that paragraph, you will draw attention to the note in the financial statement that discloses the required matter. So in the financial statements, in the notes to accounts, a disclosure is given about material uncertainty. In the audit report, under material uncertainty related to going concern paragraph, you will refer to that disclosure in the financial statements and state that these events or conditions indicate that material uncertainty exists that may cast significant doubt on the entity's ability to continue as a going concern. Like that, you will describe in the material uncertainty related to going concern paragraph. Got it? Yes, sir. Got it, sir. Next, question number 4. During the audit of a company, CA Karthik has noticed that company's turnover has fallen drastically as compared to last 3 years due to loss of its major markets and key customers. The company is in need of funds for a new product development, but bankers are not willing to lend financial support. Which additional audit procedures need to be performed by CA Karthik in accordance with SA 570 when such events or conditions are identified? So, when events or conditions are identified, what audit procedures auditor needs to perform? There are certain 5 audit procedures. First of all, auditor should ask the management, should check whether management has performed its assessment of entity's ability to continue as a going concern. If management has not yet performed its assessment, auditor will ask the management to please perform its assessment of whether entity will be able to continue as a going concern or not. That is the first thing that you will see. Next, auditor will evaluate management's future plan of actions, right? After that, if management has prepared any cash flow forecast, then auditor will check reliability of underlying data of that cash flow forecast and appropriateness of the assumptions used for the cash flow forecast. That also auditor will verify. Next, auditor will check whether any subsequent information or subsequent facts have been identified after entity has made its going concern assessment that might impact the entity's ability to continue as a going concern. Auditor will check that. See, this is nothing but 31st March 2027 financial statement date. Now management has made its going concern assessment on 15th of April 2027. Now, when management is making its going concern assessment, it will be made based on the conditions present as on this date. Understanding, based on the surrounding circumstances as on this date, management will make its assessment. Getting it? Now, auditor has given his audit report on, let's say, 30th of May 2027. Now here auditor should check whether any additional information is available in this period based on which management's assessment of going concern changes. Understanding, that also auditor will see. So see, all the points that I have discussed, you'll find. If management has not made its assessment, request management to make its assessment, evaluate management's plans for future action, and with respect to cash flow forecast, evaluate reliability of underlying data, adequate support, consider whether any additional facts or information have become available since the date on which management has made its assessment, and finally you will also request management to give written representation that management has properly followed going concern assessment. Next, question number 5. Stayfit Private Limited is a startup that has been in business for about 2 years. It runs an application which provides valuable information pertaining to nutrition and helps its clients to to access customized healthy food. The company's revenues are expected to grow in the coming period, although company has reflected net losses in its financial statements for the last 2 years. It has managed to meet its financial commitments. The financial statements for last 2 years were prepared on going concern basis of accounting. The management of the company wants to follow the same basis of accounting for the current year also. Is the view of management appropriate? How does going concern affect the preparation of financial statements? First of all, here in this situation, there are certain conditions that may cast significant doubt on the entity's ability to continue as a going concern. Even after that conditions are in existence, management is able to continue its business in the past 2 years, and it is confident that in the upcoming years also it will be able to continue its business since its revenue will grow. So since management is having confidence, and since the situation is also like that only, correct or not, even though events or conditions are present, management is able to overcome those events. So the management's use of going concern assumption is appropriate only, like that you have to say. After that, they are asking one more question: how does going concern will affect preparation of financial statements? How first of all, why management has to assess the entity's ability to continue as a going concern? What impact it will have on the financial statements? See, if entity is able to continue as a going concern, then the financial statements will be prepared on accrual basis. If entity is not a going concern, financial statements will be prepared on realizable value basis, nothing but a liquidation basis. If you sell the asset now itself, how much you will realize at that value, you will value the assets. So based on going concern assessment only, the way how you will prepare financials will change completely. Understanding? So that is the relevance of a going concern assessment that you need to explain. So that only. When use of going concern basis of accounting is appropriate, assets and liabilities are recorded on the basis that entity will be able to realize its assets and discharge its liabilities in the normal course of business. Otherwise, they will be prepared on liquidation basis. That is the importance of going concern assessment. Next, question number 6. Projects India Limited is engaged in manufacturing and trading of disposable glasses and plates used in social gatherings and functions. XYZ and Co Chartered Accountants is a statutory auditor of PIL for financial year 23-24. Analytical procedures carried out by the audit team headed by CSZ indicate that company's business is going downward and PIL could achieve only 50% of its total revenue of financial year 22-23. Management has not taken any steps to increase the revenue or add new products or customer to stabilize the revenue and profitability. Also, the suppliers are demanding cash payment at the time of purchase of raw material. So all the events are present that may cast significant doubt on the entity's ability to continue as a going concern. Before finalizing the audit report, audit in charge asked for cash flow forecast from the management for the next 12 months from the end date of financial statements. Keeping in view above facts, answer the following questions. What can be likely purpose of CAZ in the above situation? So in the above situation, CSZ is trying to obtain audit evidence about appropriateness of management's use of going concern basis of assessment. CSZ is trying to verify whether this entity will be able to continue as a going concern or not. That is what CSZ is trying to do, correct or not? So obtain sufficient appropriate audit evidence regarding and conclude on the appropriateness of management use of going concern basis. To conclude based on audit evidence obtained whether material uncertainty exists that may material uncertainty related to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern exists and report accordingly. That is the objective of the auditor as per SA 570. That is what the auditor CSZ is trying to achieve in the present situation. Next, state any two audit procedures in relation to cash flow forecast. This point we have seen a lot of times. When management presents a cash flow forecast, what audit procedures you will perform? Two audit procedures. You will check reliability of underlying data and appropriateness of the assumptions that have been used for preparation of cash flow forecast, right? Those two you will write. Reliability of underlying data, adequate support for assumptions. Next, question number 7. Give few examples of operating events or conditions that individually or collectively may cast significant doubt on the entity's ability to continue as a going concern. So, what are certain examples for operating events? See, operating events are those events other than financial events. Like management itself wanted to liquidate the entity is a operating event. Entity is facing certain labor difficulties or required raw material is not available. Sufficient raw material for production of goods is not available. That is also one of the operating event, correct or not? Next, emergence of highly successful competitor. A successful competitor has arrived in the market, just like the situation of Geo in 2016 it has happened, just like that. And company has lost major market share. Company has lost its top management and there is no replacement for it. All these they come under operating events where no financial aspect is involved. Understanding? Yes, sir. Next, question number 8. CAB is statutory auditor of Boom Payments Bank for year 23-24. During the year, banking regulator, nothing but RBI, has imposed restrictions on bank from accepting new deposits due to non-compliance in conducting KYC in large number of accounts and violation of rules aimed at preventing money laundering. There is material uncertainty regarding probable outcome of such restrictions on ability of a bank to continue as a going concern. However, for the year 23-24, auditor has concluded that use of going concern base of accounting is appropriate. The financial statements of a bank do not make adequate disclosure of material uncertainty. So, use of going concern basis is appropriate only, but there exists a material uncertainty. That material uncertainty is not properly disclosed in the financial statements. If it is not properly disclosed in the financial statements, you will give either qualified or adverse opinion, correct or not, due to above events in the financial statements. What are the implications for auditor's report? Simple, you will give either qualified or adverse opinion, right? Qualified opinion or adverse opinion. In the chart that I shown you, first part, under first part, this will come. Next, question number 9. See, if you observe of all the questions, 4 5 questions are related to that chart only, correct? So the chart is very important. AB Limited is facing a temporary decline in sales due to adverse market conditions. However, the management has prepared future cash flow projections showing that the company will be able to continue its operations and discharge its liabilities in the normal course of business. The financial statements have been prepared on the assumption that the entity is going concern. In such a situation, auditor is also required to evaluate the assumption in line with the objectives of SA 570. Explain the concept of going concern. See, you have to write the definition of going concern and its significance. The significance of going concern, what is its significance? If the entity is a going concern, financials will be prepared on realizable value basis. If the entity is not a going concern, financial statements has to be prepared on liquidation basis. Same thing you have to write. Preparation of financial statements, linking it with the objectives of SA 570 regarding the auditor's evaluation of going concern answer. Same those points you need to write. Got it? Yes. So that is question number 9, and we have completed question and answer discussion of SA 570, right? Yes. Now we'll start question and answers of SA 580, written representations. Starting with question number 1. CAR Gurumurthy is about to complete audit of a company. Before completion, he asks management to provide him a written representation confirming that management has fulfilled its responsibilities regarding preparation of financial statements. He also wants management to confirm in writing about providing of all the necessary information and completeness of transactions to him. Management feels that auditor is seeking irrelevant documents near the completion of audit. Why view of management is not proper? What possible implications it may lead to? First of all, can auditor asks can auditor ask management to provide written representation about fulfillment of their responsibility with respect to preparation of financial statements? The answer is yes. As per SA 580, auditor has to obtain, it is mandatory for the auditor to obtain that written representation. Why? Because during the audit, while doing the audit, through the evidences that the auditor obtained during the audit, they will not be sufficient to ensure that management has fulfilled their responsibility of preparation of financial statements and management has submitted all the information that is relevant for his purpose. Through the evidences that he gather, it will not be sufficient for the auditor to uh, get evidence about that aspect until and unless he obtains a written representation directly from the management itself. Understanding? So whatever the information that management has submitted to the auditor during the audit, whether that information is complete or not, to obtain evidence about this, the only option available to the auditor is written representation from the management, because auditor don't know what is the complete information. Might be management still, it might be hiding some of the information. correct or not? So the only evidence for the auditor to ensure that management has given complete information is obtaining written representation from the management. Getting it? Yes. So in the given situation, the view of management is not proper. It has to give the written representation. And if they don't give the written representation, auditor can disclaim the opinion, because he will not be getting audit evidence, and the misstatements also, if at all there are any misstatements, they will also be pervasive. So he will be disclaiming the opinion. That is the implication on the opinion. Next, question number 2. The management of PQ Limited changed during the period under audit. Mr. G, an auditor, at the time of receiving a written representation on the management responsibilities from the management, was in a dilemma related to the date and period covered by the written representation. Further, new management was of the view that they can give written representation from the date they took over and not for the prior period when old management were managing the affairs of company. Guide the auditor and management in this respect. First of all, here they are asking two questions. First one is with respect to date and period covered by written representation. So, what should be the date of written representation? It should be as nearer as possible to the date of audit report, but not after the date of audit report. Okay, that should be the date. With and next, period covered by the written representation. How many years should be covered by the written representation? Written representation should cover all the periods that are referred in the audit report. In the audit report, for how many years you are giving the opinion, for all that periods you have to obtain written representation. Got it? So that is a date and period covered by written representation. Next, with respect to management, it seems the new management were not present for certain duration of the year. They were present only for some duration of the year. Now they are saying that we can give written representation only for the period for which we were present in the entity. For the prior period in which we were not there, we cannot give written representation, like that the management is saying. Now, yes, management can say that we will give the written representation only for the period that we were there, and for the remaining period we cannot give the written representation. That can be said by the management, and auditor can accept the written representation, same written representation, but it will not discharge the management from its responsibility with respect to preparing financial statements for the complete financial year. Even though management is present in the entity only for certain duration of the time during the year, their responsibility to prepare financial statements will not be discharged. Understanding? So this is a complete financial year. For the first 8 months, some old management were there. For next 4 months, new management came. Now the new management is saying that we will give written representation only for these 4 months. For the remaining 8 months we cannot give because we were not there. That is fine, but this will not discharge the responsibility of new management to prepare the financial statements. Getting it? Yes. The same thing you need to write down. So date should be as near as practicable to, but not after the date of auditor's report. And written representation shall be for all the financial statements and periods referred to in the auditor's report. And if current management were not present during all the periods referred to in the auditor's report, such person may assert that they are not in a position to provide some or all of the written representation for that particular period for which they were not there. However, this fact does not diminish such person's responsibility for the financial statements as a whole. So all the points that I told you, you need to write down. Next, question number 3. During the audit of a company, CA Jack obtained written representation from management regarding all known instances of non-compliances with laws and regulation that should be considered in the preparation of financial statements. However, during the audit, he observed that information provided in this regard was incomplete, and the audit evidence indicating such non-compliance contradicted with the written representation, casting doubt on their reliability. How should CA Jack proceed in this situation? So, If auditor gets any doubt on the reliability of audit evidence, in such a situation he needs to check integrity, competence, capability of the management if he is having doubt about reliability of audit evidence. And if he confirms, or if there is a contradiction between audit evidence that you have obtained and the written representation that the management is giving, both are not matching, in such a situation you need to investigate further, you need to perform some more audit procedures and confirm which one is true, which information is correct. Getting it? Yes. So same thing you will write. If written representations are inconsistent with other audit evidence, auditor shall perform some more audit procedures and attempt to resolve the matter. If matter remains unresolved, then he shall consider competence, integrity, and ethical values of the management and shall determine the effect that this may have on the reliability of representation. The entire answer lies in this single line itself. Next question number 4. CA Manoj is the statutory auditor of company. He has completed the audit and issued the audit report dated June 30, 2024. Before signing the audit report, written representation dated June 29, 2024 were obtained. So the date of written representation is before the date of audit report. That's fine. From management of company, discuss the significance of date of written representation. Also state whether written representation obtained on June 29, 2024 is appropriate. Yes, in the given situation, written representation obtained on June 29 is appropriate because its date is before the date of audit report. Next, what is the significance, what is the importance of date of written representation? Why they are saying that the date of written representation should be before the date of audit report only? Because in the audit report, whatever the opinion that you give, that opinion is based on the evidences that you gather, correct? And written representation is also one of the evidence, correct? Now your opinion is based on this written representation also, right? Now if you obtain this written representation after the date of audit report, how it is possible to base your opinion on the written representation, correct or not? So to base your opinion on the written representation, if the written representation should be on or before the date of audit report. Got it? Yes, sir. The same thing you need to explain when they ask you about the significance of date of written representation. Got it? Yes, sir. Next question number 5. The management of Sunshine Limited has provided the auditor with a written representation regarding its responsibility for preparation of financial statements. In addition to this, auditor may request other written representation about the financial statements. Yes, he can request other written representation also, like appropriateness of selection and application of accounting policies and practices, like that. Certain other written representations also he can ask for. Now mention such other written representations which may supplement but do not form part of the written representation relating to management responsibility regarding preparation of financial statements. So these are the such other written representations which the auditor can ask. Whether selection and application of accounting policies is appropriate, whether matters such as following were relevant to under the applicable financial reporting framework have been properly recognized, measured, presented. You can write any matters. Okay. Auditor, he can ask written representation from the management that following matters have been properly disclosed, recognized in the financial statements. And these matters, these are just example matters, you can write any matter here. Okay. So plans or intentions that may affect entities carrying value, liabilities both actual and contingent, title, aspects of laws and regulation, and any other matters also you can write here. Getting it? Yes. Next question number 6. GEM Limited has applied GSP and Co Chartered Accountants as its statutory auditors. While conducting its audit, the audit partner requested the management to provide a written representation that it has fulfilled its responsibility for the preparation of financial statements in accordance with the applicable financial reporting framework. The manager is of the view that since all records and evidences have already been given, separate written representation is not required. Is the view of a manager finance correct? No, his view is not correct. Even though you have provided all the records and documents to the auditor, you should also provide the written representation that it is your responsibility to prepare financial statements, all those mentioning all those responsibilities, you have to give a written representation to the auditor. Getting it? You need to write the same thing. See, same points that we have discussed in the earlier question, they'll get repeated. Next, question number 7. YZ and Co chartered accountants were appointed as auditors of Sri Limited for the financial year 24-25. The auditor proposed to sign the audit report on 30th June 2025. Management provided written representation dated 10th June 2025 and refused to update them closer to the date of the auditor's report, stating that no material changes has occurred. Can management refuse like that? No. The date of written representation should be as near as practicable to the date of audit report, right? Here date of audit report is 30 June and management's written representation is 10th June. Now auditor is asking to update the written representation to date as near as practicable to 30 June. Can auditor ask like that? Yes. If auditor asks to update the written representation to a new date, management should update them. Management cannot refuse, stating that no changes has occurred or no changes have taken place. Further, the present management took charge from 1st October 2024 and declined to give written representation for the period April to September 2024 on the ground that they were not in a position during that period. Can the management say like that? Yes, they can say like that. This type of question already we have seen, right? In the above context, explain the requirement relating to date of written representation in relation to auditor's report and the period covered by such representation. Also comment on the validity of management's stand. So all the aspects that this question is asking have already been discussed in the previous questions, right? Yes. Next, question number 8. OPQ Infrastructure Limited is engaged in the construction of large industrial projects. The company has significant estimates in its financial statements, such as actuarial valuation of employee benefits, environmental restoration liabilities, and provision relating to ongoing legal disputes. Okay, a lot of things are there. CAR has been appointed as a statutory auditor of the company for the year ended 31st March 2025. During the course of audit, auditor noted that preparation of financial statements involved inputs from several specialists, including an actuary for employee benefit obligations, staff engineers for estimating environmental liabilities, and company's internal legal counsel for assessing provisions related to pending liabilities. While completing the audit, auditor requested the management to provide written representation confirming that it has fulfilled its responsibility for the preparation and presentation of financial statements in accordance with applicable financial reporting framework. Okay. Management agreed to provide such written representation but proposed to include qualifying language stating that representations are made to the best of its knowledge and belief. So, can the management in its representation letter write this word stating that to the best of our knowledge and information we are giving this written representation? Can they say like that? Yes, they can say. They can use these words. It is permissible only. In the above circumstances, explain the written representation that the auditor may obtain from management regarding its responsibility for the preparation of financial statements. Also comment on whether auditor can accept representation containing such qualifying language. Yes, he can accept written representation containing that qualifying language, and he will obtain written representation with respect to the management's responsibility for preparation of financial statements. And in some situations, management can inquire with other people who are involved in preparation of financial statements like experts. The same thing is given here. Next, this third point is stating that management can use the terminology that this particular terminology is not to the best of its knowledge and belief. That terminology can be used, that is being there here, and you can conclude your answer in this particular fourth line. Got it? Yes, that is question and answer discussion of essay 580 written representations. So yes, essay 260, question number 1. Mrs. Manidhari and Associates have been appointed as auditor of Jin Limited, a multinational company dealing in spare parts. During the course of audit, CA Manidhari is facing many problems, including the problem of not getting the desired information from the management. Accordingly, he decided to communicate with those charged with governance about significant difficulties encountered during the audit. CA Manidhari seeks your guidance on matters which can be considered as significant difficulties as per SA 260. So, while doing the audit, if auditor faces any significant difficulties during the audit, those significant difficulties can be communicated with those charged with governance. Now, what can be some of the significant difficulties? If management is putting any limitations on the auditor, or management is giving unnecessary brief time within which the audit has to be completed. Management is saying that auditor, you have to complete the audit within 2 days, within 3 days, like that, if it is saying, or the required information is not available, or auditor is facing more difficulty to, or more time has to be spent for getting the information, or management is uh, making significant delays in giving the information that is asked by the auditor. All these they come under significant difficulties that the auditor has faced while doing the audit. See, significant delays by management, unnecessary brief time, unexpected effort required for obtaining sufficient appropriate audit evidence, unavailability of expected information, restrictions imposed by management, and management unwilling to make its assessment of entity's ability to continue as a going concern. All these comes under some of the difficulties that the auditor has faced during the audit, and he can communicate these things with those charged with governance. Next, question number 2. UVW and Associates are the statutory auditors of Moon Limited, a listed company, for the financial year 22-23. CA Udhav is engagement partner for the audit assignment. He was of the understanding that as per the requirement of one of the essays, he has a responsibility to communicate following matters to those charged with governance. Auditors' responsibility in relation to financial statements, he need to communicate with TCWG, planned scope and timing, auditors independence. Yes, these things he needs to communicate with TCWG. Which of the matter is not included in the list prepared by the CA Udav? Apart from these things, there are certain other things also that should be communicated by auditor with TCWG. So what are those other things which are not included in these matters? First of all, while doing the audit, if auditor has found any qualitative aspects of the accounting system that the entity is using, like the accounting policies it has selected, accounting estimates, if he found any qualitative aspects of that accounting system, he will communicate. So the auditor's view about significant qualitative aspects of entities accounting practices, including accounting policies, accounting estimates used for preparation of financial statements, and significant difficulties if he has encountered during the audit, that also he will communicate with those charged with governance. Just now in the first question we have seen it. Next, unless all of TCWG are also involved in managing the entity, significant matters arising during the audit that were discussed or subject to correspondence with management and written representation auditor is requesting. All these he will communicate with TCWG. Next, third question is also same similar question. Significant qualitative aspects, significant difficulties. Again, correspondence with management, form and content of audit report, oversight of the financial reporting process. These are, see, essay 260, first of all, it is not important. If at all they ask any question in essay 260, they will ask these only. What are the aspects that should be communicated by auditor with those charged with governance? These 5 aspects you remember, that will be sufficient. Got it? Yes. By this, we have completed question and answer discussion of essay 260 also, and complete chapter number 8 is also done. Now let me open another chapter.